to Confidential, which is a news website in in Spanish, in Spain. I'm so sorry.
Probably in both.
I was going to say in España, but whatever. But they are looking at, again, equalizing the weight of the Spanish government in the company. So again, that's equivalent to a buyback story almost, instead that there's just built-in demand.
It's a struggle. Other than the drug sector and a few kind of stories in the telco space this morning, it does feel very quiet out there this morning. It's interesting. We've kind of come through this post-earnings narrative. We've kind of digested a little bit of that. Where does the catalyst come from? Maybe we're not done with earnings. Obviously, we've still got Nvidia still to come. But where, in terms of the European story, which has had a really good run recently, what is it that takes us forward from here? What is the narrative that drives people to continue to want to buy European equities at this point? And I wonder where it comes from. Does it come from central banks? Does it come from the fact that we are going to see maybe more aggressive rate cuts over here in Europe that we're going to see potentially in the States or elsewhere, for instance, down under?
Well, that might fit with what we're seeing in the banking sector here in Europe. I'm sort of clutching at straws, though, here, because these moves are not big, as you pointed out at the start of the programme, Guy. But it is the worst-performing sector in Europe this morning. The sector as a whole down by 0.9%. And if we were going to see European rates coming lower quicker, coming lower by more than elsewhere in the world, then it would make sense that you didn't feel quite so inclined to load up on European banks right now.
Well, Joe did a really great job earlier in terms of flagging kind of the cybersecurity stocks as well, because Palo Alto's really kind of downbeat numbers in after-hours trading yesterday was important. The read-through isn't as negative into some of the stocks that we watch here. Atos, for example, is actually in positive territory, higher by about 0.1%. Even NCC higher by 1.6%. So you're not seeing that read-through as much. Dark Trace only down by 0.3%.
Little bit in the bond market this morning, but nothing really, I think, significant. We are going to hear from Lagarde a little bit later on, but I don't think she's really going to be talking policy. So I'm not sure we're going to get any kind of obvious leadership there in terms of where we see the European rate story going. We're waiting, therefore, probably for the CPI data out of the UK, maybe to give us some sort of a catalyst for what is happening in the bond market. So yields a little lower this morning, but not down by much. The real narrative continues to be, A, what we're seeing out of the United States, where we continue to see this drumbeat of Fed speak coming out, basically warning to ignore maybe the recent data that signals a slowdown in inflation and maybe some cracks appearing in the job market. And this story coming out of Australia, the Australian central bank talking about this idea that maybe it needs to consider what is happening with rate hikes. Hikes are back on the table. So let's talk more about what that signals for the bond market. We're joined by by Market Live's Ven Ram out of Dubai. Ven, what sort of a signal do you think the global bond market should take away from the RBA's minutes, which once again, as Anna was pointing out, are talking about rate hikes once again? We've had a pause, but now we're back to discussing hikes. Is there a signal for the rest of the world out of what we're getting from the Australians?
Morning, Guy. Yes, indeed, there is a big signal emerging from the RBA. Look, the RBA, as we know, investors were pricing rate cuts from the RBA later this year. Now that has changed, that narrative has changed, and people are looking for rate cuts possibly from the RBA. The minutes this morning suggest that the RBA is not even concerned about slack in the economy. They are not concerned about unemployment at this point. All they are focused on squarely is inflation, which they said in as many words. So, and that is pretty much the same narrative. If you look at it from New Zealand to UK to the US and Canada, it's pretty much the same narrative of sticky inflation. At the start of the inflation cycle, of this cycle, central banks were quick to dismiss inflation as transitory. Now they're rediscovering on the way out that the inflation is still not transitory. It's going to be stubborn, and it's probably we need to get used to inflation not at 2%, but perhaps around 3%. And that means that inflation hedges and inflation traders are going to be busy over the next few months.
Okay, and so how does that square with the UK inflation data that we're set to get then? Because maybe these geographies just move to their own drumbeat. Maybe they're less united than perhaps we like to think of them as. But we are expecting that CPI print, yes, to come down from an elevated 3.2%, but down to 2.1% tomorrow. If we get a number like that, I mean, that is very much in the, close to the target for the Bank of England, and very much in pre-COVID memory, that would be a kind of low inflation print for the UK. So how do we square that?
Absolutely. I mean, if we get 2.1%, that would be the slowest since March 2021. Now, look, I mean, there is no doubt that tomorrow's inflation print is going to be a mellow reading. the Bank of England, in its own forecast, has assumed a 2% rate in spring. But the question is whether it's one and done or whether it's going to be sustainable inflation at 2%. And that sustainable is the key factor for the Bank of England going forward. Now, core inflation is elevated. It's holding around 4%. Services inflation is going to hold around 5%. So where is the real headroom for the Bank of England to go ahead and cut rates as much as they think they can? Because you can't run a negative interest rate policy, that negative real interest rate policy, and that kind of upsets the bond markets vigilantes, and that has come to bear to roost in so many economies, and that might happen again in the UK. So we can't take inflation for granted. Yes, we'll get a slower reading tomorrow, but it is what happens beyond then that is the question. By the BOE's own forecast, we are expecting 2.5% inflation by the end of the year, and they're going to be missing the inflation target for 2 years from now, regardless of what happens tomorrow. So it's the picture beyond tomorrow that matters.
Ben, let's continue our tour around the world, if we can, in terms of central banks, and go right back to the States, because, of course, we have a ton of Fed speak this week. We're also getting Fed minutes on Wednesday as well. Walk us through what might be the game changer in terms of the commentary coming out of the Federal Reserve this week.
Well, I mean, I don't expect too much of a surprise from the Fed minutes coming out. But what I do expect as a surprise is not so much of a surprise, really, because they have painted themselves into a corner by committing to 3 rate cuts this year. And that is what the March dot plot still showed when I was kind of skeptical that it wouldn't show. Now, in June, come June next month, they don't really have a choice but to revise up the dot plot. The question is going to be whether they still show 2 rate cuts even, or just 1 rate cut for the end of the year. And that is going to be the cue for the next cue for the markets. That and together the jobs market data for next month will set the tone for the markets. I don't expect too much from the minutes this week.
Ben, great to catch up. Thanks very much indeed for briefing us. Ven Rahm joining us from our Markets Live team, MLIV Go, as we all know, the function to catch up with Ven and the rest of the team. Quick look at the core 6 here in Europe, just to get an idea of what is happening. Remember, Denmark is back, so we get Novo back trading this morning. That is the only stock amongst that group that is tracking higher, which tells you maybe something about what is happening at the centre of this market. Some weakness really across the piece, and these are the heavyweights that are all moving lower as well. We're not down by much, but we are down, I think is the narrative there, with Novocat playing catch-up, looking like the anomaly this morning, with Denmark closed yesterday for Whit Monday. Let's talk about what else is happening in these markets with single stocks. Joe Easton, over to you.
Atos and also those results out of Palo Alto with that downgrade to bookings forecast. That stock in the US slumping yesterday. A little bit of weakness now starting to come through in dark trades. Atos and also Exclusive Networks, those two at the bottom over in Paris. But NCC holding up. They have all got their own stories with profit warnings and also some potential bidding rumours over the past few years for a couple of those stocks, but we are seeing some declines starting to come through in that one. Then we'll take a look at healthcare, probably the busiest sector today. Obviously, GSK, AstraZeneca, both giving us updates. There we go on GSK. Potentially, it is the news of this lawsuit coming from the US related to Zantac, a potential whistleblower claim weighing on that stock today. But Astra has given us that update on their Investor Day and their long-term sales target. That one coming up 1%. Potentially getting a decent read, but those are the two big UK rivals here in the UK going in opposite directions. A couple of others to bring you. Idorsia announcing that their CFO is replacing the CEO, and also some weak numbers. They're a maker of a sleep drug, an insomnia drug, that one coming down in Switzerland. And one that was really interesting to me, Onward Medical, is a small company out of Belgium. They've got an update on a drug that helps with paralysis, really amazing drug helping to restore some function in some spinal injuries. That's reported in a number of outlets, and that one's up 6% this morning in Belgium. There's a UK M&A story once again, and we have got a price. I'm very happy to see that has opened. It's up 46%. It's XP Power. It's down in the small and mid caps, but it is a supplier to the energy sector. They make components, valves, that kind of thing, supplying into the power sector, gaining 46%. Yet another company in the UK getting a takeover bid. A lot of value in the UK stocks. Then we'll look at some earnings. Plenty in the UK. We mentioned Kingfisher warning of a decline in big-ticket sales. This is over at B&Q, also Wix as well. Guy mentioned earlier the housing market being where it is, potentially weighing on some of those sales. We've got Smiths Group as well in engineering, and SSP, maker of upper crust. We all love an upper crust at the train station, but they are actually declining, some not so good sales from that company today. Generali over in insurance, doing €1 billion buyback. However, they aren't seeing as much of a boost from net interest income gains as expected. So that one's down 3% today. Quick look at miners. Wanted to check in there. We had a big gain yesterday following the jump in prices of base metals, also gold, with the geopolitical tensions. But we're trimming some of those gains this morning. Glencore, Anclo, Rio and Anto all coming down here in London. A bit more of a negative session for them. And finally, we've got one morning call to bring you. This is TransferWise over at Barclays. They like this one. We don't see too many positive ratings on TransferWise, but Barclays reckons it's worth 1,000 pence. I was just reading that note, and they say the sell-off has been too much. Also, they still do get a boost from rising interest rates, given all that money on their books and the interest rates going up. So they like Wise. Barclays upgrades it. It's up 3% in London, one of the best performers in the UK today.
Joe Easton, learning so much from you this morning, like what an upper crust is, for example. We thank you so much for bringing us the update this morning from our equities team. Coming up on the program, we stick with that healthcare story he was just talking about. We're going to be speaking with the AstraZeneca CFO, Aradhana Sarin, on the company's first investor day in a decade. You do not want to miss this interview next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome back. Good morning. Tuesday, the 21st of May. We are 16 minutes into the equity market session. We are going nowhere in a hurry. We are waiting for a catalyst. That could be Nvidia tomorrow. It could be the UK CPI data out tomorrow. Whatever it is, we're waiting for it. In terms of what we're watching today, probably one of the most interesting stories is what is happening with AstraZeneca, this huge UK healthcare company holding its first capital markets day in 10 years. This is the UK's most valuable company. It's on the FTSE 100, the most valuable company on the FTSE 100. What it's saying this morning is that it's going to almost double sales to $80 billion by 2030. It's going to launch 20 new medicines by the end of the decade as well. We're joined by Aaron Hanna, Saran, the company's CFO, to discuss these targets. Good morning. Very nice to have you on the program. You've got a busy day coming up, so we're really grateful you're spending some time with us this morning to lay out what you are seeing over the next 10 years. The 80 billion revenue target that you've announced this morning implies kind of 7-8% top-line growth during that period. The market doesn't see you generating those sort of numbers, or hasn't up until now. What is the market missing about the potential this company has that will get it to those kinds of growth rates?
Hi, thanks for having me. That's exactly why we're actually hosting this Investor Day here today at the DISC. We are very excited about this bold ambition that we've set for 2030. And it's actually not just one medicine, but a whole portfolio of medicine that we will highlight. The breadth and scope of our medicines is truly incredible, and it ranges everything from oncology and rare diseases to the medicines in biopharma for metabolic disorders as well as respiratory. And the growth that we anticipate is both from existing products as well as the 20 new medicines that we expect to launch by 2030.
It's really interesting you haven't included obesity in that list. Maybe we'll come back and discuss that in just a moment. But oncology clearly absolutely front and center. As we work our way through this period, how big is oncology going to be for AstraZeneca as we get to the end of this period? How big a slice of the pie is oncology going to represent?
You know, oncology continues to grow very strongly. Today, oncology is about 40% of the business, and we expect very strong double-digit growth in oncology, both in new medicines as well as our existing medicines and new indications for those medicines. Overall, we have over 120 phase 2 and 3 studies going on for our medicines. And again, we're working on a whole bunch of new medicines that you'll hear about today.
Aradhana, talk to us a little bit about your manufacturing plans here. Recently, there have been investments in facilities in Dunkirk, Singapore, Liverpool, even Maryland as well. In light of some of the kind of crackdown that U.S. regulatory authorities are putting in terms of where supply chains extend into Asia, how is AstraZeneca tackling that manufacturing story?
So our manufacturing investments are very strategic. They are aligned very much with the new modalities and the new technologies that we have in our pipeline. So the announcement, for example, in Maryland is for cell therapy products, which we see as sort of a completely new modality that will change how cancer care and autoimmune diseases are treated. What we announced a couple of days ago in Singapore is for antibody drug conjugates. We expect that antibody drug conjugates will replace traditional chemotherapy over the next decade. And so we're making these investments ahead of what we see coming in our pipeline because we know that these medicines have the potential to be very large medicines.
Well, speaking of your pipeline and these targets, even just in terms of releasing the new 20 medicines you're looking at between 2030, that's already beating some of the estimates that you had laid out, I want to say just a couple of months ago. Aradhana, talk to us a little bit about the buyback story here. Some of your peers are executing some really big buybacks at this time. If you're looking to have this much success in the next 5-10 years, where do you stand on returning some of that capital to shareholders?
So our capital allocation priorities haven't really changed. First and foremost, the capital allocation is back investment into the business. We continue to invest, as you mentioned, in capital plans to sustain that growth, but also we invest somewhere between low 20s% of our revenue in R&D. Our second is to maintain a strong investment grade rating. We had taken on significant amount of debt as we did the Alexion transaction back in 2020, early 2021, and we've reduced that leverage and today stand at under 2 times leverage. Thirdly, we are returning capital to shareholders. At our recent annual meeting, we announced an increase in our dividend. So dividends is generally our way to return capital to shareholders, as well as obviously capital appreciation. We have not historically done buybacks. And again, we look at total shareholder return, so the appreciation in the stock, as well as the return of capital via dividends.
Aradhana, good morning to you. Can I ask you about obesity drugs? Clearly, you've been very successful in oncology, and the business has focused on that and on other areas. But around obesity, that's where a lot of the market chatter and excitement has been of late. What is Astra's plan when it comes to obesity?
So we have an oral molecule, an oral GLP-1 that we're working on. We are going to begin various 2 different phase 2s this year. In addition, we have an earlier molecule, which is long-acting amylin. Both of those mechanisms are targeting weight management. And most importantly, our strategy is actually to combine them with agents that help with comorbidities. So in addition to weight management, many of these patients actually have heart disease or kidney disease or hypertension or high cholesterol. So it's really being able to provide a single solution and single oral solution for these patients. And that's really what we're focusing on. And we're going to do studies that show the outcomes with these drugs are very beneficial. So that's the hope and expectations for the weight management projects that we have in our pipeline.
Aradhana, we've talked about the production facilities that you have in lots of different parts of the world. Clearly a very global business, still based in the UK, and you're coming to us from, I know, your R&D facility in Cambridge. How committed to a UK listing is a business like AstraZeneca, do you think? Is much talked about here at the moment about certain very high-profile businesses thinking about possibly listing elsewhere, in the United States, for example.
We're very happy with our primary listing here in the UK. As you mentioned, I am here at our Discovery Center, which is called the DISC in Cambridge. This is a brand new facility, really state-of-the-art, and we have over 2,200 scientists working here. For treatments for cancer, we do expect that our portfolio of medicines in oncology, for example, will be able to potentially treat over half of all potential cancers by 2030. So again, we have very ambitious targets, not just financial, but also in the way we're transforming care.
Can I carry on the conversation and talk more about geography? The United States has its Biosecure Act, which it's pushing through now. The UK, there are rumblings about something similar. Astra is a company that has invested heavily in China. Are these issues going to become more problematic? Is that investment in China going to become more difficult? Are you worried that the UK may ultimately go down the same route that we're seeing with the United States and its relations to China?
We have a very large and successful business in China, as you mentioned. And not only is it a commercial business, but I think because of our standing and history in China, we do have access to a lot of research that is also coming out of China. And we've done licenses and partnerships and BD transactions with companies, with innovative companies in China. We've also invested in manufacturing in China. But again, our supply chains are very robust. Those were tested during COVID, and we did not miss a single dose for a single patient across the globe. But also they're segregated in ways. So for example, some of the facilities that we have in China actually supply China for China or in the emerging markets. So I think we try to manage our entire supply chain network. So it is very mitigated from a risk standpoint.
This is a slightly left field question, but I'm going to pose it anyway. UK universities are really struggling with foreign students right now, and how we deal with foreign students here in the UK is becoming a sort of hot political issue. How much does AstraZeneca rely on foreign students coming through places like Cambridge in terms of providing the knowledge base that you ultimately rely on to create new drugs?
Well, I can't comment specifically on foreign students or not, but we do have a very large program to support the university. So, for example, here in Cambridge, we work closely very much with the university here. We also have a PhD student program where we provide internships for those PhD students, and not just, again, in Cambridge, but across the UK. So again, our intention is to support science and to support research, regardless of where those students come from, and really help develop the best medicines.
Aradhana, thank you very much. Aradhana Sarin, AstraZeneca CFO, joining us there. A red headline across the Bloomberg terminal around the chip sector, the Dutch chip sector. ASML, TSMC can disable chip machines if China invades Taiwan. We'll certainly get more on that story, dig further into that when we come back. We'll also be talking banking in Europe. The CEO of SEB will be joining us, Sweden's largest bank. That conversation coming up next. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome back. This is Markets Today, 30 minutes into a European trading session that looks slightly negative, waiting for news flow surrounding tech in the shape of Nvidia tomorrow. But in the meantime, really big story dropping across the Bloomberg terminal, an incredible story, in fact. ASML and TSMC can disable chip machines if China invades Taiwan. This is according to people familiar with this who've been discussing it. Officials from the US government have privately expressed concerns to both the Dutch and the Taiwanese counterparts about what happens if China's aggression escalates into an attack on the island, and this is what the response has been from these chip makers.
So they have the ability remotely to disable these
lithography.
These sort of extreme UV machines I'm told they're the size of a bus.
Yep.
So these are big pieces of kit. So you can disable them remotely if there was any. I wonder at what point that decision will be made.
And by whom?
And by whom, I think, is probably a critical question as well. But it's interesting that this is a lining up of Taiwan, the Dutch government and the US government in terms of their concerns around how the supply chain does function and how critical these chips are really to sort of the US security position, which it's keen to maintain.
And to your point, the context is everything here, right? Because the sanctions were imposed already on those sales to China, I want to say about a year ago, and the U.S. has been really pushing the Dutch government to impose more of those restrictions. At the same time, the ASML is saying, we want to expand, we want to even leave the Netherlands, potentially talking about a bigger kind of footprint in London and elsewhere, and really having the Netherlands also deal with the political aspect of that as well. ASML is getting caught in all of those kind of cross strings. And when you look at the revenue breakdown of ASML in particular, yes, the U.S. makes up more revenue, but not by that much. It's still, they have still a subscription point to China as well. I think something like 20% revenue comes just from China.
Yeah, the company expects as much as 15% of this year's sales to China will be affected by the latest export control measures.
New Dutch government coming in. Just want to sort of fold that into the equation as well in terms of how would that Dutch government, what role would that Dutch government play in this process where it would be called upon to sort of make some decisions around kind of when these machines do and do not get turned off?
It's a really interesting dynamic again, and where ASML kind of has to, and like several other companies, AstraZeneca, for example, we were just talking about the China impact there as well. This is a question a lot of companies have to deal with. At what point do you take that revenue hit to deal with the geopolitics of the situation? That's something that even traders can't seem to get their head around. Something that they perhaps can get a little bit more of their head around, arguably, relative to the geopolitics, is what's going on in monetary policy. We keep talking about this on both sides of the Atlantic, with the Federal Reserve, with the ECB, of course, and also with the Riksbank, which brings us to our next guest here. The deputy governor of the Riksbank says the krona's weakness remains a concern for the Swedish central bank. The Riksbank started cutting rates this month, reducing the benchmark rate to about 3.75% and outlining 2 more cuts in the second half of the year. This continues to be a conversation about who front runs the ECB. Doesn't even matter. We speak now to someone on the front line. CEO of SEB, Sweden's largest bank, Johan Torgeby, joins us this morning. Johan, a pleasure to have you on the program. Let's kick off the conversation with that monetary policy story. From a broad macro standpoint, there's a lot of concern about what central bank front runs the Federal Reserve, or whether even the Swiss National Bank or the Swedish National Bank front running the ECB is that big of a deal. Talk to us about the impact on a bank like yours.
Not really, I would argue. I think the sensitivity for interest rates in Sweden is pretty large. We have now, the last data point, 90% of all mortgages we write today are floating rate. So as you might recall, we've had a pretty dim outlook for the last 2 years. We've been one of the worst performing economies in Europe. And now, of course, this whole thing changes, where rates are coming down, the Riksbank goes early, and we will obviously think we have a very positive impact on the economy, as so much of the indebtedness is in floating rate. But in the longer perspective, it doesn't really matter if it comes a month or so before or after. Many people would also argue that the independence of the Swedish Riksbank, or the central bank, was a key measure here. I don't believe it's that important, but obviously they did show that they can move first.
It's interesting that you mentioned kind of where the fiscal authority lies in that as well, because one of the concerns in broader Europe is the imposition of windfall taxes. When you see it in Italy and Hungary as well, there's talk of it in other parts of Europe. Of course, your business has large presences there. Are you concerned about some sort of bleed through into Sweden? And also, how are you dealing with some of those rules that are being imposed in other parts of Europe?
We have been exposed to the notion of bank taxes or windfall taxes, or as they sometimes call it, solidarity contributions for 3-4 years now. This is definitely widespread. I believe it's important to just, separate the alpha versus the beta in banking. So what has happened over the last 2-3 years is, of course, that rates go up, and beta, things you cannot control, gives you some tailwind. And of course, when you make this much more money without necessarily writing more business or doing more good things, there will always be a political pressure to see if you can fund governments. And the population has also shown quite clearly that this is an acceptable tax increase to do. So this is, as a banker, of course, quite worrying, as it is very short-sighted. And now this whole thing has changed. So we are now looking into NII headwind, not tailwind. And I really hope that these taxes and this kind of beta that we all benefited from is put in a larger, longer-term perspective.
Whilst the banking sector was benefiting from NII tailwinds over recent years, Johan, certainly the commercial real estate sector was suffering at the hands of those higher rates. Talk to us about where we are in the real estate story in the region. Do you think that the sector is out of the woods yet?
We have never been that concerned around the sector. So for the last year and a half, I almost feel like I've been a CEO of a real estate company talking about real estate, which I'm not that good on. But it's been very, very topical. It has definitely had an impact on the Swedish krona, is my belief. We've had a very, call it almost a muscle memory coming up, where you don't buy banks and you don't buy real estate into a recession. But all that has changed. And I think it's important to distinguish between a real estate company and investing in it versus a bank who has credit exposure often secured. And we are not really worried about the second one. They're not out of the woods to the extent that rates are still, quadruple what they used to be 2 years ago. Any company who has a levered business model, who needs to carry a quadrupling of interest cost, will of course have some struggle. They need to make more money. However, when it comes to worrying about the financial stability, I'm not very worried.
Okay, so we could put you in the camp of a bank that extends credit to that sector and no closer than that. But on that front, Johan, are you extending more credit to commercial real estate or pulling back? What's the stance?
This is the strategy for SEB is always to be quite cautious on real estate exposure. This was introduced in 1991 when we had the near-death experience in this country, also affecting the muscle memory of what happened in the past. So we actually have call it a soft policy of never having more than 10% of our corporate balance sheet dedicated to real estate, so we don't become a real estate bank. For the existing clients that do well, we have no limitations to continue to support them. We don't have a strategy to lend more or to gain market share within commercial real estate sector.
Johan, good morning, it's Guy. We've talked about the rate cuts that appear to be coming from the Riksbank. You've talked about how sensitive the Swedish economy is to those rate cuts. How quickly will the Swedish economy recover once we start to see these rate cuts coming through? And will that benefit that we are seeing on the economic side offset, from your point of view, the NII hit that you take as a result of those lower rates?
Yeah, first, I don't know. These things tend to work with a lag, and they're very hard to predict. But given the nature of how hard we got hit by the quadrupling of interest rates, it is reasonable to assume that we will also feel the relief a bit more forcefully and earlier than many European, call it comparable countries. This has already happened, so I can see now many signs of some optimism creeping into the economy. So we can look at the purchasing managers indices. We are now better than the average in Europe for the first time for a couple of years. 8 months in a row, I think, we've had more optimism among the corporate sector. House price expectations, which is very important in Sweden, they've really rebounded. So they are very optimistic now that this cut that we have experienced, the expectations of at least another 100 basis points cut in the next 12 months, they're already affecting it. So I am expecting to see some tangible evidence of this optimism quite soon.
Johan, the weak currency has generated debate within Sweden about whether or not Sweden should join the euro. A, do you think that's a good idea? And B, if the economy recovers, do you think that debate will go away?
Yeah, I would say that politically, there is no reason to engage in this debate right now. But as you correctly say, it is starting to happen. I hear it all the time now. It's discussed by the coffee machine. What I'm worried about, this is my personal opinion, to lock in an exchange rate to the euro because it's weak is one of the worst reasons to do so. Therefore, you can definitely look at the real fundamentals instead. And, I don't have a particular opinion. It would be very nice politically to get closer to Europe and have a say in the kind of the more important rooms. On the other hand, as an economist, I also like a floating exchange rate because they keep countries very honest, and you have this kind of bellwether barometer of how you are performing. But it is a concern. The real disposable income in foreign currency for Swedish people has deteriorated for a very, very long time. And only in the last 10 years, I think we've gone, we paid 8 kronor or 9 kronor for a euro, and now we're closer to 12. And this is, of course, not a good thing for a country, and should also be put in context of productivity. It should be put in context of competitiveness. And we've also seen a very large outflow of foreign owners of the Swedish stock exchange. And of course, that per definition is a natural seller of kronor once you move that abroad. And that is something we need to correct.
Johan, thank you so much for your time. We appreciate it. Johan Torgeby, the CEO of Sweden's SEB Bank, visiting our offices there this morning. We thank him for joining us there from Stockholm. Now, let's turn to other matters concerning European business. Bloomberg has learned ASML and TSMC have ways to disable the world's most sophisticated chip-making machines, in the event that China invades Taiwan. Let's get more on this Bloomberg scoop with our reporter, Chan Koch, who joins us now from Amsterdam. Incredible story, this, Chan. So exactly what is this technology designed to do?
So our sources have told us that ASML and TSMC have ways to disable the world's most advanced chip machines if China invades Taiwan. The remote kill switch applies to ASML's extreme ultraviolet machines known as EUVs. TSMC owns half of all of these machines in the world. So our sources said that ASML has reassured the Dutch government officials about its ability to kind of remotely disable these machines. When the Dutch government held a meeting with the company on the invasion threat. So the Dutch administration has even run simulation on a possible invasion in order to better assess the risks. But TSMC can also disable these machines as ASML offers certain customer joint service contracts. So both the companies can kill these machines basically remotely if China invades the island.
In terms of the politics around this, could this potentially change the political calculus in the way that Washington, potentially Europe, kind of thinks about its relationship with Beijing and with Taiwan and its willingness to continue to sell this kit into that region? How does this change the calculus, if at all?
Right. So sources have told us that officials from the U.S. government have privately expressed concerns to both their Dutch and Taiwanese counterparts about what would happen if China invades the island, which is responsible for producing the vast majority of the world's semiconductors. Advanced semiconductors specifically. And ASML's technology has long been subject to government interventions aimed at preventing it from falling into the hands of the Chinese, let's say. And the Netherlands bans the company from selling EUV machines to China because of U.S. fears that they could land its rival and edge in the global chip war. So this secret capability to remotely kill the machines is a way to reassure Washington that China can't use these machines if they take them by force.
Is this a little too late, though? I mean, self-sufficiency in Beijing has been part of the national agenda for over a decade, arguably several decades. Does this matter in the grand scheme of things?
So some evidence actually suggests that the U.S.-led chip restrictions may have come a little too late to stem Chinese advances. As you know, Huawei last year produced a smartphone to rival Apple's iPhone using chips made with older ASML machines in combination with tools from 2 U.S. suppliers. We reported this back in October after conducting a breakdown of the phone. So Beijing has made technological self-sufficiency a national priority, and Huawei's efforts to advance domestic chip design manufacturer have received government backing. So, yeah, it may be too little too late.
Well, Charn Koch in Amsterdam giving us those vital details. We thank you so much as he, of course, breaks that news for us. Coming up on the program, we stick to the geopolitics, the political situation around the world. President Biden slamming the International Criminal Court's decision to seek arrest warrants for Israeli leaders over alleged war crimes in Gaza. The latest from the Middle East next. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
So the funerals of the Iranian President Ibrahim Raisi and the country's foreign minister and others taking place today in Iran, in the country's northwest region. The deaths were confirmed following a helicopter crash after hours of searching through foggy mountainous conditions Sunday into Monday. It's a story that we continue to monitor. We're still trying, I think the world is still trying to understand the implications of Raisi's death and what ultimately it's going to mean for the country, the region, and the world. This takes us on to another subject that we're covering very carefully as well this morning. The US President Joe Biden has forcefully defended Israel against the war crimes charges that have been sought by the International Criminal Court. The ICC chief prosecutor says he's seeking arrest warrants for the Israeli prime minister and the Hamas leader. The US president calls the court's decision to target Israel's leaders, quote, outrageous. Let's get more on this from Bloomberg Horizon's anchor, Jumana Basetchi, who is in Dubai for us. First of all, let's just deal with the allegations that are being made here.
The
These are serious allegations. Essentially, both sides are being accused of having committed war crimes, albeit different in nature. In the case of Hamas, and specifically, we're talking about Yahya Sinwar, he is being accused of extermination, murder, taking hostages, rape, and torture. Very, very heavy allegations in direct relation to the October 7 atrocities. In the case of Israel, the Prime Minister Netanyahu has been accused of committing war crimes in relation to the military response after October 7, specifically citing starvation of civilians as a means of warfare. That, in the ICC's eyes, is considered to be a war crime. Of course, both Hamas leaders and Israel were quick to refute these allegations. In response to the starvation accusation, Israelis have said that the food shortages were not caused by Israel, but were rather caused by Hamas theft and by UN incompetency. But of course, the criticism, not just within Israel, but around the world, was quick to come as well, with many, including the US President Biden, saying that it is very objectionable to draw parallels between the leaders of Hamas and Israel in this circumstance.
Jumana, you touched there on President Biden's response. Can you talk just a little about the regional response there? What are you hearing in the UAE and in Saudi Arabia and other kind of countries in that area?
I think on this topic in particular, there hasn't been a lot of commentary come out from the region. As you can imagine, with all of the geopolitics at play here, there's been a lot of focus on the succession plans in Iran, also within Saudi Arabia. We haven't talked about this yet on the show, but a lot of talk about the King Salman's health situation, which obviously, raised a lot of questions about what might happen there in terms of succession planning as well, too. But in terms of the international community, I think it should be said that Israel's allies, specifically the U.S., were quick to respond. U.S. President Biden, again, as I mentioned, saying that this was categorically unacceptable, that there is some sort of equivalence is being drawn between Israel and the U.S. Blinken rejecting the accusations as well. In terms of the European response, it has been a little bit more nuanced. The Belgian foreign minister put out a tweet saying crimes committed in Gaza must be prosecuted at the highest level, regardless of the perpetrators. The Czech premier taking a different stance, saying that the including Israeli officials was frightening and absolutely unacceptable. So there you get it. If you go around the world, there have been different responses to this, but it also should be said that in practice, these arrest warrants are going to be very difficult to actually enforce. At this point, the prosecutor is looking to introduce an arrest warrant, but the final decision is going to be taken by a panel constituted of 3 judges if they deem that there are reasonable grounds to issue these arrest warrants and that those leaders actually did commit war crimes. At the end of the day, it's going to be up to the member states whether or not they want to actually enforce those arrest warrants.
Jumana, thank you very much. Jumana Basetti joining us there from Dubai with the latest on that story. From Gaza, we go to Ukraine. Bloomberg has learned that German officials are ready to support a U.S. plan to leverage revenue generated from frozen Russian assets. That could mean an additional $50 billion worth of aid to Ukraine. Let's talk to Bloomberg's Oliver Crook about this. Ollie, good to have your view on this. And tell us what's at stake here. Is this about the assets themselves, the revenue generated? Because I thought we'd reached some kind of clarity on the revenue previously. So what are we expecting from this G7 finance minister?
Yeah, so this is kind of the seize versus freeze debate that the United States and Europe have been having, where the United States really wants to take the underlying $300 billion worth of assets and really disperse that over to Ukraine. The Europeans have said, listen, we can do with the profits, we can do that, but that's only $3 to $5 billion a year. So there's a sort of compromise somewhere in the middle where they want to sort of issue these bonds on the future profits from the underlying assets, which would allow them to disperse that $50 billion right ahead of time. We don't know exactly how much it's going to be. This is sort of the number that's coalescing around. The G7 will discuss this. And it's also a way, yes, for sustainable financing for Ukraine, but also potentially Trump-proofing the path of financing for Ukraine.
Finance ministers are meeting in the next few days. We're going to get a decision there. When do we get a decision? When can this have an impact?
Yeah, so we should get a decision. They would like to come to a consensus on this. And again, it brings together the United States, Europe, and all the sort of major parties that would have to agree upon to get it over the line. And then we'll get it basically 3 weeks later if they can map out the architecture when you have the leaders meeting for the G7 just about 3 weeks later in Apulia in the south of Italy.
Is this the last kind of option for Ukraine here, given the kind of political gridlock you are seeing in the United States? Is this the last source of funding?
I mean, I think for the United, again, what hangs over all this G7 meeting is the U.S. election, right? And is who is going to be in the White House, and also what is Trump's policy vis-a-vis Ukraine and Russia and all the financing and all these sorts of things. That is still very much an unknown, to say nothing of his relationship with NATO. But if they got that $50 billion through Congress already, an additional $50 billion, that takes you a really long distance in financing this war, which is, as we can see, the delay from that $50 billion from Congress, the sort of cost on the battlefield has been immense. So they really are trying to get that financing under sound footing, and really also send a sort of solidarity message of the G7, an entity whose sort of efficacy was perhaps in doubt at this moment in time.
Ollie, thanks very much. Bloomberg's Oliver Crook joining us here on set in London with the latest developments there. Let's step back from the geopolitics. There's been a lot to deal with, and we've gone through a whole of different host of regional questions in the last 15 minutes or so. Meanwhile, European stocks trading water to negative, down 0.3%. US futures pretty mixed and flat.
Yeah, Denmark's back. Novo Nordisk is adding the most points on the upside, but AstraZeneca not far behind, out with this capital markets day, which is about to start up in Cambridge. We've spoken to the CFO, setting some really significant targets for the next 10 years. But big questions surrounding that sector. What do you do in the GLP-1 space? What do you do in oncology? What do you do with your China assets? So some really key areas, but the market certainly likes what it hears so far.
Plenty of deal flow as well. Your one index outperformer is the IBEX 35, those Spanish stocks driven by BBVA and driven by Telefonica, both two major deals that we're watching.
M&A certainly in focus on that front.
She's applying for a passport.
I'm ready.
Well, good luck with that. Right, that's it for markets today. The Pulse is up next. This is Bloomberg.
It's the world's second largest economy, with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep bringing World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Bloomberg learns that ASML and TSMC have ways to disable the world's most sophisticated chip-making machines in the event that China invades Taiwan. We'll bring you our scoop. Europe is divided over a request by the International Criminal Court to issue arrest warrants for Israeli leader Benjamin Netanyahu and the country's defense minister on war crime charges. Plus, JP Morgan boss Jamie Dimon ignites succession talk at America's biggest bank, is signaling his retirement is closer than ever. We did hear that for quite some years, and he still says that there's a lot of energy. Speaking of energy, let's have a look at what the markets are telling us. Now, we're seeing a little bit of stocks actually slipping across the board, so they're opening a little bit weaker, again, pulling back some of the recent record highs. Investors really retreating to the sidelines to wait for results from NVIDIA. Will we see that AI rally continuing? Now, this is a bellwether, NVIDIA, for the artificial intelligence frenzy over the past year, which, of course, has powered a large chunk of the S&P 500's earnings. Bond yields also broadly easing. Again, this is on a view that the Fed and other major central banks are on track to cut interest rates this year, and then you see gold at 2,419. And we always look at copper because it's above 10,000, so a lot of people have to take a double take at 10,000, still at a record high. So back to our big story of the day. Bloomberg has learned that ASML and TSMC have ways to disable the world's most sophisticated chip-making machines should China invade Taiwan. Now, we're joined by Bloomberg's Tom McKenzie, who has all of the details. Tom, I mean, this is a huge piece of news. This is through really months of Bloomberg trying to figure out exactly what was going on. What have we learned from the scoop?
Yeah, absolutely. Painstaking reporting from the teams in the Netherlands and the US as well, confirming this. So essentially, this is a kill switch that would be applied to these ASML machines, these extreme ultraviolet lithography machines that process and produce and are essential to the production of the most sophisticated chips that TSMC, that makes the biggest foundries over in Taiwan, is dependent on. And TSMC is the biggest buyer of these EUVs that are made and produced by ASML. Essentially, they can remotely shut down these machines in the event of a, for example, invasion of China by Taiwan. This coming out as a result of pressure from the US, concerns amongst US officials that should China invade Taiwan, they might get access to these highly sophisticated machines and be able to push up in terms of their production abilities. The Netherlands has been, by the way, gaming out what would happen and testing out the risk scenarios in that kind of event. And again, ASML, TSMC assuring these officials in the US that they have this ability to remotely shut down these machines.
I mean, the remote, shut off really feels like a bit of a James Bond film. What does it mean for US-China relations?
Yeah, I mean, these are highly sophisticated machines. They're made up of thousands of different components. You actually need engineers in these clean rooms in the spaces where they operate to check in on them every couple of months anyway. If one component goes missing or needs to be upgraded, that's a problem for the machine. Now they have this ability, they say, to remotely shut them down. It points really to the urgency with which the US is looking at this as a risk factor. It underscores just how concerned they are about China getting hold of these most sophisticated machines. China already has access to some of the older ultraviolet lithography machines, and we've seen Huawei being able to produce very sophisticated chips for their smartphones. The concern for US officials is that not so much the smartphone industry, it's whether those chips end up in the sophisticated missile systems of China and the PLA, and clearly that's where their focus is in. Some US officials, by the way, generals within the military in the US, have suggested that China could be prepared to invade Taiwan by 2027. So clearly there is urgency behind this.
But, Tom, I mean, does this come from the US side? We also know that the company is expecting as much as 15% of the year's sales to China will be affected by the latest kind of tight ship, right, on some of these export controls.
China is still a major market for ASML. They are still able to sell into the Chinese market a number of their legacy ASML machines, lithography machines, but not the most cutting-edge extreme ultraviolet lithography machines. But by the way, ASML is the only producer of in the world. They're the only company that makes these. They were banned from selling those last year. And you're right, it's not just the US. Washington's managed to persuade the Netherlands and Japan to get on board with some of these restrictions as well.
Okay, we'll see if there's any retaliation, or we'll see what China says in response. Tom, thank you so much, as always. Tom McKenzie there with the very latest on these chip-making, pretty extraordinary story, actually. Chip-making, a scoop coming from our team all over the world. Now, U.S. President Joe Biden has defended Israel against war crime charges sought by the International Criminal Court's chief prosecutor. Now, the prosecutor says he's seeking arrest warrants for the Israeli Prime Minister Benjamin Netanyahu and the Hamas leader Yahya Sinwar. Now, the move has also divided European leaders. The U.S. president has called the court's decision to target Israel's leaders dangerous.
We reject the ICC's application for arrest warrants against Israeli leaders. Whatever these warrants may imply, there is no equivalence between Israel and Hamas.
Well, let's bring in Bloomberg's EMEA news director, Roz Matheson. Roz, when the news broke, I wasn't sure really what to make of it. I mean, is this Joe Biden then trying to give Benjamin Netanyahu support? Is he really going to be arrested, or is this just politics?
Well, there's actually some steps to go yet. This is the prosecutor saying that he's going to seek approval to get these arrest warrants issued against both the leader of Hamas and the Israeli Prime Minister Benjamin Netanyahu, and also some senior officials in Israel as well. And so there's going to be a period of time where that gets considered. We don't know what that final decision is going to be, but certainly the prosecutor has made the case for it. And it's a very sensitive issue, obviously, for Israel, because normally the kinds of leaders who have arrest warrants issued, you're in the realm of Russian President Vladimir Putin for his invasion of Ukraine, certain African leaders over time. And the sense is, are you now, is this a sense of equivalence really with Israel, Hamas and Vladimir Putin? And, there's a lot of concern already around the trajectory of Israel's war in Gaza, and certainly some of the humanitarian questions. And it just adds to that sense that Israel's under pressure globally over its actions inside Gaza. But, the precedents, the idea of putting Benjamin Netanyahu under an arrest warrant obviously has the US and others concerned. Does it torpedo efforts for a ceasefire completely? Does it just lead Israel to say, well, fine, we're just going to go into Rafah then either way? Does it, in a way, harden support further around Netanyahu at home? We've seen fractures in his war cabinet just in recent days, but is that idea of, well, we can criticize each other, but we can't be criticized from the outside. So do you see that kind of coalescing of support inside Israel now around Netanyahu as a result?
So what do you think it does? I mean, again, there are so many questions, but does it actually slow down? There's been public outcry about the number of civilian casualties. If the incursion into Rafah continues, does this slow that down?
Well, it seems like they're on a pretty slow walk anyway at the moment. It really is that kind of creeping offensive in Rafah, not the full-bore thing we thought might come, and that may still come at some point. But they do tend to be going pretty carefully at this point, aware a little at least of some of the criticism that they've been getting from overseas. But of course, Israel's not actually a signatory to this court, and neither is the US. So in a way, even if the arrest warrant does come, it's pretty symbolic. He's not about to get arrested by anybody. If he did travel to a country that is a signatory, there would be that awkward question of what do they do about that? Do they somehow have to find a way to not arrest him? But it's really kind of theoretical in a way. It's more sending a symbolic signal of concern about the war. So the question is, how much does Israel take that on board? Do they slow down further what they're doing in Rafah? But it seems to be on a pretty slow walk already, regardless of that.
And Ross, yesterday we were talking about a possible power vacuum, actually, in Iran after the death of the president in that helicopter crash. Like 48 hours later, where are we?
Well, we're obviously going to an election in June. As expected, within 50 days, they've got to hold that vote. We know that we've got an interim president at the moment. The question is, does he become the lead candidate for the administration into election? Do they allow a pseudo-reformist candidate to run to try and get turnout? Because, of course, in the last election, the turnout was very, very low. Do they kind of allow the sense of a competition, even though really it's a very tightly managed process, to try and encourage people out to vote? But the real question, the longer term, is not so much the election, it's the longer term succession for the Supreme Leader Khamenei. What happens to him? Because, of course, President Raisi was seen as one candidate to succeed him, and now it's really, the Supreme Ruler's son who's the sole candidate. And that raises all sorts of awkward questions for Iran. So the longer term question is really the big one for Iran and where it goes from here in terms of domestically and in the region and beyond. And that's the question of who would be the supreme leader.
And Roz, we're just looking at live pictures actually of Tabriz in Iran with the live pictures of the funeral of Iran's late president, which is now underway. Is it going to be the same kind of hardliner that would take over both the Ayatollah and then the president when the Ayatollah goes?
Very much so. That's that sense of, again, continuity and control from the very top, because the president has some powers but is largely ceremonial. I mean, an actor really of the agenda of their boss, and the boss is the supreme leader. So you want to see that sort of continuity and control for Iran. Will be interesting to see. We're seeing, obviously, this footage showing large outpourings of grief, of mourning, the burial, the funeral that's going on, the footage of people gathering. But, there's also, a sense, no doubt, amongst some in Iran, like Raisi was not a popular figure, and the question is, does this allow any room for dissent to bubble up? The only way you're probably going to see that is that people will not turn out to vote. It'll be a silent protest versus masses coming out into the street. So you might see some of that come in when on election days that people simply just don't turn out to vote.
Roz, thanks so much, as always, for some great insight. Our Bloomberg EMEA News Director, Rosalind Matheson. Now, plenty more to come. Investors, of course, waiting on this week's results from NVIDIA for the latest gauge of the AI rally. We'll talk about that next, and this is Bloomberg.
This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I was on the record before saying I was at the median, which was 3. The developments I've seen in the economy right now, I would not think that that's still appropriate because the inflation risks have moved up. It's too soon to tell what path inflation's on, so we just need to collect more information on that. In the first part of the year, what we saw was the risks that we were too restrictive have gone down. Last year people were worried about, the Fed may be getting too restrictive and therefore it's going to dampen the economy. Those risks went down. At the same time, the risks to inflation, I think, are tilted to the upside and remain so. And so that's the balancing that we have to do as we set policy going forward.
I do think that our new steady state is likely to be higher than what people have known over the last decade, maybe back to where we were in the 1990s and 2000s, but we'll just have to see. Anything can happen. My outlook is really that inflation will continue to fall through this year and into 2025. I think that it will take quite a while for us to get all the way to 2%, but I do think we'll get there.
The Atlanta Fed President Raphael Bostic, Cleveland's Loretta Mester, they're speaking exclusively to Bloomberg. Now let's bring in Grace Peters, Global Head of Investment Strategy at JP Morgan Private Bank. Grace, thank you so much for coming on. I love listening, of course, to these, minutiae details about what they're expecting and inflation, because we used to support sports team. Now it's all about, what happens to inflation. Yeah. There's like a international obsession. And I don't know whether it's just harder to understand what the Fed does next than it was like 5 years ago.
Good morning. It definitely feels like there's an obsession with the Fed's next cut. And of course it's important because it tells us so much around the growth and inflation mix that exists in the economy. I would say by overly focusing on it, investors run the risk of missing out. If we just think about the huge change in market pricing that we've seen over the last 10 months or so, from at 1.6 cuts being priced for this year now to around 2, who would have thought that the equity market now sits at 5,300? So if you'd focus too much on, whether it's 5, 4, 3, you could miss out on the equity rally. And so that's very much our position. We believe that, there is still disinflation in the system, that growth is slowing, and some of the April data has really supported that, but still to a healthy level. We think that the central banks can cut, that probably it will be the ECB and the Bank of England before the Fed, but that's a healthy environment for risk, and there's so much going on below the surface in Q1 earnings, as an example, that we should be dedicating more time to rather than just central bank speculation.
Yeah, and I don't know whether I would go as far as calling it like an unhealthy obsession, but the economy in the U.S. is definitely slowing. And so it's unclear whether when the Fed cuts, this is in a slowdown or actually a down, or because inflation is under control. And that changes the dynamic of future cuts as well.
It does. And I think when it comes to investing, therefore, you can't assume there's only one path forward. You have to look at the tail risks. And one of those tail risks would be a re-acceleration in inflation. We'd assign around a 20% probability to that. And as you say, an equal probability to the fact that growth slows more. We've seen US GDP slow from around 5%, in the fourth quarter of last year to around 2.2, 2.5, we think, for the second quarter of this year. We think that will trend to around 2%, but, a 20% probability that actually it goes lower than that and that we end in the recession that everybody believed in, a year ago. But that still leaves our central case 60% being that we do see continued economic and corporate growth, which is constructive for risk.
So what does that mean for earnings per share? So again, forecasts for earnings per shares have only but increased.
Yes.
And also a lot of the focus on margins. Are you still constructive on equities?
We are. So we've been constructive on equities all year, which felt lonely a few months ago. But I think, there's been a huge change in sentiment over the last few months. But I think the focus is now going to start turning to, 12 months out. At the moment, many price targets that exist on the street are for December of this year. We, along with many others, are, putting together our mid-year outlooks at the moment that will see us look through to the summer of next year. And I still think there's upside. I mean, probably less so than we've seen in recent months, but if we were to think about, 5,400, 5,500 on the S&P, over the next 12 months, it's a sort of a range bound to drifting higher, which we think is a constructive environment to be in.
And Grace, what you're so good at is also breaking down sectors.
Yes.
Right. Is this sectors? I know we're expecting NVIDIA a little bit later on, which will be, again, the other national obsession. Yes. I think we used to joke that it was like Taylor Swift and NVIDIA that, props up the U.S. economy. But is it going to be, again, AI, and so is there justification and valuation for the Magnificent Seven, or will it shift?
It's a bit of both. I mean, using NVIDIA as an example of the Magnificent Six, I'd call it more broadly. Because of the strength of earnings, you've actually seen, despite tremendous share price gains, you've actually seen some of these stocks getting cheaper because the earnings have surpassed expectations. And I think that will continue. 30% earnings growth for the Magnificent Six this year. That will probably become more like 16% next year. But on the flip side, you've also got the broader S&P, the other 493, going from around 6 to 13. So that's telling you that growth in the Magnificent Six, the tech stocks broadly, is still good, very good. But the rest of the market is catching up. So a broadening across sectors and also likely across market caps. And don't forget non-US markets, where we also think earnings are picking up. And there's really good opportunities in Europe, for example.
I have a lot of questions on Europe, but do you worry about the mid-caps in the U.S.? Again, if you have a slowdown, for example, in consumer spending, if the big broad ones can rely on the international markets, what happens to middle America?
So I think if there is a a very strong slowdown in consumer spending, then you wouldn't want to be in the mid-caps. But on our assumption that actually growth trends down to around 2%, then mid-cap should see a disproportionate improvement. Again, their earnings profile, if we look at the S&P 400 to represent more mid-cap companies, the earnings profile there is for a decent pickup to mid-teens earnings growth if you look forward over the next 12 months. So that broadening theme by market cap sector and geography, I think, will be a really important one.
Oh, Grace, thank you so much. Grace Peters there from JP Morgan Private Bank stays with us for more analysis. We'll actually talk about European and UK valuations. That's next, and this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back, everyone. Now still with us, Grace Peters, Global Head of Investment Strategy at JP Morgan Private Bank. Grace, thank you so much for sticking around. We talked about the U.S., we talked about the Fed, we talked about some of the market forces, and, of course, the AI stocks. You say there's still quite a lot of value or actually opportunities in Europe. Again, do you break it down by sector, or is it exposure to international?
Well, for Europe specifically, then I think the international exposure is first and foremost what we're after. There are technology businesses within that. There's also luxury goods companies, consumer companies, mining companies that we think are all pretty interesting in their own right. I do think there's also a domestic European story that's been building over the last few months. It does feel like the worst of the growth shock in Europe is behind us. Inflation is coming down. We think the ECB is going to cut in June, and all of that supports also some of the domestic plays, of which the banks, I think, are the strongest example, because they also are delivering shareholder returns, which is unprecedented. You know, if you think back 10 years ago when the banks were big net issuers. So there's quite a bit to like in Europe.
And the UK, and again, I mean, a lot of these indexes are actually supported by share buybacks or dividends. Do you have concerns that that's, you know, great for now, but there's a lack of investment 3, 4, 5 years from now?
No, I mean, you know, when you're thinking about capital allocation, obviously, if there are growth opportunities, you should be spending on that. And so the poster child for that is really the AI expenditure from the hyperscalers. If we think about, you know, the Amazons, the Meta, the Googles, these businesses collectively, the 4 of them are going to be spending $200 billion, a huge number in 2025. So great avenues for growth, spend on growth. If you don't have those avenues for growth, then returning money to shareholders at a time that your share price feels depressed is also a really sensible strategy. And so in the UK market, I think there's a lot of businesses, particularly in the mining sector as an example, that would fall into that camp, oil and energy more broadly as well. And I think that's, again, offers good opportunities for investors.
Grace, thank you so much, as always, for joining us. That was Grace Peters, a global head of investment strategy at JP Morgan Private Bank. Now, coming up, President Biden slams the International Criminal Court's decision to seek arrest warrants for Israeli leaders over alleged war crimes in Gaza. The latest from the Middle East next, and this is Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking? I mean, like, what's that about?
We're not forcing everybody to, be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Well, Bloomberg learns that ASML and TSMC have ways to disable the world's most sophisticated chip-making machines in the event that China invades Taiwan. We'll bring you our scoop. Europe is divided over a request by the International Criminal Court's chief prosecutor to issue arrest warrants for the Israeli leader Benjamin Netanyahu and the country's defense minister on war crime charges. Plus, JP Morgan boss Jamie Dimon ignites succession talk at America's biggest bank, signaling his retirement is closer than ever. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Dell's chief executive says the company is unveiling a new line of personal computers optimized for AI tasks. Now, Bloomberg's Ed Ludlow spoke exclusively with Michael Dell alongside NVIDIA chief Jensen Huang at the Dell World Conference in Las Vegas.
All our new PCs will be AI PCs, right? And the reason is that anything that you're doing that has an edit prompt is going to be sped up because every software developer in the world is figuring out how to use all this new power in the GPUs and the NPUs in these new AI PCs.
Neural processing units for the
exactly.
initiated.
So that experience will be better. So when your PC is now 4 years old, it's time for you to get a new one, right? You're going to want the one that speeds up those new capabilities. And inside your company, they're going to want to make sure you have that they don't want to buy a machine that's going to last for several years that doesn't have that capability.
Jensen, where is NVIDIA's place in the AI PC? I know you as gaming. That's again, I grew up with the gaming side of NVIDIA. Do you have a place in the AI PC market?
Come back next year.
Exactly. There are a bunch of NVIDIA GPUs and Dell PCs, and Dell workstations. All of our GPUs have the same tensor cores that are running in H100s in the cloud. And so every one of our GPUs use AI to do its work. AI, of course, is going to transform gaming. All the NPCs, the non-player characters, they're going to be
Think
chatbots.
about development time, how it will be cut, for example.
Creating worlds is going to be easier. Instead of instruction-driven computing, it's now intention-driven computing. So it's easier to write programs. Python programs will be even easier to write. Video conferencing will be a lot better because of it. Yeah.
But what you did with Blackwell and other products is you innovated by saying, okay, let's combine GPU with CPU. Is that the next iteration for you in AI PC? You go, okay, here's the NVIDIA CPU that goes with it.
We want to support every CPU the world makes. And there are places that want x86, we support x86. Yes. There are places that prefer ARM, we support ARM. We just went to ISC, and the top most energy efficient supercomputers in the world are now powered by Grace hoppers. And so wherever it makes sense, we'll support the right CPUs.
The chief executives of NVIDIA and Dell, they're speaking exclusively to Bloomberg's Ed Ludlow in Las Vegas. Now, the JP Morgan chief executive, Jamie Dimon, says the bank's succession plans are, quote, well on the way. He says the timetable is not 5 years anymore after he was asked how long he would remain in charge.
I have the energy that I've always had. That's important. I think when I can't put the jersey on and give it full thing, I should leave, basically. The board probably, it's up to them at the time. Will I stay as chairman for a while? We'll see. But I think and we're on the way. I mean, we're moving people around.
Now, for more on this, let's go to Bloomberg's Jenny Serrain. So we were with him actually last week. I mean, he was on fighting form. He was on great form. So that I think when he says, I still have energy, yes, we can vouch for that. If anybody has a meeting with him, but for many years, he was always joking that he was 5 years away from retiring. I mean, it's been 20 years that he's been being 5 years away.
Yes. No, I think that's exactly right. So this was not the first time, but one of the first times where you see him kind of admitting that, his time atop JP Morgan might be coming to a close soon. Still nothing firm, still nothing concrete. Obviously, from your interview last week and then also just from the marathon of their investor day yesterday, you can see that he still has a lot of energy and a lot of excitement about the role. But yes, you see him sort of transitioning that language and kind of acknowledging that this won't be forever. It won't always be kind of the House of Diamond over at JP Morgan.
So Jenny, who are the main people that we should watch out for as possible successors to Jamie Dimon?
So there's been so many over the years, but right now it sort of seems like it's shaping up to be almost a three-way race. So earlier this year, they did a big management reshuffle. They put two people, Troy Rohrbar and Jennifer Peepsack, in charge of their corporate and investment banking side. And then they've got Marianne Lake, who used to be their CFO, and now she's leading all of consumer. And so you see him really trying to put these really key deputies over businesses that they might not have had experience with in the past, and kind of giving them more and more responsibility and oversight of more and more parts of the business, so that if it does come to pass one day where they might need to be elevated to that top role, that they've kind of seen all sides of the behemoth that is JP Morgan.
I mean, he's a tough act to follow. So, I know partly will be in what kind of business they run, but I don't know whether it's also based on personality.
Yeah, I mean, it's so interesting because it's hard to know how much of it is, he is Jamie Dimon, and so therefore he, is Jamie Dimon, or is it the JP Morgan CEO kind of has to have that personality? And, as the CEO of the biggest bank, do you need to be kind of the loudest voice in the room on all sorts of things, from regulation to Wall Street to, consumer banking to economy? So it'll be interesting because none of the three that you see kind of coming up behind him are really anything like Jamie. But I think there's also a case to be made that you don't have to be Jamie, and that there could be someone else to take over. So.
Well, we'll continue being on top of this story. Jenny and her team, of course, working night and day to get the inside scoops. Jennifer Serain there with the very latest on JP Morgan. Much more to come. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
U.S. President Joe Biden has defended Israel against war crimes charges sought by the International Criminal Court. Now, the ICC chief prosecutor says he's seeking arrest warrants for the Israeli Prime Minister, Benjamin Netanyahu, and Hamas leader, Yahya Sinwar. Now, Biden says there is no equivalence between Israel and Hamas. Well, for more on all of this, let's get straight to Fawaz Gerges, the chair and professor of the Contemporary Middle East at the London School of Economics. He's also the author of What Really Went Wrong, the West and the Failure of Democracies in the Middle East, which comes out next week. Professor, thank you so much for joining us. I mean, the court has put these charges against the Israeli leader, despite the U.S. saying they could actually jeopardize the chances of a ceasefire deal. Do you think it delays the deal?
It has nothing to do with the deal. This is an excuse that the United States has used in the past 7 months to undermine the work of international institutions, including the Security Council. The US and the UK have repeatedly claimed that any kind of an immediate ceasefire in the Security Council and any kind of a decision by an international court, whether the International Court of Justice or the International Criminal Court, will have an impact on what's happening in Gaza. Look what's happening in Gaza. 7 months, a great catastrophic tragedy. The killing continues. The displacement of the Palestinians continues. There is no deal. Israeli Prime Minister, to really summarize it very simply, does not really want a ceasefire, does not really want to end this particular war, because it really would mean the end of his political future. It would collapse his government, and that's why.
Yeah. But Professor, it will have an impact on Netanyahu's psyche, and it will have an impact in what he does in terms of the offensive in Rafah. Would it not be naive to say that they're not linked?
And I think it would be dangerous for both the United States and Israel not to take the decision by the International Criminal Court seriously. But I don't think they are taking it very seriously. I mean, think of what has happened in the past 24 hours in Israel. I mean, blanket attack on the International Criminal Court and on its chair. The United States said, President Biden said, the decision is outrageous. Britain said it's not useful. But the reality, this is really a substantive decision. It's a game changer. The question for your audience is the following. Why should the West and the United States and the UK celebrated an arrest warrant against President Putin when he invaded the Ukraine? And why should the United States and the UK and the West denounce the International Criminal Court when basically trying to hold Israeli leaders and Hamas leaders to the same legal standards? It tells you a great deal about how the world...
There has been a lot of heads of state trying to minimize casualties in Gaza, especially in Rafah, which is immensely urban and immensely dense with civilians and children and women. Do these efforts lead to anything? What is the right way to speak to Israel, to convince the Prime Minister to maybe slow down, to limit casualties? Who's the right person, who's the right country to be able to do that?
Asking really a rational, commonsensical, humane question. I mean, think the entire international community has been asking the Israeli war cabinet not to carry out all-out assault against Rafah. You have 1.3 million displaced people in Rafah. It's a very small city. Yet Israel insists, and Israel is attacking some parts of Rafah as we talk, you and I. And the United States, look, if you really want me to answer the question very directly, I think it's the decision of the United States. The United States provides the weapons. The United States provides the ammunition. The United States provides the political support. I mean, look, you asked me earlier about the International Criminal Court. Look how President Biden is going out of his way and basically undermining American legal precedents, trying to shield Israeli Prime Minister. At the end of the day, without American leverage, and I'm saying leverage, you have to stop the flow, the provision of ammunition and arms, and you have to accept the decisions by international institutions and stop using U.S. veto in the Security Council in order to prevent the establishment of the Palestinian state. To summarize, I don't think Israel is going to stop its war in Rafah.
Professor, what does the sudden death of the Iranian president mean for stability in the region, given all the proxy wars where Iran is involved?
I don't think the death of the Iranian president will bring about any changes in Iran's regional politics or foreign policy, for the simple reason that the Iranian president, Ibrahim Raisi, was not the commander-in-chief of Iran. He was not the highest top executive official. It's the supreme leader, Ali Khamenei. Ali Khamenei, the supreme leader, is the commander-in-chief. He constructs Iranian regional and international politics, there is also a National Security Council in Iran. So even though the death of Ibrahim Raisi represents a major loss for the Iranian decision-making process, I don't think it will have any critical, any substantive, any significant impact on Iran's regional and international politics.
But, Professor, it was my understanding that Raisi's death will have an effect on who replaces the supreme leader, Khamenei, and that the late president was mooted as a possible successor. So if not him, who?
Correct. It will have a major impact on the political, on the balance of power within Iran itself. Because, as you said, Ibrahim Raisi was a serious candidate to replace the supreme leader. Now, the loss of Raisi creates a vacuum. In fact, the next elections, presidential elections in Iran in 50 days, is not just about the identity and the character of the new president. It's about the replacement for the supreme leader, Ali Khamenei, because Ali Khamenei is 85 years old, he's ill. So that's why there's a great deal of competition, not between reformists and conservatives, but rather between conservatives and ultra-conservatives, because whoever is elected president will most probably become the supreme leader of Iran in the next few years, 5 or 6 or 3 or 4 years.
I was going to ask you whether there's a chance of having more moderate leadership. Do you think it will be conservative or ultra-conservative, though?
I mean, because the reformists have been excluded, have been marginalized, have been really prevented from running for elections in Iran in the past few years. So the ultra-conservatives now are fully in charge. And that's why we need to really focus and pay attention to the presidential elections at the end of June to see what kind of candidate is elected, whether he is a moderate conservative or a hardliner like President Ibrahim Raisi. My take on it, I think you're going to see more of the same. I think the next president will be a similar a similar character with an ideological worldview to the president who just died 2 days ago, Ibrahim Raisi.
Fawaz Jarjas, thank you so much for joining us today. That was the chair and professor of contemporary Middle East at the London School of Economics. Now, coming up, actress Scarlett Johansson reveals how she had to push back against OpenAI's new product. We take a look at how artificial imitation has become a hot-button issue in Hollywood and beyond. That's next, and this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Now, investors standing by for NVIDIA earnings tomorrow for the latest gauge on the AI rally. Meanwhile, OpenAI is in the headlines after being criticized by Hollywood star Scarlett Johansson. Now, here to explain is Bloomberg's Alex Webb. Now, Alex, I mean, there are many stories, actually, where Hollywood's really just not happy with OpenAI. This is basically Scarlett Johansson saying, no, you can't use my voice for one of your features. They used a voice that is very close to hers, and I guess she took action.
Yeah, because she says that OpenAI actually contacted her about essentially licensing her voice. She, for undisclosed reasons, but she said she thought about it long and hard, decided not to do that, not to record it and hand it over to them. The interesting thing, of course, is that she voiced the AI assistant in the film, the Spike Jonze film, Her, about a decade ago. And the voice that was ultimately shown at this demonstration seemed to be very similar to the voice in Her, and not least in the sort of syntax, in the way that, I say she, that it interacted with its interlocutor.
But Alex, I mean, this is you know, and we talk about, we have all these stories almost day in, day out about you know, being able to basically fake your voice, and so, you know, concerns about kidnapping or kids calling their parents where it's not them, asking for money and things like that. And then we also, in the realm of, in the future, this is what the Bumble founder was saying, we don't have to date people, we can have our avatars online, figure out who's the best match.
Well, she talked about it, I think, in the interview that our colleague Emily Chang carried out with her at the Bloomberg Tech Conference, as being a sort of concierge, right? That you'll sort of set your two AIs up, they have a conversation, and they work out your schedule, see if you guys are a potential match, and then you actually meet in person. The thing that's fascinating about that is there is a film with, I think, with Jack Whitehall with sort of very much that premise. Her, of course, is actually kind of mildly dystopian at the end, and it's fascinating that so many of these tech executives, they look to Hollywood, they look to the the culture writ large as a touchstone for what they're doing, even though often with these films, the message they're conveying or trying to transmit isn't necessarily a positive one. It is faintly dystopian about how they see the future evolving. So there's a strange sort of disconnect there.
But how do you see it evolving? I mean, again, there's kind of like, you know, we're waiting for NVIDIA, which is single-handedly propping up the U.S. economy almost. Those earnings are tomorrow, and then you have these, you know, incredible stories, and I don't know whether they're far-fetched and they're like 2 years away or they're 10 years away.
Well, there's a part of this which is that having spent all this money or spending all this money on NVIDIA chips and chipsets, the companies doing so, not least the hyperscalers, the cloud operators, need then to make those pay for themselves by finding a business case for them. They are going to be pushing these in a big way, particularly, I think, the PC makers are really looking for an upgrade cycle right now. PC sales have been slowing. The likes of Dell, Apple, and others are really looking for more.
Alex, thank you so much. Alex Webb there. Never a dull moment when you cover AI. Also never a dull moment when you cover Elon Musk. A coalition of Tesla shareholders urging the rejection of Chief Executive Elon Musk's proposed $56 billion pay package. Now, investors are set to vote on the package at the annual meeting in mid-June. The rebels say that Musk is distracted by his commitments to 5 other companies, preventing him from serving the EV makers' best interests. Now, let's bring in Bloomberg's global autos editor, Craig Trudell. Craig, I have so many questions. First of all, I mean, he is distracted, but is he still doing a good job with Tesla?
I think when you look at this letter and look at it closely, I think they particularly take issue with the performance of the company just in the last few years. And if you look at how the stock price has performed, you know, say since the day that he disclosed taking a stake in Twitter, Tesla is significantly lagging the S&P 500 index. And so did he accomplish really incredible things that were sort of laid out in this pay package and this award? Absolutely. But has he really sort of shot himself in the foot by the way that he's run the company in the years since he achieved these things? That is also true, and that is what they're taking issue with, and really leveraging the ruling in Delaware that, through this whole pay package, out the window and force the board's hand to try and, adjust and offer this back up to investors.
I mean, $56 billion is a lot of money. I mean, I imagine that he'd be pretty angry about being challenged. And so are there consequences from challenging Elon Musk? I think, he has proactively, even before the Delaware court made its ruling, sort of, made this not so veiled threat that, if he doesn't control 25% of this company, he will take his work on AI and robotics elsewhere. So that is sort of looming over, and you do have this effort on the part of Tesla to really drum up support among retail investors and some loud voices on now X, really sort of holding out this potential for if we don't give Elon this, will he leave? I guess the counter to that, if you ask the Delaware Chancery Court judge, is, hey, this guy still has quite a big stake in this company and very much has a vested interest in seeing the stocks stay, where it is. So interesting. Craig, thanks so much. As always, our Global Autos editor, Craig Trudell. Now, up next, Bloomberg Brief, Danny Berger, Manus Cranny in New York, and this is Bloomberg.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors, including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Craney. You're welcome to Bloomberg Brief. Let's set your agenda. The last bear standing, JP Morgan's Marko Kolanovic doubles down on his gloomy outlook for stocks just a day after Morgan Stanley's Mike Wilson capitulates. FDIC Chair Martin Gruenberg says he'll step down after allegations of a toxic work environment at the agency during his tenure. And two major retail earnings hit the tape today. Macy's and Lowe's give us an estimate of the health of the U.S. consumer. A very good morning. It is Bloomberg Brief. This is the state of play. In the game of poker, stocks are flat at the moment, but in the game of poker of calls, you've got the Perma-Bear Kolanovic. He's holding on to his 4,200 level. No reason to buy. At least Wilson capitulated yesterday and said, look, this market could move by 2% higher between now and June 2025. Max Kettner at HSBC, we know, is an evangelist of everything rallies in the markets. Keep an eye on Palo Alto at the bottom of your screen. The security software company, guided lightly on fourth quarter, and the stock is being blasted lower this morning by 8.3%. To the bond market, 442 is where we are. We've had 3 weeks of gains. Yes, the reprieve, the chime from the Fed, Master and Bostic, is a steady state is where we want. By the way, keep an eye on gilts. BlackRock have gone overweight developed market bonds for the first time in 5 years. They're cautious on the US. You want to be long tips, but their top pick is the UK at the bottom of the screen there. We've got a nice slate of bond issuance, 25 to 30 billion of investment grade. Will the market lap it up easily? And crude is down by 0.8%. It's a sloppy physical market, says Halima Croft at RBC. I'll ask Nadia Martin-Wiggins what a sloppy physical market actually means. So I've referred to the Perma-Bear. There is one left on Wall Street. It is JP Morgan's Marko Kolanovic writing this. We do not see equities as attractive investments at the moment, and we don't see any reason to change our stance. This after Morgan Stanley's Mike Wilson threw in the towel, boosting his S&P target of 5,400. My guest this morning is Simi Shah, Chief Global Strategist, I should say, for Principal Asset Management. So, Simi, good to have you with me. Kolanovic is holding on like the Grinch with that position. Wilson capitulated. He sees a sunny macro environment, but that sunny macro environment's only worth 2% on the upside. So is that a conservative call, or is that at the money for you? Good morning.
Good morning. It is. So I wouldn't say it's very, very conservative. I think from our perspective, we are expecting further gains, but nothing as tremendous as what you saw certainly in Q1 of this year. But we're not in Kolanovic's camp either. I mean, to be a bear from here, you have to be really assuming that there's going to be a fairly significant slowdown in the economy and maybe further disappointment from a rate perspective. So there's vulnerabilities, but if we're looking out over the growth story, it's still fairly solid. And if you're going to have solid growth, you're going to have solid earnings, and that should be enough to propel the market a little bit further.
And I hear that those are the pillars, I think, of most market participants. But then it comes down to, I suppose, differentiating where exceptionalism is. Peter Cheer over at Academy, I like what he said. I like my exceptionalism to be exceptional. And so therefore, I want to get a sense from you, does US exceptionalism prevail? Or is it going to be as formidable as it was, or do you downgrade it ever so slightly? Look at what BlackRock are saying. They want to be long tips here, but they want to be longer of the UK in the rates market. So exceptionalism, does it hold for the US relative to ROW?
So it depends. What is your time horizon? I mean, if you're looking out over a longer term perspective, yes, US exceptionalism still stands. But I do think that at the moment there are potentially some more attractive opportunities outside of the US, mainly across developed markets. If you just think about even Europe, where if you do a comparison to the US, where we have expensive valuations, we're not entirely sure what the Fed rate path is going to be. And if anything, you're getting economic growth downshifting. But then you look over to Europe, where you know what the rate path is going to be. We're fairly certain that the ECB is going to be starting cutting rates very soon. Valuations more attractive. And you're also getting upside economic surprises. So certainly that leans into the international market rather than the US. I'm not sure that will be sustained for too long, but at least you've got a window of opportunity right now.
But yet you do see a broadening of the market rally. We're counting down to NVIDIA. I mean, there was a phenomenal piece of theater yesterday, I thought, between Jensen Huang along with a number of other CEOs, the Dell CEO. The options market is betting SEMA for an 8% plus or minus. I know those are slightly out of the money options, and we can write a great story about get ready for an 8% rally or rout of 8%, but it is pivotal. Or how pivotal is it to sentiment and then allocation at SEMA?
Look, it is inevitably, it is important because it's such a large part of the market, and there's so much riding on this idea about AI and tech. But I think if you're, as an investor, you don't want to be looking at the immediate term. You want to be looking out over the next 3 to 6 months. And as investors in tech, we're looking at it from a kind of a couple of year horizon. So there could be some disappointment, certainly with specific stocks in the near term. That's always possible. But when you look at over a 3 to 5 year term, we do think that tech is going to continue to deliver. So we are maintaining our overweights to that mega cap, large tech perspective, but we're also starting to see that there are other opportunities in the market where you do see a broadening of the rally that you've seen, probably to parts of the market which have been somewhat unloved up till now, and where valuations are a bit more attractive.
I'm always curious to get professionals' view on how all in on this market we are. And Max Kettner is pretty bullish, I've got to say. I mean, he's almost an evangelist in terms of his model. Everything rallies for Max, so we'll get him on soon. But he talks about the market, real money being, and I was surprised at this, slightly overweight equities. How would you describe positioning? If Kalanovic, is holding on to his perma-bear situation, Wilson capitulates and goes for 2% upside from here. Goldman says we're pretty fully valued. How do you think real money is positioned? Is it lightly into these equities?
I think the real money is looking at the market and they're saying, look, we like the outlook. We have got some concerns about valuations, and they're looking for some opportunities. I was in the US over the last 2 weeks, and the conversations that you have, there are still some fears that maybe the market has gone too far, so there's vulnerability. But they're looking for the opportunity to get back into the market. It's just that the timing, I think, is what people are struggling with. So I think there's still opportunity ahead, but certainly maybe there needs to be another catalyst to come.
So if you've gone out to see the clients in the United States, I'm dying to know, how concerned are they about politics? I mean, we're counting down. We're 24 weeks away. What are they perhaps most concerned about? Did politics feature high or low in that conversation agenda?
It's interesting. It actually wasn't as high as anticipating it to be. I think when people are thinking specifically about the US election in the US, they're not so worried about what happens to the US market. They're a little bit more concerned what happens to the international markets, particularly, of course, China, and to Europe. It's one of the reasons why I think there is still that caution when it comes to thinking about the UK and Europe. But certainly nothing to what we would have anticipated before, with almost a lack of concern. I think everyone knows what's going to come in from a US election perspective. I think the biggest takeaway that I had actually from the US was actually they had they don't mind, or they're not too concerned about what the Fed is going to do next, about the timing of the rate cuts. They're looking at the market and saying, look, we know that the growth profile is pretty strong. The Fed may deliver it September, December, January, who knows? But at least in terms of a fundamental basis for the market, that can continue to keep it going.
And just reflecting back on BlackRock, I think it's interesting. They've gone overweight DM bond markets for the first time in 5 years. So this is quite a significant shift in gear. Now, the lean is, they think the UK is where their number one choice is, because the presumption is that, I suppose, those markets, this is what they say, we're now overweight developed market government bonds overall on a strategic horizon for the first time in 5 years, and they lean into the UK. Does that chime for you in terms of duration, US relative, let's say, to gilt, to bund, or to other bond markets?
I think it does to some extent, because certainly if we're looking at the central bank profile, we look at the Fed, and I know, of course, there's going to be debate about the exact timing, but we are expecting a shallow cutting cycle. We don't expect there to be many cuts over the next 18 to 24 months. Whereas if you look across to Europe and the UK, for the ECB and the Bank of England, we know that there's going to be rate cuts fairly soon, and their profile is going to be a little bit more aggressive. So there's a little bit more urgency to ease monetary policy over the next 2 years. So yes, I kind of agree with BlackRock in that your opportunity set is probably better in terms of international bonds over US.
So I don't need to switch the old sterling into dollars yet and go long treasury. Seema, thank you very much. Seema Shah there, our guest this morning, setting the agenda on markets at Principal Asset Management. Other stories trending on your Bloomberg terminal this morning. President Biden has forcibly defended Israel against war crimes, the charges sought by the International Criminal Court. Now, the ICC chief prosecutor says he's seeking the arrest warrants for Israeli Prime Minister Benjamin Netanyahu and the Hamas leader Yahya Sinwar. The U.S. president called on the court's decision to target Israel's leaders outrageous.
We reject the ICC's application for arrest warrants against Israeli leaders. Whatever these warrants may imply, there is no equivalence between Israel and Hamas.
There are signs of upward momentum for the U.S. approval of ETFs investing directly into the second largest token, Ether. The SEC has contacted at least one exchange and at least one potential issuer to update the related paperwork. Now, this move would be unexpected in terms of giving a green light is by no means guaranteed. And Peloton has kicked off the sale of a new loan as it works to refinance existing debt and recover from a recent slump in sales. Fitness company is said to have launched a $1 billion leveraged loan offering yesterday. The proceeds will refinance existing debt. Coming up on the show, are you ready for retail? Macy's and Lowe's results hit the tape before the bell. From a takeover bid to the consumer pullback. More on those stories this hour.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Hey, it's Bloomberg Brief. I'm Menace Crenny in New York. Now, Bloomberg Scoop, ASML and TSMC, as we understand it, have ways to disable the most sophisticated chip-making machines should China invade Taiwan? What are the details? Tom Mackenzie is with me. So, Tom, this is a great scoop by the team. What exactly are they capable of doing, and why are they making this announcement now?
Yeah, well, they haven't made the announcement. It is down to that fantastic reporting, as you say, by the team in the Netherlands, backed up by the team in the US. But what we have learned, what they have learned through their reporting, is that ASML and TSMC, who have this symbiotic relationship, have assured officials in the US primarily that they have this ability to shut down these machines, the kill switch. Remotely, they can close these down. What are the machines we're talking about? We're talking about these extreme ultraviolet lithography machines, the machines without which you cannot produce the most sophisticated chips. ASML makes them, they ship them to TSMC and their foundries in Taiwan, and the two companies, again, work in partnership to ensure that we have the most cutting-edge chips for our mobile phones, but also, of course, importantly, for our military systems as well. And that's where the concern of the US lies. They've been pressuring the Dutch government, they've been pressuring ASML and the Taiwanese to assure them that if China was to invade Taiwan, they would have the ability to ensure that those machines don't get into Chinese hands. And this has been the response from ASML and TSMC. We have this kill switch, they say.
Yeah, I mean, my apologies there. This is a Bloomberg scoop rather than an announcement by ASML. It's sort of, if it is actual fact, it's sort of that scorched earth, the ability to deliver scorched earth from a protection point of view. Then that brings the bigger question, Tom, I think, and this is the point that you make very clearly. It's about the political calculus vis-a-vis Washington and Europe's policy towards Beijing, because, of course, there has been this impact on ASML in terms of what they can export to China, and that is going to hit their numbers this year. But do you think from a political dynamic, if this comes into being, the ability to deliver scorched earth, will it shift the calculus?
I mean, you're absolutely right, Manus, on that front, absolutely. And in terms of the impact on ASML and then in terms of the politics, one, the impact on ASML, they still get 25% approximately of their revenue and sales from the mainland Chinese market, the other 25% approximately coming from Taiwan. So this is a major market still for ASML. And yes, to the politics, you're also absolutely right in terms of how you frame this. It underscores the urgency of officials in the US who are concerned that China is making rapid leaps and bounds in terms of the catch-up on the ability to produce these chips, and that they're able to do that with some of this kit and technology provided by the Netherlands, by Japan, and they've tried to close that loop. They tried last year, so the ASML is restricted from sending its most sophisticated machines to the Taiwanese, to the Chinese market, I should say, and now there's this additional measure. They wanted this reassurance, and some within the military complex of the US suggest that China could be ready to invade Taiwan by as soon as 2027.
Okay, well, it's sort of jangling the nerves globally on the political stage. Tom, thank you very much. Tom Mackenzie with the very latest on ASML and TSMC. So after facing weeks of criticism, the FDIC chair, Martin Gruenberg, will step down once a replacement has been found. Now, this is after reports of a toxic work environment put the regulator at the center of a heated political fight and fueled the calls for his removal. Joining me now is our managing editor for EMEA Finance, Tom Metcalf. Tom, Gruenberg had promised to clean up the FDIC. And I suppose the question is, and this is a very political issue, is how soon can Biden replace him? And how hard is it going to be to find that successor?
Yeah, well, in terms of the time frame, they'll be wanting to move very quickly on this. They'll obviously want to keep kind of a Democratic appointee at the top of this organization. You know, and it's helpful that the departing chair is sticking around. It kind of gives them that flexibility to really move this process forward. In terms of likely candidates, there'll be, you know, the usual spaces. They might be looking inside the FDIC, but I suspect, given the nature of this report, very damning about the culture there, they'll be looking further afield. And you know, this idea of having a clean broom and hopefully find a way to get this organisation back on track.
It's certainly politically split, isn't it? 2 Democrats and 2 Republicans, and the vice chair takes over, was quite vocal in terms of some of the regulatory proposals and criticising those. In terms of another change of leadership, this time, of course, we're talking about JP Morgan. Jamie Dimon seems finally to be setting a little bit more of a guardrail up around the succession plan. He was sort of very clear yesterday that it might not necessarily be 5 years away. So who are the characters that will sort of ascend in our attention at JP Morgan now?
Yeah, for the first time, really, Jamie Dimon suggesting, you know, he's always been given this pat answer of, oh, it'll be 5 years away, and constantly gave that answer, whatever the time frame was. So, I mean, what this really puts a spotlight on is those, I would say, the 3 internal candidates who are kind of viewed as being the front runners right now. Obviously, these things can change. But, for example, you've got the head of retail there, Marianne Lake. You've also got the 2 co-CEOs of this gigantic unit, the Commercial and Investment Bank. And I think those 3 are really viewed as the most likely sort of successors. But of course, you know, look, Jamie Dimon being Jamie Dimon, he has added a little bit of clarity, but there's plenty sort of wiggle room. And he also had a great line where, you know, he said, yes, I may well step down as CEO, but I wonder if I stick around as chairman. So, you know, that would be a very interesting situation. So it's as ever with JP Morgan, a constant guessing game, a huge sort of issue, and you know, clarity on this will be really appreciated by the stakeholders, but I don't think it's going to be clear for at least another year or 2.
Could you imagine living under the shadow of your chairman, of Jamie Dimon, if you've just been appointed to JP Morgan as the CEO? I'm sure you know, it's not a shadow necessarily that you're going to break free from very easily. Tom, thank you very much. Tom Metcalf there, tracking the stories this morning on Wall Street. Coming up, I look at what else is making the headlines around the world. Context matters on Bloomberg. Good morning.
Names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a story
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Microsoft introduced new software and computers infused with AI features as it steps up its efforts to compete with Google and Apple. The CEO, Satya Nadella, spoke exclusively to Bloomberg about the AI race.
It's a really ground up, reimagination from silicon So we have a new SoC that has the NPU. So think about it as we've always had CPUs and GPUs, and now you have neural processing units to, in fact, locally process these AI models. We have 40+ AI models that are local on Windows machines that then are being used by a variety of experiences that we have built into Windows, starting with this photographic memory feature called Recall, which is just phenomenal. And of course, Copilot is built in to Windows. And Copilot is just not an app. It's sort of a shell affordance that's going to be there assisting you as we showed a demo of somebody playing Minecraft and, you know, me just sharing my Minecraft screen with Copilot. And Copilot helps me finally be as competitive with my daughter on Minecraft as always dreamed of, right? And so, and then of course the third parties. I mean, Adobe showed how they're bringing all of what they do to Copilot plus PCs and many, many more other developers. So it's an exciting day for us to have a complete rethink on the full stack of Windows for the AI age.
I bet you're pretty good on Minecraft, just a hunch. This new feature, Recall, means your computer basically has a photographic memory of everything you do on it. And the speed at which this is all happening is just so fast. It seems so unprecedented. How will this really make things different for consumers and change our daily routines?
Yeah, I think if you think about the PC, it has always been about creating things, right? Which is, it's about being able to synthesize lots of information, create new information, pass better judgment, gain insights, and act, right? That's what you sort of do on a PC. AI is an assistant. AI helps you as an end user do anything, right? So one of the most beautiful demos today was even this thing called Co-Create, right? I am in Paint, and I'm painting a nice spring Seattle day, and I want mountains with wildflowers, and I can now have the AI assistant. That painter in me now can be inspired by AI, but ultimately I'm the one painting, and I get that satisfaction. I feel one of the things that's been, one of my coworkers was telling me when her 5-year-old is saying for the first time, give me designer time. That's what felt, it feels like in the late 80s and the early 90s when we all fell in love with PCs. That was what really got us going, which is the ability to use computers to create. And I think this AI is just going to take it to the next level.
Pace of change there, Emily Chang and Satya Nadella. Let's get you up to speed with the front pages. This is the main story of the day. Succession in Iran.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you also have to, you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really it's not going to be produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. This is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce half a gigaton, remove half a gigaton of carbon a year. And the way to think about that number is that we have to remove, say, 100 half a gigatons, a year in terms of what we have to replace.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From our global headquarters in New York, I'm Manny Skrenny. Let's set your agenda. The last bear standing, JP Morgan's Marko Kolanovic, doubles down on his gloomy outlook for stocks just a day after Morgan Stanley's Mike Wilson capitulates. FDIC Chair Martin Gruenberg says he'll step down after allegations of a toxic work environment at the agency during his tenure. And two major retail earnings hit the tape, Macy's and Lowe's, before the bell, defining the exuberance of the U.S. consumer. A very good morning to you. Stocks are nervous. We're counting down to that all-important NVIDIA moment. So 53.30 is where we are. You've got Kolanovic, the perma bear, still holding on. He's got blood on his fingernails. He's still holding on to 4,200. That is 20% below here. No reason to buy. And just think 24 hours ago, Mike Wilson capitulated over at Morgan Stanley. So there is the battle of the game of calling this market. Real money is still slightly overweight equities, according to Max Kettner. NVIDIA is at the bottom of your screen now. You're going to see that we're counting down. The market is preparing for an 8% swing on NVIDIA. Had a nice day yesterday. Palo Alto under pressure, fourth quarter guidance on their billing. This is the software security company. Really taking a smack this morning as their guidance was off. To the bond market, you've had 3 weeks of gains. And again, some caution from BlackRock. They're overweight developed markets for the first time in 5 years. They're cautious around the U.S. They want to be longer of inflation in the U.S. And we have a slate of bond issuance, $25 to $30 billion worth of bond issuance. Oil is down by 0.9%. We're going to be range bound, according to Halima Croft and the team over at RBC. And we have sloppy physical markets. I don't quite know what sloppy physical markets are, but it sounded good. So in terms of the narrative for these markets, again, from the Federal Reserve, we have the restrictive narrative from Loretta Mester, from Bostic. Bostic wants to stay in a steady state. When it comes to duration, we have heard from Seema Shah, from Principal Global Advisors, again this morning, talking about the sort of slight hesitancy on duration. JP Morgan say they remain neutral on duration. It's just too early to add to that. So I mentioned the Fed and the narrative from Loretta Mester and Raphael Bostic. And Bostic doubled down on his higher for longer mantra. Meanwhile, you have the Cleveland Fed President, Loretta Mester, saying that 3 rate cuts in 2024 are no longer appropriate.
I was on the record before saying I was at the median, which was 3. The developments I've seen in the economy right now, I would not think that that's still appropriate because the inflation risks have moved up. It's too soon to tell what path inflation's on, so we just need to collect more information on that. In the first part of the year, what we saw was the risks that we were too restrictive have gone down. You know, last year people were worried about, oh, the Fed may be getting too restrictive and therefore it's going to dampen the economy. Those risks went down. At the same time, the risks to inflation, I think, are tilted to the upside and remain so. And so that's the balancing that we have to do as we set policy going forward.
I do think that our new steady state is likely to be higher than what people have known over the last decade, maybe back to where we were in the 1990s and 2000s, but we'll just have to see. Anything can happen. My outlook is really that inflation will continue to fall through this year and into 2025. You know, I think that it will take quite a while for us to get all the way to 2%, but I do think we'll get there.
Atlanta Fed President Raphael Bostic, along with Cleveland's Loretta Mester, speaking exclusively to Bloomberg with Mike McKeep. So that's the bond market tucked away. The gold market takes a breather this morning after hitting record highs. Nadia Martin-Wigan of Svelland Capital writes this. Unlike 2008, when oil became the new gold, which was a demand-led rally, in the current commodities upcycle and gold rally. Supply and security concerns are the top priority. Nadia Martin-Wigan joins me now. Nadia, good to see you this morning. So this is about really a gorging of central banks who are politically worried about their exposure to the United States. Is that ultimately what's driving the real alpha in gold this past couple of months? Good morning.
Good morning. Absolutely. When we look at Q1 buying of physical gold, it was led by China, who bought $2.5 billion worth. It was led by Turkey, that bought $2.5 billion worth. We saw additional buying from India, Kazakhstan. And when we look at this growing influence of this gang of BRICS countries, we expect sharper buying from the likes of Saudi Arabia, UAE, and also Russia when they think about stabilizing their economy while the war rages on in Ukraine.
Is this a form of de-dollarization? I mean, we've heard some sort of saber rally. I mean, obviously, gold is priced pejoratively in dollars, but is this a form of removing and protecting themselves politically, geopolitically, from the U.S. and from their treasury holdings?
And from sanctions against their holdings. As we see now, even the Germans are on board with using the extra interest on the frozen assets taken from Russia to help pay for weapons in Ukraine. Mm-hmm. I think in addition, when you look at Chinese retail buying, part of that is also about thinking about maybe a devaluation, but the real drive in terms of the bulk of buying are these central banks, and the world is incredibly unsafe and unstable if we compare to how it looked 25 years ago. So every government is looking at this.
So we're looking at a price of gold over the past year up 22%, $2,416 and change. Never forget the 57 cents. But we are running into, I would say, a buffer of where the consumer side, we are seeing a little bit of demand destruction. Is it fair to say that overseas purchases of gold fell by 30% month on month in China? So are we at some kind of a sense of exhaustion point in pricing, or will the central bank buying trump all the retail demand?
The central bank buying will absolutely trump the retail demand. And what we've seen also on the ETFs and on the paper market is there has been exiting on that side, but it's been the physical buying that has been the focus of the central banks. They want to hold it in their vaults.
So let's flick it over to the copper market. Jeff Curry, we know, has been a long evangelist of copper. Copper is the new oil. I mean, I could wax lyrical on behalf of Jeff, but I think we can move on from that. On a slightly more serious note, let's disaggregate this. I mean, we are just exploding on copper. So the first thing I want to understand is, to what extent is that just a blowout on specs relative to the demand structure? And I put that to you because we've seen this in the commodity market last year or 2 years ago when the Russian war on Ukraine began, and we saw this violent constriction and trading by hedge funds in electricity and in the commodity markets at that point. So explain to me what's happening in the copper market.
Yeah, so when we look at that medium-term picture, energy transition, population growth, movement of cities from the G7 with the largest populations and industrial demand need, electricity demand need, to the emerging markets, that's the long-term copper story. What has really been a catalyst right now when we think about versus 2020, 2022, has been this realization that AI requires a ton of energy, and to build out that energy supply, we need copper. And most importantly, we need the grids. And so that has been the catalyst in the short term to make things pop. However, when we look at the shape of the curve, we're still in contango in the front, right? And it's really in December where we hit that backwardation. So that is where the market thinks in December we'll have that real supply spike. But when we look at what happened in the cocoa market, for example, that took 3 years to build up that trade. Now copper is having this side where we have this demand catalyst, but the main problem is the supply, because we don't have a shale solution. So when you say copper is the new oil, it is like oil was in 2007, 2008, because we didn't have shale back then, right? You needed this long-term supply to actually cover that demand. So when we look at prices now in copper, in order to get us to a point where the market can rebalance, we will have to hit a demand destruction number. So that is much, much higher than I think what the market is perceiving right now. So 15,000 could very easily be hit quickly, as we saw with algorithmic trading. When we see CTAs, what happened with NVIDIA. We could have that exact same thing happen in copper, and there's no stopping them once that momentum is going until we hit a demand destructive number.
So that is a lumpy call, $15,000. We're at 10,869 and change at the moment. So what proportion of that is just pure spec, and what proportion of that is betting on AI, the greenification, the military use, the AI? Is it those solid pillars of demand that can propel me to 15,000, or is it just short-term vol and financial manipulation?
When we look at the energy transition and that changeover, it is happening, right? We've seen China spend over $500 billion last year just on upgrading their grid system. They're going to do similarly this year. We have seen them be the #1 investor in renewable energy. That is something that is going to spread to other parts of the world, especially when natural gas isn't as easily available as cheaply. Of course, that is also going to be growing very quickly on the LNG side. But we also will have this renewable side driving it. When we look at the grid system in Europe, for example, 40% of the grid system is more than 40 years old. That requires a ton of copper. And another thing I would just add, last year, a lot of the market was already waiting for copper to move, but the market has been so stuck in this negative spiral about the housing market in China that they don't dare get into the copper market. So we're still shrugging off bad news on that residential side and on property.
So do you say real money is underweight? If the specs are in and the specs are long and they have that relief through to December, very quickly here, would you say then that real money, there's still room to grow in terms of positioning? Briefly.
Absolutely, yes. Right now it's paper-led, but the physical market and real money is still going to come, and it's going to come over the next 12 to 18 months in a very big way.
Okay, there's your call. We'll blast that out, Nadia. That's a hell of a call. Nadia Martin-Wigan at Svelling Capital. But you know what? That's what makes it a special guest. Coming up, we'll bring you Bloomberg's exclusive interview with the CEOs of Dell and NVIDIA. Context matters on Bloomberg. Good morning from New York.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
It is Bloomberg Brief. I'm Manus Cranny in New York. Well, Dell and NVIDIA, they're teaming up for a new line of PCs optimized for AI tasks. Bloomberg's Ed Ludlow spoke exclusively to the CEOs on the changes coming into the space at the Dell World Conference. Let's take a listen.
This is a great example of how you have an ecosystem of companies coming together along with all these incredible innovations in GPUs and compute and storage and networking and all the AI models and software companies that are utilizing all this power, and it's causing a new industrial revolution.
You know, we want to bring this generative AI capability to every company in the world. Every country has its native natural resource called its language, its culture, its intelligence. And now people realize that because their country's data is part of their natural resource, not just the copper mines and the gold or, you know, the lithium or whatever it is, it's also the data is also part of their natural resource, and they have to make sure that they harness that natural resource and transfer it into artificial intelligence.
This is a tsunami of change, and only the smart ones are going to recognize I have to plant the flag now. Whether the story is complete or not is not the issue. The train has moved out.
What a great line there. The CEOs of Dell, NVIDIA, and ServiceNow speaking to our very own Ed Ludlow. The train has left the station on AI and the race. Matt Bloxham is with me from Bloomberg Intelligence. Matt, I mean, it sort of feels as if this is Dell's sort of iPhone moment, or could be. But if you look at AI in PCs, is this going to be enough to revive stagnant demand for them? Is this some kind of pivotal moment in their rivalry with Apple?
I think it could be, and it's certainly going to be the real focus for consumer technology hardware over the next 12 months. You know, we saw a week or two back that Apple launched a new range of iPads with the upgraded neural processors, and I think this is the kind of PC market kind of catching up on that. So I think, you know, if you're thinking about buying a new smartphone or PC, you want something that's going to give you those kind of forward capabilities. So I think consumers are looking for that kind of future-proof capability in the device, and it gives the salespeople in stores something to kind of really hook customers into. So I think this, I mean, PC demand has been stagnant. I think IDC said Q1 was the first time we've seen stronger sales volumes for something like 3 or 4 years. So, you know, the market does need something, and I think given the huge focus we're seeing on AI, this is kind of has the potential to be a really big stimulus for the market and bring exciting new capabilities to people's devices.
So let's talk a little bit about NVIDIA. I mean, much has been made of the options trades that are out there. I know that they may not be of a quantum that can actually really impact, but we're looking at some potentially huge swings, plus or minus 8%. So it is a pivotal announcement for sentiment, isn't it?
Yeah, it is, and I think, again, the market's generally positioned to see another beat and raise from them. So, you know, the market is looking for about $25 billion of sales this quarter. The company is guided for $24 billion. That was a big beat on expectations running into the quarter. So I think really what people are looking for is what they say about the next quarter, and they're likely to give a sales guide. And I think that the street's looking for something like, you know, close to $27 billion of sales for their Q2. So I think that's really the number people are going to be focused on, because, you know, so far NVIDIA's customer base has been quite concentrated around the so-called hyperscalers, so people like Google, these big kind of cloud platform providers. What they need to, and we heard a bit about it there from the kind of Dell conversation, is they need to extend AI demand into governments and corporations. And so I think that's the story they need to say, is, you know, that there is demand coming through from enterprises and governments, and that's going to sustain this revenue growth, you know, through 25, 26 and beyond.
Okay, Matt, counting down to NVIDIA. It is going to be the sort of the set of results that will fill or kill this next pre-summer season. Bloomberg Intelligence on the stories. Let's stick with the earnings. We've got Macy's and Lowe's. They'll hit the tape just before the bell this morning, and the market will get an idea of how the U.S. consumer is doing. Bloomberg's Dasha Afanasieva joins me now. So here we are. We're going to get both of these reports. Now, let's focus in on the luxury side first of all. That's at the core of what Tony Spring, the CEO's new strategy is. And that's against the backdrop. If I look at some of this luxury stocks that we've had report, they've had tough times, tough comps in China, tough times putting through price rises. So what's that going to mean for today's reporting?
Hi. So yeah, Tony Spring is switching to the more luxury part of his business. So that's Bloomingdale's and Bluemercury, which is a rival to Sephora. And I think it's the key thing to realize it's a super competitive space, particularly with Sephora, particularly with people buying their designer goods online. And there has been a downtick, particularly, as you said, led by China. And luxury brands are having a really tough time, like Burberry, Gucci, etc. But I think that his decision is kind of based on how much tougher it is in the more value segment space, which is where Macy's operates. That's why he said that he's going to shut a further 150 Macy's stores, 50 of those this year, and really why analysts expect sales to fall 2.8% in the quarter. And of course, this is all against the backdrop of trying to convince the market that Macy's is better off as a retailer rather than being taken private and possibly broken up into real estate and the retail bit, as proposed by Ark House and Brigade Capital Management. And what's also interesting is that the stock is trading well below their upgraded $24 bid. So it does appear as if the market thinks it will stay listed.
Yeah, I mean, they've upped their bid, haven't they? By 14% after being rebuffed. So it's going to be interesting to see, do they come back again? And what the rationale is there, or what Mr. Spring delivers in terms of a strategy. Home Depot, they reported last week. Can I read across into Lowe's, because we've got them reporting before the bell, or what crossover is there in the read?
Absolutely. I mean, Home Depot has been having a tough time with high interest rates. People are beginning to pay back their student loans again. There's kind of reduction in stimulus. So the consumer, the US consumer, is really stretched, and they're not doing that much moving house and redecorating. And in some ways, you can argue that Lowe's is actually more exposed, because 3/4 of its business comes from DIYers, rather than at Home Depot. It's more of a sort of 50-50 split. And the Fed's recently signaled that interest rates will stay high for a while longer, because inflation's proving particularly stubborn. So that these house renovation companies are unlikely to get relief very soon. But at the same time, over the last year, the stock is up 13% for Lowe's, so it's not all bad.
Okay, Dasha, thank you so much. Dasha Afanasieva on the retail outlet. Coming up, more Fed speak, another space launch attempt for Boeing. Context matters on Bloomberg. Good morning from New York.
the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Brief. I'm Manus Cranny in New York. Let's take a look at what's ahead for you today. You got it. More Fed speak. Barkin, Waller, Williams, and Bostic all on deck along with Mr. Barr. Then it's earnings, Macy's and Lowe's, as we've been saying. We're getting an insight to the U.S. consumer. And after the close, results from Toll Brothers on the building side. Some stocks that are on the move. I mentioned to you Palo Alto. They're extending their decline. They had a disappointing fourth quarter billings, and the firm posted worst single-day drop ever in the last quarterly report. Zoom extending post-earnings decline followed mixed results, weaker than expected earnings for the current quarter, while beating expectations for the last quarter. And of course, NVIDIA, you've just got to keep an eye on that stock. We're preparing for some big swings. Yesterday, we had a price upgrade from Barclays to $1,100 from $850, and that helped move it a little bit higher. I want to leave you with a snapshot of the bond market because there's a significant shift by BlackRock, specifically on the UK. Gilts trade at 414 at the moment. BlackRock is overweight developed market government bonds on a strategic level for the first time in 5 years. This is important, and where they lean into is, of course, the UK. Rates will fall more quickly there. Quick snapshot of that. That's where this dynamic makes the UK government bond yields more attractive than other bond markets in the world. Good morning from New York. The surveillance team, they'll take you through the next 3 hours. Context matters on Bloomberg.
Looking at your portfolio of businesses, it is about resilience, it's about pressure, it's about women. Like, so how does that come together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after I retired, was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Amman Hotel Group, where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Got a Wall Street that's waiting for something to break hard in one direction.
Our expectation is that we do kind of see growth slow through this year. We're seeing a slowing in the labor market.
There's still some anxiety, kind of in the system. I think a lot of it, to me, revolves around the labor market.
Realistically, we're just seeing a rebalancing in the labor market that's actually working out fairly well.
There are pockets of vulnerability, for sure. We're seeing that across the board.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance with equity futures just about unchanged on the S&P 500. Coming into Tuesday with equities on the NASDAQ 100 at all-time highs, and the S&P not too far behind, with a big focus on retail through the next 60 minutes or so. We'll hear from Lowe's, we'll hear from Macy's too. We've already heard from Target, earnings from them tomorrow, and this announcement. Plans to reduce prices on 5,000 items. Bramo, here's the quote. We know consumers are feeling pressured.
This has been a theme that we've heard consistently, yet we haven't seen it show up in the broad-based data enough to give people confidence that we actually are seeing disinflation. And that, to me, really is the reason why Kit Jukes just keeps putting it the best, twiddling our thumbs, waiting for inflation to come down. Maybe retail can give us a better sense.
Barclays, after this, is saying more challenges potentially ahead for Target. Target is saying that they're cutting into Memorial Day. You can maybe expect, if you're a consumer, more bargains also going to July 4th. And we're talking about everyday items. Milk, soda, fresh fruit, snacks, yogurt, peanut butter. And Jonathan, it caught the attention of the White House because Biden immediately tweeted about it.
Surprise, surprise. Let's see if we get more of that going into earnings tomorrow. Looking out for Lowe's in just a second, then Macy's in about an hour from now. We also need to look to the bulls on Wall Street, which now includes Mike Wilson and Morgan Stanley. We'll catch up with Mike a little bit later. Someone who's still bearish, Marko Kolanovic over at JP Morgan, maintaining our bearish stance. Here's the ingredients: high valuations, restrictive rates, inflation, and Lisa, the world in flux, from Marko Kolanovic.
He also did acknowledge a negative stance in equities has hurt the performance of our multi-asset portfolio over the past year, you think? I think it's got to be pretty awkward. At this point, there is this discomfort that even some of the bulls have with valuations. That said, it's getting harder and harder to see the oxygen really come out of the room enough to get down to, what, 4,200? Is that his projection?
You might know who might agree with him. It's JP Morgan. Yesterday, down by about 4.5%. It's the CEO, Jamie Dimon. We're not going to buy back stock. A lot of stock at these prices. That was a standout for me. I know this morning we're waking up talking about succession at JP Morgan. The standout for me yesterday was his view on the price of his own stock.
You're not alone. Pretty much everyone in the market cares a lot more about that than, frankly, even Succession, because if you take a look at where the stock price dipped, it was exactly at his comment that he's not interested in buying back stock, given where valuations are
We'll
at.
pick up on that story a little bit later. We'll throw that one at Max Kettner of HSBC. Equity futures at the S&P 500. Our scores this morning, just about unchanged to going nowhere. In the bond market, your 10-year yield down a couple of basis points on a 10-year 442.37. In foreign exchange, the euro 108.73. Coming up this hour, we'll catch up with Max Kettner of HSBC as the NASDAQ 100 tops another record high. Stephen Cook of CFR on the death of Iran's president, and former Fed economist Claudia Sahm on the overload of Fed speak still ahead. We begin with our top story, the NASDAQ 100 hitting another record high as investors double down on Nvidia before earnings tomorrow. Max Kettner of HSBC writing this: we think the rally has further legs as short-term investment and positioning is not yet sending a warning signal, and the tail tail risk of Fed hikes has been taken off the table. I'm pleased to say that Max Kentner joins us now for more. Max, let's get into the bearish view on this equity market and tell me why Marco's wrong. High valuations, restrictive rates, inflation, and the world in flux. What do you say back to that?
Yeah, look, I would say valuations, number one, are not a great tool at all for tactical asset allocations or for tactical views, right? Like, just because you buy an S&P or any equity at a 21 or 20 times earning doesn't mean that it can't go one turn higher. So valuations in the long term, fine. They tend to work over sort of a 5 to 10 year period. Over a shorter period of time, let's say 6 to 12 months, they do a really, really poor job in predicting short-term performance. So I wouldn't really use that as a bearish argument. The second one, in terms of restrictive stance, I really disagree with that, because when we look at real rates, fine, they look restrictive, but in fact, when we look at the US economy in total, over the last 2-3 years, I think we've learned collectively, and I think that was the mistake that we've done as an industry, was that how interest rate insensitive the US economy in particular has become. How, now most of the debt on corporate balance sheets has been termed out over the last couple of years, is only expiring after 2030. How most of the mortgages are on a fixed rate now, on a 30-year fixed rate. When we look at it, compare that to 2007, 2008, it was almost 40% of mortgages on a floating rate. Now it's less than 10, right? Or look at 1990, you had about 40% of household debt on a floating rate. Now it's 10%. So really, I think the restrictive stance of rates, that to me doesn't count that much. And inflation, if anything, when we look at last week's data, in fact, what it's shown is, yes, we're not out of the woods yet entirely, but I think we do get comfortable with a bit higher than target inflation, which in fact should be helping earnings growth in particular. It should be helping nominal cash flows. And the income distribution in terms of the private household wealth gains that we've seen over the last couple of years, the last 2 years, that has seen the high inflation, actually has seen private household wealth really benefit. So there's nothing really particularly negative around that.
Max, let's talk about a part of the equity market where maybe it's not happening. Maybe that story is starting to change, and that's retail. We just heard from Lowe's a moment ago. They've affirmed their outlook. We'll hear from Macy's in just a moment as well. Target coming out before earnings and turning around and reducing prices on 5,000 items and talking about a consumer that's pressured speaks to a loss of pricing power in US retail, Max. Is that just one part of the economy, or is there a broader story starting to emerge there?
I don't think it's a broader story. I think it's one part of the economy, and surely, yes, there are pockets of weakness. Absolutely. There is pockets of weakness among perhaps the lowest income households, the ones that feel the strain the most from higher rates. Absolutely, 100%. But that doesn't mean that it's a broader story. It just means there is more differentiation in the economy. So I keep telling people, look, for 10 years in the 2010s, we've been complaining that everything is a one-way street. Everything is basically just a trade for ETFs and passive investing. And what happens in the economy doesn't really matter anymore, because there is no longer any differentiation, because we've got the last buyers, the central banks, active everywhere. That is no longer the case. Now we're starting to see some pockets of weakness on one part of the economy. We're seeing pockets of continued strength. So the growth, the tech companies, that still is showing really, really good signs of strength there. So to me, it just means there's more differentiation. It's a return to the old normal world. It's not really a return to any kind of, oh, is this a sign of a next crisis or next recession brewing? Absolutely not. It just means there's more differentiation and actually more opportunities for alpha creation.
Which raises this question, Max, because you've been bullish for a while now, and are you less bullish at this point just simply because there has already been such a run-up, a melt-up, as people basically come to the same view that you're putting out there?
Yeah, I think, there will ultimately be some risks, and we do see them perhaps around the Q3, Q4 earnings expectations, particularly in the US, when earnings expectations actually start to pick up a lot for the 493 stocks and away from the Magnificent Seven. So if we don't see any kind of particular broadening out in terms of the economy, in terms of the economic strength, if economic strength is just about fine but not as spectacularly good as we thought, then that those earnings growth expectations, they may be disappointed a bit, but that's only something that I can really play in sort of 4 to 5 months' time. Not really something I can position for right now. And, you know, overall, I think it's fairly easy to always say, well, eventually, you know, spreads might widen, or eventually equities go down, or ultimately there'll be a recession. That's totally fine, right? But it's a bit like saying, you know, eventually the sun will be shining in London. We know it's happening, but, you know, it's sort of, who knows? It might take another 6 months, and then it's 2 days and it's over. So, you know, not attaching a timing to something is really sort of chickening out of a view. And to me, you know, if I say, well, eventually, you know, the consumer really might feel the strain too much, and eventually that's going to put us into recession. That's totally fine, but we can't run money like that, right? We can't run money really like that when we say, well, eventually things might be bad. Well, actually, right now, things are still very, very solid. If we look at things like job openings and job postings, for example, labor market strength still ticking along, household wealth creation really good, real wage growth still really good. So overall, things are totally fine.
So Max, for someone who lives in a place where the sun never shines, you're incredibly optimistic. I will just say, when you're talking about retail, John was talking about Lowe's, he was talking about this Target price cut. We have seen retail stocks in particular see short interest climb pretty dramatically over the past couple of weeks. There's a sense that consumer discretionary, at least that caters to the middle and lower end, is not going to do well, even as everything else does just fine. Do you adhere to that view? Is that an area that you think is under pressure disproportionately because of the disproportionate pockets of weakness out there?
No, I don't think that. I would actually turn it around, Lisa. I would actually say, you know what? Because there is so much pessimism already, because the short interest is already on such high levels, and because people are already expecting quite some weakness out of that sector, it might actually be now worth to say, well, let's look at some of those consumer stocks. Let's look at some of these consumer discretionary stocks. And in fact, maybe things are not as bad for the consumer as everyone is saying. It's a little bit similar to what people have been saying about Europe and the Eurozone just a couple of months ago, where, you know, you had these relentless downgrades to Eurozone and European growth expectations just now for the last couple of weeks for people to realize, well, it's not particularly great in Europe, but it's not as catastrophic as we thought. And I think perhaps the consumer sector, particularly in the US, is in a similar place where things aren't particularly great, but now increasingly people are sort of really expecting almost a calamity to happen. And unless that really unfolds, which I don't really see any kind of particular signs of that really happening, then, you know, that might actually be a really good buying opportunity now.
So Max, let's wrap it up. Max overweight high yield credit, overweight US, EM, Japan, underweight DM sovereigns. Are the reasons you're overweight all the rest the reason you're underweight DM sovereigns? Is it the same reason?
Yeah, pretty much. I think within developed market sovereigns, in fact, like a month ago, we've got a little bit more bullish on duration within developed market sovereigns, simply because the valuations are starting to look a lot more enticing and a lot more appealing. But of course, if you are a bit more bullish on duration, if you think that interest rate volatility, bond volatility continues to go down, what that will probably free up is a bit of risk premium in equities. It will allow multiples, equity multiples, particularly in tech, in the growth part of the equity market, to expand. So from a relative perspective, as you know, as good as then perhaps sovereigns will do, actually it's the Nasdaq, it's the tech, it's the growth part of the equity market, it's high yield that you really, really want to own then.
Max, great catching up, buddy. As always, Max Kentner there of HSBC. I guess with something to say back to Marko Kolanovic over at JP Morgan, who is still incredibly bearish on this equity market. Equity futures right now on the S&P 500, stable and just about unchanged after closing yesterday, just short of all-time highs. Let's get you an update on stories elsewhere this morning. Let's get to your Bloomberg brief and starting with this story right here. Donald Trump is closing the gap in fundraising with President Biden. Trump outraised Biden and the Democratic Party by 25 million in April, pulling in a total of 76. The boost comes on the heels of several high-profile fundraisers, including a Palm Beach event hosted by billionaire John Paulson. Overall, President Biden's campaign still holds a wide cash lead over Trump's. Martin Gruenberg is stepping down as head of the FDIC after findings that the regulator was a toxic workplace. Gruenberg faced mounting pressure following a scathing report that detailed allegations of harassment and discrimination during his tenure. The accounts came from a months-long probe into a Wall Street Journal article about female bank examiners facing a sexualized boys' club environment. The White House said it will move quickly to nominate a successor. And finally, Jamie Dimon says succession plans are, quote, well on the way at JP Morgan Chase. Speaking at the company's Investor Day, Dimon telling shareholders senior individuals at the bank are being prepared for his eventual departure. 68-year-old Dimon adding that the timeline for his retirement is not 5 years anymore, making reference to a long-standing tradition of saying his retirement is 5 years away, no matter when asked, no matter who asked him. So we all stopped asking him, Bramo, and now we get a different answer from the man himself.
At a time when they've rearranged some of the management in terms of Mariana Lake, as well as Dan Pinto and a whole host of others that have been elevated to the top ranks. Just sort of interesting. He said, when I'm not ready to wear the jersey anymore, put it on every day, get on the field, I'm not gonna.
Exactly. He still says he has the energy to do it, even though he's saying it's not 5 years anymore. The timetable looks like it's going to be a little bit less, but he's saying he still has the energy to do it. So kind of conflicting.
I hope I have the same energy in my late 60s that I have now. I struggle to believe that I will.
That's what I was going to say about myself. Yeah, I know.
But I hope I will. Up next on the program, reviving the PC-Mac rivalry.
In the late 80s and the early 90s, when we all fell in love with PCs, that was what really got us going, which is the ability to use computers to create. And I think this AI is just going to take it to the next level.
That conversation just around the corner, live from New York City this morning. Good morning.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Live from New York City, welcome to the program. Equity futures on the S&P 500 just about unchanged here. In the bond market, yields are lower by 2 basis points on a 10-year, 4.4218. Under surveillance this morning, reviving the PC-Mac rivalry.
I think if you think about the PC, it has always been about creating things, right? That's what you sort of do on a PC. AI is an assistant. AI helps you as an end user do anything. In the late 80s and the early 90s, when we all fell in love with PCs, that was what really got us going, which is the ability to use computers to create. And I think this AI is just going to take it to the next level.
So here's the latest. Microsoft introducing a new category of AI-focused PCs, stepping up competition with the likes of Apple and Google. The company saying the machines will be more than 50% faster than Apple's top-of-the-line MacBook Air, thanks to a special chip dedicated to AI processing. Mandeep Singh of Bloomberg Intelligence joined us now for more. So I'll use his words, Mandeep. Are we about to fall in love with PCs all over again?
Well, every device maker right now is thinking about a refresh cycle that they want to see. And look, in this case, PCs, we spend a lot of time, probably not as much as we do on our smartphones, but clearly, you know, from a productivity perspective, it is a big use case for AI. And you can see the argument why the refresh cycle would be pulled forward if we had the, you know, the functionality and the chips to facilitate that. I just doubt that there will be as much, you know, to offer as, you know, the CEOs were talking about yesterday, given we are still at a very early stage where the infrastructure is not even built out. How can it translate into, you know, the devices that we use on a day-to-day basis? So,
could you detail the potential functionality? What would the user experience look like? What would it be like?
So, I mean, I go back to what you can do on the smartphone. So on the smartphone, there are so many things you want to interact with, you know, without having to go across apps. It's the same thing on desktop. You don't want to go between programs to, you know, copy paste things. What if there was a smoother way to pass information from one app to the other, where AI can actually facilitate, and this goes back to the point everyone makes about workflows. Workflows will improve as a result of, you know, generative AI and the fact that we have these co-pilots and assistants. It's just vendors don't work so well with each other. At least that's what we have seen over the years. These companies want to develop their walled gardens. They don't want to share data. And that's the promise of AI, is if it had the perfect information, it can automate a lot of workflows. I just don't see that happening that quickly.
Workflow efficiency isn't very sexy. I'm sorry, it is to a lot of people who are looking to reduce costs, but for just an average person who's buying a phone, a smartphone, it isn't necessarily going to be a way to say, yeah, I want to make my workflow more efficient when I call my kids. So at what point does that generate a real super cycle in terms of replacing phones, especially given they're probably going to be a lot more expensive?
I mean, what we have seen in prior cycles is the killer app always comes much later. So you develop the infrastructure, you have, you know, a lot of promise in terms of, think of what smartphones did. The apps that were based on location-based awareness came in much later, in 2009-10, when the smartphones were there in 2005. So it took good 3-4 years to figure that out. I think it will be the same. Right now, we are in that infrastructure build-out phase where everyone sees the promise of generative AI because you can ingest a large amount of data. You can be multimodal in the sense that you can pass video, audio, and all the other kinds of stuff. The system can interpret it. The question is, how do you filter out the noise and actually drive productivity than a human doing it? And that's where it will take a while to figure that part out.
When it comes to Microsoft and their laptops, the issue they probably have is the fact that everyone uses iPhones, and you want to be in the same ecosystem. Isn't that the leg up Apple has?
It does, and it comes down to distribution. So whoever has the best distribution, whether it's Google on the search side, operating system side, or Apple in terms of the devices, it's very hard to move things away from their ecosystem because AI, in the end, will be commoditized to the extent that everyone has the same infrastructure. They have some form of large language model, which is what we want to hear from Apple. And then the AI features will be similar. I doubt it will be so highly differentiated where the AI on Apple or Google will work far superior than others. But it's just the seamlessness of how you deal with AI and how it's incorporated on your devices.
Sandeep, we can't talk about AI without talking about chips. Yesterday, we heard from the NVIDIA CEO speaking to Ed Ludlow saying the technology industry depends heavily on Taiwan and will continue to do so for the next foreseeable time. And then we have overnight a Bloomberg scoop about ASML and TSMC saying basically they can disable all of their manufacturing remotely if China were to invade Taiwan. How important are these geopolitical conversations to these technology companies right now?
I mean, right now, you know, when I look at NVIDIA, the biggest risk going into the quarter is the fact that, you know, the China revenue, again, could completely go away. It's the same risk for Apple. Apple seems to be maneuvering it well, but in the end, you know, these companies are dependent on China for revenue and to an extent on the supply chains. I mean, think of Apple. They still have 90% of the assembly being done in that region. NVIDIA doesn't have that kind of exposure on the assembly side, but it still relies on some parts of the supply chain in that region. So the geopolitical conflicts clearly are creating the tensions, but these companies seem to be maneuvering it quite well, at least so far.
How long do you think we'll have to wait for these supply stories to change? This is about a kill switch. So they can kill production, but the production still needs to come from somewhere. Where's that supply going to come from?
Well, so we know these companies are looking into other pockets of Southeast Asia, whether it's Vietnam or moving to some other parts, even India. And look, that's where you have to be pragmatic. Not every region will have the capacity to take, advanced manufacturing or advanced assembly. And this will take years. Think of how long it's taking to open an advanced manufacturing fab here. Despite passing the CHIPS Act, despite giving the subsidies, it's going to be 3 years before we see that fab online. So that's what we are talking about in terms of timeline. These things take a while to play out.
Mandy, before we let you go, the why behind why it's so complicated to have some of these factories isn't just the technology to build the chips. It's also the idea of the expertise that you need. And Taiwan's entire infrastructure is built around that. What are we doing here to try to support some of the factories that we have?
I mean, training is a big aspect of how you are going to bring those fabs online. And yes, you need the personnel. Immigration probably is going to be a hot button issue in terms of bringing the talent to work in those fabs. But clearly, I think, again, these things will take 4 to 5 years before you see real progress. And we are talking about more cutting edge stuff. The 2 nanometer, 3 nanometer, you just can't jump to 4 or 5 nodes overnight. That's what we have figured out with Intel. Intel wanted to do 5 nodes in 3 years. Well, they couldn't execute. So there's a reason for that. It takes a lot of gradual progress to get to a point where you can show, okay, now we can do this onshore.
Drum roll. Big story tomorrow afternoon. You know what it is. NVIDIA. We've had price target upgrades from Barclays and Stifel in the last 24 hours, north of 1K. How high is the bar for NVIDIA this time around?
I mean, I feel like they're priced for perfection every quarter.
And it's beat and raise.
And beat and raise. But look, I look at where the good news is going to come from. Right now, every CapEx spender, the hyperscaler, has raised their forecast for next year. So I look at where the incremental positive news is going to come from for NVIDIA estimates to go up. And that's where I feel, OpenAI didn't launch GPT-5. That's a negative. Because when you think about it, if the LLM companies are consolidating, it's going to make it hard for NVIDIA to find that next incremental buyer. Maybe it's Tesla. Tesla talked about a $10 billion with Oracle. But I feel the rate of positive improvement is going to slow down because if they're losing China revenue, if all the hyperscalers have already announced their plan, it's baked in the price.
I have no doubt we'll be catching up with you tomorrow quite a few times on Bloomberg TV. Mandeep Singh, thank you, sir, of Bloomberg Intelligence, going into that big earnings report tomorrow afternoon. For how much longer can that company keep beating and raising, beating and racing? Coming up next, we'll catch up with Stephen Cook of CFR on the death of Iran's president and tensions in the Middle East. That conversation just around the corner. Equity futures on the S&P 500 just about unchanged after the S&P closed yesterday, just short of all-time highs.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera, and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Two-day winning streak in the equity market coming into Tuesday. Your S&P 500 looks a little something like this. Equity futures totally unchanged after closing just short of record highs yesterday on the S&P. We closed at all-time highs on the Nasdaq 100. It's been quite a run. Nvidia helping out, going into earnings tomorrow afternoon. That is the main event of the week, at least the main event on the schedule. In the bond market, treasuries, 10-year yields climbing for 3 days, which goes against the grain of the last month or so. This morning, we snapped that trend. We're down another 2 basis points or so. 442.37 on a US 10-year. On a 2-year, down about 2 basis points as well. 482.64. Plenty of Fed speak, all singing the same song. The lyrics haven't changed. You know the lyrics. We've got to wait. We've got to wait, and we're not going to hike. Is that enough? You'll get more Fed speak a little bit later. Turn to foreign exchange. You want to finish on the euro. You'll get some ECB speak tomorrow from ECB President Christine Lagarde. Euro dollar at the moment, 108.70. We're positive by 0.1%. I think we all know they want to cut in June. It's about what they want to do beyond June and maybe even in July. Look out for that conversation tomorrow with Christine Lagarde. Our top stories today under surveillance this morning. JP Morgan CEO Jamie Dimon telling investors succession is well on the way. Dimon saying the timetable is not 5 years anymore, but the decision on a replacement is up to the company's board. The CEO adding stock buybacks are on the way, but not at current prices. So 2 stories to deal with here, Lisa. Let's start with succession, and then we can get to the stock price story, which I think we both agree is more interesting, at least in the near term. Let's talk about succession. It's been a story for a while. It's always been 5 years, 5 years, 5 years. It's not going to be 5 years anymore.
I wonder where the pressure is coming from. Is it his desire to maybe step down, or is it the board, or is there maybe another job that he might be looking at that could potentially be a reason to exit? He has shut down that possibility of that job being in Washington, D.C. However, the speculation continues to rage.
He also, though, has said in the past that he would do anything to help his country. Does that mean actually making the move to Washington if he was asked? But you have to think, if he's talking about succession when potentially he would leave this, he might want to do so when it's advantageous of him and his paycheck.
He's 68. He's been there since 2006. It's quite a long tenure for any kind of bank CEO. You think about the people in line, Jen Peepsag, think about Marianne Lake. We're talking mid-50s. So that's kind of sort of like prime age you'd think to take over as a bank CEO and get involved in the leadership at the top of this company. This has been going on for ages. It's about time we get a conclusion, isn't it?
I mean, you could say that 5 years ago and 5 years before. The thing is, to me, how do you build up the profile of someone when Jamie Dimon is synonymous at this point with JP Morgan? You mentioned the share buybacks. I found that more interesting also, given the fact that it's not the best use of cash. Well, those shares are up, what, 20% so far this year, which, again, makes sense that people are saying, well, if they don't want to buy their own shares, neither do we, because at what point do we see upside?
We're up almost 20% year to date, then dropped about 5% yesterday. We're positive 15% year to date. It's been quite a run for the bank stocks so far this year. More on JP Morgan a little bit later. Let's turn to this. Shares of Lowe's rising in the pre-market. The company's comparable sales for the first quarter coming in better than estimated. More retail earnings on the way. We'll get Macy's a little bit later this morning. Target results coming tomorrow. And just seeing subtle cracks coming to the surface. Just the idea that we're losing pricing power. Walmart's been talking about deflation for the last couple of months. Target's cutting prices. going into Memorial Day weekend. This is not what you do if you have pricing power and a lot of footfall.
Well said, especially because Lowe's, yeah, they had better than expected comparable earnings. The why behind it, again, speaks to that same story. This idea that a lot of people are doing small-scale repairs rather than these sort of large-scale overhauls of their homes because they don't want to have to spend all that money. Again, even though they saw a beat there, it's the why, the cost consciousness of consumers that gets my attention.
For me, this speaks to cracks in the consumers, and it lines up with the consumer sentiment we saw from the Michigan survey, which we'll get another read on Friday, but also the New York Fed report, which shows that Americans are very concerned about potentially the uptick and the direction of inflation.
It's happening. Slowly. We'll see if we get more of it a little bit later. Macy's earnings just around the corner. Let's finish on this story. State media in Iran announcing presidential elections will be held next month after the death of Ibrahim Raisi and 8 others in a helicopter crash. Speculation growing as to what the events mean for Iran and the Middle East. Stephen Cook of CFR saying this: it is clear that some significant portion of the population is pleased with Raisi's death. One could imagine a new round of protests against the regime. Stephen joins us now for more. Steve, can you walk us through what kind of internal power struggle we should expect domestically in Iran over the next month?
It's a great question. Ibrahim Raisi was on the short list to succeed Ayatollah Khamenei, who himself is not well. So Iran is looking at potentially 2 successions very quickly in the coming months or within the next year. They're likely going to be a power struggle. That short list to succeed Khamenei, which is about too long, got shorter just over the weekend. So at the top of this regime, where the Islamic Revolutionary Guard Corps is making a bid to essentially take the whole thing over, there's likely to be a very significant power struggle. While that power struggle is going on, there are, as I said, significant numbers of people who are pleased with Raisi's death, who may very well seek to take to the streets to express their desire to overthrow this regime. This is not an unheard of thing in Iran. Iran has been roiled by large demonstrations over the better part of the last 5 or 6 years. So it is a very, very tense moment and an interesting moment in Iran. I don't expect that there'll be much change, though, on the foreign policy front.
When it comes to the future of the supreme leader, everyone is talking about Khamenei's son, but the fact of the matter is this could be very controversial for a country that overthrew a monarch. Where does that leave, you think, Khamenei's thinking about that?
Yeah, the most talked about successor of Ayatollah Khamenei is his son Mojtaba Khamenei. This would go directly against what the founder of the Islamic Republic, Ayatollah Khomeini, had said, which was that there should not be a hereditary leadership in Iran. Yet Mojtaba has been put in the position where he is a likely successor. There's one other identified possible competitor to him, which is a guy named Ali Reza Arafi, who is the leader of all seminaries in Iran. But eyes are all on Mojtaba right now. It's not that Khamenei is such a religious leader that he wouldn't go against Khomeini. He is very much part of the IRGC, but nevertheless, he's going to have to justify elevating his son if that, in fact, is what happens.
Stephen, I want to get your sense on what did you make of the U.S. response to Raisi's death. Yesterday at the United Nations, there was a moment of silence for Ibrahim Raisi, and instead of walking out, which at one time historically in the U.S. past would have happened, the U.S. representative stood in silence. What do you make of the U.S.'s response?
There's no other word for it other than bizarre, maybe perhaps even stunning. Ibrahim Raisi is known as the Butcher of Tehran. In the late 1980s, he signed the death warrants of 5,000 people. This is someone who has American blood, Israeli blood, Arab blood, Iranian blood on his hands. And the statements of condolence coming in from around the world and even from the U.S. State Department is quite honestly shocking. All the United States needed to say was, we stand with the Iranian people during this period of transition, end of story. Yet standing at the United Nations, issuing a statement of condolence to the Iranian people seems inappropriate at this moment.
What does that say about U.S. policy writ large when it comes to Iran?
Well, I think it demonstrates that at least within the Washington foreign policy ecosystem, certainly well within the bureaucracy, there remains this idea that the United States can forge a new relationship with Iran. The problem is that Iran doesn't want a new relationship with the United States and wants to push the United States out of the Middle East by sowing as much chaos in the region as possible. And we're seeing the results of that policy, whether it is in Gaza, Israel's northern border, the Red Sea, Iraq, and Syria. So the idea that if we're just nice enough to the Iranians, with a little bit more diplomacy, with some incentives, that the Iranians will come around and will forge some new relationship is an idea that unfortunately hasn't died in Washington. And I think those statements coming out of the State Department and elsewhere are an indication of that.
Halima Croft over at RBC, Stephen, was talking about the potential that the manner of the president's death in Iran actually speaks to maybe a certain efficacy of some of the sanctions if they didn't have the parts or the supplies to upgrade helicopters that largely ended, I think, production in 1968. So is that sort of evidence to you that maybe some of these sanctions are working?
Well, in fact, the former Iranian foreign minister, Javad Zarif, said the same thing as Halima, that it is difficult to source parts, particularly in the aviation sector, and it is perhaps an indication that the faulty equipment was to blame for this accident. Of course, it was terrible weather. We know nothing about pilot training, but certainly the Iranians are suffering under sanctions.
Meanwhile, there's been a lot of speculation about what this means in a broader sort of geopolitical stance. And the resolution that a lot of people have come to is not much unless there is some sort of finger pointing outside of Iran or even within Iran in terms of some malfeasance on some level. Do you agree with that? Or do you think that this does have implications about either Iranian and Israeli tensions or some of the factions that are sponsored by Iran and what that means for the hot war in the region?
Well, I think there's likely to be lots of conspiracies about the role of Israelis in this accident. Israel and Azerbaijan, from where Ibrahim Raisi was coming, have very close relations. Of course, the Iranian military has announced an investigation into the crash, which would suggest that they're not finger pointing just yet and not looking for an escalation at this very, very sensitive time.
Stephen, I just want to finish on the conversation you were having with Anne-Marie. It wasn't that moment of silence. It was the statement from the State Department, because you can apologize for the moment of silence and say it was a mistake. The statement by the State Department is deliberate. Someone's written it. Someone's copy edited it, someone hit publish, they didn't retract it. Stephen, I wonder, when you publish stuff like that, what degree of influence can you expect to have over countries like Israel when you fail to demonstrate that their enemy isn't yours?
Yeah, I think that this is something that is a problem in American foreign policy in recent years. Not only the Israelis, but the Saudis, the Emiratis, the Bahrainis feel that the United States has bent over backwards to forge a new relationship with the Iranian, and that has essentially let them hang out to dry, pardon me. And that's why you see these countries, particularly the Saudis and the Emiratis and others, hedging with America's global competitors, notably the Chinese, because they just don't believe it when the United States, we stand with you for stability and security in the region, yet the United States is reaching out to the Iranians. And this statement of condolence is, I think, something else that the Saudis, Emiratis, Israelis, and others will be able to point to in their bill of particulars against the United States.
Stephen Cook, thank you, sir. Stephen Cook there of CFR on the latest in the Middle East. A bizarre 24 hours from the U.S. side.
We have the transcript of the reporters that questioned Matthew Miller, the spokesman for the State Department, and the reporter was saying, if you really think Raisi was as bad as he was, why did you put out this statement? And this is what Matthew Miller had to say. As long as we're addressing the historical record, the United States offered condolences when Chavez died and when Joseph Stalin died, people with whom we had great disagreements with. So that is the historical perspective the State Department is attempting to spin this statement, which the Biden administration is getting a tremendous amount of criticism about.
A very strange 24 hours. If you are just joining us, welcome to the program. Equity futures right now on the S&P, just about unchanged. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief. First story, there's just one big bear left on Wall Street after Morgan Stanley's Mike Wilson capitulated. JP Morgan's Marko Kolanovic holding firm in his gloomy outlook on the equity market, urging clients not to buy stocks while acknowledging his outlook has hurt portfolio performance. Kolanovic citing a number of reasons, including high valuations, high rates, and elevated inflation. JP Morgan has the lowest year-end target for the S&P, 42 200. The index this year for 24 is up 11%. Elsewhere, shares of Palo Alto Networks are trading lower in the pre-market. The company's third-quarter earnings beat estimates, but it offered a downbeat forecast for the current period. The tepid outlook follows a disappointing report in February when Palo Alto Networks, their shares suffered their worst single-day drop ever. At the time, the company CEO said customers were facing, quote, spending fatigue in cybersecurity. And the weirdest story of the last day or so, this one right here. On the brink of creepy. In fact, it is creepy. Actress Scarlett Johansson said she was, quote, forced to hire legal counsel in order to remove an AI voice from OpenAI's latest chatbot feature that closely resembled hers. The AI voice known as Sky was part of the latest update to ChatGPT and has since been replaced. In a statement, the Hollywood actress revealed that she received an offer from Sam Altman to use her voice in an audio feature, but had declined the project. And then friends and family started to hear a voice that sounded a lot like hers.
Yeah, it's weird because they went to her, she said no, and then she had to hire legal counsel because it sounds, what they're saying, quote, eerily similar to her voice.
It's a creepy, bottom line.
Well, and it frankly underscores the creepiness of the whole endeavor. I mean, it's exactly not the look that they want at a time when people are wondering about intellectual property, including your voice.
If ScarJo wants to come on and talk about this, I think you're keen, right? You'd like to hear?
I'm keen. I caught up with her at the White House Correspondents' Dinner, so I think she would come on.
She failed to mention a story?
She did not. We did not talk about AI.
We'll look for an update a little bit later this morning. Up next on the program, Fed Speak, Overload.
We'll need to be patient and let restrictive policy do its work.
We probably need to sit here for a while longer.
It's too soon to tell what path inflation's on.
That conversation coming up next, live from New York. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election?
It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
From New York, welcome to the program. Equity futures on the S&P 500 just about unchanged. Yields coming in after pushing higher over the previous 3 days. We're down by about 2 basis points on a 10-year, 4.4257. Under surveillance this morning, Fed Speak, Overload.
We'll need to be patient and let restrictive policy do its work.
We probably need to sit here for a while longer until we figure out where underlying inflation is headed before we jump to any conclusions.
It is appropriate that we maintain the policy rate in restrictive territory.
It's too soon to tell what path inflation's on, so we just need to collect more information.
I think that it will take quite a while for us to get all the way to 2%, but I do think we'll get there.
We'll get there, eventually. That's the latest. If that wasn't enough for you, there's more to come. Barkin, Waller, Williams, Bostic, Barr, Collins and Mester all on deck and set to speak today. Former Fed economist Claudia Sahm saying this: there's clearly an overload of communication policy. There is. But on what matters, the rate path, we won't learn anything new. Claudia joins us now for more. Claudia, wonderful to catch up with you to get your perspective from inside the Federal Reserve and out. Can we start with this? Why do you think they're failing to entertain the conversation that a lot of people on Wall Street would like to hear about? And that's the neutral rate, where it is, if we're going to normalize just what is normal in this regime.
Frankly, I doubt they agree on what the neutral rate is. I mean, they're very firm that where the Fed funds rate right now is above the neutral rate. I mean, they can't even give us a definition of what confident is, and that's data-driven, right? The neutral rate, something very hard to get a handle on. So it's just not, to them, I think, a relevant conversation.
What do you think confident is?
I think they need 3 months of good data before they're even going to start thinking about being confident. The Fed has gotten really box himself into a corner by being hyper data driven. And that's really unfortunate for the way monetary policy works. And so at the end of the day, your statistical agencies like the Bureau of Labor Statistics, they're more or less an influential member of the Federal Open Market Committee. It's not how this is supposed to work.
This is something you've said before, that this economy doesn't complicate the Fed's inflation fight. It's not a reason for the bank to delay rate cuts either. Claudia, for people who aren't familiar with that perspective of yours, could you share it again? Why do you see it as a problem that they're waiting so long?
The Fed is putting pressure on the economy, more pressure than frankly is needed to get inflation down. We have seen since the very beginning of this that COVID created disruptions in the economy that showed up in inflation, showed up in a lot of different ways. The economy was not working as normal. We're getting further from that initial impact. Things are getting better. The Fed, if it gets in the way of this and pushes too hard, then we end up in a recession, which is not necessary. It would be a huge unforced policy error.
Claudia, every single note that I've been seeing from Wall Street analysts actually has the opposite fear, that actually the bigger risk right now is a reacceleration of inflation and that this is not a very restrictive policy. That yes, you are seeing pockets of weakness and there is undue kind of restraint on particularly lower and middle income families, but otherwise you're not seeing it. Where are you seeing it on a broader economic level that actually can bring inflation down?
So where is this acceleration coming from, right? It's not just looking at the top line numbers. You have to tell a story about what is forcing, what would force that kind of an acceleration. We've seen the labor market moderate. We have signs of solid and yet not as strong consumer spending numbers, right? Like you have to have some event that's pushing the inflation, pushing the demand, because the Fed can only work on the demand. And we've got some categories of spending that can be tied directly to problems we had earlier in COVID that are still pushing up inflation. That's not about demand right now. Owner's equivalent rent was pushed up well over a year ago. The Fed cannot bring that down by high interest rates. It is the passage of time working through that system that really brings inflation back down into a cutting space, and we know that's coming.
Which is the reason why maybe some people probably agree with you on the Fed, maybe even Fed Chair Jay Powell, and you have others who are a lot less certain with respect to just whether it's going to take time. Loretta Mester, speaking to our own Michael McKee yesterday, did say something concrete, which is that she is revising her call for 3 rate cuts this year. She no longer sees that as appropriate. Do you agree with her that essentially, even if you think that the Fed has the leeway to cut rates, not nearly as much as they had earlier and really only 1 or 2?
I absolutely understand why Mester's saying that, right? The Fed is very cautious. They got burned in 2021. And as an institution, they're not going to get out there and do something that's more aggressive in terms of cutting. Essentially, the last 2 days, you've heard a lot of talking dots, right? We've heard a lot of people in terms of what they're doing with their forecasts, their summary of economic projections. A fun twist to this is we get the next consumer price index reading on the second day of the FOMC meeting. Right, so we need that data. We need to know more. I fully expect the median cuts to move to 2. I think just the math works out that way.
You've had a lot of talking dots, Claudia. That is a fantastic statement. I plan on using that because that actually is what we're looking for. You talk about how we get a lot of Fed speak, but not a lot of actual news that we can use. What are you looking for? What could they say, given the fact that we heard Raphael Bostic come out and basically said, we're human. This is life. We get uncertainty, and that's part of the whole reality of this kind of transitional moment that we're in.
I don't want to hear from them. I want the next CPI release, the one after that. I want to see the labor market. I mean, honestly, that's what they're filtering. What we've heard in the last 2 days is a multitude of ways to say we're not confident. We need more data. It makes sense. Like, I completely follow. They're being responsible. They're being predictable in what they're doing. But honestly, they're just saying the same thing over and over again.
Claudia, we also want the next CPI release. Your notes, you talk about inflation expectations in early May were, quote, much ado about nothing. But then we have Target overnight cutting prices. Do you see this deterioration in the consumer?
I don't see it. We have seen a moderation. And this is why it is dangerous to some extent for the Fed to wait so long, because we are not the economy of last year in terms of really firing on all cylinders. So things are moderating. The risks, there are more risks to the downside on the labor market in particular. I think you do see signs of consumers faltering, but they're not, those are risk case. We don't see them in the baseline. But the labor market, it's not pointed in the best direction. So things could go south. They don't need to, but they could.
Just a flag on the consumer, waiting for Macy's earnings. Those numbers should drop in the next 60 seconds or so. Tomorrow, we'll get some Fed minutes. Claudia, can we talk about the Fed minutes just briefly? How much distance do you think there is between the chairman and the rest of the committee based on some of the communication we get from him, particularly over the last few weeks?
Jay Powell, as the Fed chair, speaks for the FOMC. He can't speak for every single member. They clearly have some disagreements. It's healthy to have disagreements at this point. But he will reflect, the minutes will reflect what Powell said at the last press conference. They will reflect, if you kind of collected all the verbal dots of the last few days, it would kind of look like the median, maybe a little bit more upbeat because we did get a good CPI since last FOMC meeting. But I mean, Powell's the Fed chair. He can't go rogue here. Right? Like, he is communicating for the FOMC. It's clear he thinks we're headed towards 2%, not confident, but like that's the direction. So I don't expect the minutes to really sound any different than the Fed speak we're getting right now. And yet the tone is probably going to be a little darker than it would be if, the meeting were after the last CPI.
True. Claudia, thank you. Appreciate your time, as always. Claudia Sam there of Sam Consulting, breaking things down for you. Just breaking down numbers from Macy's, just drop in right now. The outlook, full-year adjusted EPS 255 to 290. That's the new range. The previous range, Bramo, 245 to 285.
So basically coming in slightly above. What I find interesting is that the full-year net sales projection is about in line with where it was before, a little bit higher. So earnings actually coming in higher than maybe some of the sales expectations point to. So margins aren't compressing as much as we would expect. That, to me, is interesting.
Just a little bit lower than expected on margins for the first quarter. Macy's is down by about 2% in the pre-market. Much more still to come on a retail story in America, and we'll be catching up with JP Morgan's Jack Caffrey, Bloomberg's Alex Webb, Israeli Minister of Strategic Affairs Ron Dermer, and Chuck Grom of Gordon Haskett. All of that still to come from New York City. This is Bloomberg.
Of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
What's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
This is a Fed that has sort of a cutting bias to it.
Our view is that the Fed can cut. That's our economist baseline call.
For this Fed, June is probably not in play. The whole idea of either July or December, but certainly December.
You don't need an interest rate cut. What's an interest rate cut going to do to validate your overweight to stocks and bonds?
It has to go exactly right in order for the Fed to cut. But at this point, they're kind of caught in a box.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City, the second hour of Bloomberg Surveillance begins right now. From New York, good morning, good morning. Quite a 24 hours for the retailers. Listen to this commentary, raising the outlook over at Macy's, but this line jumps out. The outlook assumes customers will continue to be discerning in their discretionary purchases. We heard a similar thing yesterday from Target. Going into numbers from them tomorrow when they said this, we know consumers are feeling pressured. Lisa, that led them to cut and reduce prices on 5,000 items into Memorial Day weekend.
So here's the sort of distinction that's very difficult for me to really fully understand, and frankly for Wall Street, which is, does this represent weakness in the consumer or just simply discretion, simply being a little bit more prudent about what they buy and which areas they buy? Because it looks like sales are coming in stronger than expected, even if there is this caution out there.
Also, the bifurcation of the consumer. What stood out to me for Macy's is that Bloomingdale's rose 0.8%. Macy's flagship fell 1.6%. Where was the standout? Bluemercury up 4.3%. This is a very expensive, I call it almost luxury Sephora, and it's for beauty junkies, very expensive candles, skincare. That's where they're seeing some growth.
That's who has the money. And I think all of this speaks to the theme of the last week or so on this program. You can identify weakening, but things aren't weak. Slowing, but we're not slow. How many times we heard guests around this table use those exact words? And this is the struggle for the Federal Reserve to get a read on these things. Is it something they need to worry about? Is it a welcome cooling or an unwelcome deterioration? Just a moment ago, we caught up with Claudia Salmon. She called the Federal Reserve officials speaking dots, verbal dots, was that right? Verbal dots are the FOMC. You're going to get a few more verbal dots speaking a little bit later. Barkin, Waller, Williams, Bostic, Barr. I think Goolsby tomorrow. You get some minutes as well. This is going to go on and on all week. The one to watch has got to be Governor Waller.
She said, you've had a lot of talking dots. And I said, well, what do you want to hear from them? She said, I don't. They're all saying the same thing. Just stop. This, to me, is sort of the issue, that the market has moved on from the Fed. At what point do we see real response in the market to Fed projections? Because right now, they're saying, as Claudia Sam indicated, a lot of ways to say they don't have confidence yet. What will give them that confidence? They won't even entertain that idea. So it gives people sort of this question of, what are we even listening for?
Well, Jonathan, you tried to get Claudia to really define what confidence means, because we continuously hear it out of Fed officials, and she said 3 months. 3 months of data, that would be confidence for this Fed.
Was last week 1 month? Is that the first month?
I think so.
So 2 more months. And then she talked about June 12th. June 12th's the big one, isn't it? June 12th's a massive month, a massive day. Get the release of the CPI print in the morning at 8:30 Eastern time. Then later on that afternoon, get a Federal Reserve decision and a bunch of projections as well. So that's going to be a really important meeting, really important event in a couple of weeks' time. Equity futures right now, here are your scores on the S&P 500, just about positive by 0.02%. In the bond market, yields are lower by 2 basis points on a 10-year 4.4237. In foreign exchange, the euro just a little stronger by 0.1% at 108.67. Coming up this hour, we'll catch up with Jack Caffrey of JP Morgan Asset Management on equities hitting all-time highs. Chuck Grom of Gordon Haskett reacting to Macy's earnings, and Israel's Strategic Affairs Minister Ron Dermer as Netanyahu faces allegations of war crimes. We begin with our top story, all-time highs on the Nasdaq ahead of this week's main event, Nvidia earnings tomorrow. Jack Caffrey of JP Morgan Asset Management writes in this: stocks are looking overbought in the short term. When I look at some of the broader technical measures, investors are willing to look for the next ways to access the importance of AI for their portfolios and the potential to create growth where there was little growth before. Jack is with us around the table. Jack, good morning.
Thank you.
You are bullish, but it sounds like there's a question mark now, where there wasn't a question mark before.
I mean, year to date, we're up 12%. So we've had a very, very good year. We're up 5% in 5 weeks as we went through earnings. And I do think you have a little bit of a disconnect to some of what we were talking about. Earnings supported the most recent move, and I think equity investors have heard the Fed start talking about maybe we don't have to be as cautious and as frequently beating the drum for the possibility of another rate move higher. And yet, economic surprises have turned very negative in the shorter term, and I think that's what the bond market has been looking to in terms of embracing their sense of maybe we're finally going to get the slowdown we've called for. So put that with a VIX of 13, and you wind up with two markets hearing two very different messages and an ability to say that top might be slowing a little bit from spinning so aggressively that you can knock it off its axis without very little news or very little pressure.
And that's what we're vulnerable to going through the summer. There was one further thing you identified as well, and we revealed it in that quote we started with the conversation with. The second derivative AI plays.
Sure.
Utilities, things like that. Do you think that's evidence of investors reaching just a little bit too much?
I think it's people trying to say, we have played this AI theme in its most obvious beneficiaries of the semiconductor producers of the graphic processing units, the GPUs and TPUs. And so now you're saying, well, what's next? Because you still haven't made a lot of cases for the actual implementation of AI generating revenues. So I think people are still coming back to, how can I try to find picks and shovels? So utilities have become a growth sector for the first time since we rolled out air conditioning in the 50s and 60s. Interesting little outcome with that. But I think when you consider that, utilities are regulated. So their CapEx will take a long time. It's not like you can just go to the board. You have to go to your regulators. You then have to borrow money in order to build these things. And then you're capped on what your profitability looks like. Very consistent, very wonderful. But you're left with, is this really an AI play? Or is this just I need something that might be growing in a market where I'm a little less concerned? You see technology investors buying electrical equipment stocks and valuing them like they're semiconductor names. Like, maybe, but maybe that order book takes a little bit longer to become actual revenues. So it does feel like people are stretching a little bit in the short term.
But everyone's shovel ready. No, I'm kidding. I'm curious, though, going forward, about what this means in terms of, do you just stay away from utilities and the like, or does this sort of tell you maybe people feel like the big tech names are a little overplayed and that, frankly, they don't have that much more room to run?
Well, I think parts of tech look very expensive, and I think, where I have to admit that I occasionally dabble in the dark arts of technicals, you wind up looking at sort of the technology, the semiconductors and the softwares are not in market leadership. You wind up seeing things like pharmaceuticals in leadership. That's certainly a defensive position, absent obesity, which seemingly is still a growth vehicle. So I think people are trying to be a little bit more nuanced. I think people are trying to look for growth where it might not have been. And that all said, when you have 25, 30% of the market not really behaving as well as it has for the prior 6 months, I think it forces a little bit of a pause.
You're not necessarily bearish. You're just not as bullish as you were, say, a couple months ago. Is that correct?
I'm naturally a bull, but right now I have to say maybe I need to pause a little bit before venturing out of my cave.
What's the signal from some of the...
I mixed my metaphor there, sorry.
It's okay. I do it all the time. What's the signal from some of the retailers that are coming out right now and that are portraying a weakening consumer, a discretionary consumer, but not one that's really run out of spending power?
Well, let's go back to parse the difference between discretionary and staples. And to some extent, the high end is doing well, which makes sense. We've got market at all-time highs, so it's easier to go and buy expensive skincare products in that world at Bluemercury. It gets harder. Bloomingdale's doing well, that's doing well, and your more middle market consumer who's been facing tax increases at the gas pump on a weekly basis. As oil prices moved higher, gasoline is moving higher. You're going into driving season, maybe at the margin with this drumbeat of weaker consumer confidence, it's a little harder to actually spend that extra dollar. And so retailers have just worked their way through a lot of their inventory, and I think they're scared that they get caught holding the bag again.
Are commodities one of the reasons why you talk about fuel costs, one of the reasons why you're a little bit pausing before you come out of your bullish cave?
I think fuel is certainly out there. If you come back, and I'll again dabble in the dark arts for a second, why are transportation stocks so weak? And if to the extent we actually rely on truck companies to actually move product from point A to point B, what is that weakness suggesting if you go back to the very earliest of the technical indicators, the Dow theory? You're supposed to have transportation confirming the move in the market. Right now, it feels like they're sending two very different signals, unless basically all transportation has been absorbed into Amazon and they're the only shipping company that matters.
So what have you been doing? What have you been selling? Have you been selling anything? Have you been de-risking, and if so, how?
I sit there and suggest that I'm a little bit cautious in the short term, but I'm running with relatively low cash overall. Call that, just over 1.5% within portfolios. So, I'm committed if you go from that perspective. I have been easing into a bank over time in the shorter term, and I think that comes back to a sense of, the consumer remains employed, they are getting paid, and it doesn't feel like we have the worry that works its way through the credit markets that we've been hearing about for years and years and years. And from that, you actually get paid very attractive dividends, I think, in many of the bank stocks relative to other places in the market.
Could you describe a bank, the type of bank you'd like to invest in,
Yes.
given that I know you can't name the bank?
Well, I can't name a specific bank, but I generally like to find banks that have fee income to go.
As cryptic as you are.
It's not that cryptic. Carry on.
I like having a job. It's very important to me. And to the economy overall.
I'm not going to put too much pressure on you. Just tell me a little bit about what the business looks like.
When I'm thinking about banks, I'm trying to think about places where I see people moving and where I think that we actually are reindustrializing America. So you could read that in terms of, at the margin, I'd rather switch away from banks that serve where people are leaving towards banks where people are actually migrating to, where business are being created. In general, if I can also get that bank that isn't completely reliant on lending, but actually can get some fee income to go along for the way, generally high returns on capital, generally taking a little bit less risk thanks to Basel III Endgame, I think that winds up making for a more attractive package overall.
So, Jack, you're in your bullish cave. I'm in my bearish cave because that's where I live. But I'm wondering whether you could see something in the near term that can make you feel a lot less willing to be in the cave anymore, wanting to be out and be more aggressive.
I think in the shorter term, the challenge we have is corporate earnings are over. And so we're not going to get any real updates out of companies in terms of how they think they get through the back half of this year, when we are expecting something that looks like a hockey stick when you start looking through the earnings picture. So how do we get a little bit more confidence with that? And that's where I come back to looking at economic surprises. That's the data we get every day that should make us more or less confident in what companies have offered in terms of what they're going to tell me on one day for 1 minute, 90 days from now. So it's that economic surprises. Are initial claims getting better or worse? Are we seeing, 220 becomes 240? That's bad. 220 goes to 210. Like, all right, we're still in this muddle. And muddling is not what the Fed wants. I think the Fed wants alacrity of a decision one way or the other so they can get off the pot and move forward with some of their policy moves that people keep telling them that they're going to engage in. You know, 1 rate cut, I'm still an inverted curve. 2 rate cuts, still a very inverted curve, 3 months, 10 years. How do I get 4 rate cuts of 25 basis points to get to a curve that's flat, assuming the 10-year doesn't move from today? Like, as the equity guy, I find that a little bit harder to come up with what that scenario of this sort of immaculate disinflation is, which makes me a little twitchy and uncomfortable buying a bank into that environment. And again, we haven't had credit events yet. So how do you find someone who really is like, they're well capitalized and I can live through some credit, but basically I would say that my call is not one of big downdraft, big problems, more like we wobble and maybe I get a better chance to buy higher quality businesses cheaper.
We'll catch up with you later in the summer, no doubt. Jack, this was super thoughtful. It's good to see you as always. Jack Caffrey there of JP Morgan Asset Management. Equity futures on the S&P just about unchanged. Time now to get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahira Haquez. Hey, Yahira.
Hi, John. A new Bloomberg NEF report shows governments and companies need to spend $40 trillion more than they currently plan to in order to reach net zero emissions by 2025. Earlier this year, Bloomberg NEF had said global investment in the green transition surged in 2023 to nearly $2 trillion. But this latest report shows the pace of spending needs to accelerate as the world continues to warm and bigger solutions are needed. A key prosecution witness took the stand in the trial of Archegos founder Bill Wang, the former chief risk officer, testifying that once Wang decided on a trade, he did it again and again and again. Because of this, senior staffers would then greet each other saying Happy Groundhog Day in reference to the Bill Murray movie. Archegos' highly leveraged and concentrated bets on just a few companies resulted in a meltdown back in 2021, wiping out more than $30 billion of Wang's fortune and costing the banks it worked with $10 billion. And the NFL is considering new rules for team ownership, and Eli Manning wants in. The proposal would allow private equity firms to own minority stakes in franchises. Manning's Brand Velocity Group has said the firm is definitely interested in buying a stake of an NFL team, but the NFL has long held out in allowing private equity ownership. Currently, over 60 teams in North America are either backed by private equity firms or individual investors from that space. That's your Bloomberg Brief. John?
Interesting. Yahira, good to see you. We'll catch up with Yahira again in about 30 minutes' time. Up next on the program, NVIDIA's expanding reach.
It's not about just delivering a box. It's about delivering an entire infrastructure. And that entire infrastructure is insanely complex.
NVIDIA results just around the corner tomorrow afternoon. Fantastic job by Ed Ludlow just yesterday, sitting down with Jensen. Much more on that interview in just a moment. From New York this morning, good morning.
Could face bigger challenges.
Was going to keep rain World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. Only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome to the program, live from New York, with equity futures on the S&P 500 just about unchanged after closing just short of all-time highs in yesterday's session. Yesterday, JP Morgan had its worst day of the month so far. The stock was down at the close by close to 5%. This morning, it's higher by 0.6. A lot of people waking up this morning talking about what he said about stock buybacks, talking about what Jamie said about succession plans. What we aren't talking about is the fact that they raised guidance. And what you're seeing this morning is a lot of upgrades to price targets. Piper going to 220 from 215, KBW 209 from 203, Baird 185 from 175. I'll give you the details of some of those calls in about an hour's time, but that's what you're seeing from the South Side this morning off the back of Investor Day. Their stock is up by 0.6%. Under surveillance this morning, NVIDIA's expanding reach.
It's not about just delivering a box, it's about delivering an entire infrastructure. And that entire infrastructure is insanely complex. The last 30 years, both of our companies have changed a lot.
Here's the latest. NVIDIA partnering with Dell in a bid to spread AI to a wider range of customers. The announcement coming ahead of the company's highly anticipated earnings due out after the bell tomorrow. Bloomberg's Alex Webb joins us for more. Alex, let's start with the earnings and we can talk about the broader story of the last day or so. Just how high is the bar? That's the question we're all asking going into results tomorrow.
I mean, the numbers, when you look at them, are kind of mind-blowing. That the year-ago quarter had revenue in the order of $7 billion. The market's now looking for this quarter revenue of about $24 billion. It just kind of, triple what happened a year ago. The real focus then really is going to be on the upcoming quarter. I think it's looking for about $26 billion in revenue. Is the pace, can it maintain the pace of expansion that it has? What we've seen in the past few quarters is that everybody kind of expects NVIDIA to beat expectations, and anything less than that is likely to herald some disappointment.
Are we seeing, Alex, any kind of consolidation when it comes to just some of the demand for NVIDIA? We were talking to Mandeep Singh earlier, and he was saying that some of the advancement in the AI technology is bad news for NVIDIA because it means that some of the momentum has gravitated away from them.
Yeah, it's interesting, actually. It was also interesting hearing Sam Altman doing some interviews last week, because he was saying, he actually said that if there are companies building businesses on essentially GPT-4, they might find that they're out of date within a year because GPT-5 is going to be that much better. So I wonder if that gives a little bit of pause, some hesitation to people then building on, AI businesses right now on Azure, the Microsoft Cloud, on AWS, on Google Cloud, and that has a knock-on effect on NVIDIA. The other point, of course, is the big cloud operators are the companies that are driving the revenue growth for NVIDIA. They are buying these chips in huge numbers. Are they going to continue doing that indefinitely? Well, the news we heard yesterday seems to be a sort of way of plugging that gap should it ever arrive.
Alex, in your mind, though, is there a bar, a number they need to surpass for tomorrow?
Well, no is the short answer. Anything that is above their expectations, right? Anything that is above the street's consensus, which is, I think, $24.5 billion, that's kind of what the market expects. Anything below that, it's likely to be punished. And the thing that's actually really interesting is that the options trading imply a move of as much as 7% as a reaction to the earnings. If that happens, that could move the market by 40 basis points, which is, again, kind of mind-boggling when you think about how big NVIDIA was just 18 months ago.
Alex, let's talk about the creepy story of the last 24 hours. According to Scarlett Johansson, OpenAI approached her. Sam Altman asked to use her voice for a new product service that they were launching. She declined, and then they went on, according to a statement, potentially to just develop a voice that sounded just like hers. Alex, what was your takeaway when you heard that news?
Not to get too sort of philosophical about it, the thing I find fascinating is, Scarlett Johansson did the voice for an AI sort of romantic voice, a sort of romantic relationship with an AI in the film Her about 11 years ago. The upshot of that film was actually slightly dystopian, and I find it so kind of bizarre that there are so many of these essentially dystopian movies or cultural references, and the tech executives lean into them, that they want to replicate this sort of actually slightly dystopian vision. That sometimes gives me a little bit of pause. Yeah, sure, it might be cool writ large, but the implications of it, does that mean they're not necessarily thinking about this in the way they should? Again, it's kind of a philosophical way of thinking about it, but still a strange disconnect.
No, not at all. I think you can go even further, Alex. What do you think the objective actually was?
I mean, honestly, I think it's probably as simple as, Her was pretty cool, let's do that, right? And they do want, of course, the conversation with the AI to be really natural, to be conversational, essentially, that it's going to have a persistent presence, they hope, in your day-to-day life. There's been a certain amount of criticism about the flirtatiousness or the perceived flirtatiousness of the voice that they showed off at the event a few days ago. That the sort of implications of like, well, who's designing this? Is it sort of male-dominated engineering, which therefore means that's what they think is attractive? There are all sorts of wrinkles within this, but it does seem as though it's been a little bit of a misstep on OpenAI's part, of which we haven't really seen all that many sort of big blow-ups like this in the rapid rise of the company.
Alex, there's also this broader issue of intellectual property. Essentially, the way that they generate a lot of their results is going to Scarlett Johansson and Her, or going to all of these other celebrities or these news sites that pay their people to generate this content. And they use that to generate answers, to generate some of the synopses that people are using in their high school classes for their reports. I'm just wondering at what point that becomes a real problem, where people can say, hey, you got to stop using my stuff. You can't like just take it for free and then use it to really sell your wares.
So we already have quite a big test case in this space, which is, of course, the New York Times suing OpenAI. So when I said there haven't been any big blow-ups, that, of course, is a relatively meaningful one. They are suing OpenAI for using New York Times stories in developing their models. That will, I assume, be quite an important test case, because depending on how it, what the ruling ultimately is, and it'll probably take a fair bit of time until we get there, there could be a whole bunch of other content creators, from actors to media organizations, queuing up to demand something similar. This space is terribly fungible at the moment. People are trying to work out what the legal implications of everything are. The case that OpenAI and others make is that how is this any different from a human reading a New York Times story? I might read a New York Times story and then come on air and talk about it. How is that any different from an AI training its intellect on something that it reads elsewhere and then reproducing it for someone else? Now, that is a really grey area for which there isn't much legal precedent right now and has to be worked out.
Alex, thank you, sir, for the update. Appreciate it. Alex Webb of Bloomberg going into those earnings from NVIDIA tomorrow, and some of the controversy in the last 24 hours around OpenAI. Who makes money? Lawyers do. Isn't it always the way? Always.
Well, at a certain point in this case, they can get busy because there's a lot to go here in terms of the intellectual property. And yes, Scarlett Johansson is a particularly flashy story in terms of sort of the poster child of this, but it's going to go a lot further.
When you look at her statement, though, you get this essence that she didn't actually want to go the legal route. She said, we had a conversation about it, and I didn't want to give them my voice. And then OpenAI says, quote, we're sorry to Ms. Johansson that we didn't communicate better. Well, if they say that, does that insinuate that they did rip off our voice?
I find it really, really weird. Watch this space. More still to come, sure, on this front. Coming up next, Benjamin Netanyahu facing allegations of war crimes. We'll catch up with Israel's Strategic Affairs Minister Ron Dermer up next on the program. From New York, this is Bloomberg.
is on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Let's get you a check of the price action. Welcome to the program. Equity futures on the S&P just about unchanged on the Nasdaq with negative 0.05%. The fate of this week in the hand of one stock and one man. It's Jensen, Nvidia. It's coming tomorrow afternoon after the close. That's the big one on the calendar for the week ahead. Looking at the Russell, the small caps down by 0.2%. All-time highs on the Nasdaq yesterday, just short of those on the S&P 500. Look out for one around the open in about 2 hours' time. In the bond market, plenty of Fed speak to digest and process. Yields pushing higher over the previous 3 days, just coming back over the last day or so. We're down 2 basis points to 442.18 on a US 10-year on the session. On a 2-year, we're down 2 basis points at 482.43. We'll get to the Fed speak in a moment. Let's just finish on foreign exchange. A sneak peek of G10 for you. This is the dollar against the euro, just a bit weaker against the stronger euro at 108.66. And the bulk of G10 doing okay against the US dollar this morning. Under surveillance, our top story, no doubt in financial markets once again. Another busy day of Fed speak. Barkin, Bostic, Barr, Collins, Waller, Williams, and Mester all on deck. It's going to be Fed speak all over again. And you've said a few times, Lisa, front and centre for you this week. And Citi, Andrew Holmhorst saying the same thing. Governor Waller.
Whether he talks about what the long-term neutral rate is, they talk about the fact that, frankly, can they embrace the market's view that it is higher? Claudia Sam put it well. You've had a lot of talking dots. This is essentially a group of people who are trying to put out there that they've got fewer rate cuts baked into the market. They have no certainty. They're not telling us anything new. She was just saying, just stop it already. I think probably a lot of people feeling the same. I do think, though, that we're going to hear something more from Chris Waller.
They're looking at the same data that we're looking at, and they're hearing the same guidance that we're getting from corporations as well, and some of it contradicts. Here's Macy's, delivering a beat on profit and boosting its outlook for the rest of the year. Part of Macy's plan includes closing some stores while opening up more Bloomingdale's. The better-than-expected results could buy time for CEO Tony Spring after a $6.6 billion buyout offer from Arkhouse Management and Brigade Capital Management. That stock is up by about 4% in the pre-market. And you saw it straight away, Blue Mercury, and what's happening with the high-end consumer seems to be supporting this business.
It is. You saw the increase in the spending there, 4.3%. That's what they came in for the comparable sales, while Bloomingdale's also a little bit higher, but Macy's actually fell when you look at the comparable sales. So you could see the consumers are still flocking to those luxury goods, which Bloomingdale's, Blue Mercury, quite expensive, a lot more expensive than, say, a flagship Macy's.
Next stop, Target. And Target is really, really interesting. Walmart numbers were pretty decent, but we talked with them about trade down. Trade down. Trade down from where? Are we going to be talking about Target struggling tomorrow, and that's why they're cutting prices? I think that's the conversation this morning going into their release.
How much is just an execution issue and, frankly, competition with Walmart versus actual pressure from the consumer? This is a reason why it's so difficult to get any kind of clear read in the macro signals from some of these earnings reports. We see the potential restraint, consumer discretion in some of these reports, in the commentary from CEOs, but consumers are still shopping. They're still able to find those pockets of strength, fine. Slowing but not slow, right? That's sort of the tone that we're hearing from a lot of these retailers.
Raising the outlook over at Macy's, but still talking about a discerning consumer. That's the latest on retail. Here's the latest out of the Middle East. A panel of judges will decide whether to grant applications to issue an arrest warrant for Israeli Prime Minister Benjamin Netanyahu on charges of war crimes. The International Criminal Court accusing Netanyahu of starvation of civilians as a method of warfare and intentionally directing attacks against a civilian population. I'm pleased to say that joining us right now is Ron Dermott, the Israeli Strategic Affairs Minister. Minister, once again, sir, thank you for sharing your time with us. Let's start with that story. The reaction from...
Good to be back on your show, John.
Fantastic to hear from you. The reaction from the President, Joe Biden, he called it outrageous. The Prime Minister, Netanyahu, called it a complete distortion of reality. Can you share with us, sir, what you believe the reality is and what Israel will do now?
Well, I agree with President Biden that it was outrageous. I'd also say that it was dangerous. Why is it outrageous? Because they're creating a false symmetry between Israel and Hamas, and they're basing it on false charges. As to the false symmetry, I think every fair-minded person realizes how absurd it is that you seek arrest warrants against the heads of a genocidal terror organization and the Prime Minister and Defense Minister of democracy that's fighting against terrorism. But the whole case, John, and you mentioned at the beginning, is based on a false charge that we have a policy of starving the Gazan population. Now, I'm in the war cabinet. We haven't had that policy from day one. So all of the charges are absurd. You're saying Israel's starving the population. We have put in 500,000 tons of humanitarian assistance, mostly food, into Gaza. We have paved roads to allow trucks, 20,000 trucks, to go into Gaza. So at a time when Hamas is actually stealing the humanitarian assistance, attacking the passage points, Israel is doing everything to enable the humanitarian assistance to come in. So all of these charges are baseless. The reason why I think, John, it's dangerous is because what it says to every terror group is that terrorism pays and that you can use human shields. You can attack a country, you can kill its civilians, you can then hide behind your own civilians, embed yourself in civilian areas, hospitals, schools, mosques. You know that's exactly what Hamas does. And the International Criminal Court won't go just after you. They're going to go after Israel, the country that's defending itself. This absurdity actually endangers all democracies who are in this battle against terrorism. And beyond that, I must tell you, I think it will fan the flames of anti-Semitism because people don't know what a ridiculous joke this whole thing is. So a lot of people will think, hey, the International Criminal Court, they've passed this decision. They're seeking arrest warrants against Israel. It has to be serious, right? It can't be baseless. So there must be something to it. And I think a lot of the anti-Semitism that you're seeing spread around the world, I think it's going to be on turbocharged right now. And that's why this is so dangerous. We were very pleased to hear a strong statement from President Biden, from other world leaders. I think serious countries pretty much don't take this seriously, and I hope that continues.
Minister, in October, the defense minister had this to say, quote, "I have ordered a complete siege on the Gaza Strip. There will be no electricity, no food, no fuel. Everything is closed." Do you think that is evidence of a possible crime, that quote right there from October?
Absolutely not. What month are we in?
Well, this is what your defense minister said, that it was the plan.
Now you're saying the day after, we have 3,000 terrorists cross our border, murder our civilians, rape our women, burn babies. The defense minister goes out and says, we're shutting that down. You know why? Because we had an active war theater in the southern parts of Israel that took several days to actually get a handle of. Since then, what we've done, after the first few days of the war, we have enabled this humanitarian assistance to come into Gaza, 500,000 tons. Do you know that the percentage of water that Israel supplies to Gaza today is higher, actually significantly higher than it was on October 7th? We're the ones that are actually flooding humanitarian assistance into Gaza. Hamas is stealing that assistance and sometimes denying the population. But right now, the population has humanitarian assistance. They have food, they have water, they have medicine. That has been our policy since the beginning, and that's been the policy that the Prime Minister has led. A lot of people in Israel were angry about the policy. You know why? Because we're 250, now about 128 hostages that are still being held in Gaza, and they said, why are we responsible for providing all this humanitarian assistance? And the Prime Minister says we're going to act in accordance to international law, and that is what Israel has done from the beginning of this war. To have a policy of starvation and then to pave roads to allow thousands of trucks to go into Gaza, that makes no sense. It's the same thing when you accuse Israel of a charge of genocide when we're actually fighting a genocidal force. Everything has been flipped on its head. I think not only is it outrageous, it's dangerous. And what they did, it's like bringing Nuremberg trials. Yes, we'll put some Nazis on trial, but, you know, let's have Winston Churchill and let's have FDR on trial, too, for the crimes that they supposedly committed during World War II. This is very dangerous for every democracy. I was glad to see very strong bipartisan opposition in the United States, led by the President of the United States against this. You saw Britain weigh in. You saw Germany weigh in. You saw other countries. And as I said, serious countries do not take these charges serious because they're not. This prosecutor, by the way, was supposed to come to Israel to actually get the facts. He is not interested in the facts. He was interested in defaming Israel, and the defamation of the Jews usually is what leads to physical attacks against the Jews. That's why I'm worried that this is going to lead to the spread of anti-Semitism. And this prosecutor, who frankly is a rogue prosecutor in what he did, he does not have jurisdiction over Israel, and he does not have jurisdiction of any of these cases. That's something that the American State Department and all the European countries have said from the beginning, that he does not have jurisdiction over this issue. The Palestinians are not a state. And Israel, he doesn't have jurisdiction over Israel. But this rogue prosecutor has gone forward. I hope that the court, the ICC, in order to save its own credibility, will not become a kangaroo court and will basically throw these charges out.
Minister, I'd love to talk about the policies going forward when it comes to Gaza and also the West Bank. I believe you still maintain that you're opposed to Palestinian Authority leadership in those areas, as well as you maintain that Israel does not want to reoccupy the West Bank and the Gaza Strip. So what is the plan, sir, for these two areas?
So what the Prime Minister said actually several months ago is that we don't want Israel to control civilian life within Gaza, and we don't want Hamas to control it. What we first have to do is we have to finish the job of dismantling Hamas's military machine in Gaza, and we're well on our way to doing it. We're operating in Rafah now. We're continuing that operation, and we need to finish that job. Once we finish the job of Hamas and taking out its essentially its army, then we have to work to getting an alternative in there. The truth of the matter is no alternative will come unless they know that Hamas is not going to be there. And what we'd like to see is civilians within Gaza that are not Hamas, that are not beholden to the Palestinian Authority, but Palestinian civilians in Gaza run their own affairs. As for security, Israel is going to have to retain overriding security responsibility because we're going to have to do anti-terror operations for some time to come. Look, we hope we don't have to do it. We hope there can be an alternative, and they will go and fix the situation in Gaza. They'll be willing to fight against the terrorists, and that Israel doesn't have to do it. But the Palestinian Authority right now is not fighting terrorism in the area it controls, and it's also educating the next generation of Palestinians not for peace with Israel, but for war with Israel. That's why we don't want to see the PA go there. If the PA would totally change, would show that it's capable of fighting terrorism in the areas it controls, of educating the next generation for peace, that would be a totally different story. Unfortunately, that didn't happen.
Minister, there's a real question here about how you get not only international support, but Israeli support, because a lot of Israelis, an increasing number, are really pushing back and actually do want a plan to understand what's next when we get to another phase. Benny Gantz is saying that he is going to quit the war cabinet by June 8th unless there is a clear and a different war path, and he needs to see a government that will win the people's trust. What's your response? Why is the current government in its capacity not winning the people's trust in Israel?
Well, I frankly don't think that that's true. It might be the case, and I don't want to get into internal Israeli politics, that Mr. Gantz's plan is different than the plan that the Prime Minister has. There may be people in Israel who believe you should have the Palestinian Authority in Gaza. They may believe that you should create a Palestinian state. I must tell you, about 70–80% of the Israeli public actually reject that. And I think overwhelmingly there is support for the Prime Minister's policies. There are different views of what the day after should be in Gaza, but he has been very clear. He doesn't want Israel to reoccupy Gaza and to control it, and he doesn't want Hamas to be there. But in order to get to actually the day after, you got to get to the day after. You have to finish the job with Hamas. A lot of people are waiting on the sidelines, and they're looking, is Israel going to finish this? Is Hamas going to be there in the day after? Because we have tried. Actually, several weeks ago, there was an attempt to take local Gazans and to put them in charge of certain areas within Gaza. Guess what happened? They were killed and they were threatened. And therefore, no one wants to step forward unless they know for sure that Hamas is not going to be there. That's why it's so important for Israel to finish the operation, the military operation in Rafah, so we can move on to the next stage and not only win the war, but then talk about achieving peace.
Minister, just finally, I'd love a conversation, just an update on the current talks around the ceasefire for hostages. Where are we? Are those talks ongoing, or have they completely collapsed?
Well, I don't know if I would say that they've completely collapsed. What happened is Hamas agreed to its own proposal. It's very interesting, John. They basically took a document and they said, we agree to what we're going to put on the table. But that document would effectively mean that it would be the end of the war. They could rebuild themselves militarily, retake control of Gaza, and essentially perpetrate, as they promised to do, October 7th attacks again and again and again. And no Israeli government is going to agree to it. We put an offer on the table several weeks ago. The Secretary of State, Tony Blinken, described it as a very generous offer. That offer still stands. I don't know if Hamas will take it. If they don't take it, we will continue our operations. We're always going to be prepared to stop at any point. And get our hostages out. And frankly, if Hamas tomorrow would surrender, would disarm, would give us our hostages, the war would be over. We have no desire to send our sons and daughters to fight in Gaza. But the problem is we have a terror organization there that is committed to our destruction and that is holding our hostages. So we will continue to prosecute this war until we win the war. And hopefully we will, in winning the war as I see it, it's not just defeating Hamas militarily, ending its political rule in Gaza, ensuring that Gaza doesn't pose a threat to Israel. It's also bringing all our hostages home. We're committed to doing that.
Minister, I understand this is very, very sensitive given the families that are involved. What update do you have on the fate of some of these hostages? Are you aware if they're still alive, if they're healthy? What kind of communication have you received?
I think we have some pretty good intelligence about that. Unfortunately, John, not all of them are alive. I don't want to get into the specific numbers. We actually had an operation a few days ago where we were able to return 4 bodies to their families. And of course, that brings, as hard as it is when they were dead, but we brought peace and comfort, and they could close a chapter for those families and to be buried in Israel. We continue to do those things. We hope that we can bring our hostages out alive. As many as possible, as soon as possible. But it's a very, very difficult situation because they're kept deep underground, a lot of these hostages in the dungeons of Gaza, in these tunnels. A lot of the leaders of Hamas surround themselves with these hostages and use them as human shields. And that's why I think, again, why the prosecutor made such an outlandish, outrageous decision and why he is so bad for the overall battle against terror. Free societies everywhere. There should be a clear line between right and wrong and good and evil. There shouldn't be any comparison whatsoever between Israel and Hamas. And I don't think there should be false allegations that are really libels against Israel for a policy that never happened, no policy of starvation. It did not happen, and it will not happen. We are committed to abide fully by international law.
Minister, thanks for sharing your time with us this morning, and no doubt we'll catch up again soon. The Israeli Strategic Affairs Minister, Ron Dermer. Thank you, sir. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahira Hakez. Hey, Yahira.
Hi, John. There's just one big bear left on Wall Street after Morgan Stanley's Mike Wilson capitulated. JP Morgan's Marko Kolanovic held firm on his gloomy outlook on the equity market, urging clients not to buy stocks. The strategist cited a number of reasons, including high valuations, high interest rates, and elevated inflation, though he also acknowledged his outlook has hurt portfolio performance. JP Morgan has the lowest year-end target for the S&P 500 at 4,200. The index is up 11% so far this year, closing yesterday just above 5,300. The copper rally is starting to show signs of slowing, just one day after reaching an all-time high. Some have been warning that prices were running ahead of weak fundamentals as demand remains relatively tepid, especially by top buyer China, as their inventory levels remain high. The country's economic struggles remain in the spotlight, with data showing there's little sign of a turnaround in its troubled property sector. Those issues are seen as a major drag on consumption in the world's top metal-consuming country. And one person is dead and several others were injured on a Singapore Airlines flight that experienced severe turbulence. The Boeing 777 left from London's Heathrow Airport and while en route to Singapore, made an emergency landing in Bangkok. The airline released a statement saying, quote, "Singapore Airlines offers its deepest condolences to the family of the deceased. We are working with the local authorities in Thailand to provide necessary medical assistance." That's your Bloomberg Brief. John?
Shocking news there. Absolute nightmare. Yahira, thank you. Much more from Yahira in about 30 minutes' time. Up next on the program, a more discerning consumer.
I think weakness is starting to go up the income ladder, and that's what we're seeing. What I can't determine right now is how will companies react to that.
We'll try and get some clarity on that up next on the program from New York. You're watching Bloomberg.
The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale
and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology. This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Equity futures right now in the S&P 500 just about unchanged. Yields coming in a couple of basis points on a 10-year. Down 2 basis points, 442.18. A lot of price action from the retailers. Under surveillance this morning, a more discerning consumer.
Listen to the corporate calls. They're telling you that certain segments of the consumer base are already having problems. I think weakness is starting to go up the income ladder, and that's what we're seeing. What I can't determine right now is how will companies react to that.
So here's the latest. The news so far. Lowe's and Macy's out with earnings this morning. Lowe's beating sales estimates and Macy's beating profit estimates. The department store warning that consumers will remain, quote, discerning in their discretionary purchases. Chuck Grom of Gordon Haskett writing this: if trends have seen a further step down, this would suggest to us that deeper consumer issues are surfacing, which would be most problematic for the lower income off-price retailers. Chuck Grom is with us from Gordon Haskett now. Chuck, let's start with Macy's.
Hey,
what do you take away from a raise to guidance, but ultimately, once again, conveying that consumer is somewhat cautious?
Yeah, I mean, the Macy's numbers were decent this morning. Comps came in a little bit better. Gross margins, however, were weaker. They noted in their release they had to move some summer seasonal and spring seasonal items to get inventories in better shape. So that was smart for them. And then they essentially kept guidance intact. They nudged it up both the low end and the top end by about 5 cents. So what we can take care, and you can also look at the Lowe's numbers, which also came in a little bit better. You can see the pre-action on both stocks that the numbers weren't terrible or weren't much worse than expected. But we do agree. We think the consumer is discerning right now, and we expect that trend to probably continue for most of the year.
Were the numbers better than expected because these retailers are doing a good job at figuring out where consumers are willing to spend? Or are they better than expected because the consumers may be discerning, but they're still spending quite a bit?
Probably neither, actually. I mean, most of the beats are really below the line. In case of Macy's, their SG&A rate was a little bit better. And in the case of Lowe's, the gross margin's actually a little bit better. And like I said, the top line pretty much intact, a little bit better. So we'll see how it plays out over the next few days. We have a lot of earnings coming up with Target and TJ tomorrow, followed by BJ's and Ross on Thursday, and then a lot more actually next week as well.
Chuck, when it comes to Macy's, we've been looking at the Bluemercury numbers versus flagship Macy's, and Bluemercury is doing very well. What does that tell you about the state of the consumer on the upper end and the lower end?
That's a great point, actually. Bloomberg numbers were up, I believe, 4.5% relative to Macy's being down. Bloomingdale's pretty much flat. I mean, I think what we're learning is the lower income customer is under the greatest amount of stress. The upper income customer, because of housing prices and where they are, and the wealth effect of the equity markets being strong over the past couple of years, are more resilient. That's not new. I think the question that Mohammed pointed out in his comments, are we going to see the middle income start to come under pressure? And that's something we're going to, try to discern over the next few days and into next week.
Chuck, do you think Target might give us some information on that front?
Well, I mean, Target's numbers should come in close to expectations, down 3 to 4%. They did announce, surprisingly, a big rollback program, lowering the prices on close to 5,000 items. Is that reactionary? Is that proactive? We'll find out tomorrow. Given what Walmart's been doing on rollbacks, I think they noted that their rollback count is up 45% in the first quarter. And the consumer's looking for value and looking for lower prices. So it's intelligent on the part of Target to do that. Is that supplier funded? Is that coming out of their own pocket? That's something, we'll be looking for clarity on tomorrow morning.
Yeah, that's the margin question, Chuck. What's your base case on that question?
I think it's probably a combination of both. I think a lot of the suppliers are looking to move units, and I think that in that case, that if it's similar to what we've heard out of Walmart, I think it's probably margin neutral. But again, we need to hear from the company to learn more on that. But like I said, I think it's a smart and proactive thing to do, given that the consumer wants value. Historically, Target's prices tend to be 5 to 10% higher than Walmart, so it's something they need to address, in our opinion. Are they funding that through their media network? Are they funding it through other parts? That's probably the case, is our assumption.
Chuck, when Walmart say trade down, are they saying trade down from Target? Is that who they're talking about? Who loses when they talk about that theme?
Yeah, I mean, it could be Kroger, it could be Target, it could be all the above. It's probably Target to a degree, though. I mean, that tends to be where the greatest customer overlap is. And as you heard from Walmart, the greatest share gains they had last week was on that upper income customer, the customer who makes more than $100,000 a year. And then the key for Walmart, really, they saw this coming out of the global financial crisis 15 years ago, but they did not retain those customers. And that's the real opportunity for Walmart, and that's why they're doing more rollbacks. That's why they're investing in store remodels. So we think the prospects are good there for Walmart to retain those customers.
Interesting. Chuck, one of the best. Thank you, sir. Almost there. Feels like such a long earnings season. Chuck Crum there of Gordon Haskett breaking it down for you. Looking ahead, Lisa, to Target, just around the corner tomorrow.
A real question of whether this is going to be an execution issue or a larger question on just generally customers. The point that he made about what was fueling profitability is a fascinating one. Does Walmart have more ability to cut prices because they are getting in more into entertainment? They're getting more into some of their online, in particular, sort of cyber aspects as well. Sort of interesting to see where the profits are actually coming from.
For Target tomorrow, do they have to eat it on the margin side of things, or is it the suppliers taking a hit? We'll find out tomorrow morning. That's going to be a big release for the retailers tomorrow. Looking forward to breaking that down for you. The third hour of Bloomberg Surveillance is just around the corner as well. We'll be catching up with Mike Wilson of Morgan Stanley after a big upgrade yesterday, Matt Lazzetti of Deutsche Bank, Luke Hickmore of Aberdeen, and David Rubenstein of the Carlyle Group. A stacked third hour of Bloomberg Surveillance coming up next, with equity futures on the S&P 500 just about unchanged. From New York, this is Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Wall Street that's waiting for something to break hard in one direction.
Our expectation is that we do kind of see growth slow through this year. We're seeing a slowing in the labor market.
There's still some anxiety, kind of in the system. I think a lot of it, to me, revolves around the labor market.
Realistically, we're just seeing a rebalancing in the labor market that's actually working out fairly well.
There are pockets of vulnerability, for sure. We're seeing that across the board.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City, the third hour of Bloomberg Surveillance begins right now. Good morning to you all. A stacked 60 minutes coming right up with equity futures on the S&P 500 totally unchanged and just a whisker from all-time highs. Coming up on the program this hour, we'll catch up with Morgan Stanley's Mike Wilson on his big upgrade of the last 24 hours. We'll speak to Deutsche Bank's Matt Lazzetti on the state of the labor market and Aberdeen's Luke Hickmore on why he thinks the Fed should act sooner. We begin with the big issue. One of the street's biggest bears delivers a major upgrade. Morgan Stanley's Mike Wilson lifting his S&P 500 price target to 5,400, projecting a fresh record high. Wilson saying this: in short, macro outcomes have become increasingly hard to predict as data have become more volatile. We see this environment persisting, a view that's reflected in both our bull versus base case skew, which is wider than normal. Mike joins us now for more. Mike, good morning to you.
Good morning, John. How are you?
You know the headline to the last 24 hours is Mike Wilson's capitulated. He's moved from 4,500 to 5,400 and all of that. Can we just start with the skew, the wide range of outcomes? Because that was the headline of the piece. The bear case versus the bull case, has it ever been this wide?
Well, not for us. I think for other people, they've had wider skews. And look, it just reflects the uncertainty that has been the case for the last several years. And quite frankly, I wouldn't be surprised if we hit both sides. That's kind of the world we're in, which is, think about this year, and we talked about this at the beginning of the year, which is we had three sort of equally similar sort of outcomes. One was a soft landing, is the Goldilocks, which is kind of consensus now, and that's our house view. Then you have the no landing, which is kind of a reacceleration, the stickier inflation, even maybe a stagflationary outcome, which is what the market was thinking about in April. And now you're back to a soft landing, but you still can't rule out a recession either, right? So like all of these are very possible, and they could all happen with a higher than normal degree of certainty. So that's really the headline that should have been out, is that, look, nobody knows anything, right? I mean, and particularly at a point in time, and I think maybe our mistake is just admitting that we don't know as much as maybe everybody else claims to. That's called humility, something that we've learned the hard way over life. But anyways, the point here is that the meat of our report this year, or this update, was really more about how do you make money in an environment where you have basically 0% upside and the base case, and you could have 20% upside or 20% downside. And that's what clients pay us for, right? It's the process, it's understanding, okay, what kind of environment and how are we going to navigate that and manage that? So we spent a large part of the report yesterday talking about trade ideas, specific sector ideas. That's not the headline that people want to write about. That's fine. That's your prerogative. But that's what we want to talk about.
That was never going to fit in the headline. No. We will talk about some of that stuff in just a moment. Let's talk about the headline just briefly.
Sure.
Are you de-emphasizing the 5,400? Are you saying as a price target it's not actually that important to you and a firm? What is that?
Well, it's not important to most clients. Institutional clients don't care about the target on the S&P 500. Let's be honest. Like, they're trying to pick stocks. And look, one of the most important things we talked about in the report is alpha generation this year has been spectacular. The way we measure it with our client base, which is significant, is this is the best alpha generation, alpha capture we've seen since we've started recording it since 2010. So that's what people care about. We're trying to help them in that their process of, okay, what kinds of stocks work in this environment? Oh, by the way, when we skew from these different outcomes, you need to be ready to pivot towards different types of securities. Right now, like our house call is it's a soft landing Goldilocks outcome. We're not that confident that we want to make that bet fully. Like, we think it's still late cycle, which means quality. Okay, large caps over small caps still. We like staples over discretionary. We have two defensive sectors, overweight, utilities and staples, because that kind of protects against slowing growth risk. So there's a bunch of different things, but the main factor that's been working is quality. Quality's been the most consistent factor, and we don't see that changing.
I just want to say that if you wrote a headline saying nobody knows anything, I mean, we could do that every day, but it probably wouldn't really gain that much attraction. I am wondering if there are certain areas that would win in either scenario, the 5,400 or the 4,500.
Well, I think that we laid it out. Once again, that's our bear case. The 4,500 scenario that's not really our bear case. That's our base case for year-end originally. That obviously has proven to be wrong, mainly because of multiples, right? I think this is the main thing, Lisa, that people have either gotten right or wrong in the last 12 months, is that, I mean, a 21 multiple is, in the top decile of the last 80 years. I mean, that is an expensive multiple. So the question I think investors have to ask themselves is that a fair multiple to be paying? Well, in the Goldilocks, perfect soft landing, I think that's plausible. But that's where we're trading, and that's why there's not a lot of upside at the index level.
Which raises this question, are there specific sectors that win regardless of the overall index? Do you see certain areas that are kind of independent of this overall shift of whether there is this momentum in international money that pours in and keeps valuations high and sends them higher?
It's large cap quality. That is what continues. And by the way, it's not just high growth, it's also cyclicals can work in that, but it's still up the quality curve. And we show it in the note very clearly. I mean, it's been the best carry factor for the last year and a half, which is a classic late cycle winner, which is where we are. So, don't overthink that. And don't try to be cute and say, well, I'm going to jump over here because I think there's better returns. There could be. Look, in the small cap and in the lower quality areas, you can't own nothing. I mean, but it's very idiosyncratic. It's very idiosyncratic. It's not a factor that's carrying well. It's okay, I have a stock-specific idea. It's a low-quality stock, potentially, that has a very unique story to itself.
Next big stop for this market, as you know, is tomorrow afternoon. We get numbers from NVIDIA. Mega cap tech, what supports that 5,400? What supports it for you? Is it mega cap tech, the NVIDIAs of this world? Is it elsewhere?
Well, it's basically you're assuming that multiples stay elevated, right? We didn't change our earnings forecast in this report, but we've had we've had this sort of boom idea that we had the boom bust thesis for a while. We probably were early in calling for a recovery in earnings this year and in 2025. So that didn't change. So you have earnings coming from a lot of different groups now. I would say the biggest contributors have been technology. Energy has been a big contributor, surprisingly. Industrials, because of all the spending that's going on fiscally. So those are three major sectors that are contributing to the earnings story. But ultimately, the 5,400 is being supported by policy, right? By very loose fiscal and monetary policy. Now, you may say, well, monetary policy is tight. Not really. I mean, we have an incredible amount of liquidity coming in to pay for that fiscal. So to me, the risk in the story for the next 6 to 12 months is, do the markets start to balk at this unsustainable fiscal policy and the way that they're funding it? And we wrote about this, in detail. We have these liquidity provisions in place now. The reverse repo, which everybody knows about. The Treasury General Account can be drained if necessary to pay for fiscal stimulus in the budget if they need to. And the Fed has already said they're going to start tapering QT. Well, that's like $1 trillion of liquidity. That's pretty loose, right, to pay for the fiscal. So to me, does the market, and I think that this is something we're watching very carefully. Last fall, when multiples came down hard, it was because rates were going up due to term premium widening, meaning the bond market was starting to push back on this strategy. Right now, that's not a problem. So one of the things we're going to be watching to change our view on how things trade at the index level is, does the term premium start to widen again? We don't know, but that's what we're going to be watching.
So big risk factor is in the bond market. And in the bond market, the big focus is November. Does this have a political twist to it? An election call embedded in it?
Well, I mean, yes and no, because I wouldn't say either party has shown any fiscal discipline, right? So in other words, I think we're going to get a strong fiscal support no matter who wins the election, both in Congress or at the presidential level. The real question for markets is, how does it get funded? How is it funded? Can they fund it at a reasonable rate? Right now, the bond market seems very relaxed about that feature, which is why multiples have expanded again.
So if the bond market stays relaxed about this, which there's a lot of people predict that it will, and believe me, I get very excited about auctions, but every week people tell me that I shouldn't because there's plenty of interest at these levels. If there isn't pushback, then 5,400, is that too conservative?
Maybe. It could be. I mean, look, I can make a case for 17 times, which is what our target was originally for this year, 17, 18 times. I can make a case for 21 times. I can make a case for 22 times. That's the problem, right? I mean, we don't know. So that's why we have a wider skew. And I would say this, Lisa, that the target will be more determined probably by multiples than we're going to be wildly surprised on earnings, okay? Unless it's a recession, of course, then you'll be surprised on the downside. But I don't like, the earnings haven't really moved that much for 2024 and 25, right? If you think about since October, which is where the low last fall, 2024 earnings estimates are up a couple percent. The market's up 25, 30. So it's all multiple. So this is why you just need to be alert to things changing potentially in the bond market first, and then that will feed into the equity multiples.
When you talk about fiscal spending, to go back to John's point earlier in the election, it's very different what the fiscal spending may be used on depending on who wins the White House. You're talking about potentially industrials, the green energy economy. This is a new industrial policy from the Biden administration that could continue or could stop short if it's Trump. How are you thinking about 2025?
Well, I mean, look, I think the industrial policy will remain strong. I mean, that's a reshoring thing, which was part of the Trump administration. So half of the industrial policy is potentially green energy, and half of it, I would say, is reshoring and the deglobalization trend. So there's going to be spending either way. It may be redirected. Like, I could see maybe the energy policy shifting back towards traditional energy, but I would be surprised if spending is curtailed in a meaningful way from that standpoint. I think we'll see changes or differences maybe in the tariffs, although recently that seemed to be more aligned. And then, of course, immigration is a big one. And that was a huge surprise this year that really nobody saw coming around the positive labor shock from immigration. So to me, that's probably the single biggest wild card, depending on who wins the election.
Bigger, not tighter, is the view coming from Alan Zentner and the team at Morgan Stanley. This economy can grow without it getting tighter and generating inflation pressure. Are you saying that could flip the other way pretty quickly based on the outcome of the election?
I think well, depending on how things behave, if policy really changes, but yeah, sure. If you all of a sudden shut the borders down and, Trump's talking about deporting people, that would be a negative labor shock, and then we'd be in a reverse situation. So Look, right now, I think the election is literally a 50-50. I mean, the polls are right there, 48, 49, 50% for both sides. So this is not an issue yet. We talked about this in the note too, which is that volatility in election years typically doesn't start picking up until August, September. So I think it'll be okay for the next month. This is not going to be a topic, but it can come at us quickly, probably post the conventions.
Mike, we've got a lot to talk about. You're going to stick with us. Mike Wilson of Morgan Stanley. Equity futures on the S&P 500 just about unchanged here. With an update on stories elsewhere, here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Martin Gruenberg is stepping down as head of the FDIC after findings that the agency was a toxic workplace. Gruenberg faced mounting pressure following a scathing report that detailed allegations of harassment and discrimination during his tenure. The accounts come from a months-long probe into a Wall Street Journal article about female bank examiners facing a, quote, sexualized boys club environment. The White House said it will move quickly to nominate a successor. Donald Trump is closing the gap in fundraising with President Biden. Trump outraised Biden and the Democratic Party by $25 million in April, pulling in a total of $76 million. The boost comes on the heels of several high-profile fundraisers, including a Palm Beach event hosted by billionaire John Paulson. Overall, President Biden's campaign still holds a wide cash lead over Trump's. And Target announced it plans to reduce prices on around 5,000 popular items, including household staples such as milk, bread, fresh fruit, and vegetables. The company said it, quote, routinely adjusts its prices to ensure it is competitive within the markets it does business. Target is set to report earnings before the opening bell tomorrow. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Tomorrow morning, Target. Tomorrow afternoon, we'll hear from NVIDIA. Up next to the programme, the morning calls. And later, we'll catch up with Deutsche Bank's Matt Lazzetti and Aberdeen's Luke Hickmore. All of that still to come from New York. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The opening bell about 1 hour and 14 minutes away. Equity futures just about positive by 0.03%. Yields heading south by a single basis point on a 10-year 443.16. Let's get you some morning calls. First up, Piper Sandler raising its price target on JP Morgan to 220. The analyst highlighting news from Investor Day, including the bank showcasing of a, quote, excellent management team. That'll get you access. We're up by 0.5% in the pre-market. It's a joke. It's a joke. Next up, Barclays upgrading HP to equal weight. The analysts seeing upside around artificial intelligence PCs to support the stock at higher levels. That stock is up by 0.75%. And finally, Stiefel lowering its price target on Zoom to 65. While first quarter results beat expectations, the analysts citing a lack of year-over-year progress in its online business. We're down there by 2%. Still with us around the table here in New York, Morgan Stanley's Mike Wilson going into the opening bell in about an hour's time. Mike, we need to talk about NVIDIA after the close. My favorite question, is Jensen more important than Jay to this equity market?
I mean, this week for sure, because you have this big event with earnings, and the Fed's pretty quiet right now. They're in one of the reasons in the near term I think you'll not see a lot of movement in the broader market PEs is because we're in a quiet period now for the data, right? So the Fed has kind of done their thing. And of course, tomorrow night, all eyes are going to be on NVIDIA and what they say. I mean, look, I have no idea. I mean, like, our analyst is still bullish on the outlook, and I think most people are too. There's no reason to doubt that. I think the issue for AI, I think what, is, as I like to say, AI is everywhere except in the numbers. I mean, we haven't really seen a lot of impact yet. Now, that's fine. I mean, it's an investment part of the cycle. But of course, NVIDIA has been the big winner so far. There haven't been a lot of other big winners on the spend. There's a lot of spending going on, but it hasn't trickled down in a way that's rising the whole tide, right? So there's a lot of AI dollars out there, and they're being captured by various businesses. But what's been surprising to me is that the overall IT spending is sort of flattish to down, right? And that's the work-off that we're seeing from the last 2 years. Now, when they first started talking about AI, and by the way, AI has been around for 30 years, right? Machine learning, we can talk about, this is not a new idea. It's just we have a new technology that makes it maybe more powerful. But I mean, a lot of the large tech companies said in January 2023 that we were going into a 2-year dearth of spending. And so AI is really just filling a hole, in some ways creating a bridge. So for me, the question on AI is that bridge long enough to get us to the other side? It's another big wild card in our outlook going into next year. Like, we don't think productivity is going to be impacted that much next year. It's more of a 26 and beyond question. So, how much is in the multiple now for this productivity improvement, which I think is coming, but could there be a disappointment next year on productivity from all this spending? And does that spending get a bit curtailed as people say, hey, we got to digest this a little bit? We don't know the answers. I don't think we're going to get those answers tomorrow night, because they're in a sweet spot of what's happening in the spending today. You and the team have drawn a distinction between AI enablers and AI adopters, which I think is what you're basically sort of coloring out, building out right now. Where are the AI adopters? Where are you waiting for that productivity boom that you think might be in the multiple, but you don't think it's going to happen for a while? Well, we have a whole list of companies that we've laid out. We wrote a report back in February, March, kind of laying out the adopters and worked with our analysts on this. And I think the market has jumped on that and has kind of price in a lot of upside for the adopters in some ways. What I'm excited about, John, are the adopters that we don't know about yet. Okay, when you think about the internet build out in the 90s, the big winners didn't really appear until the early 2000s. So we don't know who those companies are. Those are going to be your 10 baggers from here, right? They're probably private, or they're subsidiaries of larger companies, and it's going to be in a variety of industries, from healthcare to education to manufacturing, robotics, you name it. But boy, I think it's pretty early to identify those.
Jack Caffrey of JP Morgan was on earlier, and he was saying this idea of going into some of the infrastructure, the energy grid, he feels like has gotten a bit over its skis, because it's going to be so long before that gets built up and actually benefits from this. Do you agree? Well, we're long utilities, not because of that, but because we, sort of a defensive hedge. But they have benefited in that regard. We also upgraded energy, 2 or 3 months ago, on the idea that energy is probably underpriced. Now, they both play into that idea. I think a lot of this stuff has been a little bit overpriced in many ways, because there is a dearth of opportunities. Right, the last year and a half, there haven't been any good theme has been latched onto, because the overall growth in earnings has been somewhat subdued. Right, we haven't had a lot of earnings growth. When do utilities not become defensive anymore if everyone's going into them for an AI play? Well, probably now. It definitely feels like utilities, are getting. I don't think utilities are getting bid up nearly as much as, say, industrials or other sort of, ancillary sort of sectors or trades on the AI investment cycle. I mean, semiconductors is an obvious one, but there again, how many semiconductor companies are really showing, big AI spending upside? A handful. So I think,
look, when the markets are in need of a theme and you get an exciting one like this, it will find every way it can to kind of extrapolate it to as many ideas as possible. And particularly in a momentum-driven market where you have a lot of retail participation, and you can push stuff around pretty easily.
But isn't there a big risk to AI? I mean, we saw it overnight when with ASML are reporting that they can just shut down the semiconductor factories that they have in Taiwan if China was to invade Taiwan. Does this concern you at all, these risks that surround this type of sector?
Well, I think, look, once again, semiconductors have probably been the single biggest beneficiary for this particular theme, yet we haven't really seen it yet in the numbers more broadly. Semi-cap equipment, some of the foundry players, and of course, NVIDIA have been the clear winners of that. What you mentioned a minute ago, a potential invasion of Taiwan is a totally separate concern. And that has surprised me, to be honest, in the last 6 or 12 months, that there's no risk premium built into the winners for that type of event. Like, we don't think it's a high risk, okay? But it's a risk, and it's out there. So there should be some risk premium built into that.
In about 8 minutes' time, we'll catch up with Mike McKee, our colleague, and we'll talk about the Fed Speak. The Fed Speak today, Barkin, Waller, Williams, Bostic, Barr. More Fed officials ultimately saying the same thing. You said earlier on, and I'd like to finish the conversation here if we can. You said earlier on that this Fed is not restrictive. Can you talk to me through why you believe that and why the Federal Reserve seems to take a completely different view of that particular question?
Well, what I would say is, the rates policy is definitely restrictive, right? The yield curve has been inverted now for almost 18 months, 19 months. And we're seeing the impact of that on, levered companies. That's why small caps have underperformed. Obviously, the regional banking system is still, not really growing because of the inversion of the curve. So I think their rate policy is restrictive. What I'm saying is policy collectively. Right? When you combine the fiscal deficits of 7 and 8%, and then all the liquidity provisions that they put into place, some of that is delayed from 2021, right? The reverse repo is essentially a delayed QE program to pay for the fiscal spending. So the policy collectively, I would say, is not nearly as restrictive as perhaps the Fed would like, okay? I mean, it makes their job harder to get inflation down. It also makes it harder to get the economy to slow, which is their goal. Their goal was to slow the economy, not a recession, but slow it in a way where they could actually then start cutting rates. Because I believe we need rates lower to broaden out, right, the participation, not only from a corporate standpoint, but also from a consumer standpoint, right? Mortgage rates need to be lower. Credit card rates need to be lower, right? Mid-level consumers are really struggling. We talk about that, a lot of that in note 2.
It sounds like to me you don't have that level of confidence around the immaculate disinflation story. If we're to walk away with that right now from a 20-minute conversation, is that a fair characterization?
I don't know how anybody could. I mean, I think we're just willing to admit it. I think anybody who says they have high confidence in the outcome over the next 6 to 12 months from a macro standpoint, I think is either, lying to themselves or maybe they know something I don't. I mean, but everybody has been wrong about a lot of things in the last 3 or 4 or 5 years because this is hard. It's, coming out of the pandemic, we wrote about this, and the data is way more volatile. It's also more unreliable, right? The revision factors have been higher. So I think you just need to understand that and appreciate it. Doesn't mean you need to hide in a cave and not invest, but just don't get too carried away thinking you're going to know how the story is going to end.
Mike, appreciate your time, sir. It's good to see you.
My pleasure.
Mike Wilson of Morgan Stanley, following a big upgrade in the last 24 hours, which you maybe shouldn't pay too much attention to, apparently. Coming up next on the programme, Deutsche Bank's Matt Lazzetti, Aberdeen's Luke Hickmore, looking ahead to all that Fed speak, and we'll touch base with Michael McKee after his interviews yesterday with Mr. Bostic and Madam Mester. Looking forward to that ahead of Madame Lagarde a little bit later on this week, and we'll hear from some other central bank chiefs as well. All of that still coming up. Equity futures on the S&P 500, around about an hour or so away from the opening bell. Treading water. It has been an absolute snooze in terms of price action so far this morning, after closing just short of all-time highs in yesterday's session. From New York, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
60 minutes away from the opening bell in New York City. The opening bell just around the corner with equity futures just a touch negative. There's nothing to this. We're down by 0.03% on the Nasdaq. We're down about a tenth following 2 days of gains on the S&P 500. And yesterday, just building on a 4-week winning streak across the board here on the S&P and on the Nasdaq too. The Nasdaq at a record high coming into Tuesday. In the bond market, a 2-year, 10-year, 30-year. Looking for some data, and we won't get much this week. Looking ahead to the big week, which is a couple of weeks away. June 12th, CPI and a Federal Reserve decision. The big one for this market is Nvidia. That comes after the close tomorrow, so look out for that. Tons of Fed speak. We'll catch up with Mike McKee on that in just a moment. Yields are lower by 2 basis points on a session. On a 10-year, 442.57. Down a single basis point on a 2-year at 483.28. Just to finish things in foreign exchange, some ECB speak coming up shortly as well. Tomorrow, I think, Lisa. President Lagarde, what's left to say?
Well, what's left to say for any of them? I guess that maybe there's more uncertainty around the ECB, and maybe she could actually say something a little bit more in terms of how much they could diverge, what they care about the euro. She's not going to say any of that stuff. I'm talking about diverge from the Fed. People are basically unanimous in saying we need a little bit less, especially if you're coming out and saying we've got no conviction.
If you take a few of these central banks right now, it seems to me the ECB is the only one who's actually just said, June, yes, we're going to go. Most likely. After that, we don't know, but Bank of England's reluctant to say. Federal Reserve's been really vague given the economic data over the last quarter and a little bit. And the ECB seems to be the only one who's just sitting there saying, yeah, it's time to go. June. After that, we don't know, but see you in June.
It seems like maybe there's a little bit more conviction around that just because the economy there is slowing more clearly, or at least hasn't gained as much steam as in the U.S. At the same time, I just wonder really if it's going to be the path afterwards that matters the most. We get a lot of Fed speak. The idea of walking, talking dots that Claudia Sahm was talking about, to me really speaks to just a complete lack of certainty, not just of when the takeoff is going to be, but how many come after that. And that, I think, just shows how different the Fed is right now.
The euro at the moment, 108.57. Under surveillance this morning, shares of Macy's and Lowe's rising in the pre-market. Lowe's reporting better than expected comparable sales for the first quarter. Macy's delivering a beat on profit while boosting its outlook. Target giving more insight into the consumer tomorrow. A big one for you tomorrow morning. Elsewhere, ASML and TSMC say they have the capability to disable advanced chip-making machines in the event that China invades Taiwan. Bloomberg reporting that ASML has reassured US officials of its ability to remotely disable its machines, for which TSMC is its biggest single client. In the event of a Chinese attack on Taiwan, ASML would remotely force a shutoff. AMH, quite a development in the last day or so on this front.
I would go back to what we heard from CSIS, which Bank of America put in earlier on in the year, one of their biggest risks, which is the fact that the Magnificent Seven companies like Apple, NVIDIA, they are so exposed to Taiwan. 90% of their chips are being made in Taiwan that they need to use, which is why you see all these concerns coming from the likes of the White House when it comes to companies like ASML, NVIDIA, TSMC. What happens if there is a Chinese attack on Taiwan, which Xi Jinping has said he wants to unify the country?
NVIDIA, if I haven't said it already, tomorrow afternoon, earnings tomorrow afternoon.
Really?
NVIDIA, yeah, apparently. After the close tomorrow. Parade of Fed speak continues. Williams, Bostic, Barkin, Barr, Waller, Collins and Mester all speaking today. Bloomberg's Michael McKee spoke to Cleveland Fed President Loretta Mester at the Bank of Atlanta conference just yesterday. She told him she no longer sees 3 rate cuts this year.
It's too soon to tell what path inflation's on, so we just need to collect more information on that. You know, last year people were worried about, oh, the Fed may be getting too restrictive and therefore it's going to dampen the economy. Those risks went down. At the same time, the risks to inflation, I think, are tilted to the upside and remain so. And so that's the balancing that we have to do as we set policy going forward.
Mike McKee joins us now for more. Mike, wonderful interviews yesterday. What stood out for you?
Basically, the Fed officials are speaking with one voice now that they don't think they're going to be cutting rates anytime soon. There's a slight disagreement about how many they might get in this year, if any at all. But they all seem resigned to the fact that this is going to be a long process and that the U.S. is going to be the outlier. The ECB can go ahead first, maybe the Bank of England, but the Fed is going to sit tight for several months.
Mike, given how many speakers you've spoken to and how many officials we've already heard from, how useful will minutes be tomorrow?
Well, they'll be useful in the sense that people will talk about, we hope we will see people talking about how long they expect inflation to remain elevated, whether they expect some sort of continued progress as we saw in the CPI. But beyond that, maybe some discussion of timing of cuts. But at this point, since everybody has been talking, it doesn't look like we will get a whole lot out of it.
Mike, I got to say, Mike Wilson from Morgan Stanley was on earlier, and he was talking about how the rate policy by the Fed is certainly restrictive, as they've said, but overall policy is not. And they point to some of the repo lines, they point to the balance sheet that really hasn't shrunk that much. Was there any discussion of that on Amelia Island at this conference?
Yes, there has been some discussion of that, and the basic feeling among Fed officials is that they are tight in the right way. As Mike, I heard the Mike Wilson interview, and he described what the Fed officials are seeing is their policies are weighing on spending and borrowing decisions because mortgage rates, car rates, credit card rates are high. So they're restrictive in that sense. They would say the other facilities could be contributing a little bit to liquidity issues, but they're winding down. There's less use of the repo facility. The Fed continues to let its balance sheet run off, but the Fed can't do anything about the federal deficit, so that part of the spending is working against them at this point, but they have a policy of not commenting on things like that.
Mike, when it comes to gaining confidence, we heard from Claudia Sahm earlier. She says that they need 3 months. Is that the sense you get from Fed officials when you sit down with them? 3 months of data before they decide they're going to make that cut?
Yeah, a couple of people have said 3 months on the Fed, but most of them just say several months. But I think that's a fairly good interpretation of where they are with this. They probably aren't going to move. The market probably has it correct in betting they're not going to move until maybe September, which would give them the May numbers and the June numbers and the July numbers, which if they continue to show progress on inflation could lead them to start a rate cutting cycle, but they're going to need to see more progress than they've seen. I know you were talking about, John, the CPI on the 12th of June. That is the Fed's meeting date. Before then, they will probably have an idea of what they're going to do. May 31st, we get the PCE index, and that's expected to show continued progress. So they may keep moving forward, and they may get a little more optimistic in their commentary.
We get an update to the SEP that day as well. Mike McKee, thank you, sir. Fantastic work in the last 24 hours. Looking forward to more of it in the weeks to come. With us around the table, Deutsche Bank's Matt Lazzetti. Joining us also, Aberdeen's Luke Hickmore. Luke Hickmore, if I may go through the lineup again today. Williams, Bostic, Barkinbar, Waller, Collins and Mester all speaking once again. Luke, what is left to know that we don't know already from these officials?
Yeah, it's tough, isn't it? I mean, we were talking about Table Mountain earlier in the year, and it feels they're all on deck chairs, waiting around at the top. Can't see a thing below them. If you've ever been there, it's like that so often. And that lack of visibility, it's useful to have all these Fed speakers with us now to get a sense of where they are, what they're thinking. But they don't see any further than we see. And we need to see the data change. I think it is changing. I think there's early signs of it changing, and they need to see the data change. So I think this whole thing that Mike was talking about, the 3-month visibility period, feels about right. September feels about right. But in a year's time, we'll be 100 basis points lower rates.
Matt Lazzetti, have you heard enough?
A Fed speak?
Yeah.
Yeah, you know, I think we're hearing, obviously, a packed calendar today. A lot of it is not related to the outlook. We have a lot of commencement speeches on the docket. So I'm focused on a few things. One, we had Jefferson yesterday. I think hearing from the vice chair is important. He noted that the Fed's forecast essentially for core PCE at the end of this month is basically 26 basis points. We're talking about getting progress. That is definitely progress from the very strong prints that we had earlier this year. But we also have to know the context that it's still well above the Fed's objective. It still annualizes to above 3%. Today, I would highlight Governor Waller. You know, in the past, he has given actually some decent forward guidance about the data he's looking at, the number of prints that he would likely to see. Perhaps he doesn't go that far. I think the Fed has fully pulled back from calendar-based guidance at this point in time. But the reality is the Fed is highly data dependent. Forecasting the high-frequency data is hard in this environment, and so the data should do more in terms of market moves than the Fed speech should.
Luke was saying that he thinks that you actually are starting to see a turn in the data. There is something going on under the hood that's consistent. Do you agree, Matt, that there is this feeling, not only disinflation, but weakness that's coming through maybe more than the overall data might suggest?
Yeah, you look at economic surprises, they're negative now on average. The inflation data did improve in the last month, but it's too high. The Fed needs a lot more evidence on that. Some caution I have around these 3-month rates that everybody's talking about. Everybody thinks that there's residual seasonality in the data. We get stronger prints earlier in the year, we get weaker prints in the back half of the year. If that is true, and I believe it is, the Fed should be cautious about overinterpreting 3 months of data if it does improve. Broadly, more broadly, you had some give back on the retail sales data. That was probably welcome from the Fed's perspective. You have a labor market that did soften a little bit, but the context is we grew above 3% last year. Atlanta Fed is tracking very strong GDP growth for Q2. It is softer, but it's not obvious at this point that it's soft enough to get inflation back down to target.
Softer but not soft, as John's been talking about quite a bit. I am wondering, Lou, from your perspective, if there is a signal within specific areas like retail sales, where we see this discussion around more discretion, price cuts from Target, all of these types of things that are leaving us feeling like things might be shifting, but not enough to change the narrative. How do you interpret this?
Yeah, I'm that consumer thing too, but I'm also looking at what's going on with companies. Are they spending? Are their CapEx plans growing? And they're not. The federal budget is probably at peak for now. That's starting to be less of a stimulus going forward. So consumer may be stalling, maybe not going down, but stalling. Companies are happy to hang on to cash, quite frankly, and the federal government participation may be easing off a little bit. All of those are just those early warning signs. I mean, it may be that all passes in the next 2-3 months and we get back and stay at these levels of interest rates through next year, but I don't think that's where we are. I think we are in a period where that inverted yield curve is starting to bite, it's hitting consumers, companies, and the fiscal side from the government's changing.
Matt, you read a lot about the labor market in your most recent note. What are these factors that can be a tight labor market but also low churn?
Yeah, so the labor market is fascinating at the moment. You have a very low unemployment rate. We're churning out 240,000 jobs per month on average over a 3, 6, 12-month period. At the same time, when you look at some of these other indicators, the quits rate, the hiring rate, it actually does show what looks like some weakness. The quits rate is the lowest since 2018. The hiring rate is the lowest since 2014. Those are typically associated with a much higher unemployment rate, probably something in the 4.5% to 5% range. So understanding what's going on there, I think, is absolutely critical. It is the result of a very low layoff rate. Now, I don't think it's just about labor hoarding. If it was just about labor hoarding, you just expect productivity growth to be quite low. Productivity growth of the past year is actually quite strong. You expect people not to be working their workers very long hours. That's not really happening. So I think we don't understand it all that well. I speculate that this big burst in labor market churn that took place, basically everybody was able to quit their jobs around the pandemic. And it led to this much better matching between employers and employees. We also have a lot more flexibility in the labor market with work from home. If that's true, you should have less people quitting their jobs, less layoffs taking place, less hires, but also big productivity gains, which is at least is what we're seeing over the past year.
Mid-cycle adjustment. It's a phrase that I first read in your research. I think a lot of other people started to think about it in the months afterwards. You've put forward this idea that what we're going to get is a couple of cuts and maybe that's it. A higher neutral rate as well. What underpins that view? Where did that come from, Matt? Because the world seemingly is coming around to your perspective.
Yeah, so I think when you look at the Fed historically, oftentimes they are cutting because they are seeing recessionary dynamics at play. And when that happens, they cut aggressively. They cut well below what they think the neutral rate might be. We have 2 historical examples where they're not cutting because we have a weak economy, but they're cutting because maybe there's some downside risks or inflation has come off a lot. That's the mid-1990s and 2019. Both episodes had 3 25 basis point rate cuts. The mid-cycle adjustment. So as we look at the outlook, and if we think it is only about inflation, at least up front, I think it's more likely the Fed does, call it 325 basis points, pauses at that point in time until they either see some weakness in the economy or inflation is all the way back down to their target.
I'm going to get to Luke in just a second, but Matt, just to follow up then, doesn't a mid-cycle adjustment indicate that we have some idea of what the neutral rate is?
I think the mid-cycle adjustment gives you the sense that they think they're well above where the neutral rate is.
Are they?
I think, according to any metric, they are. I mean, I don't think it's as low as the 2.6% they have in their long-run dot plot. We think neutral in nominal terms is somewhere closer to 3 3/4 to 4, which is at the upper range of what everybody's saying. but we're still 150 basis points above that range. So I do think that they are restrictive from that perspective. I think it will flow through to the economy over time, and they can take out some insurance rate cuts. But there's massive uncertainty about where neutral is. And so just plowing forward to what they think neutral is probably not the correct path.
This is actually one of the critical questions for investors. And Luke, I'd love you to weigh in on this because we were talking to Mike Wilson earlier, and frankly, one of the biggest mysteries to him has been the interplay of incredibly loose fiscal policy and monetary policy that's restrictive when it comes to rates, but not necessarily beyond that with balance sheet issues and the repo lines. What's your take on just how much you're following what the Fed does, not just with rates, but beyond, and that interplay in order to just get more and more bullish because there's just still so much liquidity in the market?
You need that liquidity to be always increasing. And I think with that's behind us, I think we are going through balance sheet roll-off. I think we are going through that shift in how the Fed tries to control the economy. It's more interest rate-led than every other tool that they've used in the last 15-odd years. And that should start coming through. At the moment, it's not. You're right. The liquidity is massive. Credit markets are seeing new issues like we have never seen. And that's soaking up money too. But again, unless it's incrementally increasing, we will start to see that delta start to hit us over the next quarter, 2 quarters. I don't know. It will come through this year for sure. So it does come back, doesn't it, about do the Fed need to act? And are they better to start acting before they have to start acting? And as we were saying earlier on, normally we get fast rate cuts. This time it's slow rate cuts. I'd say 2 this year, 2, 3 next year. I'm probably a little lower than that. I think on the neutral rate, maybe 2.5 to 3 rather than something over 3.
Yeah.
But we do need to see evidence that inflation's okay into the long term as well.
Luke, I've got 10 seconds. Give us a trade. What's your favourite right now?
Short call 81, 7.5%, 8%, no interest rate risk, and very little risk of not being called.
Luke Hickmore, thank you, sir. Appreciate it. Deutsche Bank's Matt Lazzetti alongside him with Aberdeen's Luke Hickmore. Gents, appreciate it. Thank you. Let's give an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackett. Hey, Yahara.
Hi, John. Iran has chosen a date for its presidential election following the death of President Ebrahim Raisi. Elections will be held on June 28th with the candidate screening process set to begin next week. Individuals will be vetted by Iran's Guardian Council. For now, Iran's vice president will step in as acting president. A coalition of Tesla shareholders are calling Elon Musk's record pay deal an abysmal failure. Amalgamated Bank and 7 other signatories are calling on other investors to reject a $56 billion pay package for the CEO. They claim Musk is distracted by his other companies and is not serving the carmaker's best interest. Musk hit all the targets for the pay, but it was voided by a Delaware judge earlier this year. Now Tesla's board is putting the pay package to a vote for a second time to prove investors still support Musk's pay. And 1 person is dead and several others were injured on a Singapore Airlines flight that experienced severe turbulence. The Boeing 777 left from London's Heathrow Airport and while en route to Singapore made an emergency landing in Bangkok. The airline released a statement saying, quote, Singapore Airlines offers its deepest condolences to the family of the deceased. We are working with the local authorities in Thailand to provide necessary medical assistance. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next on the programme, setting you up for the day and a week ahead. Plus, David Rubenstein of the Carlyle Group, just around the corner from New York. This is Bloomberg.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera, and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
This is Bloomberg.
Live from New York City, equity futures just a touch negative on the S&P 500, counting down to the opening bell. One less bear on Wall Street.
It just reflects the uncertainty that has been the case for the last several years. All of these are very possible, and they could all happen with a higher than normal degree of certainty. So that's really the headline that should have been out, is that, look, nobody knows anything, right? I mean, and particularly at a point in time. And I think maybe our mistake is just admitting that we don't know as much as maybe everybody else claims to. That's called humility, something that we've learned the hard way over life.
Just fantastic to catch up with Morgan Stanley's Mike Wilson. Catch the full interview on Bloomberg.com and on the Bloomberg Terminal. Here's the trading diary for the day ahead. A host of Fed speak, including Waller, Bostic, Barr, Collins, and Mester. The ECB's Christine Lagarde speaking tomorrow, plus results from Target and the #1 stock to watch, NVIDIA earnings, after the bell tomorrow. I'm pleased to say that joining us now is David Rubenstein of the Carlyle Group. David, we'll talk about your new episode, sir, in just a moment. If I may, though, your view on NVIDIA. When was the last time you saw the fate of almost an entire stock market come down to the earnings of one company?
Well, it's very rare when that happens, but clearly this one company has gotten an enormous amount of attention, and maybe deservedly so, but it is rare.
Do you sense that, David, based on that, this market is maybe validated being at all-time highs, or have things got somewhat stretched?
Well, I think you're talking about NVIDIA at the moment?
Yes, sir.
NVIDIA has really captured everybody's attention for its ability to be a proxy for where artificial intelligence is. And people who want to invest in artificial intelligence and take advantage of its growth potential and its profitability assume that NVIDIA is a proxy for that. For the moment, we probably don't have a better proxy than that, though obviously Microsoft and Facebook and other companies that are active in that space are also reasonable proxies as well. But NVIDIA is more of a pure AI play than the other companies. I think that it's rare to see a company go up this much on this sustained a basis forever. But for right now, it seems to be the flavor of the month on Wall Street, for sure.
It's been the flavor of the year, that's for sure. David, let's talk about the new episode as well. I believe you've been speaking to Sally Krawcheck at a time where, for equity market investors who might not have participated in this record-breaking rally, they're unsure what to do. What was the takeaway from your latest conversation?
I had a conversation with Sally Krawcheck. For those who don't know, she became famous initially on Wall Street for being on a Fortune magazine cover saying she was the last honest analyst on Wall Street. And that was because she was willing to go against the conventional wisdom on Wall Street, which often was to promote stocks, where there was a bit of a conflict of interest, because in those days, you could be an analyst and also work for a company that was promoting or selling the stock. That obviously is gone now. But in those days, she was known for being a very, very tough analyst. Ultimately, Sandy Weil hired her to be the head of Smith Barney, and from that position, she later became the chief financial officer of Citi, and from that became the head of all of wealth management for Citi, and then later became the head of Merrill Lynch. She now runs a company called Ellevest, which is designed to help women invest their money. Her view is that women don't really know as much about investing their money as men, and she's designed to a company that's designed to help them do that. And she also points out there's a gigantic wealth transfer of trillions of dollars that will occur over the next 10 or 20 years as men, generally who die before women, will leave their estate to their spouse, and their spouse will inherit, or spouses will inherit staggering amounts of money, trillions of dollars. And she wants to make certain that women are better understand how to manage their money, because historically, she would say women don't manage their money as aggressively or as well as men do.
So is she helping women manage their money more aggressively? What's her advice?
Well, her advice is, of course, to invest with Ellevest and give your money to Ellevest to let it manage some of your money. But generally, she would say you need to make sure you know what you're investing in, have appropriate risk profiles for the amount of money you have and the time you have to invest it. She's hired mostly women to manage the money. She has a number of women who are well-known, who are large investors. For example, Melinda Gates or Melody Hobson, among others, and Penny Pritzker also. And she's got a business that's smaller than the businesses that she ran before. She's managing roughly $2 billion, where before she was overseeing, tens and 20s of billions of dollars. So it's a smaller business, but she enjoys it because she feels she's doing something useful, which is to say not just making money for people in Wall Street the way she typically did, but doing it in a way that helps women, and she thinks that that's a very good social purpose.
David, we're looking forward to the conversation, sir. Thanks for sharing some of your time this morning. David Rubenstein there at the Carlyle Group. Look out for this one. You can watch more of David Rubenstein's interview with Ellevest's Sally Krawcheck on Bloomberg Wealth tonight at 9 p.m. Eastern on Bloomberg TV. Coming up tomorrow on this program, we'll catch up with Citi's Andrew Holdenhorst, former World Bank President David Malpass, PIMCO's Erin Brown, and Vijay Rakesh of Mizuho, with NVIDIA earnings just around the corner. Your equity market just short of all-time highs at a close yesterday. Equity futures just about unchanged this morning. From New York City, good morning to you all. Have a wonderful day. This was Bloomberg Surveillance.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you also have to, you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really it's not going to produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. This is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons, a year in terms of what we have to replace.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate Just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
From New York City for our viewers worldwide, I'm Matt Miller. We are counting down still another 36 hours until we get NVIDIA earnings, but the market seems to want to sit on its hands and wait. The countdown to the open starts right now. Coming up, futures on hold with another busy day of Fed speak on the docket, so that's one thing we'll be paying attention to. Macy's and Lowe's posting better than expected quarterly results, so retail is coming in fine, and big tech hits another record high. NVIDIA earnings tomorrow after the bell, already today in focus. We begin with the big issue, though, insight on the state of the consumer.
In moderation, and this is why it is dangerous to some extent for the Fed to wait so long, because we are not the economy of last year in terms of really firing on all cylinders. So things are moderating. The risks, there are more risks to the downside on the labor market in particular. I think you do see signs of consumers faltering, but they're not, those are risk case. We don't see them in the baseline.
Joining us to discuss now, David Sowerby of Ankara. And David, it's interesting to hear Claudia's take. It's the opposite of what Ed Yardeni was saying on surveillance yesterday, which is that the Fed has gotten us used to these normal interest rates, and we should stay here. If they cut, he thinks they could inflate a bubble. What's your view?
I think first that the state of the U.S. consumer is still very healthy. Consumers defy the law of gravity. And in my career as an investor, I've always thought, never bet against the U.S. consumer, and that's why I'm still overweight consumer discretionary stocks, large cap, small cap. So I think it's still a better than average backdrop, and there's always going to be risks, Matt. But I think the biggest risk is not taking enough sufficient risk.
A lot of talk about moderation. Claudia was just talking about that. I heard someone say yesterday that we're moderately moderating. Is the consumer still, I know, going to be the growth engine for this economy, right? There's no other choice, but still as strong as this consumer was coming out of the pandemic, because we've seen higher income consumers supposedly step down to shop at places like Walmart, and obviously debt continues to be rising and even difficult to judge.
But we take a step back and look at how many consumers have no mortgage or a mortgage rate at 3.5% or even lower. They've been very good, much like U.S. corporations, at locking in low-cost debt and extending the duration. There's still some excess savings left for the U.S. consumer. The key will be, on a go-forward basis, as long as real after-tax income, real disposable personal income, is growing 2 to 2.5%, that sets the backdrop for health in the consumer discretionary sector.
We saw a report today out on New York. I mean, you mentioned a lot of consumers don't have a mortgage. Here in New York, that's because they're paying rent, and only 5% of the apartments here are affordable, according to Zillow. If that's the issue in the big cities, isn't that a problem?
It can be, but if you think about this country in aggregate, you know, where I live in Michigan in the Midwest, there's this manufacturing renaissance that's taken place with onshoring, reshoring, a Michigan unemployment rate on par with the U.S. There's so many good features once you get off, politely said, once you get off Main Street or off Wall Street and get on Main Street, the U.S. household, I think, is still in better than average shape. I'd give it a solid letter grade B, maybe a B plus.
Got it. All right. I want to get to the Fed speak that we've been watching already all week. It feels like it's been a while. Of course, we're only on Tuesday, but it continues down on Amelia Island. Bloomberg's Michael McKee is there, and he caught up with Cleveland Fed President Loretta Mester yesterday. Let's listen to what she had to say.
I was on the record before saying I was at the median, which was 3. The developments I've seen in the economy right now, I would not think that that's still appropriate because the inflation risks have moved up.
Michael McKee joins us now from Amelia Island. So fascinating, exclusive interview there yesterday with Loretta Mester. Mike, what do we hear today, and what are we waiting for still?
Well, everybody's waiting on Wall Street for some sign of when the Fed might cut, but they're pretty unanimous in saying that they're not going to tell you. 3 is off the table, Loretta Mester says, but she's been saying that, and so have others for quite some time. The question is, what might be on the table? And everybody's answer is they have to wait and see the data. We get a lot of Fed speak today. Not everybody is talking in areas where they might make some news, but Chris Waller is speaking now, and later Susan Collins from Boston will add her voice to the whole thing. So we should see at that point another couple people who have waded into the debate. Waller is interesting because he's a little bit more optimistic than he has sounded in the past. In his speech today, he's saying more recent data on the economy indicate restrictive monetary policy is helping cool off aggregate demand, and the inflation data for April suggests progress toward 2% has likely resumed. And in the spirit of let's you and him fight, I'm going to give you guys something to talk about on the open this morning, Matt. Chris Waller takes objection to the Wall Street view that the Fed is overly data dependent. He says in his speech today, I hear from some quarters that claim that the FOMC has become overly data dependent. This is a phrase that honestly doesn't make much sense to me. The median projection for the appropriate level of the federal funds rate at the end of 2024 moved by at most 50 basis points between the 4 summaries of economic projections over 2024 and more or less held to the median of 3 25 basis point rate cuts over the past year. That hardly seems like an overly data-dependent Fed to me. So an interesting argument he's raising for the folks on Wall Street to debate. He's defending the Fed. Meanwhile, we haven't seen much movement at all in Fed funds futures. The forecast is still pretty much the same, maybe November and likely December.
All right, Mike, thanks very much. Michael McKee, their international policy and economics editor out of Amelia Island. David Sowerby is still with us from Ankara. And of course, you point out, David, the difference between Wall Street and Main Street. Consumers on Main Street are still spending money on what? On fixing up houses, cars. I heard you talking to Tom Keene and Paul Sweeney on Bloomberg Surveillance this morning about the stocks that you like being beneficiaries of your check writing for home improvement projects.
That's the case. It may not be traditional retail. We know Macy's had a better than expected number, but the stock is still significantly lagged since before COVID. But to be overweight consumer discretionary just doesn't have to be traditional retail. It can be Wyndham Hotels. Leisure travel is 70% of their business. 9,000 hotels that they own on this planet. They're buying back shares because the stock has been a bit challenged out of the being the target of choice hotels. So there's a leisure play. On the home side, I think a name like IAC, which is Angie's List. So somebody who wants to do remodeling, construction, you name it, they go to Angie's List as a source. That's part of IAC, as well as some media, digital, as well as print. I think there's going to be still more consumer spending on the leisure side, on the service side. Maybe not so much traditional retail, but the consumer, again, they'll defy gravity.
Is this part of, are these picks part of your thesis that the success we've seen in terms of earnings and stock price appreciation has to broaden out? Are you seeing real evidence of that, David?
Slowly, Matt. The rubber band we know is stretched. I lived through it in early 2000. The rubber band then was very much stretched, stressed, but there were different names then. It was Cisco, it was Intel. Today we know it's NVIDIA, as well as a few others. So I think that when that rubber band eventually snaps back, we saw a period from 2000 to 2007. The S&P only compounded at 2.5% annualized return, but the average stock, equal weighted S&P 500 index, compounded better than 8%. I think that's still a good backdrop if you're finding companies that are growing their free cash flow in the high single-digit range and returning that with dividend growth of a similar growth rate of 8 to 10%. I think that's a pretty good backdrop. Back to my original view, there's risk in not taking sufficient risk.
I know that free cash flow and the return of that cash is important to you as well. How important is NVIDIA tomorrow? I mean, a lot of people are saying traders already sitting on their hands waiting for these results to come out, and it's not till after the bell on Wednesday. Is it that monumental?
Well, you call it the Super Bowl, the last episode of Dallas back in the TV days. It's front and center, but I'll give you a little different name. Broadcom, since the end of 2001, bear market, bull market, it's compounded 40% to the investor, not quite in the NVIDIA stratosphere, but it sells at a significant discount to NVIDIA, as well as even a discount to the S&P 500. So while I get it's all about NVIDIA, it's more going to be about the other 499 stocks in the S&P 500, small caps, mid caps as well. This market will broaden out.
All right, David, thanks so much for joining us. David Sowerby there from Ancora, talking about the stocks that he likes, the importance of free cash flow, NVIDIA, and who shot JR. Joining us now with a look at the stocks moving ahead of the opening bell, here's Abigail Doolittle.
I've not heard the Shodells mentioned in quite some time, Matt. That was good stuff for sure. As for stocks beneath the futures, the relatively flat futures for the S&P 500 at least, let's first take a look at the shares of Macy's. They are trading up 3.3%. They beat in a massive way, putting up 27 cents. That was 93% better. So investors liking this, thinking that maybe there's a turnaround in place. And it also perhaps takes some pressure off of activist investors, I should say, amid buyout talks. Lowe's up nearly 3%. They beat estimates, despite the fact that their comps fell 4.1% in the first quarter. That was better than estimated, and apparently they're getting a big boost from pro contractors. And then Palo Alto Networks, not so much, down 6.6%. They put up a quarter that was disappointing. The sales forecast, even more so disappointing. Investors looking for something that was at the higher end of the range that they're looking at. And this, of course, if you recall, Matt, back in February, they put up a brutal quarter and forecast. So this is the second time in a row. I think the stock dropped something like 15-20% on that right now, down 6.6% in the pre-market.
All right, Abby, thanks very much. Abigail Doolittle there with a look at some of the stocks we should watch today. Coming up, Macy's beating profit estimates.
Is discerning right now, and we expect that trend to probably continue for most of the year.
The consumer in the spotlight as retail earnings wrap up. That conversation still ahead. This is Bloomberg.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking. and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
They noted in their release they had to move some summer seasonal and spring seasonal items to get inventories in better shape. So that was smart for them. We think the consumer is discerning right now, and we expect that trend to probably continue for most of the year.
Macy's handily beating profit estimates, leading the department store to raise its outlook for the rest of the year. But Tony Spring, Macy's chairman and CEO, sending a warning about the consumer. He told Bloomberg, quote, consumers remain under pressure despite strong job growth and wage growth. Joining us now for more on Macy's is Bloomberg's Romaine Bostick, anchor of The Close. And as I understand it, Romaine, you were on a call with the CEO this morning.
Choiceful purchases, Matt. Choiceful. That's exactly how the CEO referred to it, Tony Spring here. It's kind of interesting. I mean, he made it clear here that inflation is an issue for a lot of their customers. He made it clear that some of their more affordable products, meaning those private label products, aren't doing as well. Now, the flip side of that is they did actually see a lot of growth and, more importantly, a lot of stability on the luxury side, pretty much on the Bloomingdale side when it comes to women's apparel and women's shoes, and in Blue Mercury, which is largely their cosmetics and skincare brand of products.
What about the spring turnaround? What's the plan for that?
Well, they're doing well. They're touting this first 50. These are basically the sort of first 50 stores that they say are kind of the prototype for what they want Macy's to be. These are the ones that they've already made big changes in, not only in the store format, but in allowing vendors and other things on site. And they think they can extrapolate that to the other, 300 plus stores that they currently have out there as they try to shift. But Tony Spring was very clear. Look, I mean, he just took over this job in February. They're, in his words, the first inning of this, basically the first quarter of this. And it is going to take some time, Matt, but he does see a lot of sort of green shoots, if you will, particularly when it comes to apparel, particularly when it comes to cosmetics. And here's what he also told me, Matt. He says this year, this fiscal year, 2025, they're really going to push really much more deeply into home furnishings.
All right, I have actually purchased a couch at Macy's. It was about 20 years ago, but it was really good.
Well, thank you for doing your job. Really I think Tony Spring would appreciate
Romaine,
that.
Thanks very much. Romaine Bostick talking about his conversation with the CEO of Macy's. The earnings out, of course, they're fighting off a $6.6 billion buyout offer from activist investors. Let's talk more about it with Oliver Chen, TD Cowen Senior Equity Research Analyst. He has a $20 price target and a hold rating on the stock. They're just about there. I saw it flash up at 1973 in the pre-market. What do you think, first and foremost, about the Ark House and Brigade Capital Management $6.6 billion offer? I mean, should that be pushed away? Should they be defending it with the spring turnaround?
Yeah, Matt, they'll always have to consider what's in the best fiduciary position for shareholders. So evaluating this is important. However, financing may or may not be tough to get in terms of the deal. Macy's is well capitalized at 1x debt to EBITDA, but the challenge ahead is fairly substantial in terms of what the company needs to do. The bottom line is that Macy's needs younger customers as well as fixing its overall apparel business. They are underway in doing this quite intently. We're seeing some early green shoots, but as everybody mentioned, the consumer's in a bit of a tug of war between needs versus wants, and basically suffering from the anxiety of inflation, looking for deals, looking for values. So there were markdowns to pay attention to in terms of warm weather apparel, and that's something we're watching as well. the top 50 stores, the growth 50, were better than expected. That's a positive factor as well. But free cash flow generation, capitalization, those are strong positive points on Macy's overall.
How much of a problem, in your view, Oliver, is inflation? Because Justin Wolfers from the University of Michigan was talking on Surveillance last week about how for most of America, wage growth has eclipsed the climb of inflation. But for the top quartile, for the top 20%, which is, I assume, the shopper that Macy wants to get in its doors, inflation has been much worse than their ability to earn more money. So how do you view it for Macy's?
Yeah, what we are seeing encouragingly at Costco is that inflation is getting less bad, flattish, disinflation, even deflation. However, consumer confidence is still fairly volatile, and bifurcation is happening with more pressure in the middle and lower ends. So what's happening with discretionary generally across retail is the consumer is waiting, pausing, looking for deals, looking for better deals, and just delaying some of these discretionary items. Also spending on other items such as services and travel, that's been a factor too. So it's something to watch. At the high end, we do have a robust customer, but it's mixed as well. For example, we see higher end customers trading into Walmart as well. Quiet luxury is a trend, logos less so. So we're looking at those trends within luxury as well. China's something to watch too, is mixed. Bottom line, our preference on stocks is Walmart, Costco, and Ulta. The beauty sector remains vibrant.
I just want to point out we're getting headlines across on NVIDIA, those shares dropping in the pre-market a little more than 1% after a Financial Times report that AWS is halting orders of those chips. Of course, that's Amazon Web Services, the all-important cloud business. And again, the Financial Times is reporting that AWS is halting orders of NVIDIA Hopper chips, awaiting a new chip. We're following these details very closely, Oliver, because as you know, even though you're covering retail, it's all about AI. It has been for over a year. Is this something that retailers, that Macy's, is this a technology that they can put to good use, and have they been?
Yeah, Matt, what we see ahead for AI is large language models as well as computer vision. Walmart's a little further in terms of using computer vision, artificial intelligence for inventory management. What's happening in retail is search and the transformation from keywords to talking to your computer or your search bar like a human. And that is being employed at Macy's as well as Walmart. We're most impressed with Walmart and their use of AI, in part because of the Walmart Plus loyalty program. But we're excited. I mean, AI has the power to unlock better merchandising, labor, as well as inventory reductions, and specifically merchandising, greater full price selling. So it will change the world, and I'm quite focused on this as a topic as well.
Yeah, and I saw, Walmart's online sales were up, I think, 22% in the last quarter, a huge driver of their, of the gains that we saw, that Wall Street was pretty impressed by, and I think taking a chunk, at least a small chunk, out of Amazon's market share. How is Macy's doing with its online presence? I know the spring turnaround is about, I think Romaine was saying, women's shoes, and they want to get more furnishing out the door, but how much are they doing online?
Yeah, the marketplace is a big opportunity, meaning using third-party sellers, meaning vendor-managed inventories. And Macy's is really focused on that too in terms of complementing its own online offering. Furthermore, the Macy's loyalty program is very important for maximizing customer lifetime value. So the key here is to really connect both online and offline to make a better customer experience. But that being said, this physical retail footprint is the most important, and they need to be more theatrical, more experiential, more differentiated. You went there 10 years ago. You need to come back. You need to have a reason to go to stores that you can't find online. In part, this will require a renovation of the apparel portfolio and their own brands to become younger, more relevant to the customer. And customers want a store experience that's not very cluttered. They want a curated experience that has good service as well.
Oliver, great having you on the program. We'll have to have you back soon. Oliver Chen there, coming to us from TD Cowen. Coming up, the morning calls, and then later on, eToro's Ben Laidler joins us around the opening bell as we look ahead to big tech's make or break moment. This is Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, Barclays upgrading HP to equal weight, saying hype surrounding potential AI PCs should provide some support for shares. They want to make personal computers that are AI machines. Next up, Citigroup opening a positive catalyst watch on shares of The Gap, expecting the retailer to deliver better than estimated profits when it reports earnings next week. And finally, Baird downgrades Toast to neutral, seeing slower growth ahead and a more balanced valuation following recent gains. This is Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on
that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is the countdown to the close. I'm Matt Miller. After a fresh record for the S&P 500 yesterday, we're looking at futures that are pointing lower ahead of the opening bell. We can see the S&P futures at 53.23, and there you hear the bell. We'll see if the NVIDIA news drives this market lower. Reports from the Financial Times that AWS has halted its order of new chips, waiting for the next new thing from NVIDIA. Let's take a look at some of the other assets moving at this hour. We have the euro right now unchanged at 108.58, the U.S. 10-year yield at 4.40, and oil down about 1% at $78.95. One of the stocks you want to watch more closely at the open is Lowe's. That retailer beating estimates after a boost from pro contractors despite a weak housing market. Abigail Doolittle has more on Lowe's. Abby?
Well, Matt, it was a solid beat. They beat adjusted earnings by about 4% to put up $3.06 in adjusted earnings on sales of $21.36 billion. That was also a beat about 1.1%. Now, same-store sales or comp sales, a key metric that the industry does follow, fell 4.1% in the first quarter, but still better than expected. And as you mentioned, while a lot of the fixed home fixers have been on the sidelines to some extent as the housing market has been, a little bit stalled. Pro contractors, professional contractors have been out there and helping Lowe's have this solid report. The shares off of the pre-market highs, but nonetheless still up 0.6%, and over the last year or so up more than 10%. So a solid showing for Lowe's.
I need to get over there, actually. Maybe after the show. I need to pick up a pressure washer.
Weren't you just at Home Depot last week?
I was at Home Depot.
Which do you like better?
Well, actually, I don't know where the Lowe's is in my area. I live in kind of a Home Depot area, maybe.
There you go. So you're forced there.
But I'll look for one because I heard they have a very good pressure washer deal. Abigail Doolittle, thanks very much for that. Sticking with retail, Macy's raising its outlook for the remainder of the year after beating profit estimates. We were talking about that this morning. Simone Foxman is here with more. Simone?
Yeah, Matt, the market's clearly reacting to the green shoots that CEO Tony Spring is talking about in some of his turnaround strategy. As you've been talking about a lot this morning, he has outlined a strategy investing in new products, new displays, and customer experience. And early signs suggest that this is bearing fruit, stronger growth in some of the stores that have seen this kind of turnaround. But the numbers there looking good this morning. First quarter earnings per share coming in about double what was expected at 27 cents a share. Second quarter earnings per share look to be like they will be above the initial estimates as well, and the company able to raise its sales and earnings forecast for the fiscal year. That said, sales will still fall 1% to 3%, it expects. But comp sales were also down 1.2% across its locations, even though Bloomingdale's and Bluemercury, its luxury skincare and fragrances and beauty products line, was up. Beauty strong across the board. We heard from the CEO this morning. Citi said this beat on sales is encouraging, implies the second quarter is off to a decent start. But on the call, just now, we heard from the company executives that they do see a consumer that continues to be pressured. They think that they have the flexibility to respond over the course of the year, and we're looking at shares now up 3% in early trading this morning, Matt.
All right, Simone, thanks very much. Simone Foxman there on Macy's. Let's turn now away from retail to software. Palo Alto giving a downbeat forecast, renewing concerns about a slowdown in cybersecurity services. Isabel Lee is here with more. Isabel?
Hey, Matt, shares are lower as much as 7.3% when the market opened, and this is the lowest since February 21st. So you're right, it's really the downbeat forecasts that are causing investors jitter. So we have forecast for the revenue range. It was lower than analyst estimates. We have the projected fourth quarter billings, which is a closely watched benchmark, which is in line. So the tepid outlook is causing extra jitters because this follows the disappointing report we saw last quarter, which led Palo Alto to see its worst single-day drop ever. Shares are now still edging down, and at that time, the CEO said that, investors are just seeing signs of what they call spending fatigue. Well, now during this call, the CFO said that, okay, we admit there's significant volatility in billings, but he argued that it's really due to payment terms, and he said that there are other more relevant metrics, and overall, the executives still remain kind of bullish. They said that they expect cybersecurity spending to continue because the attacks continue, and they also pointed to sophisticated breaches, and they said that, customers are more focused on securing the cloud. But for now, shares are down as much as 6%, but year to date, it's up 2%, Matt.
Got it. Isabel, thanks very much. Isabel Lee there on Palo Alto. Now to the all-important chip maker, NVIDIA, dropping after the Financial Times reports that AWS has halted its orders for NVIDIA's most advanced super chip. AWS, that is, of course, Amazon Web Services, waiting for a more powerful new model to come out. Katie Greifeld is here with more. Katie?
Well, we take a look at what shares are doing, and they're down a little bit on the heels of this reporting from the Financial Times. Like you said, Amazon Web Services, which is, of course, the largest cloud computing provider, it's halted orders of NVIDIA's most advanced super chip to wait for the new model. Specifically, it's halting orders of the Hopper chip to await for its new chip. Remember, back in March, NVIDIA unveiled a new generation of processors that were named Blackwell. That announcement came barely a year after Hopper began to be shipped to customers, but you had NVIDIA CEO saying that the new Blackwell products, they're going to be twice as powerful for training large language models, which is, of course, the technology behind ChatGPT. And it seems like Amazon would rather hold out for those new models than buy the Hopper. AWS specifically told the FT that it had, quote, fully transitioned its previous orders for NVIDIA's Hopper super chip, which launched in August, and replaced them with the successor, the Blackwell models. So they're not canceling the orders, but of course nerves are high right now because NVIDIA reports earnings after the bell tomorrow. That might explain why you're seeing a bit of a dip in the shares right now, down about 0.9%. But just for some context, Matt, NVIDIA is up about 90% year to date.
All right, so they're not doing too badly, even with today's drop. Katie, thanks very much. We'll be following that story, obviously, very closely. The transition from Hopper to Blackwell may be an issue tomorrow on the earnings call. That's after the bell. Joining us now is Ben Laidler, global market strategist at eToro. And Ben, I don't know if we're as focused on AI this year as we were last year, but it seems to be the most important issue, at least after the Fed in these markets. What's your take on NVIDIA?
Yeah, I would agree, right? There's two pillars for this bull market. There's the Fed cutting interest rates and there's earnings growth. And all that earnings growth is coming out of AI and big tech right now. So yeah, absolutely. NVIDIA results are important. It feels like it's almost become a sort of macro event. NVIDIA's market cap is bigger than all the stocks in China or all the stocks in France right now. So yeah, it's important. But I guess I would just say two things. They're going to miss at some points. Right? You can't just beat and raise every single quarter ad infinitum. I think they're going to be fine this quarter, but I would just say two things. We've already heard from their customers. We've already heard from their competitors. Business is great. So if they are going to miss, it's going to be small fry. And the second thing I would just say is, the rest of the market, performance is already beginning to broaden out. I see that trend continuing. So I do see some air coming out of the big tech balloon naturally over time. And just remember, a little bit of money coming out of NVIDIA and big tech, given how supersized they are, goes a very, very long way in some of these smaller sectors and other parts of the world.
I just got a message here, Ben, from a viewer asking, is this what 2000 felt like? Everyone waiting for earnings from one company? It does feel a little frothy, right? I mean, another year of double-digit gains already, and we're not even in June. Every chip is on AI. Are you a little concerned that there are too many bulls? I mean, after Mike Wilson's capitulation yesterday, Kolonovich is the only bear left.
Yeah, let me try and answer that two ways. So firstly, Cisco, which was the Nvidia of 2000, peaked at 100 times PE and frankly has never recovered. Nvidia's on 35 times, right? We can quibble about that, but they are delivering on the profits growth. Profits are going to quadruple tomorrow. Secondly, this has been a pain trade, even with the Morgan Stanley capitulation. I think the sell side consensus target for the S&P 500 this year is still below where you are today. And I think you see elements of that, everywhere. There's still $6.5 trillion sitting in money market funds. That's an all-time record. Our investor sentiment index is average. It's not, it's not full. Retail sentiment is well off its highs. You're seeing mutual fund outflows. I could go on, but sentiment is not low, but it's nowhere near the high. So I think this is a pain trade and a slow capitulation that continues to give.
I would be remiss if I didn't play you some of the sound we got from Morgan Stanley's Mike Wilson. He was on Bloomberg Surveillance earlier.
It just reflects the uncertainty that has been the case for the last several years. All of these are very possible, and they can all happen with a higher than normal degree of certainty. So that's really the headline that should have been out, is that, look, nobody knows anything, right? I mean, and particularly at a point in time. And I think maybe our mistake is just admitting that we don't know as much as maybe everybody else claims to. That's called humility, something that we've learned the hard way over life.
When he capitulated last year, that's when the market turned around and started going down again. What do you think is the biggest risk, Ben, to this market? I've heard a lot of people talk about the labor picture. If people start to lose jobs, is that the end of this?
No, because I think you have the insurance policy, which is out there, which is the Fed could just go and cut interest rates. I think the risk is the other way around, and we may get a sense of that with the Fed minutes tomorrow, which I think is the other, big issue tomorrow, is, if inflation doesn't cool, if the Fed gets forced to hike interest rates, if, we're not going to have rate cuts, that, does two things. That will bring down valuations. It will also ultimately cool the economy and bring down earnings, and that's a sort of double hit that this market is not prepared for. So I think that's a tail risk, but that I think is the biggest risk in the market right now.
So, how confident are you that inflation will cool? A lot of people, including Jamie Dimon at the JP Morgan conference a couple of days ago, saying he doesn't think that's going to happen.
I think it's going to cool. I just think it's going to take, a bit longer than expected. Why? Because you've got 5.5% interest rates. There is a lag on that. Because we're having a productivity boom, we're doing more with the same. And because a lot of these sort of stickier components, whether it's, shelter, whether it's insurance, whether it's healthcare, I think are probably lagging and will catch up or catch down, hopefully, over time. But you're right, that's the risk. I just think that maybe it's a little bit overdone.
The accelerating or ongoing market broadening is another thing that a lot of investors have talked about. That's got to be a bright spot for you as well. How quickly is that happening, and where do you see the most evidence of it?
I think it's happening, and it's happening most notably internationally. China's split from a bear market to a bull market. Europe continues to motor on. Japan continues to motor on. That shouldn't be a surprise. These are the markets which are, in the case of Europe, going to cut interest rates first, and they're also the most cyclical markets. They're the ones that are most sensitive to this turnaround in the economy, which we're expecting. So I would say globally, what we're looking at, I guess the canary in the coal mine is going to be small caps. I suspect that takes, a little bit longer, but I think we're absolutely seeing the broadening to cyclical parts of the world and to cyclical sectors, like financials.
Ben, what is the risk of a Trump presidency and then Jerome Powell out the door? Does that concern you at all?
Yes, we're climbing a wall of worry here. I'd be, I'd be naive if I didn't have a long list of things to worry about. I just don't think that any of them are going to be big enough to derail this market. I think we are seeing an earnings recovery, which is slowly building. and we are seeing, and interest rate cuts are on the table. They're going to be quicker in the rest of the world, but they are absolutely coming in the US, and I don't think a Trump presidency is going to derail either of those two things.
We certainly have seen earnings continue to ramp up over the past 3 quarters, and I know analysts are raising estimates into Q2 as well. Ben, thanks so much for joining us. Great to get some time with you this morning. Ben Laidler joining us from eToro. Coming up, the global chip industry remains in focus.
Taiwan is at the epicenter of the world's technology supply chain. Without Taiwan, it would be very difficult for Michael and I to do our jobs. It would be very difficult for us to serve Bill and his company.
Always in the leather jacket. NVIDIA in focus ahead of earnings tomorrow. That conversation still ahead. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Taiwan is at the epicenter of the world's technology supply chain. Without Taiwan, it would be very difficult for Michael and I to do our jobs. It would be very difficult for us to serve Bill and his company. And so the technology industry depends very heavily on Taiwan and continues to for some time.
And that was the CEO of NVIDIA, Jensen Huang, speaking to Bloomberg's Ed Ludlow in an exclusive interview. Shares of NVIDIA right now are down 1.5% after the Financial Times reported that Amazon has halted orders for the Grace Hopper chip. That's Amazon Web Services, AWS, waiting for an even more powerful chip apparently called the Blackwell. Bloomberg's Alex Webb joins us now for more on, our expectations, Alex, are huge, but this company is used to huge expectations and in the recent past, at least, delivers.
Yeah, they've managed to beat and beat and beat again, and every time actually the earnings come up, if they don't beat expectations, then that's considered very disappointing. Like if they meet expectations, essentially that's if they meet what the analyst consensus is, that's often considered a miss, and you would see that in the share reaction. But so far, it's all been pretty good news. I think the challenge with this FT story that people are asking themselves is there going to be a dip in demand ahead of the release of Blackwell in the fourth quarter? If so, then you might expect a slightly disappointing forecast for the quarter we're in right now and the calendar third quarter. So, that's why there is this share reaction. I think people expect, though, that in the medium to long term, it's all going to be fine.
Yeah, I mean, surely analysts who follow this company professionally are going to know if demand will lag when they introduce a new model. The same thing happens with car manufacturers all the time, and I imagine it's nothing new with chip makers either. This isn't the only chip maker in the news today, Alex. I thought it was pretty amazing that ASML and Taiwan Semiconductor would be able to turn off machines that make the highest tech chips in the world. This is in the case of China invading Taiwan, but I guess they have the technology to turn off these machines remotely for any reason they want.
I mean, in a sense, it maybe isn't that surprising when you think about the nature of the Internet of Things and the industrial internet, much of which is about being able to monitor and, of course, then perhaps control remotely industrial machinery. And this is like the ultimate piece of industrial machinery. The extreme ultraviolet lithography machine obviously is the top of the range, with the high NA coming out sort of shortly. But of course, this presumably applies to lots of different things, including deep ultraviolet lithography, and some of those machines are already in China. So it is something that perhaps doesn't surprise me. It's something interesting that they can, and perhaps provides a little bit of relief to anybody who's concerned about, what would happen if China were to invade. There are bigger issues, of course. If China were to somehow invade Taiwan, sort of just for the chip industry, they wouldn't be able to get all the components that are needed to make these chips. So there are lots of different reasons why just having these factories would not mean that they can replicate what Taiwan does.
I thought it was interesting that someone has essentially a remote control, because they can turn it off if China invades Taiwan. But what if China gets hold of the remote? Like, this is a technology that someone you don't want could hold on to and then control the chip-making machines for the world. I just think it's absolutely fascinating, if not surprising. What are the expectations for this market, Alex, the chip market going forward? I mean, can anyone catch up to NVIDIA? I know that Pat Gelsinger and Intel have been getting lapped, but hope that with enough investment and a couple of years, they'll be able to.
I mean, if you look at the runners and riders, of course, like Intel isn't really in this space. It looks as though NVIDIA is starting to encroach even more on Intel's space. The other player that people have been looking at is, of course, AMD, which for a long time was the most comparable company to NVIDIA. NVIDIA's really stolen a march on AMD. AMD is looking at adding maybe $2 or $3 billion in revenue from these, AI accelerators, while NVIDIA, in this quarter that's about to report, the market's looking for $24 billion in revenue, up from $7 billion a year ago. So, it's just completely different leagues of growth. The final one in this space is, it's a little bit of interest in what's going on in Japan, right, with SoftBank. They are talking about trying to bring a developer competitor to NVIDIA, and the challenge with that is like how they do that in a short time frame, goodness only knows. It requires a huge amount of capital, and coming from a standing start, it seems like a huge challenge.
All right, Alex, thanks very much. Great to have you on the program. Alex Webb writes for Bloomberg Opinion and focuses in on, obviously, the tech industry, which he knows so much about. Let's get to some other sector action this morning. For that, we go over to Bloomberg's Abigail Doolittle. Abby, what are you watching?
Well, the sector composition really reinforces what you've been talking about. Investors on hold until those NVIDIA results. The S&P 500 itself down ever so slightly. More sectors right now at the moment higher, but that's only because communication services is up fractionally. Just a moment ago, it was the opposite. So utilities, the best sector, up 0.7%. This is yields go down. Those dividends look more attractive. The same with consumer staples. To the downside, it's consumer discretionary and technology. Let's really focus in on tech because the stocks, the chip index underperforming, down 1.1% on NVIDIA and some of these other chip makers. If we take a look at the stocks from the last NVIDIA report, we will see that it is up 13%, a very healthy pop. But what's really interesting here, Matt, is the stock still has not put in another all-time high. So this index is essentially lagging the S&P 500 and the NASDAQ. I'm not sure exactly what sort of a tell that is, but it's a divergence that's certainly worth watching going into this high-pressure NVIDIA report tomorrow after the bell.
Yeah, I think that is interesting. As Alex points out, and rightly so, because I lose track of this so often, there are so many different kinds of chip makers, right? And somebody like NVIDIA is doing something very different than, you know, a DRAM manufacturer or even Intel, for that matter. Abigail Doolittle, thanks very much for looking at that. Coming up, the market-moving events you need to be watching. That's next in our trading diary. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Great World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Time now for the trading diary. This is what you'll need to be watching this week. Fed speak from Barr, Bostic, Collins, and Mester again this afternoon. Tomorrow, obviously, we get NVIDIA earnings. They're out after the bell, an earnings report you won't want to miss. Plus, we're going to get Fed minutes, as we've been talking about this morning. Thursday, we get initial jobless claims, along with new home sales. This was the countdown to the open. I'm Matt Miller. This is Bloomberg.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so head over to that youtube.com thing and search Bloomberg Podcast. That's where you'll find us. Coming up, we're going to check in with Ira Jersey today because it is Tuesday, and we always talk to Ira on Tuesday.
We do? Is that a thing?
I think it's a thing.
Oh, wow, I missed that thing.
Sometimes it's sponsored, but I mean, we just kind of throw them in there on Tuesday. Because I have no idea what's going on with the Federal Reserve. I don't know what's going on with interest rates. That's why we check in with Ira. And then we're going to have in our studio Rachel Tenbrink, general partner, Red Bike Capital. We're going to talk about all things, I think, retail, Macy's and all that kind of stuff. Lots of stuff going on there with retail. I want to get a sense of maybe how the consumer's doing out there. So we'll check in with Rachel Tenbrink. That'll be good stuff. Let's kick things off right now, like we do, with Mr. John Tucker.
All right, Paul and Alex, this Market Drivers Report being brought to you by Interactive Brokers. Discover the future of trading with their next-generation trading platform, IBKR Desktop. Download IBKR Desktop at ibkr.com/desktop. Rally in stocks looks like it's taken a breather today. 7 of the 11 major industry groups in the S&P 500, they are lower right now. Consumer discretionary, that's the biggest drag, and that is home to shares of Lowe's. They're lower after reporting their earnings today.
Lost.
Investors may also be on hold ahead of the earnings tomorrow from NVIDIA. Ahead of that, NVIDIA shares right now down 1%. In the meantime, Seema Shah at Principal Global Investors says, you know what, stocks can be propelled higher still.
We are expecting further gains, but nothing as tremendous as what you saw certainly in Q1 of this year. But we're not in Kalanovich's camp either. I mean, to be a bear from here, you have to be really assuming that there's going to be a fairly significant slowdown in the economy and maybe further disappointment from a rate perspective. So there's vulnerabilities, but if we're looking out over the growth story, it's still fairly solid.
And then Fed speak, Federal Reserve Governor Chris Waller says he needs to see several more months of good inflation figures to begin interest rate cuts. Right now, the S&P 500 down 2 points, 53.06. The Dow Jones Industrial Average up 42 points. That's up 0.1%, 39,848. The Nasdaq 100 41 points lower. That is now 0.2%. And yields, well, they're lower. 2-year yield is 3 basis points lower, 481. The 10-year, that's down 4 basis points. That is at 440. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
Thank you so much, John Tucker. Hey, everyone. I'm Alex D. alongside Paul Sweeney. Happy Tuesday. I'm trying to find a narrative for you that's really insightful or like a question of the day that I want answered. I got nothing. There's a bid in the bond market. That's all I got.
Really?
Yeah, I just feel like it's a wait and see for NVIDIA. But is it? Because even the options market isn't as extreme as it was before.
I saw that story. And because this will be, I guess, the 4th or 5th quarter since they issued that really great revenue guide up that really got the whole market's attention, saying, oh, maybe this AI thing is real.
Yeah.
And we need to pay attention to it. So now maybe the kind of market's just getting a little bit used to it. But yeah, it'll be interesting.
Exactly.
You know.
But will it move general markets? I mean, I don't know. In fact, then what are we waiting for? If we wait for the Fed, good luck. We're going to wait for a lot of months.
Yep.
So is that going to move the market?
Maybe. So this means we can have John Tucker and I can just go down to the Jersey Shore and just take everything off. So I'll talk to Colin about that the whole summer off.
Don't take everything off. You should definitely keep something on. But maybe you can take the whole summer off. How about that?
Yeah, we'll take the whole summer
off. There we go. Memorial Day weekend.
I'll just be here, and you guys can phone in. You can just phone in. We'll be like, nothing's happening. See you maybe, I don't know, September, October.
Yeah, all right, I'll talk to Colin about that.
All right, we're on that.
Yep.
All right, I joke. There are some stock moves, but finding a macro narrative out of all of it is still quite tricky, and it's not really telling us anything new. But Macy's stock is up over 1%. It had an okay quarter. Norma Linda is joining us for some of the movers here. I mean, I say okay because it beat estimates, but I mean, it still wasn't awesome.
Of course. I mean, we are really looking at the consumer here this morning, especially as we dissect these earnings from Macy's. I mean, what's really been in focus is the fact that it raised its outlook for the remainder of the year. But as you said, it's kind of still an okay quarter. We are still seeing a bit of a pullback when it comes to spending in the consumer. It did see a bit more spending from the wealthy class this quarter, but still not that great overall as a read through. So, I mean, it's still going to be a bit of a pressure on the CEO to still be able to show that he's able to deliver a turnaround. But I do think that this outlook raise for the rest of the year should relieve a little bit of the pressure from activists that Macy's has been seeing.
So, I mean, but the activists are still there, right?
Exactly. I mean, I think what's going on is that it says that this may diminish their interest in the $6.6 billion buyout offer from the activist investor, which we do know is Ark House Management. So, I mean, it's still something that's lingering as a concern, but it's something that everyone's really focusing on as we move forward here.
So this just goes to prove my point. The Alex shopping indicator.
Yes.
So where I shop, because I only shop on sale, is not where you want to be. I have not touched Bloomingdale's in a very long time because their sales are not that good. Henceforth, you should go buy Macy's stock. This is not a stock recommendation. I'm just saying there is something to this.
Lisa Mateo posted, I guess, a few days ago, she was at TJ Maxx, and she was posting and showing some dresses that she had bought there. And she said she got quite the deal at TJ Maxx.
Oh, I love TJ Maxx.
I love TJ Maxx.
That's the place to go.
Is that a thing?
Is that a thing?
Oh, that is the only thing.
Really?
That's the best thing.
TJ's, Marshalls, Nordstrom Rack, Saks Off Fifth, baby. Those are the four.
Those are the spots.
Oh, okay.
But, you know, TJ Maxx stock does do well, so maybe that indicator isn't the best. Okay, what else are you watching?
I want to look at Palo Alto Networks. So we are seeing those shares sliding. This is after it gave a downbeat forecast for the current quarter. And this is, of course, renewing those concerns about a slowdown in demand for cybersecurity services. It says that revenue in the fourth quarter will be between $2.15 billion to $2.17 billion. But the average analyst estimate was looking for the higher end there. Bloomberg Intelligence did say that shorter contracts and strategy changes have really been weighing on bookings here.
And finishing up, you got Lowe's.
Lowe's, I mean, this is back in the building space. Of course, we're always thinking about John Tucker and what he's doing when it comes
I would say
renovations.
Their 2x4s are a little straighter than the Home Depot 2x4s.
By definition, they're straight, dude. There's no, what do you, they bend?
They bend a lot because they harvest them and they store them when they're wet, and as they dry, they, get a little crooked. Yeah, seriously.
How does he know these things? Okay.
Just from experience.
Only him.
It's entirely true. But Lowe's is suffering from the same, not suffering, but it's the Macy's effect, right? It's like, oh,
similar
it wasn't
situation.
as bad.
Exactly. So, I mean, of course, the same-store sales were better than feared, but it was still a 4.1% decline when we're looking at the quarter. But the main thing that everyone's focusing on is a slump in DIY big ticket purchases. So as you mentioned, it's really the consumer that's in focus. People are still seeing a pinch in their wallets, and they're not really doing those renovations that we were seeing in the past. And as we do know that Lowe's is really the place for the common renovator, whereas Home Depot's is more focused on the professional. So this is really showing us a read-through of the consumer
I think she
here.
just called John Tucker common home
A
renovator.
commoner. I kid.
I will agree. I am a commoner.
John is a poster child.
It's okay,
for
me
the too. And Drew Redding, Bloomberg Intelligence, he covers Lowe's. He's going to join us in the 11 o'clock hour, so we'll break down those earnings with Drew in the next hour.
All right, Nor.
We are good there, right?
Yeah, I think we're good. I think
Awesome.
we can go to Ira, right?
Yeah, we can go to Ira.
Commoners. You want to go?
We gotta get Ira. You can go to Ira.
I'll go to Ira. All right, Nor, thanks a lot. Nor Melinda joining us. We appreciate you, Alex Steele, Paul Sweeney, and the commoner, John Tucker. All right, let's go to the bond market here. We are seeing a little bit into the bond market. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, is joining us. Ira, the market supposedly, the narrative is that it's waiting for NVIDIA. What does the bond market do with NVIDIA?
I don't know if the bond market's going to do a whole heck of a lot with, story stocks in particular. But the bond market is, still waiting for the Fed. We have a ton of Fed speak this week. We have the minutes coming out tomorrow. So the bond market's going to kind of be on edge as to, when the Fed's going to cut. How do they see the balance sheet shaping up? And, we've had a lot of speakers. Like I literally, just before walking on, we finished up with Governor Chris Waller, who, gave not anything significantly different than what Jay Powell's been saying, but certainly some details that, have people talking about the future of monetary policy and things like, what is R-star? What is the neutral Fed funds rate, and where should it be given the current environment?
All right, for all the listeners and viewers out there who maybe don't have a Bloomberg terminal in front of them, one of the most widely used functions is ECO, EcoGo. It gives you a nice list of all the economic data that's released by the government, so you can stay on top of it all. And of course, on there is for tomorrow, FOMC meeting minutes. My question, Ira, is who cares? Because we hear these Fed people speaking all day, every day, except for like a 15-minute blackout every quarter. Do the minutes really tell us something, since these folks are always speaking anyway?
It does, and it tells you a couple of different things. I mean, firstly, it tells you the entire committee, right? Because there are certain people who speak more frequently in front of the media. For example, Raphael Bostic of Atlanta Fed, he's on TV all the time, right? He was on Bloomberg Television not so long ago, like yesterday. We also have Chris Waller speaks a lot. So it gives you all 19 members' view, and then who believes what in a more succinct fashion than you can maybe glean from a lot of the Q&As that wind up generating a lot of headlines, but it's hard to kind of get a complete narrative of what everyone is thinking. So I think that the minutes are useful. They're also useful from an analytical perspective. What we use the minutes for in determining where we think the future path of policy is going to be is we compare what's being said to other periods. And when so we actually have a model, a natural language processing model, that says the Fed is hawkish and dovish. And the nice thing about the minutes, it says a few members, most members, some members. And we're able to get an idea about how many members have that view, which is not something you can get from the post-meeting press conference, which is not something you can necessarily get from just listening to 3 or 4 or 5 speakers instead of all 19.
All right,
so
that's kind of where I wanted to go.
It can be pretty helpful.
Ira, I saw in your research, which I do read, despite all other.
Despite what?
Yeah, I read it begrudgingly because it's great stuff in there. Natural language processing model you use for the minutes. What is that all about?
Yeah, so our model basically takes every sentence that it has to do with monetary policy and the economy within the minutes. We also do the same thing for the post-meeting press conference for the prepared remarks that Jay Powell makes, and tries to determine whether or not it's a little bit hawkish, a little bit dovish, neutral, or very hawkish or very dovish. And in doing that, we can then weight it, right? That's the advantage of the minutes over some of the other models that you can potentially use that are similar, where the minutes have have other indicators. For example, it says a member thinks, which means one person, right? Whereas if it says many members think, then that's less than half, but more than a couple, right? More than 3 or 4. So you wind up with probably a better overall gauge of how hawkish or dovish the Fed is. And what our model shows right now, is, as of the last meeting minutes, which will probably remain the same this week, presumably, is that they're very neutral. They're basically right in line with what would be an on-hold Fed. And that's very consistent with what we're seeing. Now, I suspect that unless the economic data deteriorates or improves very significantly, like you see an uptick in inflation, that the Fed will probably remain in that neutral territory with a little nuance there, which just means that they're going to be on hold. And Chris Waller said today that he thinks that rates are going to be on hold at least until the fourth quarter. Bostic said the same thing. So those are indicators that the minutes have at least are in line with the other speakers that you hear in the media.
Bostic talking up neutral and sort of what is neutral. I feel like Jay Powell in the last press conference really didn't take that bait. How do you view what the neutral rate is, and how important is that to the conversation right now?
Well, so ex ante, it's very difficult to determine what the neutral rate is, right? Because you don't know what the propensity for people to take loans are, and how high or how low interest rates need to be versus inflation or some other measure for where interest rates are going to not increase inflation or decrease inflation. And there's really realistically no way to know that, which is the reason why you get these cycles. The idea, though, and I think this is what everyone in academic land and rate strategists all over the world are talking about, is given how low we think the neutral rate was between 2010 and 2019, has that moved up? And the answer is unequivocally yes. It had to, right? We're in a tighter labor market environment. We don't have the same type of globalization pushing down goods costs that we had 10 years ago. So all of those things are probably true. The problem is nobody really can guesstimate the magnitude. There's a lot of models to do that. Is it 2.5%, which is kind of what the Fed seems to think that it is based on the dot plot. Some people think it's a bit higher than that. I actually think it probably is a little bit higher than that. But there's no realistic way to know beforehand exactly where our star is. But you have to guess if you're a member of the Fed or any central bank, because otherwise you don't know. Are we restrictive or are we not? I'd argue that the Fed probably is modestly restrictive, maybe not restrictive enough, but they are certainly more restrictive than they were when interest rates were at 0.
Hey, Ira, I'm just looking at the 10-year Treasury. Just in the last, 3 to 4 weeks, it's kind of come down in yield from 470 range down to about 440. Does that tell us anything, or is that just kind of trading within a range?
Yeah, I think we've hit that range. We talked, I think it was last week, Paul, where we were mentioning on that kind of 430 to 450 might be the new range for now until we get a significant regime shift. It's not telling us much of anything except that, again, the market is still pricing for the Federal Reserve at some point in the not too distant future will be lowering interest rates. And that's why you have the continued inversion of the yield curve where the 10-year yield is lower than the 2-year yield. But even that has contracted quite a lot, right? That was as much as 100 basis points between the two, and now it's less than 50. It's 40-ish basis points right now. So that's just saying that at some point the Fed's going to cut. When the Fed cuts, 10-year yields are probably going to rally a little bit, but we're already priced for at least part of that cutting cycle.
All right, Ira, thanks a lot. We really appreciate you. Thank you very much, Ira Jersey, Bloomberg Intelligence Chief, U.S. interest rate strategist, joining us there.
And the way to get all that research, Alex, is BI space RATE. BI rate will get you to all the interest rate analysis for Ira Jersey and his team on a global basis. You pull up, there's stuff about Canada, there's stuff about Asia, China, in all different languages on this dashboard, but it is the global view of interest rates.
And you can't beat them. You just really can't. You can't be the model that goes through and looks at speeches. You just can't beat that.
No, who's got a large, like a language model? I don't know.
It's
well, there's also Mossad, the Israeli intelligence agency, uses a very similar type of software to look at conversations that they intercept. We use the same thing for conference calls, and Well, yeah,
Yeah,
no.
yep. See sentiment, yeah.
Just to look for keywords and whatever, so you don't have to sit there and listen to the whole thing.
Well, I listen to conference calls all day. What are you guys talking
I
about?
spent a career doing that.
I mean, come on. All right,
got
speaking
other
of conference calls, we're going to talk about Macy's coming up next. Clearly, sort of not as bad as expected, doing well for the stock. The stock is pretty much flat on the day. But overall, kind of the health of the consumer is obviously going to be front and center, low end versus high end. We're going to talk to Rachel Ten Brink, general partner at Red Bike Capital. That's coming up next. Happy Tuesday. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Major stock averages, little change at this point. Of course, the week headliner, NVIDIA, the stock has rocketed higher among a frenzy around artificial intelligence. It's going to report the latest quarterly results tomorrow. Expectations pretty high. Lowe's, they did report comparable sales for the first quarter. They beat the average analyst estimate. Lowe's shares right now, they are down about 2.5%. Macy's boosted its full-year projections for adjusted earnings per share and net sales. Well, its profit outlook for the current quarter topped estimates. The midpoint of the net sales forecast that trailed the average analyst estimate. Shares of Macy's right now, they're down 1.5%. And then Palo Alto Networks, those shares down close to 5%. The security software company issuing a disappointing forecast for fourth quarter billings. S&P 500 unchanged, 5307 right now. The Dow Jones Industrial Average up 63 points. That's at 39,870. And the NASDAQ 100 41 points lower. That is down 0.2%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is Bloomberg Business Flash. Alex and Paul.
All right, thank you so much, John Tucker. Yeah, Macy's is down 1.5%. I was looking to see if there was anything that came out recently, and it hasn't. So I just wonder if, it had a nice run up into earnings. We're still just a few months away from 52-week high. Maybe it's that. But we want to get more insight on to that. Yes, raising a full-year outlook, good. Same-store sales falling less than estimated. Rachel Tenbrink is general partner over at Red Bike Capital. She joins us now in studio. Rachel, you deeply cover the retail industry. What was your broad takeaway from Macy's?
So I think that there's a new CEO. The clock is ticking. There's a lot of pressure. And so I think that he's trying to, as quickly as possible, make an impact. But truly, it's hard to see the short-term sort of real pop. I think what you're seeing is there's a lot of focus on top doors. There's a lot of focus on top performers in the Bloomingdale's and Bluemercury. But overall, the consumer is still challenged. They still have inventory issues. And if you look at the overall performance, they did a little better because they had better operating, but the top line was down.
So, when I think about Macy's, obviously it is the quintessential department store. What's the strategy for Macy's going forward? Because it just doesn't feel like, and this has been a long-term trend for department stores in general, with e-commerce and so on, kind of a tough place to be. What's the strategy for Macy's these days, do you think?
So I think the reality is just a smaller footprint, a smaller company. I think it's shocking if you think about the fact that Macy's in the last 20 years has lost about 25% market share.
Wow.
And so
Is that to whom?
To basically retailers, Amazon, discounters. It's just a much smaller company than it used to be 20 years ago. And I think that if you think about the fact that they're going to close 150 stores, they're going to be left with 350 stores. It's just, I think that it's a tough place to be. I think there's still a place for it, and I think they can thoughtfully talk to those customers, but it's just going to be a smaller place.
To that point, what is their inventory functioning? Like, are they doing that well? Like, having a smaller footprint might be good in terms of inventory management. How are they managing that?
So from what I read, they were struggling a little bit trying to figure out the transition between spring and summer.
Mm-hmm.
So they did have a little bit of elevated inventory levels, but they seem to be doing okay. I think what they're trying to do is create more proprietary and special experiences, private label, things that you can't find anywhere else. But they need to hit it on the nose, and the consumer is being very picky right now about where they're spending.
You guys know why I asked that question, right?
Why?
Too much inventory means sales.
Sales
means Alex shops
Alex
there. Good inventory management means Alex does not shop there.
Right.
I'm not paying full price. But I ask that, I say that in jest, but it does speak to the promotional activity. And if the consumer is stretched and they're being picky, that's going to rely on the promotional world to kind of get them in the store to hope for more volume. Is Macy's part of that?
Yeah, I think what's interesting if you think about Macy's is that they're sort of peaking this bifurcated strategy where on the one hand they have their own, the Macy's nameplate stores, and I think they're focusing on top doors, sharpening the inventory, sharpening the offers, and then they're going high end with Macy's and with Bloomingdale's and Bluemercury to try to attract that higher end shopper that's willing to spend a little more.
Rachel, I don't know if you're aware, but the big news in this studio over the last week was, for the first time ever, I went to a Walmart store over the weekend. Hugely impressed, blown away, everything, it is as you would expect. Because we had some Walmart earnings last week. What do you take away from Walmart? They seem to be doing pretty well.
Well, I think that you always have to look at the relationship between Walmart, Target, right? They're always head to head. And I think right now the consumer is feeling the financial pressure, they're feeling inflation, and they're trying to find deals. And what's interesting is there's still this perception that if you want to find lower price points, especially in things like food that are basic, you go to Walmart. Now, it'll be interesting. Now, yesterday, Target announced that they're lowering prices on 5,000 SKUs. And so how is that going to affect the dynamic between Walmart? You know, they're still trying, Target is still trying to keep that upscale image, that Target.
Yep.
But, you know, they're fighting for consumers that are really caring about every penny.
I mean, I'm sorry, I was at 5,000 SKUs. I mean, how often does that happen? I don't think I've heard that too often.
I don't know if I know that. I mean, I think that's pretty dramatic. Walmart has been lowering prices as well, so I think they're just sharpening the competition.
So they have actually already cut prices on about 1,500 items, and they had said that thousands more reductions are planned over the course of the summer.
They're trying to get you into the store.
Yeah, exactly, right. Exactly. One analyst over at Barclays was saying that these may have been planned as part of sort of the second quarter inflection that was embedded in guidance, and the second half maybe gets a little bit better, but obviously that's going to be a key topic tomorrow. Also, these items that we're talking about are milk, bread, soda, fruit, veggies.
Well, that's good because that's where I've seen it.
Yeah, but that's also, I wonder if that's a direct competition then to Walmart, because that's where you can make an argument that if you go to Walmart for groceries, that's where you buy your other stuff, and I wonder if Target's trying to play with that.
Exactly. I think that it's sort of a double-edged sword. Target always tried to be like, you know, better quality, higher end, but still affordable. And I think what they're realizing is right now the customer's really focusing on the affordable, and they're really focusing on the basics. So they're going head to head on that piece.
Is there still too many stores out there, department stores or big box? I mean, particularly the department stores. I've always heard, like in the department stores, there's still too many stores in America. But now maybe the pandemic solved for that. I don't know.
Well, I think part of the challenge is, you know, Macy's did announce 150 store closures. So they're definitely,
that's big. Yeah.
That's a big hit for them. I think a lot of it is, you know, when you think about stores, you also think about location and real estate and, you know, what are the top malls? There's obviously, you know, it's not just there are too many stores, it's that there are too many malls and people aren't going to those malls, but there are some shining places. So I think it's about like finding the winners and having a smaller, sharper footprint versus so many doors.
And it was interesting you say that, Paul, because some of these malls are being anchored by Target.
Yep.
So you also have to wonder if Target has to retrench a little bit here, what does that wind up meaning then for the mall? What would be good from Target when they report?
So I think the expectation is that they're going to be up slightly, about 1%, but we'll have to see. I mean, I do think that this news of better pricing is going to have an impact on them.
Meaning that would be helpful with volume, but then obviously not with margins?
Correct.
So
interesting.
Where do we go from here for retail? I mean, what's your takeaway on the consumer here? The consumer seems like it's, I guess, that K-shaped economy where some small percentage are doing quite well, particularly those that own assets, stocks, bonds, houses, and everybody else is really feeling the pain. Is that what you're hearing from the retailers?
Absolutely. I think that there is this sort of bifurcation of like the have and the have-nots. And so for some consumers, it's a small group, but they're very profitable. They're doing okay. They're still spending. They're still going to Bloomingdale's. They're still buying their Target. And for others, they're really struggling. And I think it's sort of come to that breaking point where when you start to see stores lowering prices, there's a real pressure from the consumer.
Yeah, that's a good point.
Yeah, but then obviously hurts the margins, and then it's like as a stock investor, you're like, well, do I like that volume versus margins? In your experience in the retail sector, which ones are kind of crushing it right now? Because it does seem to me that what names that people like are very targeted, right? Like a specialty retail store is the winner. Is that true?
Yeah, I mean, the first name that comes to mind is Sephora and how it continues to outperform. You know, there's a lot of talk about Sephora kids, but you're just seeing.
So what's a Sephora kid?
So a Sephora kid is my 12-year-old daughter who enjoys spending hours at Sephora.
Really?
But guess what? It means she buys, it means I buy. And I do think that there is an interesting approach where, you know, these Gen Z consumers that everybody thought, well, they don't really have that much disposable income, but guess what? They bring along others.
And have you ever seen the line in
Well,
Sephora over
here's
here?
my
Like
Sephora
there's
story.
always a long line.
Depths of the pandemic lockdown. ground zero of the lockdown. People in Sephora, A, they didn't close the store, and B, there were people in there. I mean, triple masked up or whatever,
Oh, yeah,
but they
yeah,
were
yeah.
there,
Oh,
and they
yeah.
were in our chocolate store downstairs.
You know what we do, Paul?
What?
We invest in our face.
Yes, we invest
And
in our
that
face.
comes in many different forms,
John-
and one of
John
them
did
is
not get that
makeup.
memo back in the
And
day.
after we
What are you
invest in our
saying?
face, we go eat chocolate, and that
Yes.
is what we do.
Okay, very good.
All right, good stuff. Thanks a lot. Really appreciate it. Rachel Tembrink joining us. You're a partner over at Red Bike Capital. We'll see how those numbers wind up stacking up. So where do you shop if you don't do Walmart? Really? Like where? Like the local grocery store?
Yeah, local grocery store. Yeah, absolutely. They Acme, right on Route 35 in Wall Township.
But then you buy full price at like designer places and little shops here and there, right?
Yeah.
You're not my target audience right
No,
now.
I'm not.
No,
I'm
you're
not
really
the-
not.
You know, I don't buy stuff. I'm in a stage
He
of my life.
doesn't
I'm
buy
getting
stuff.
rid of stuff.
No, I hear that. That's a nice stage. S&P doing absolutely nothing. We're going to talk energy next. This is Bloomberg.
All right, let's get some more national news from Mr. John Tucker.
Let's make that Michael Barr.
Oh, Michael Barr. I didn't see him behind the bar. See, that's the thing. Mr. Barr behind the bar. That could be a sponsored segment.
I like that. And
Michael Barr
as big
behind
as
the
I
bar.
am, I don't see how you could miss it.
Thank you, Michael.
Okay, thank you. But thank you, Paul, Alex, and John. The defense just rested in Donald Trump's hush money trial. Yesterday, there were fireworks after the judge threatened to remove defense witness Robert Costello from the trial over his behavior. Trump's lawyers hope Costello's testimony will help undermine the credibility of the key prosecution witness, Trump fixer turned foe, Michael Cohen. This morning, Costello turned to Judge Juan Marchand before the jurors arrived, speaking quietly. The judge acknowledged him and nodded. Ahead of court today, Trump again slammed the judge, calling him conflicted.
We have a phenomenal case. We've won the case by any standard. Any other judge would have thrown this case out. Any other judge would have thrown this case out.
The defense rested their case after just two witnesses without calling Trump to the stand. Benjamin Netanyahu is reacting after the International Criminal Court says it's seeking an arrest warrant for the Israeli Prime Minister, the Israeli Minister, the Defense, Israeli Minister of Defense, and the leaders of Hamas for violation of human rights and war crimes. Prosecutor Karim Khan says the leaders from both bear responsibility for committing wartime atrocities. But many leaders in the international community, including the U.S., have said the allegations against Israel shouldn't be equated to Hamas, who carried out the terrorist attack on October 7th. Prime Minister Benjamin Netanyahu called the ICC's move outrageous. Global news, 24 hours a day, and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm John Tucker in the newsroom with this Bloomberg Business Flash. We're being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Major stock averages, they are mixed, and part of the catalyst seems to be Fed speak. Fed Governor Chris Waller among those talking. He said he needs to see several more months of good inflation figures to begin rate cuts. Though recent data suggests progress has likely resumed. NVIDIA dropping in the runoff to its results. Those shares right now down about 0.3%. Of course, NVIDIA opens their books to investors tomorrow. Meantime, well, shares of Apple have trailed the rest of the so-called Magnificent Seven. Dan Ives, who's in earlier today at Wedbush Securities, he says things may be turning around for Apple. And let's do Palo Alto Networks. Those shares lower after giving a downbeat forecast for the current period, renewing concerns about a slowdown in cybersecurity services. Right now, the S&P 500, 6 points higher. That's up 0.1% at 53.14. The Dow Jones Industrial Average, 58 points higher. That's up 0.1%, 39,863 for the index. And the NASDAQ 100 right now, 7 points lower. Let's do yields. The 2-year right now, that is down 2 basis points. That's at 482. The 10-year yield, 3 basis points lower, and that is at 441. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right. Thank you so much, John Tucker. This is Bloomberg Intelligence Radio. I'm Alex Steele alongside Paul Sweeney and John Tucker. We bring you all the news in finance and economics through our lens of our Bloomberg Intelligence analysts. They cover about 2,000 companies, 130 industries worldwide. We also use this time to talk about stuff that Paul and I are interested in. So media, maybe some retail, maybe some sports, and maybe some energy. Joining us in studio is Dr. Jeff Chamberlain. He is CEO of Volta Energy Technologies. I don't know what that is, so I'm going to learn about it. Dr. Jeff Chamberlain, welcome. Thank you for joining us. What is Volta Energy Technologies?
Well, thank you, Alex, for having me. Volta Energy Technologies is a venture capital firm that we spun out of Argonne National Laboratory, which is one of the 17 Department of Energy labs and the lead in battery and storage tech and development for vehicles and for the grid.
So that means that you are trying to find good battery storage solutions that we can adopt on a cheaper scale.
Yep, that's
How's that going?
That's it, basically. And I'll tell you, the big thing that we've noticed is a couple of things. One is a lot of people are focused on the downstream device. Who's going to be the next big electric? Who's going to be the next Tesla? Or who's going to be the next Panasonic or CATL in terms of the battery manufacturing? But before I worked for the government, I worked in the chip industry, and we expect this to go just like the chip industry, where cost down will be king, and cost down will come from innovations in the supply chain and in the adjacencies, things like fast charge, things like power electronics on board the vehicle, new ways to make batteries, all the way upstream to mining lithium. So while a lot of investors tend to be focused on those very downstream devices, the truth is lithium is king, and it will be for decades going forward, just like oil and gas has been king for a century, just like silicon has been king in the semiconductor industry, and yet created trillions of dollars of wealth by modifications and wealth generation in the supply chain and in the adjacencies. So it's going well. We're finding a lot of good tech.
Where does lithium come from, and then how are you investing in that?
Yeah, if we go all the way upstream, let me start by saying there is no better time for investors in the private markets, and this is a counterintuitive thought from what you read in the mainstream media, investing in the kinds of technologies that we're investing in, because the needs of the end users are increasing. And by needs, I mean lowering costs, improving performance. There's a reason 1 week ago today, the Biden administration put in tariffs that are 100% for electric vehicles coming from China. That happened because the U.S. automotive groups lobbied for that to happen. They know those cars will sell. A lot of the mainstream media says nobody wants to buy electric vehicles. They just leave off the second phrase, unless they're lower cost. Right. But when we go all the way back up to mining, it's notable what the big companies are doing. Last fall, after I was here talking to you, Paul, actually, Exxon announced that they want to become lithium suppliers. And the way they're going to do it is to leverage their own, downhole and refining capabilities and to adopt and scale something called direct lithium extraction, or in my industry, they call it DLE. It's a new way to extract and refine lithium, and it's like it sounds, it's direct. If you can remove process steps and use less water, use less energy, you end up with a lower cost production. So prices of lithium in the market have been fluctuating substantially these last 5-6 years, where the cost of manufacturing has stayed the same.
So where you guys would play in that, for example, like I know that's Exxon's investment, you'd be investing in the technology that would make direct to mining lithium work.
Precisely. In our Fund 1, we invested in a company called Summit Nanotech in Canada that is now scaling in Chile with one of the big lithium suppliers to supply that tech to lower the cost.
When you go when you go further up the supply chain, is that where it lands for you in lithium? You're not looking at like graphite or cobalt or other stuff?
Yes, thanks, Alex. You know, they claim, Paul and Alex claim they don't know a lot here, but they clearly do. Yes.
Oh, no, I know a lot. Who said that?
Maybe it was Paul. That's great.
Wasn't firm.
Don't speak for Alex.
That's just my Midwestern heritage speaking there, modesty. But the answer is we look at it all. Graphite, it's fascinating. Even graphite, there's not only supply chains coming out of China being localized for cost reasons as well as geopolitical reasons, but we look at it all from graphite, cobalt, sulfur actually is a technology that can be used in batteries, lithium, and then downstream from that to things like new microchips that enable power control and can lower the cost of electric vehicles.
Do we need to be concerned about the security of the resources for all these electric vehicle components? Like, are they in China that's a risk, or are there in parts of the world where it's a risk to the U.S. and others? Is that a risk?
The short answer is yes. There's a longer, more nuanced answer. Graphite and lithium in particular, depending on which material you're talking about, 80 to 95% of it's processed in China, but it's not sourced in China, which means there really is an opportunity, especially with the advent of technology that lowers manufacturing costs, to move that supply chain out of China because the resource itself is not in China. However, magnetic materials, the core called rare earth elements that are used in magnetic materials for electric motors, most of that is in China. So there's been a 10 to 20 year research effort in the Western world to develop new magnets that don't require rare earths. And those are all going to be coming commercial in the next 3 to 5 years as well.
I was talking to a graphite producer yesterday.
Who doesn't?
Who doesn't? And he was talking about the tariffs that were put on. I know you mentioned EVs in particular, but then the nuance of, say, the raw materials going to Canada or Mexico, and then because we have a free trade agreement, they just come into the U.S. And so there's a huge price discrepancy versus, what you're willing to pay for localized materials versus how cheap China can get it. How do you solve for that? Because that's really going to be about lowering the cost, which is really technology, which is really you.
It's really a good question, and I'm not being a politician. I don't know how to handle it from a policy perspective because there are loopholes that you can go through in Mexico and Canada, et cetera. Ultimately, the answer is things like graphite. There's graphite all over the world. The largest graphite mine in North America is in Bécancour, north of Montreal, and that's natural graphite. There's also something called synthetic graphite, where you can manufacture the graphite from carbon, and there are big oil producers that are looking at doing that as well, right, to grow their business in that direction. So in my view, as a technocrat and as a technology investor, it is find the innovations that can lower the cost for localized supply. And I think there'll be bumps in the road between now and adoption of that technology in terms of what's happening worldwide in geopolitics, but I think ultimately it's localized supply that will win the game.
Where does Mr. Tesla get his batteries? Where does Elon Musk get his batteries for his cars?
I used to joke on Capitol Hill when I worked for the government that if you peel the T off the factory, the Gigafactory in Nevada, you see a big Panasonic logo underneath it. Originally, it was a Panasonic deal that they cut and embedded themselves together in the supply chain. They since have expanded to LG and CATL and others. So CATL is the big dominant battery supplier in the electric vehicle supply chain, and that's in China. But they've onshored manufacturing, right. And as an American citizen, I don't think it's a bad. Even before IRA became enacted,
right.
Panasonic, LG, Samsung, they'd all announced 20 gigawatt hours of manufacturing in the U.S.
All right, Jeff, thanks so much for joining us. Dr. Jeff Chamberlain, CEO, Volta Energy Technologies, joining us here in our Bloomberg Interactive Broker Studio. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. We'll look at some of your company news. Roche Holdings says an experimental breast cancer treatment is going to get expedited review from U.S. regulators. It is showing that it helped patients live longer without the disease progressing. The decision based on research showing that the medicine could offer a more effective first treatment option for women with a particular breast cancer mutation. This potential blockbuster treatment could become the standard of care for women with mutations called PIK3CA. The mutations found in about 40% of hormone-positive breast cancers are linked to tumor growth, disease progression, and treatment resistance. And Scarlett Johansson, all lawyered up. The actress is demanding the removal of an artificial intelligence voice for OpenAI's chatbot that sounded too much like her. Last week, OpenAI released a new audio tool and staged demonstrations that included a voice called Sky. Johansson says when she heard the released demo, she was shocked, angered, and in disbelief that they pursue a voice that sounded so eerily similar to hers. Back in September, Johansson said she received an offer from OpenAI CEO Sam Altman about voicing an audio feature for the company's popular ChatGPT chatbot. She declined. And two of the earliest adopters of Beyond Meat, Carl's Jr. and Del Taco restaurants, no longer serving the company's plant-based beef at many of their restaurants. That's because consumer enthusiasm for its meat substitute has kind of faded. Most of Carl Jr.'s more than 1,000 locations have taken Beyond Burger off the menu, and Del Taco also removing Beyond Meat from all of its nearly 600 locations. And let's look at company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. I'm Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We bring you all the top news in business and economics through our lens of our Bloomberg Intelligence analysts. They cover 2,000 companies in 140 industries all around the world. We also keep you updated on all the news, world and national. For that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, John. Both sides have now rested in Donald Trump's hush money trial. The defense just called 2 witnesses. The jury was sent home this morning until May 28th, when closing arguments are expected. Trump did not speak as he left the courthouse and ignored a question about why he was not testifying. He did have something to say before he entered the courtroom.
And I think the appellate courts can take care of a lot of things, but this one shouldn't even get to an appellate court. This should be an easy ruling.
Prosecutors have accused Trump of a scheme to bury negative stories, defend off damage to his 2016 presidential campaign, and then falsifying internal business records to cover it up. He has denied any wrongdoing. Days of funeral ceremonies have begun in Iran following the deaths of President Raisi, the country's foreign minister, and others in a chopper crash Sunday. Raisi won his office in the lowest turnout election in the country's history and presided over crackdowns on all dissent. Prosecutors have warned people over celebrating his death. One person has died on a flight hit by severe turbulence. The Singapore Airlines flight from London to Singapore was hit by turbulence before it was diverted to Bangkok. More than 30 others were injured during the rough flight. Martin Gruenberg will step down as head of the FDIC. Bloomberg's Amy Morris has details from Washington.
Findings of a toxic work environment put the regulator at the center of a heated political fight and fueled calls for his removal. Gruenberg has faced mounting pressure following a scathing report detailing allegations of harassment and discrimination, finding a misogynistic workplace culture at the FDIC, and raising questions about Gruenberg's leadership. Gruenberg says he will leave after his successor is confirmed. He's been with the FDIC since 2005. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right, thank you so much, Michael Barr. So here's a story that's really too good to pass up. If you're looking for your morning coffee brand and you want to try some new beans, there's another option for you. Apparently, former New York City Mayor Rudy Giuliani, and this I'm reading from the Post here, launched a coffee brand on Monday. It's about $30, $29.99 for 2 pounds of, quote, the finest beans imaginable. Nice. Guess what it's called?
What?
Rudy coffee.
Sure, why not?
There are 3 different types. So there's bold, there is decaf, and there is regular. The bold is fighting for justice. The Rudy regular is America's mayor, and the Rudy decaf is enjoying life.
Giuliani's face is on every bag with the bold blend featuring images of the young-looking former prosecutor, 3 men who resemble New York mobsters, and a Statue of Liberty.
So that is him when he was younger. I was like, who's the Photoshop guy?
No, that's the guy. That's the guy who took down like Ivan Boesky and Michael Milken.
Various mob figures.
Various mob figures. And he's saying, it is so good, I even recommend drinking it black. So there you go, Rudy in the coffee business. Apparently he's a little light on cash these days with some bankruptcy issues. And he had a gig at WABC Radio, but that's no mas, I think. So there's I'm sure there's some issues here. So looking to generate some revenue here.
Well, here's my question. I'm just taking a look at coffee prices. It doesn't feel like now's the moment, though, to go into the coffee business. Coffee prices are quite high. There's been some issues in Vietnam in terms of planting. And
in terms of supply.
Okay,
I see.
And Arabica coffee prices are quite high.
Where are his beans sourced?
You know what? The New York Post did not say that.
Oh.
So
Okay.
we'll have to
check on that.
We'll have to get you on that. But
I'm not a big coffee drinker, but we'll see how that does. We'll see how this thing does.
Are you gonna do the bold or the America Mayor?
Well, there's one enjoying life.
That's decaf.
That's the decaf. America's Mayor is the morning coffee, and the Fighting for Justice Rudy is the bold.
I think you should definitely
So many
switch to
things I
decaf.
love about this. All right, there's more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Drew Redding. He's a Bloomberg Intelligence U.S. home building analyst. We had some earnings coming out of Lowe's, and we'll see how those were. People still building and remodeling their homes. At the bottom of the hour, we're going to play a audio chunk of Microsoft chairman and CEO Satya Nadella. He speaks with Bloomberg's Emily Chang, so that'll be fascinating. Get a sense of what's happening with our good friends out in Seattle. But first, let's go to Mr. John Tucker and get a Bloomberg Business Flash. John.
All right, the major stock averages, little change. They've all turned higher for now. Talk isn't cheap. Fed speak is partly in the driver's seat today. Federal Reserve Governor Chris Waller saying he needs to see several more good inflation numbers to begin interest rate cuts, adding that holding rates steady for 3 or 4 months won't tank the economy. Meantime, Max Kettner at HSBC rejects the idea that high stock valuations will limit any future stock gains from this point.
Valuations in the long term, fine. They tend to work over sort of a 5 to 10 year period. Over a shorter period of time, let's say 6 to 12 months, they do a really, really poor job in predicting short-term performance. So I wouldn't really use that as a bearish argument.
Right now, the S&P 500, 5 points higher. That's up 0.1%, 53.13 on the index. The Dow Jones Industrial Average, 36 points higher at 39,842. The NASDAQ 100 is up just about a point, 18,675. 2-year yield down 2 basis points. That's at 482. The 10-year yield 3 basis points lower. That's at 441. Walt Disney's Pixar subsidiary, the pioneering animator that made Toy Story and Finding Nemo, cutting 14% of its staff, part of an ongoing belt-tightening by its parent. 175 employees getting layoff notices today. And this report being brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event. For the financial advice community, visit insight.bnymellon.com, where you'll be able to meet Alex and Paul in person.
And not
me, because I wasn't invited.
Well,
anyway, that's your
Did Nora call you the common man? I mean, only the fancy people get to go to Nashville, Tennessee.
Don't you want the
Bloomberg
common
Radio.
man with me to shake hands with the common people at the inside? Whatever. Anyway, that's your Bloomberg Business Flash. I'm not bitter.
Thank you so much, John Tucker. I'm Alex Steele alongside Paul Sweeney. I really got to be honest with everybody. There is literally nothing happening, and it feels like there may not be anything happening until we get NVIDIA earnings after the bell on Wednesday. Also, if we're pinning our hopes on that moving the market, what if it doesn't? What if it's a snoozer? What if it just comes in line? Does that sort of disrupt things? Now, individually, there are some stocks that are moving on earnings. So let's get a little bit of that. Palo Alto is one of them, and Bailey Lipschultz is joining us in studio. All right, what you got for us?
Yeah, starting with Palo Alto, one of the worst performers in the S&P 500. Recouped a chunk of those losses, though. It was down about 7% or more at one point, all driven by weak outlook for its billing cycle. Analysts really kind of harping on the fact that billings forecast fell below what they were looking for, what the buy side really was looking for. All things considered, though, when you look at the metrics for 3Q, pretty strong, but again, forecasts falling modestly below. This is one of those cybersecurity names that had been a high flyer, sold off tremendously after last quarter earnings, missed expectations. So a bit of a move lower, but not really anything to write home about right now.
All right, I'm going with a story that's near and dear to. I consider myself the Peloton correspondent here. Peloton, a fitness company known for its pricey stationary bikes and treadmills, kicked off the sale of a $1 billion loan offering as it works to refinance existing debt and recover from a recent slump in sales. So they're going to do this early pricing discussions. This is not coming cheap, folks. Calls for the loan to carry interest rate at 600 basis points over the secured overnight financing rate. That is, and come at a discount at 98 cents on the dollar. So this thing is going to yield about 11.5%.
Oh my God.
Wow, and they're going to use the proceeds to finance a term loan due in 2027 and repurchase some convertible notes due in 2026. JP Morgan Chase leading the deal. Yeah. That's a deal I would do back when I was at Chase. We would do, but I would do LIBOR plus 3 or 4%, and I felt like I was crushing my clients. 600 basis points, unbelievable.
You got to do something if you're Peloton.
Yes.
Right now, trading around 330. The high back in 2021, $167.
Yeah,
so
just amazing.
90 to 95% losses, depending where you slice it. This has been a terribly performing company, a number of issues. They've had a number of layoffs. The fact, Paul, to your point, they have the $1 billion 5-year term loan, also doing $275 million in convertible debt.
Yeah,
so, like,
they're trying to get that
kind
back.
of scraping together every way to raise cash to keep operating. This was one of the many Tiger Cub darlings that the entire
And when I
group
saw
was in.
JP Morgan Chase's lead underwriter, I was like, that's surprising because it's way too small of a deal for Chase to be doing. But I bet you it's just some banker at JP Morgan Chase saying, you know what? I love my Peloton. I love my. I got to help these guys. I'll do this deal. I'll do it. You know, I'm sure that's what happened.
And you know why? Because that's how you talk about Peloton.
That's how I talk about it. And if I were there, I'd be like, I'll get this deal done. Just
Find a way to make it happen.
Yeah, I'll make it happen. All right, what else you got?
Well, one stock, okay, going back to May 2000, we're talking about some of the best performers. Monster Beverage is one of the many that people like to write about with returns. There's a company called AutoZone, guys, up more than 12,000%.
What?
From May 2000, down 4% today after comparable sales for third quarter missed expectations, pretty flat. But all things considered, when you pull up a chart in any capacity on AutoZone, absolutely breathtaking alongside that of O'Reilly. Seems like auto parts companies is where we should have all been putting our cash over the last 2.5 decades. But still, giving back a bit of gains. Volume super light, though, so less than 100,000 shares traded today. Does trade for north of $2,800.
I mean, Kevin Tynan at Bloomberg Intelligence has been talking about the parts business for the longest time, and I was like, who cares, dude? But he said, Detroit's no longer making 17.5 million cars. It's like 15, 16 million cars. That means more and more people are having older and older cars. They're going to need parts. This is the play. Did I listen to him? No.
This was a pandemic play because
There's
you
also a
couldn't
pandemic
get the
play.
cars.
Yeah.
So if you needed to like go places and you couldn't buy a new car, replacing parts was your only option.
Can you repair your car if it's, you know, less than 5 years old or whatever? I mean, there was the day I could change I couldn't find the alternator in my car right now. You know,
it's a chip.
But you know what? You know who could? AutoZone.
I don't. Well,
that's the point.
I mean, they do loan you tools to if you're making repairs to your car, which is kind of cool. But
anyway,
never entered I remember AutoZone was pitched a while back to me as a derivative play of the ride-sharing experience, because they were saying if more people were driving Ubers and Lyfts and logging 300,000 miles on their car, they're going to have to do something to keep driving.
That's interesting.
So why not look at an AutoZone or an O'Reilly?
Before we let you go, though, real quick, Keysight Technologies
Keysight.
is the worst performing stock in the S&P. What is this company?
Down 10%. This is an electronic measurement instruments company. I spent a lot of time on their website trying to understand what they sell. They're in semiconductors and communications. Don't ask me to go any further than that, but down 10%, outlook missing expectations. Looking through some of the analyst reactions, basically saying guidance was a little bit lighter, keeping full year expectations relatively flat. But if you don't know what Keysight Technologies is and you look it up, it's still a $25 billion company. So a big company relative to the name brand recognition of Peloton for one Paul Sweeney, which is about $1.3 billion.
Yeah.
So household names.
Yeah. I don't know why somebody just doesn't buy Peloton. I don't get it. I mean,
why? I mean, it's a manufacturing company. Once it becomes a services company, that's a different story.
I think it is a services company. I think it's a subscription-based company.
But I think you look at it and go, they still have, this is before their latest announcement, they had $2.3 billion in debt. So your EV's $2.8 billion, and your revenue's slowing.
Okay, so it's not a great valuation.
Okay, so we look at it that way.
All right, maybe you got a point there. All right, very good. Drew Redding, thank you. Bailey Lipschultz, thank you so much for that. Let's talk Lowe's. I mean, I've been to a Lowe's. Now, I had not been to a Walmart until this past Sunday, but I've been to a Lowe's. I'm no John Tucker, but I know my way around a Lowe's. Drew Redding knows his way around a Lowe's. He's a home building analyst with Bloomberg Intelligence, joining us from Princeton, New Jersey. He forgot about the whole New Jersey Transit can get into New York City thing.
No, apparently not today. It's really things have been broken down. It's like 90-minute delays.
I'm just ignoring it and hoping it'll be fine by the time I leave here. That's how I'm approaching this. Drew, talk to us about Lowe's here. Are people still kind of remodeling their basements?
Yeah, so the quarter was a little bit of a tug of war between sales and margins, and I think you're seeing that reflected in the stock today. Same-store sales were down about 4%, which was better than the 5 to 6% decline consensus was looking for. But part of that sales performance was due to the fact that there was a more promotional environment out there. If you think back to when Home Depot reported last week, they cited a late start to spring as something that muted sales. Lowe's actually said spring got off to a good start, and that has to do with them being more aggressive on promotions as part of their Spring Fest. And I think that really speaks to what we're seeing really across the retail landscape with the consumer, and that's that they're looking for value wherever they could get it. Now, they did reaffirm their full-year operating margin guidance, but that's going to require the company to execute on some internal initiatives in the back half of the year. Lowe's has made good progress in improving their margin profile, and them narrowing the gap with Home Depot has really been a key that investors have kind of, grasped onto. So the fact that they're taking a little bit of a step back here may be making some a little bit uneasy.
How much would the stock have to re-rate for investors and analysts to say, okay, fine, the margins are suffering, but at least the volume and the sales are there?
Yeah, well, the stock is still trading above, the 10-year average, even if you go back to prior to the pandemic. So from a pure valuation perspective, it's still a little bit elevated. That being said, I mean, if you take a step back, the move they've made on margins and narrowing the gap with Home Depot has been impressive over the last couple of years. So I think, the bulls would argue that this is kind of a one-off. And as we get to the back half of the year, margins start to improve as they implement some of their PPI initiatives. And in terms of sales, we're not expecting a huge rebound in sales this year. In the second half, comps will definitely get easier, but even Lowe's has stated that comps may turn positive, but that's not a reflection of an improved demand environment. It's strictly a reflection of easier comps. So we think as we get into 2025, that's when we would expect the market to see more of a turn as we get more of a rebound in existing home sales.
How about lumber? That's something they buy a lot of. How's the cost of lumber these days? How's that impacting their margins?
Yeah, lumber's about 10% of sales for both Home Depot and Lowe's. Lumber was really more of a story last year. It was extremely volatile, so you saw the impact on their top line there. Not so much of a story this year. I think commodities, particularly lumber, are going to have less of an impact in the near term.
So you feel like we're not going to really see a benefit until 2025. I mean, some analysts are looking for the back half of this year, maybe some improvement, but for you, it's really like a year out kind of thing?
Well, I think as we get to the end of this year, I think you'll start to see a little bit of a turn. And a lot of that is predicated upon with what happens in the housing market. Obviously, people are looking for the Fed to cut rates at some point this year. Obviously, not as much as we had hoped for previously. But we think that, when you look at existing home sales, we're, at the lowest levels in, more than 2 decades. So there's not a whole lot lower we can go absent, a broader economic decline where you start to see a lot of job loss. So we think that, if rates come in a little bit, you could kind of start to build a little momentum ending this year, carrying into next year. When we think, bigger picture about the home improvement market, there's some solid tailwinds out there. You have homeowners who are sitting on record amount of home equity. When you think about, the rise in home prices we've seen over the last several years, you've got an aging housing stock. And I think the fact that mobility has been so low because of those high interest rates is going to continue to encourage people to invest in their house. And I think what kind of triggers that is rates coming back in a little bit so you can start to tap that equity.
Drew, how many stores does Lowe's have, and are they adding stores? Are they paring back stores? Kind of where are they with their store count these days?
Yeah, so they're under 2,000. It's an interesting dynamic. So their competitor Home Depot is actually embarking on their first store expansion in a long time. Lowe's, on the other hand, has cut back. They got out of their Canadian business, which reduced their store count. But what they're doing from a store perspective is really introducing new formats. So they're starting to go after the rural customer. Their stores tend to be located in more rural locations compared to Home Depot, which are more densely populated locations, and they found success with that. So they're starting to compete more with the Tractor Supplies of the world. They're also introducing Lowe's outlets. So if you think of, appliances that might have dings and scratches, you could go there and get heavily discounted items, and that's another way they're looking to kind of drive traffic through the Lowe's brand.
Okay, now you're speaking my language. You put outlet there, and I'm like, boom, we will go find things that are cool.
I don't do outlets either.
You don't? Oh, I know you don't do outlets.
No.
That's my thing.
Yeah.
It's just my thing.
Okay.
Even if I had $1 bazillion, I wouldn't pay full price. Part of the hunt.
Okay.
Yeah. Right. Anywho, so Drew, based on all this, if I wanted to play this housing market right now, what is the best play? And I say that because it's not like the housing market. That the demand isn't there, the supply might not be there, the costs are a little too high, mortgage rates are too high, but eventually it'll normalize. What's the best way to capitalize?
We think right now, kind of sitting at the top of the broader housing ecosystem is the home builders. We think, from a supply perspective, they're in a good position. Their ability to buy down mortgage rates and make payments more palatable to the consumers is something that differentiates them versus the resale market. They're going to grow community counts in the coming years. So we really think that they're still in a good position from a competitive perspective. And when you look at, within the home building space, you have the large, well-capitalized, publicly traded home builders who have access to land, access to labor, and you compare that versus the smaller private peers. And you have to remember, home building is a very fragmented industry, particularly outside some of the largest markets, but those smaller private peers tend to rely on regional banks for growth capital. And with, a slowing economy and more concern there, you're starting to see a pullback in lending. So we think it's a good opportunity for those larger builders to continue to take share.
Great stuff, Drew. Really appreciate it. Thank you so much, Drew Redding, Bloomberg Intelligence U.S. home building analyst, joining us there.
John Tucker just passed along some very important reporting coming out of Bloomberg. New Jersey Transit Amtrak delays to New York City ease after morning snafu. I don't care about delays to New York City. I'm concerned about getting out of New York City in just about an hour and a half. And apparently a Amtrak train broke down in one of the tunnels or something, and that's not good.
That's not good at all.
You just push it out, pull out. What way to get it out of there so I can get out of here?
I mean, I definitely heard some commuting horror stories that it was like 3 hours to get in. It's not pretty. It's not pretty.
But the $16 billion Gateway project should alleviate problems like that
handsomely.
Well, the final funding round, I think, is at the end of this summer, and they are making fantastic progress.
Unbelievable.
On the Portal Bridge North, I guess is what they call it. So, relief is in sight.
So that's your mass transit report for the greater New York City
Which
area.
is important, which we appreciate.
Yeah.
All right, coming up, we're going to talk about net zero by 2050. Is that still possible? The answer is yes, but it's going to cost a lot more. And this goes to John Tucker's point, who's actually going to be paying more for that wind or solar that's near your house. We're going to break that down with their European Power and Renewables reporter coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. From this Bloomberg Business Flash, major stock averages are higher right now, not by much. 6 of the 11 major industry groups are higher in the S&P 500, and that's being led right now by energy. Consumer discretionary, that is proving to be the biggest drag, and that is home to the home improvement retailer Lowe's. Those shares down right now about 2.9% after their earnings report. You also have Macy's boosting their full-year projections for adjusted earnings per share net sales. Now, while its profit outlook for the current quarter did top Wall Street expectations, the midpoint of the net sales forecast that trailed the average analyst estimate, and as a result of that, Macy's shares, they are down right now 1%. And then you have the Palo Alto Network story, those shares dropping The security software company issuing a disappointing forecast for fourth quarter billings. And shares of Palo Alto Networks right now, they are down 3.5%. It's worth noting Apple shares, they're up 0.7%, extending the recent advance. So they've nearly erased the year-to-date declines for Apple. And S&P 500, 7 points higher. That's up 0.2%. 53.15 on the index. The Dow Jones Industrial Average up 78 points, 39,885. And the NASDAQ 100 unchanged right now at 18,675. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
That's Paul. That's Paul and Alex. Yeah, we're good.
I try to
good.
guess who's going to speak first.
No, I know you do. I know. It's a fun game that John Tucker plays. I'm Alex Steele alongside Paul Sweeney, and John Tucker is Bloomberg Intelligence Radio. We make sure you're up to date on all the business and financial news. We get that help from our Bloomberg Intelligence analyst team. They cover 2,000 companies in 130 industries worldwide. We also have a bazillion reporters all around the world who go knee deep in a lot of the really pressing topics of our time. And one of them is the quest to get to net zero by 2050. 2050 doesn't feel like it's that far away anymore. We're, 26 years? I mean, I'm still going to be here in 26 years. Can we get to net zero from that? Now, a new Bloomberg NEF report.
She left us out of that.
Yes, she did. Smartly so.
What did I say?
You left us out of that.
Oh, well, for sure. Well, I was more focused on myself. I mean, hopefully you guys are on the beach in the Jersey Shore in 26 years. This is my dream for you.
I'll be working in a grave.
Anyway. If net zero is still possible, what's it going to cost? And Bloomberg New Energy Finance is an arm of Bloomberg that crunches all these numbers and gives great EV, power, commodity forecasts for all the main topics within the energy transition. So let's go to a reporter now who read the report and can help us break it down with Eamon Farhat. He is European Power and Renewables reporter. So according to Bloomberg NEF, we can still do this, right? It's just going to cost a lot more.
Yeah, exactly. I mean, the report outlines two scenarios. One of them is exactly that, trying to get to net zero by 2050. So it is possible. It will cost something like $215 trillion between now and 2050, and 20% more than the actual kind of base case, which is if we just go along with all the different technologies that actually make economical sense. So the net zero scenario is about governments putting in policy and putting in drivers to make it happen faster.
Are the big, I guess, players globally, I'm thinking just the West broadly defined, China, maybe Russia. I mean, do we have global buy-in to any of this right now, or is it just piecemeal?
I mean, that's a good question. I think one of the things that the report does is look till 2050, but as well as that, they also look for the next 5-10 years, and they show that the investment level that's being planned for the next, even just till 2030, isn't really there to keep on track to be reaching net zero. Isn't even there to be reaching any kind of these scenarios. So I'd say what the report really does say is that it is possible. We have to really start moving immediately, and that most players aren't moving fast enough. It's all a bit too slow.
So say that number again, about how many trillions of dollars more?
So it's $215 trillion for net zero. So that's about $34 trillion more than the base case.
Oh my gosh. Okay, is that all going to come from governments? I mean, at the end of the day, whether it's through taxes, etc.
So that's going to be coming from government, from private investment. I mean, this covers everything. This covers everything from grid to EVs to, how you're going to be getting your solar panels on your houses, getting wind farms in the sea. It really covers everything. But it just shows that when you take a holistic view, the cost is very high. When you break it down by year, it might be, a few trillion per year, but over a 26-year period, that is a lot of money for the world to bear.
So, Eamon, talk to us about the next 10 years. What are some of the critical milestones that need to be met here? It feels like it's more than just everybody's going to have an electric vehicle.
Yeah, so when I was reading through this beautiful 250-page report yesterday, I think one thing that really stuck out to me at first is the report says that right now we start the 10-year countdown. In 10 years' time, there will be not one ICE vehicle sold. It'll be all electric vehicles being sold. They want to triple renewables in that period as well to be on track for net zero, and then triple them again in the next 20 years. So it really is kind of everything is doubling down. They have this whole section about sustainable aviation fuel, trying to decarbonize aviation. I think they said that something like the biomass, the actual stock, the crops you have to grow to get this biomass, to get this sustainable aviation fuel, will take up as much space as the whole European Union. So some of these numbers are just really, really huge, but are needed in the next 10, 15 years.
And that's so important because we also need the stuff for food and things. So there's also that poses a lot of issues. I'm also curious as to the divide between developed and emerging markets when it comes to energy, because Europe and the US, we may have the money to tax and then maybe have the money to put forth, but India sure doesn't. Africa sure doesn't. Parts of Southeast Asia sure don't. How does the report address that lack of financing?
Yeah, it's interesting. I think on both hands, on some ways, when it comes to, like, for example, grid is a huge thing, actually the second biggest cost to come into this 215 trillion. And actually in some of the developing nations, as you said, India, for example, because the grid is actually newer there, it's easier to upgrade it and to kind of build it out. When you're talking about the British grid or the American grid, these ones are much older and harder to move forward. But then when it comes to things like renewables, we still see lots of coal, lots of gas, lots of fossil fuels being used in Southeast Asia into the 2030s, just because, they need that supply. Demand is growing, air conditioning demand is growing, a growing middle class, which means that they just need to keep up and they can't be going on to renewables as quickly as Europe can, for example.
Hey, Amy, before we let you go, I got to ask you a question. On your phone page, it says you are fluent in Creole. How does one get fluent in Creole? You don't sound like you're from the bayous of Louisiana, dude.
Well, it's Mauritian Creole. Mauritius is an island in the Indian Ocean, not far from Madagascar, which also speaks Creole. But I do understand Haitian Creole and the New Orleans Creole as well. Next time you come to London, I'll teach you.
So he proved you wrong. He was,
did.
yeah.
Totally
Paul was like, I don't believe it.
I'm not buying it. I'm going to call this guy out on it. But sure enough, he's got it. All right, Eamon, thank you so much for joining us. Eamon Farhat, he's a European power and renewables reporter for Bloomberg News, joining us via Zoom from London, thankfully in English, not Creole.
Yeah.
We might have had a problem there.
We had a little problem there. But I did find interesting that certain parts of emerging markets, like the grid, may be easier to fix because they're newer. It's the same idea how, like, you didn't have to go to landlines in certain parts of India. You could go right to satellites and cell phones.
Yep.
In some ways, that's helpful. But in terms of, say, underlying energy deposits, no, man. Like, India still imports coal. Like, they still got to get the absolute cheapest source of energy.
Then you got to wonder the implications for utilities. Does this require that you have viable utilities in the future? Because they're hurting right now.
Oh, yeah. Yeah. I mean, that's part of them being regulated, is you got to go to the government and be like, please let me invest this money.
Well, I would argue it's the lack of regulation, deregulation.
All right, we'll figure it out right now. All right, right now, let's go to a little talk about Microsoft Chairman and CEO Satya Nadella. He speaks with Bloomberg's Emily Chang.
And everybody complains about meetings, but what one should really complain about is not being prepared for meetings, not paying attention in meetings, not remembering what happened in meetings. The meetings co-pilot helps keep the knowledge always front and center for an organization. So the feature we are launching is really this thing called Team Copilot. This Team Copilot is going to be in the meeting and everywhere your team is working on. For example, if you're doing a project and you want project management assistant, this Team Copilot will help you and all your teammates. It's kind of like having an AI teammate that helps you.
Well, on that note, for all of this to really work, you've really got to trust your PC with everything about you. Will it know you better than a real assistant or a friend or a colleague? And are we in relationship territory?
Yeah, it's a super important one, right? Which is, to me, there are two things. One is, how should one think about privacy? How should one think about safety? And then the third is, how should we relate to AI, right? All of these are important. So let's take them, even unpack them, right? On the privacy side, that's where I think there are going to be needs for real private information. And whether it's in the enterprise side, where people say, don't train on my data, that's the assurance we have for anybody in the cloud even, or the new PCs we just launched yesterday, right, which are all about keeping everything that you're doing on the PC local. So that's on the privacy side. Safety is another one, right, which is how do I make sure that whatever I am doing is safe? I'm safe from adversarial attacks. And then the third is the relationship side is like I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have, right? I think one of the most unfortunate names is artificial intelligence. It's a different, I wish we had called it different intelligence even, because I have my intelligence. I don't need any artificial intelligence. I just want my intelligence to compose with this different intelligence so that I have more agency, quite frankly.
All right, that was Microsoft Chairman and CEO Satya Nadella speaking with Bloomberg's Emily Chang talking about artificial intelligence, Copilot, Apple. Microsoft, obviously, one of the real plays that investors feel like is a way to get exposure to artificial intelligence. It's not just through the chips, think NVIDIA, but it's also through the software. And Microsoft is right there with its Copilot as well. Just looking at the stock of Microsoft, it's up 1% today, up about 14% year to date. 36% over the past year. So the stock's obviously had a good run. It's got a market cap right now of $3.2 trillion. Not too bad for our friends out in Seattle. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, John, Donald Trump's lawyers rested their defense case in the hush money trial this morning without calling the former president to the witness stand. Trump's team only called 2 witnesses, including a lawyer who was fiercely criticized by the judge. The jury was sent home. Bloomberg's Saleha Motion.
Now, so far, we hear that closing arguments are a week from tomorrow, meaning the very earliest we could get a verdict would be a week from Wednesday, unless that judicial calendar slips. There's never been so many eyes on that calendar, I don't think. We're wondering from around the world, you could have anything from peace and quiet, no big deal. It was what we expected, to protests.
Bloomberg's Saleha Motion. About a dozen people are to be arraigned in Phoenix, accused of trying to overturn the 2020 election results in Arizona. Among them, former New York City Mayor Rudy Giuliani. The group is accused of creating a scheme to appoint fake presidential electors. France and Belgium have released statements supporting the World Stop War Crimes Court and its chief prosecutor's request for arrest warrants for leaders of Israel and Hamas. International Criminal Court Chief Prosecutor Karim Khan announced his intention to seek warrants for both Israeli and Hamas leaders whom he accused of war crimes. Israeli Prime Minister Benjamin Netanyahu condemned the effort.
To seek arrest warrants against the democratically elected leaders of Israel is a moral outrage of historic proportions. It will cast an everlasting mark of shame on the International Court.
Singapore Airlines says a 73-year-old British man died and more than 24 other passengers were injured aboard a London-Singapore flight that encountered severe turbulence over the Indian Ocean. The plane was then diverted to Bangkok. Global news, 24 hours a day and whenever you want it, with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the newsroom with this Bloomberg Business Flash. The stock market fluctuating near all-time highs. Traders awaiting NVIDIA's earnings, also waiting through remarks from a handful of Fed speakers. Equities wavering after the Fed Governor Chris Waller said he needs to see several more months of good inflation figures to begin rate cuts at the central bank. Meantime, Claudia Sahm, the chief economist at New Century Advisors, says the Fed is putting too much pressure on the economy.
Things are getting better. The Fed, if it gets in the way of this and pushes too hard, then we end up in a recession, which is not necessary. It will be a huge unforced policy error.
And right now, NVIDIA shares, they're up about 0.2%. NVIDIA at $948.91 a share ahead of their earnings report. We get that tomorrow. And Palo Alto Networks tumbling. They delivered a downbeat forecast. Right now, those shares down 3.4%. And Microsoft, that hit a 52-week high. They're creating a version of its Copilot assistant that will help groups of workers collaborate. That extends the company-wide push to infuse products with artificial intelligence. S&P 500, 3 points higher, 53.11 on the index. The Dow Jones Industrial Average up 51 points, 39,858 there. And the NASDAQ 100 right now 11 points lower at 18,662. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, John Tucker. I'm Alex Steele, alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We make sure you're up to date on all the news that you need to know in business and finance. We have great analysts that cover 2,000 companies in 130 industries worldwide. We also have a huge staple of reporters all around the world. And we're going to go to one of them now on this story. So apparently, ASML and Taiwan Semiconductor Manufacturing, so TSMC, have ways to disable the world's most sophisticated chip-making machines in the event that China invades Taiwan. It's basically the idea of here's a kill switch. You press a button and all of a sudden those machines stop working.
Really?
It says something, right? Isn't that
sounds very techy.
Doesn't it, though? Yeah. Let's get to the guy behind the story. Deirdre Basil joins us, Bloomberg Dutch government reporter. He joins us on Zoom from Amsterdam. It's a real pleasure, and I know you're staying up late for us, so thank you very much as well, or working late for us, I should say. Walk us through this story. What do we know?
Hi, yeah, thanks for having me. Yeah, what we reported exactly is that ASML has a so-called kill switch, and it can use it on its most sophisticated machine. That is the EUV machine, or the extreme ultraviolet machine. And this basically means they can kill the machine remotely when they choose to. And this capability was indeed discussed in the context of a possible Taiwan invasion, and was discussed at least with the Dutch government. So yeah, it's an important capability in a very sensitive geopolitical context.
So I guess it sounds good. I mean, from your reporting, is there a belief that this really can be achieved? Because it sounds like something that could be, I don't know, hijacked or something. It seems like it's too good to be true.
Yeah, so the thing is, ASML has contact with its machines to do updates the machine need anyways. And this connection they have can also be used for this capability. So it's not a built-in kill switch, but it's a capability that can be used for different purposes. And yeah, what we have heard is that ASML has told government officials that they can do this if that is what they decide to do. So, yeah.
So I'm assuming, though, that officials say in China might not like that. Like, is that a legal thing to do?
Yeah, it's like an invasion is also not really legal, I guess. So if we end up in such a context, you need to ask different questions. But yeah, that's the context we're talking about. If an invasion would happen, then this is a possibility.
So, but I guess to date, China is still ASML's biggest market, isn't it? Even after some restrictions?
Yeah, close to, yeah. Like TSMC is the biggest client, but China as a country is definitely a big market for ASML. Yeah.
So what are some
But
options
not for
then
this, not for this machine though. Not for the EUV most sophisticated extreme ultraviolet machine. That machine isn't allowed to be exported to China.
Ah, okay. So do the machines that ASML does export to China, does that have this quote unquote kill switch?
So this, no, we're talking about the EUV. So that's the most sophisticated machine, and you have plenty of them in Taiwan, and that's why it's essential that this capability exists in the context of the Taiwan invasion. But ASML has been subject to export control for a while. They've been pushed by the US, and they have been mostly focused on these EUV machines, the most sophisticated ASML chip machines, and you need those machines to the most sophisticated chips you need for any AI development or any military purpose. And those machines aren't in China at the moment.
These machines aren't cheap, are they? What's one of these big chip making machines? What do they go for?
Yeah, so this EUV is, I think it's about like 200 million a piece.
Oh,
something
okay.
like that. Yeah.
And ASML does something very unique, not very unique, they do something unique in the semi space, right? There, you can also license, it's a lithography, right? It's like the machine you need to make the chips. Can you walk me through what exactly that company does and then why it becomes so important to the sector?
Yeah, so basically, ASML is the only company able to make this machine. And like older generation chip machines, you have more companies that are able to make those. But to make the best chips with the lowest nanometers, you need for, like what I mentioned, AI. Those machines you need for those chips, ASML at the moment is the only company that can make them. So yeah, then that gives them an important, massive market position, and yeah, you also end up in a geopolitical struggle as we see right now.
Yep, absolutely. All right, Diederik, thank you so much for joining us. Diederik Basile, Dutch government reporter for Bloomberg News, joining us from Amsterdam via Zoom. Again, ASML, TSMC, big chip makers. Apparently, they can disable chip machines if China invades Taiwan. You think about that cybersecurity, and it just kind of goes to the issue of this, what seems to be a growing technology Cold War between, you know, let's call it China and the West, broadly defined. I'm not sure how you do that, but again, governments are making plans. Companies here, we see from this reporting, are making plans, but
Well, this also dovetails with Vault Energy that we spoke to in the last hour. So that company makes investments in technology that can help reshore the supply chains for batteries and storage, right? So think like lithium, how to extract lithium more cheaply and more cost efficiently. It's all part of the same story. How do you decouple after a few decades of coupling when you're a company, whether it's tech, whether it's rare earths, whether it's another asset? As a CEO, how do you capital allocate from that, right? Like some companies, like a Caterpillar, they make their stuff there. Train Technologies, for example, it's an HVAC company. They make stuff in China and sell to China, right? So their China sales might be fine, and then maybe you're insulated. But otherwise, I would think it'd be very, very difficult.
Yep, and you know, and one of the companies that I think, when I think of just China risk broadly defined, I think of Apple. I mean,
Yeah,
you know,
you
it's
do.
20% of their sales go there. It's obviously a huge growth market. It's also critical to the supply chain, as we just kind of learned a little bit here from Diederik's reporting in terms of where the chips come from and where their hardware is manufactured in China. If you're Tim Cook, boy, I don't know how you manage that. I guess you just kind of
go to India.
You go to India, but that's going to take a long time, as we're told, to build that whole infrastructure out. But I guess if you're Tim Cook, you go to China as often as you can and try to, you know, just try to keep a good, I guess, dialogue going with the government officials there to keep the status quo going.
Yeah, and we were talking about that when we had a great story about maybe Tim Cook and the succession plan and sort of, you know, do you need a full-time China ambassador basically as a company? You need to have someone who can really help secure that relationship in addition to all the other stuff like capital allocate, return dividends, like do the
and that
things
seems
and
to be
innovate.
his job, Elon Musk's job, who's also got a lot of exposure to their, you know, CEOs. Jamie Dimon has been over there recently for JP Morgan Chase. So a lot of CEOs, you know, going over to China, trying to, I guess, maintain decent relationships in the face of governments, talking about tariffs and all those types of things. We'll have more coming up this.
your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company stories we're following. Dell Technologies unveiling a new line of personal computers optimized for artificial intelligence, betting they're going to help rejuvenate the long-struggling business at Dell. The so-called AI PCs contain neural processing units. It's the kind of chip that's meant to speed up artificial intelligence work, like running a chatbot. Those chips are going to be made by Qualcomm for the laptops that Dell announced this week during its annual conference. Dell executives say the PCs also include a dedicated key to summon Microsoft's AI Copilot service. That uses generative AI to automate some business tasks. And here's your Red Lobster update. A new potential federal class action lawsuit alleges Red Lobster Hospitality violated federal and New Jersey employment laws by laying off workers without notice. The potential lawsuit stems from the company's closure of dozens of locations around the country days before filing a petition for reorganization and bankruptcy. So the complaint seeks injunctive relief damages, attorney's fees, as well as costs. The allegation is the company violated the Federal Worker Adjustment and Retaining Notification Act, known as WARN, by failing to give 60 days advance written notice. And finally, Sonos is entering the headphone market with a $449 device. This is all part of an effort to turn the home speaker company into a broader maker of consumer technology. The new Sonos Ace announced today an over-the-ear model designed to compete with high-end headphones from Apple, Sony, and Bose Corporation. Just for comparison's sake, I think they got these out of a gumball machine. I sound like Scarlett Johansson in these. Anyway, that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. I'm Alex Steele alongside Paul Sweeney and Jen Tucker. This is Bloomberg Intelligence Radio. We bring you all the top news in economics and finance through our lens of Bloomberg analysts. They cover 2,000 companies in 130 industries worldwide. We also keep you updated on world and national news, and for that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, John. Donald Trump's lawyers rested their case in the former president's hush money trial. They didn't call Trump as a witness. The defense only called 2 witnesses, including a lawyer who was fiercely criticized by the judge yesterday. This morning, it was much calmer as Robert Costello turned to Judge Juan Marchand before the jurors arrived, speaking quietly. The judge acknowledged him and nodded. Ahead of court today, Trump again slammed the judge, calling him conflicted.
We have a phenomenal case. We've won the case by any standard. Any other judge would have thrown this case out. Any other judge would have thrown this case out.
Closing arguments are scheduled for next week. A funeral procession was held today for Iran's president and foreign minister. Ibrahim Raisi and other officials were killed in a helicopter crash on Sunday. An election for a new president will be held June 28th. Bloomberg's Rosalind Matheson has more.
As expected, within 50 days, they've got to hold that vote. We know that we've got an interim president at the moment. The question is, does he become the lead candidate for the administration into election? Do they allow a pseudo-reformist candidate to run to try and get turnout? Because, of course, in the last election, the turnout was very, very low. Do they kind of allow the sense of a competition, even though really it's a very tightly managed process, to try and encourage people out to vote? But the real question in the longer term is not so much the election, it's the longer-term succession for the Supreme Leader, Khamenei.
Bloomberg's Roz Matheson reports Raisi was seen as a successor to the 84-year-old Supreme Leader. Singapore Airlines says a person has died aboard and others were injured when a London-Singapore flight encountered severe turbulence. The Boeing 777 was diverted to Bangkok. The flight had a total of 211 passengers and 18 crew on board. The passenger who died was a 73-year-old British man who is suspected of having a heart attack. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right, Michael Barr, thank you so very much. Here was a story that caught my eye. I mean, it's not a great story if you're paying rent in New York, but apparently soaring rents and high upfront costs mean that fewer than 5% of New York City apartments were affordable for the average local worker last year. Most New Yorkers on average earned just under $89,000 last year, so they could afford up to $2,200 per month on housing without spending more than 30% of their annual income, which is normally how you would see how much you can spend. That's according to a new report by Zillow Group and Street Easy and Tech New York. That is insane. Only 5% were affordable?
Yeah, and my daughter lives in the city, and the other thing that gets me, which I didn't have to deal with back in the day, is it's impossible. Most of the rents or the lease agreements are 1 year, so you're moving almost every year because what the person who owns the apartment will just raise the rent, gap it up significantly, as opposed to inflation or something like that. So you end up moving every month. In New York, as in much of the rest of the country, salaries have not kept up with increasing housing prices. Median asking rents jumped 8.6% to $3,475 last year, while average wages in the city climbed just 1.2%.
And what does that monthly rent get you in New York City?
Oh, right. Yeah, no, here's like a studio. I mean, it doesn't actually say. It doesn't say, but I'm guessing you're not getting a lot, for that.
And one of our co-workers recently purchased one bedroom. We won't say who it was, but it was over $1 million for a one bedroom.
Upper East Side.
Upper East Side. Wow, that's actually impressive because usually
you think that's cheap.
I think it was
no.
Better?
Usually it's lower because what am I talking about? The maintenance fees are so high on the Upper East Side that the actual asking prices are usually lower.
Interesting.
Wow. I love it. Are you kidding? Fashion, sales, real estate, and then also energy and grid stuff. That wraps it up for Bloomberg Intelligence Radio. Coming up, Balance of Power with Joe Matthew. Happy Tuesday.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
The defense rests without Donald Trump on the stand. Welcome to the fastest show in politics as Donald Trump's attorneys wrap their case in the criminal hush money case in Lower Manhattan. Today, we'll talk about what happens next with June Grasso, the host of Bloomberg Law. President Biden calls outrageous the International Criminal Court seeking arrest warrants for Israeli leaders alongside Hamas. Bloomberg opinion columnist Andreas Kluth says the U.S. should therefore make its case before the ICC, and we'll talk to him in studio. It's another primary day. We'll talk about what races to watch with Greg Giroux at Bloomberg Government. And as Donald Trump outraces Joe Biden for the first time in this campaign, we'll have analysis from our political panel. Bloomberg Politics contributor Jeannie Shanzano is with us alongside Lester Munson from BGR Group. So let's get started with the voice of Wall Street. A look at the markets right now with Charlie Pellet in New York.
Hi, thank you very much. And here's what's going on, Joe Matthews. Stocks right now are fluctuating. We got the S&P little changed, up half a point right now, 53.08. That is a gain of less than 1/10%. The Dow up 32, now up 1/10. NASDAQ lower, little changed, down now by 4 points. 10-year, 4.40%, with a 2-year that's yielding 4.82%. Spot gold trading lower by 0.1%, $24.21 the ounce. And West Texas Intermediate crude down 1.5%, $78.56 a barrel right now on WTI. Morgan Stanley's Michael Wilson now sees the S&P 500 rising 2% by June 2025, a major turn from his view that the benchmark will tumble 15% by December. Wilson was interviewed on Surveillance this morning, and we asked him about markets, economic policy, and the outcome of the presidential election.
I think we'll see changes or differences is maybe in the tariffs, although recently that seemed to be more aligned. And then, of course, immigration is a big one. And that was a huge surprise this year that really nobody saw coming around the positive labor shock from immigration. So to me, that's probably the single biggest wild card, depending on who wins the election.
Mike Wilson of Morgan Stanley. After earnings, Macy's shares are lower by 1.7%. Macy's did beat profit estimates. Also trading lower, shares of home improvement retailer Lowe's. They're down now by 2.7%. Rival Home Depot also lower, down 1.2%. Recapping stocks, little changed ahead of NVIDIA's report tomorrow. S&P up 0.5 point. Balance of Power continues now. And once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you. Charlie Pellet, live from New York. I'm Joe Matthew, live in Washington. Welcome to the fastest show in politics, the Tuesday edition of Balance of Power here on Bloomberg Radio, on the satellite, and on YouTube, with big news from Lower Manhattan. This is it. The defense has rested its case. And guess what? We never heard from the former president. After vowing to take the stand in his own defense, Donald Trump nowhere near that opportunity as the defense wrapped things up. And a pretty interesting way to end things. We had a double court clearing event yesterday. Juan Merchan was outraged by the final witness, I was going to say guest, the final witness called by the defense. And now we wait, apparently, until next week for closing arguments. Imagine being June Grasso. You have to sit here and wait a week now to find out what happens next. The host of Bloomberg Law joins us from New York with the great readout every evening at 6 p.m. June, why do we have to wait? What if it went to the jury today? We'd have this done by the weekend, wouldn't we?
Well, I don't know how long the jury will be out on this. It might be out quite a while. But there have to be closing arguments. And I'm not sure how much time the judge has given each side for that. Also, jury instructions. So the jury has gone home until Tuesday, but the judge and the attorneys will be back at 2:15 to talk about jury instructions. And I have to say that when the jury instructions are read in a courtroom, it's the most mind-numbing event ever. And it's really torture to listen to because it's so important because it's about sort of the legal rules for the road that the jurors have to follow. And so they have to listen very carefully. And what is said there is what the attorneys are fighting about now. And it's really a critical part of the court process. So I guess the judge figured that, with the long weekend, he didn't want to end on that note, and that's why. But, I mean, he could have squeezed it in, but I don't think the jury would have come back in time, but you never know.
Understood. I'm just being a pain because I don't want to wait.
I appreciate that, too.
Don't either, but the headline on the terminal, June, Trump defense rests with verdict anyone's guess. How are you rebuilding the arguments that you heard in your head to get a sense of where we're going here?
I don't know how this jury is going to look at this trial. And usually I have a feel for that. I really don't know this time because it so much depends on whether they feel like they need to believe Michael Cohen or not, and whether they can believe him on that one point when, the defense tore him apart in so many ways. As far as, we already knew when we started out that he was going to be a bad witness. I don't know if the prosecution knew how bad a witness he was going to be. So, we had the fact that he lied under oath several times, which is tough to regain your credibility after that. And then, they ended with him stealing from the company. And it just kept going and going, thing after thing after thing. So I'm not sure how the jury feels about him, whether the judge will give them an instruction on credibility. They can take part of his testimony or all of it or none of it. And maybe there's enough there for the prosecution to have built, all the emails and the texts and the testimony of other people. But he still is the only witness who actually said that he told Donald Trump about the hush money payment, the repayment scheme, the legal expenses idea. So I really don't know. But I do know that it was no surprise that Trump didn't take the stand. I don't think you were surprised by that. I doubt anyone was surprised by that. So
no, of course not. But it's just, after vowing to do so, it's a footnote, I guess, here in the case. June, what did you make of this throwdown with Robert Costello yesterday, a defense witness who was there to basically make the case that Michael Cohen had committed perjury, and he was very expressive. He's rolling his eyes, he's making comments about what the judge is doing. So Juan Merchan cleared the courtroom not once but twice to make a point here, and even threatened to strike the entire testimony from the record. Is there a strategy behind that for the defense? What kind of a final impression were they trying to make?
I think that he was the worst possible witness that they could call to the stand. First of all, lawyers are not considered great witnesses because a lot of the times, they feel like they're the lawyer still on the stand. But the things that he did are just incomprehensible to me. I mean, he said the judge said objection sustained, and he said gee, and then he said stricken, as if he's the person to strike it. I don't know if he thought he was in a deposition or what. Right. And the judge, I mean, what happens a lot is that the judge will tell the jury to go in the back, into the jury room while he talks to usually they'll do it at sidebar with the jury there, but if it's important enough, he'll have the jury go back. But that wasn't enough to clear the courtroom. I've never seen a courtroom cleared. I don't know what it takes to clear a courtroom, but he was so upset. And when you see what happened, even while he was there chiding him and admonishing him and saying, "I'm the judge, I get to say what's stricken," and you don't. He apparently started giving him a strange look, and the judge said, "Are you staring me down?" It's something that if it were in a movie, I would say that is just unbelievable. That couldn't have happened. You couldn't have an attorney
that would never happen on Bloomberg Law.
Right. And so then you have the jury going home with that.
Right. So that's your final impression. It's kind of bizarre. Now, so thinking about closing arguments then, we come back from the long weekend. June, will we still be bound to this Wednesdays off thing? Because Donald Trump's actually been getting a lot of time, arguably, outside of the courtroom to campaign. That was why the Wednesdays off happened, right?
Well, the Wednesday also was the day that the judge, in other words, even when you're on trial, a judge is on trial, they still have other matters that they have to take care of. They can't let their whole docket go, go to, I won't say what, but they can't let their whole docket go and get damaged by this one trial that they're on, right?
I get you.
So Wednesday, and he's in charge of a lot of things. He's in charge, I believe, of part of a special court proceeding involving juveniles. So he takes care of that on Wednesday. I don't know whether he'll change that or not, but they shouldn't have a situation. Maybe he's you know what? I just thought of this. On Tuesday, he's probably going to expect that they're going to get their closing arguments done. They should be able to get it done in a day. And then the jury will be deliberating. And the jury can deliberate while he's doing other things because he only has to be there to accept notes and questions. So I think that's what he's thinking about. We'll be done Tuesday. He'll give them a time limit each side, how much time they'll have. And, I've seen closing arguments go for 5 hours. And it's just not... It's not worth it. It's just not, the jury stops retaining all that information. I mean, most people do after a while. So, I mean, they'd be smart to keep their closes down to a couple of hours, if that. So we'll see.
We're talking next Wednesday or Thursday. We're on Balance of Power with June Grosso talking potentially about a verdict. That's where we are here, June. It's great to have you back as the defense rests its case. Thinking Out Loud with June. That could be a whole new program that we do here on Bloomberg. You can pay me later for that. Did you see how she's working that out live with us on Balance of Power? I love that. Of course, all of this to be distilled at 6 p.m. Washington time. Bloomberg Law with June Grosso. One of the other big stories that we're covering today here on Balance of Power is a new wrinkle on the U.S. policy in Israel and the very real challenges domestically, politically, that Joe Biden is facing here. As the president now calls outrageous this story that we discussed a bit yesterday, the International Criminal Court working up arrest warrants for the leaders of Hamas and Israel, including Prime Minister Benjamin Netanyahu, at once. Outrageous, says Joe Biden. And that has become the conventional wisdom. We heard from Secretary of State Antony Blinken earlier. He called the decision to seek these arrests, quote, extremely wrong-headed, echoing the president. We heard earlier today on Bloomberg TV and radio, from Ron Dermer as we continue this messaging, clearly speaking in this case for the Israeli government, the Israeli Minister of Strategic Affairs. He's part of the War Cabinet. His reaction to this news. Let's hear what he said on Bloomberg.
I agree with President Biden that it was outrageous. I'd also say that it was dangerous. Why is it outrageous? Because they're creating a false symmetry between Israel and Hamas, and they're basing it on false charges.
Challenging the conventional wisdom today in Washington is a voice that you've heard before on this program, writing for Bloomberg Opinion, Andreas Kluth, with a smart column and one that we should consider. Andreas is with me here, as you can see on YouTube at the table, writing, if the U.S. now scorns the court it helped to create in the 1990s, it will undermine the international regime of law and order that it claims to defend. It's great to see you, Andreas. Thank you for joining
Thanks
here.
for having me.
Walk me through your rationale here, because this is an administration that is specifically focused on equivalency. That's what Joe Biden said, that maybe if this had come in a different consideration, it would be a different story. But you're putting Israel and Hamas on the same stage here.
Yeah, and that's very interesting. So you heard in the soundbite just now, he used the word symmetry, and you just used the word equivalence. You heard that from Jim Risch in the Senate. You heard that from Biden, from Blinken. And it's interesting. It is absolutely true, in my opinion, that the two sets of applications for an arrest warrant, 3 Hamas, 2 Israeli, are not equivalent, morally or legally. The interesting thing is that this has become such a talking point in the news cycle because it's a red herring. The prosecutor, Karim Khan, in no way implied an equivalence. He did make a decision, and that may have been a mistake, in communicating this news to bundle the 5 cases into one announcement.
Yes, right.
And that gives an opening to people who will politically defend, and this is understandable, that they want to, that the U.S. wants to back Israel, which will counter this, and and of course Hamas was equally offended and rejected it as well. Yeah, right, so just for equivalence.
Yeah.
But that gives them one opening, and the U.S. is now rejecting this on the basis of, if you listen to the press conference yesterday, a number of confused. So sometimes with this argument, sometimes one. Another one is, does the court even have jurisdiction? Now, it's not equivalent, and everyone needs to remember that this is an application for an arrest warrant, which was recommended unanimously by a panel of legal experts chosen from around the world after an enormous body of evidence, and it now goes to a panel of independent judges to even become a warrant. And then it will not go to trial for reasons we can revisit. But if it did ever come to trial, each of the 5 would have a separate case, presumed innocence and all of that. And I'm saying the U.S. has a much larger strategic interest with a view to being called hypocritical in the global South, with a view to what it stands for, what it has stood for since World War II, in being on the side of international law. So whether it's domestic courts, so we just had in another context, a domestic law and order, or international, you cannot pick and choose. You cannot be for the rule of law and courts and independence of the judiciary only when it suits you.
So we should have front-loaded this conversation, and you just alluded to it by the fact that likely no one's going to be arrested because of these warrants. With that said, though, it sounds like you're isolating a communications problem here more than a procedural or a legal one.
I think it is a communications problem, and he was trying, Karim Khan, the prosecutor, was trying to, he said explicitly, we have to choose, and this is the same for the International Court of Justice, a different court in The Hague, and in general for the organs and bodies of international law. We have to decide, are we going to apply the law equally or not? By the way, a while back, I wrote a column. The United States is usually not in favor of applying the law equally, which would imply even to itself.
Nobody complained when they went to arrest Vladimir Putin, though.
Well, for instance, let's go to that. That is very similar. If you take the point of jurisdiction, neither Ukraine nor Russia is a signatory to the Rome Statute, which established the court.
Therefore,
that didn't bother the United States because here it's in its interest to support the same court in going after Putin and building the evidence. It's a good storyline. But when the U.S. is afraid that the court might investigate an American, or in this case Israel, the Trump administration slapped sanctions on a judge and a lawyer of the ICC. And there's even a law passed by Congress called, facetiously, the Hague Invasion Act. If we ever bring an American to the court in The Hague, we'll invade and get them out. So you cannot, and you mentioned, I think, in the intro, that even the U.S., in this case, the Rome Statute, as in so many cases of other treaties, was actually the leader in getting it done. It wanted this. And then decided and got cold feet and says, oh, no, they might turn it against us. Well, we only want it when it suits us or when it's against other people and not against us. And I'm saying that is a bad look. And so there is more at stake. And actually, I firmly happen to believe, I said at the outset that I believe they're not equivalent. I think Netanyahu and his defense minister, if it ever were to go to trial, which it won't, would be found innocent.
How about that?
But why not trust the court to find that?
Yeah, this is all about optics, and a great piece that I'll point you to from Andreas Kluth on the terminal, OPIN Go, or of course online, Bloomberg Opinion. Andreas, great to see you. Great
Thank you, Joe.
Writing and a great case to make here. Don't be a stranger with us here on Balance of Power. Live from Washington, a lot more ahead on this primary day on the fastest show in politics. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, now NASDAQ back in the green right now. Little change. Stocks have been fluctuating, but we're looking at a 3-point gain right now on the S&P, up by just under 0.1%. The S&P at 53.11. The Dow pushing higher now by 23 points, up by less than 0.1%. NASDAQ also higher by less than 0.1%. Traders are awaiting NVIDIA's results tomorrow. They're also wading through remarks from a handful of Fed speakers. NVIDIA shares today, they are trading higher, up 0.3%. Handful of earnings reports. We did hear from Palo Alto Networks. Palo Alto lower now by 2.7%. Zoom Video Communications last night, it is up now by 0.8%. 10-year, 4.40% with a 2-year, 4.81%. Spot gold down 0.2%, 24.21 the ounce. And West Texas Intermediate crude down 1.5%. WTI 78.60 a barrel. So again, recapping, stocks a little changed. S&P right now up 2 points, up just under 0.1%. Balance of power continues now. Back we go to Washington. Once again, your host of Sound On. Here he is, Joe Matthew.
All right, Charlie Pellet, thank you. Welcome to the Tuesday edition of Balance of Power. Remember when it was Sound On? It's primary day. And of course, that's a big day around here, even though it doesn't get that much attention because the presidential race, well, at least the primary race is pretty well figured out. But if you're Mike Johnson, this is a big day. You're sitting on a majority of 4. Every seat counts. That majority could be expanded, if my math is right, at least off the top of my head, to 5 today, right? The seat once occupied by a guy named Kevin McCarthy, has been sitting empty since the 31st of December. And today, in a special election, as a cherry on top on this primary day, we're going to be finding out who's going to replace Kevin McCarthy. Vince Fong, we've talked about him before, a member of Congress, more importantly, a former McCarthy aide, is expected to slide into this. They had to do a special because nobody got 50% in the runoff, but he is leading fellow Republican Mike Boudreau, a county sheriff, 42 to 26%. That was the polling in the first round vote in March. Let's get into this and the other states to watch. We've got Georgia, Idaho at play, Oregon, with Greg Giroux, of course, elections reporter at Bloomberg Government. He's with us now, and we can't have a primary day without him. Greg, how's this going to work out? Do we know how this ends in California before we look at the others?
Yeah, I think Vince Fong is the favorite here. As you mentioned, he's a state assemblyman, former McCarthy aide. He's running with the endorsement of Donald Trump, with his former boss McCarthy, with Speaker Mike Johnson's support. And so that institutional support probably will be enough for him to get over the to win the race over Mike Boudreau and slide into that seat that has been vacant for almost 5 months with Kevin McCarthy's departure.
Thank you for clarifying. Vince Fong, a state rep in California. This is the 20th district, and it has been empty for a long time. Just for the sake of this story, though, it will stay Republican, right?
Yes, that's right. This is the most Republican district in California. It has California is part of California's Central Valley, the Bakersfield area, very much an area that is probably the most pro-Trump turf in California. And so it's so Republican, in fact, that you have 2 Republicans running in this special election, which California law allows 2 Republicans, 2 Democrats under its primary system. So, yes, this will very much stay in Republican hands.
Probably the congressional race to watch. I know we have a couple out there, including one in Oregon that involves a familiar name in Pramila Jayapal's sister. But it's the DA race in Portland, Greg, that seems to be getting the most attention in Oregon. And that should say a lot, I guess, about our politics right now. And already seeing a DA in San Francisco recalled 2 years ago. What's got your attention in this contest?
Yeah, well, I think the DA races are certainly ones to watch around the country. You know, the one in San Francisco you mentioned. You know, in Fulton County, Georgia is one to watch as well, just to see kind of where, kind of take the temperature of primary voters of the electorate on what kind of anti-crime policies. They should have kind of a report card on some of these newer prosecutors that have come in. In the congressional races in Oregon, I think they're fascinating to watch too. I'm watching one in the Portland area where you mentioned Pramila Jayapal's older sister, Sushila Jayapal, who's a former county commissioner. She's very much running with a lot of the same supporters who have aided her sister, the Congressional Progressive Caucus chair, Alexandria Ocasio-Cortez, Bernie Sanders, very much kind of the farthest left factions of the Democratic Party. But I think her two main challenges are also progressive, just a matter of who can get their people out in this election. Oregon votes by mail, and those ballots have to be postmarked by today or turned into a ballot drop box or county elections office by 8 p.m. local time, which is 11 o'clock in Washington and New York. So it could be a late night and early morning before we know who wins that primary. And whoever wins that primary will be a shoo-in to succeed Earl Blumenauer, the Democrat who's been there for almost 30 years.
He was on with us just 2 weeks ago when the rescheduling news broke. When you put these together, and I know we have a couple of others we could talk about here, Greg, but specifically these DA races. By the way, Fani Willis has her own down in Georgia. These progressive congressional primaries, what are we going to learn here potentially about the progressive movement in the United States tonight?
Well, I think, I want to see how much these DA races are actually spurning turnout, like how many people are actually turning out, how many people are motivated by DA races. In Oregon, because it's vote by mail and you can kind of track who's turned in a ballot and who hasn't, you can get a sense for how many people have showed up to, or at least participated in the election thus far, and turnout has been lower than in previous election years. So I'm not expecting even the DA race there to bring out maybe a huge voter turnout. The only other race I think for the progressive movement that's interesting to watch might be in Oregon's 5th District, where you have a progressive lawyer who was the nominee for their party in 2022, narrowly lost the general election to a Republican in a district that Joe Biden carried. That progressive is running again, but the House Democratic leadership in Washington, including Hakeem Jeffries, a Democratic leader, are backing a more center-left Democrat who they think has a better chance of winning in the November election. So if that progressive wins, it will show the strength of maybe the progressives there, but it could also create some awkwardness with the Democratic leadership here in Washington.
Well, that's good. It helps our audience, get some perspective ahead of the results to know what we're talking about tonight and tomorrow morning. Greg Giroux, I have to ask you about fundraising on the presidential level here as we're talking about another primary day on the campaign trail. It's a big moment for Donald Trump and the Republican Party, together outraising Joe Biden and the Democratic Party for the first time in this cycle. We can dig through the numbers, but the fact is we haven't seen it happen yet. And I know it's not a trend, but I wonder if you can speak to the significance of this headline.
Yeah, certainly it's an outlier because, as you mentioned, Biden has been dominating Trump in fundraising thus far. I think the more important number to keep an eye on is the cash on hand number, just how much money that both sides have left to spend. And the other thing about the presidential race is it gets so much kind of attention that it's almost hard to measure how much that can be helpful in terms of dollars. I think the further you go down the ballot, the more important money is. Having said that, you want to have more money than your opponent. And I think what Biden and the Democrats are pointing out is that they have more cash on hand, even if they did get outraised this month. It'll be interesting to see, though, if this
they do.
If it turns into a trend, though.
Absolutely, and I suspect we'll need a few months for that. Biden's campaign ended April with $84.5 million on hand, pretty steady from the month earlier. Trump's campaign had $48 million in net cash on hand, up a little bit from March, but it's almost 2 to 1 in that world, Greg. To your point, when you start hearing stories like these, though, they can become self-fulfilling. And as Bloomberg has reported, there are donors who haven't touched Donald Trump in this cycle who are warming up to him once again now as he makes a very convincing play on the trail. His criminal trial in New York has not dented his standing really in any poll. And you wonder if the money could be beginning to shift here, if this is a turning point.
Yeah, I'll be definitely keeping an eye on that just to see if Trump can narrow the gap. I think both sides and their surrogates, certainly, including super PACs that can raise money in unlimited amounts, I think both sides will have plenty of money. I don't think either side will be lacking for it. But I think one thing to watch is do these kind of some prominent Republican funders who have been either opposed to Trump or just simply ambivalent or on the sidelines. Do they get, once the race begins to heat up more and we get into the summer and the fall months, are they going to come off the sidelines and back someone?
You said it. Greg, great to have you back. Like I said, you can't have a primary day without Greg Giroux. Look for his work on the terminal and online, and a really nice primer as always. Day of, Greg has you covered. You'll sound like the smartest person at the cocktail party later if you want to know the races to watch here, get a sense of the names, the money behind them, and what this could mean for us tomorrow. We did get an update on a story we talked about this time yesterday, and a looming vote in the Senate this week on the border. I know I probably sound a few months late on this, but this is the actual Senate compromise, the Lankford, Chris Murphy, Kyrsten Sinema compromise that was supposed to be attached to funding for Israel and Ukraine. Remember, this never actually saw the light of day in either chamber here. This was supposed to unlock all the votes, and it became a pariah here despite months of negotiations by some pretty serious lawmakers. It's not going to pass, likely, but it is going to hit the floor Thursday. We have learned from Chuck Schumer, and the White House is starting to lean in on this now. We'll have more with our political panel on that next. Jeannie Shanzano and Lester Munson are with us today on the Tuesday edition of Balance of Power, and that all comes after an update on the news. Let's get to world and national news first with Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. The defense in the Donald Trump criminal hush money case has rested. Trump did not testify. Judge Juan Merchan told jurors that they will not be needed in court for another week. He says the attorneys for both sides will give their closing arguments on Tuesday, 1 week from today. Deliberations could begin as soon as Wednesday. Trump, who has denied wrongdoing, is charged with 34 counts of falsifying business records in connection with a $130,000 hush money payment to adult film actress Stormy Daniels. North Carolina's House of Representatives is considering a new bill called the Unmasking Mobs and Criminals Bill. It bans the wearing of face masks in public that can hide a criminal's identity and would repeal the pandemic-era exemption, which would allow people to wear masks for health reasons. State Senator Sidney Batch says people with illnesses are worried about this.
You know, there are some bad actors that will come into a protest and they will try and disguise their face. But that doesn't mean that you throw the baby out with the bathwater. I think that we can do hard things, and that's what we're elected to do.
The legislation was passed by the state Senate last week. A British man was killed, 7 other people critically injured after a Singapore Airlines jet flying from London to its home country encountered severe turbulence as it entered Thai airspace. Officials say another 16 passengers were hospitalized with head and arm injuries. And the passenger who died was a 73-year-old man. They say he may have suffered a heart attack. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We got some green on the screen, just a little right now. The S&P up 1.5309. Could see a record close there today. Dow Industrials up 14, little change now. NASDAQ up by half a point. 10-year 4.40% with a 2-year that's yielding 4.82%. Spot gold right now is lower. Gold down 0.2%, 24.20 the ounce. And West Texas Intermediate crude oil down 1.2%, 78.80 for a barrel of WTI. There is evidence the supply chain is still tangled. 2 years after the pandemic brought global trade to a halt. And with that story, here's Bloomberg's Vinny Del Giudice.
The Federal Reserve Bank of New York reports a third of service providers and nearly half of factories it surveys report difficulties acquiring supplies. While there's been improvement post-pandemic, firms in the New York Fed's district are still juggling output and raising prices to compensate. That's feeding inflation. A major worldwide issue, the impact of rocket attacks on container ships plying the Red Sea route, a major trade lane between Asia, Europe, and U.S. East Coast ports. Vinny Del Giudice, Bloomberg Radio.
Amazon Web Services has halted orders of NVIDIA's advanced Grace Hopper chip to await a more powerful new model. This according to the Financial Times, citing confirmation from an AWS spokesperson. Today, we've got Amazon shares down by about 0.8%. Ahead of earnings tomorrow, NVIDIA up now by 0.3%. Recapping, S&P up 2 points, gain there of just under 0.1%. Balance of power continues now. Back we go to Washington. Once again, here's your host, Joe Matthew.
All right, Charlie Pellet, thank you. Appreciate your joining us here on Balance of Power. It's the Tuesday edition, and we're live from Washington, where there's a lot of talk all of a sudden about crypto once again. Just when you thought the store was closed, there's going to be a vote here. This thing actually could move. It's called the Financial Innovation and Technology for the 21st Century Act. We call it the FIT bill around here, the FIT, a crypto market structure bill that you've probably heard a lot about. Would help to clarify the way regulators handle digital assets. It cleared the House Financial Services Committee in 2023. It's going to be getting a floor vote, looks like. And before we assemble our panel, I want to just bring you a piece of a conversation we had with the majority whip in the House, Tom Emmer, about this and a couple of other things we had a chance to discuss, but specifically the congressman on the FIT bill and whether this could stand a chance to pass the Senate if it were to clear his chamber. Here's what he said.
We have some champions over there who understand that we are in the digital age, that it's time to bring our financial system into the 21st century. What the FIT bill, as it's referred to, the market structure bill does, is essentially start to lay out those ground rules, the playing field, so that people who innovate in the digital space, people who are creating the next great internet, are able to do that here in this country. Up till now, there has been no clarity, and frankly, I wasn't in favor of it to begin with till they added my Securities Clarity Act, which literally allows a centralized program to decentralize over time and then be treated differently. So it's really important that we have this in place in order to keep these innovators and entrepreneurs right here in this country.
Well, it's interesting, Congressman, because we keep hearing the store's closed. Now that we've gotten through the most recent bout of legislation dealing with Ukraine funding, Israel, and so forth, we, I guess, could see some messaging bills go through, maybe an extension of the farm bill. But I wonder if you're working on something bigger in your head. The idea that we're going to see a vote on stablecoin. Could we see a combined bill like what was being discussed with the FAA, for instance, where stablecoin, safe banking, executive clawbacks are all put into one vehicle to garner more support throughout the body?
That might be something towards the end of the year, Joe. But I think right now you're talking about just two very specific pieces of legislation. One is creating a framework so that entrepreneurs and innovators, those who want to invest in great projects, do it right here in this country so we don't ever experience this issue that we had with someone who's outside of the reach of the United States oversight. And then we've also got a central bank digital currency bill on the floor, which literally says The federal government could create one, but they're going to have to get authorization from Congress, and it's going to have to emulate cash, which simply means that any digital currency issued by the government must be open, permissionless, and private. It can't be used like the Chinese are using the digital yuan, which is basically a surveillance tool where they're building social scores on their citizens based on their purchases and their behavior. We can't have that in this country. That's un-American. We need a digital currency that actually is consistent with American values.
We'll see what happens with the votes this week. That's Tom Emmer, again, the majority whip. We talked about a lot of things last evening that would make you think that the House could stay busy on some issues, even as members head home to run for re-election. Of course, we're in campaign season here. This is also a House of Representatives that's had the schedule challenged a bit by the number of folks going to New York to visit Donald Trump. You can see more of our interview online if you want to hear more about it. I'm Joe Matthew in Washington. As we assemble the panel with their look at what's happening in Congress, we also expect an important vote this week on the border compromise bill in the Senate. Jeannie Shanzano is with us right now, Bloomberg Politics contributor, of course, Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress, alongside Republican strategist Lester Munson, principal BGR Group, co-head of the international practice there. Great to see both of you with us. We're now looking at a Thursday vote on the border, Jeannie. We talked a bit about the strategy that Chuck Schumer is employing here, knowing that this will not pass. So you're going to be looking at some frontline Democrats. Can anything come of this, though? Does this restart a conversation about maybe crafting a better bill? You've got H.R. 2 that didn't get a single Democrat in the House. This is apparently going to be the other version in the Senate. Is there such a thing in this environment that could straddle both parties?
You know, I really wish I could say yes. In an election year, I have to say we've been here before, and even not in an election year, getting immigration reform has been, close to impossible. So, I don't see it as something that we're going to see this year, unfortunately. I do think it has, for the Democrats, a political advantage of underscoring the fact that they were supportive, many of them, of one of the toughest border security bills that has been proffered. And it was Donald Trump who said, as we heard Chris Murphy and others have been saying, that it was not to his benefit in November to have a bill like that pass. And so I think from a political perspective, it underscores the fact that Democrats can try to show that they have been tough or trying to be tough on the border, and Republicans have thwarted that. But I don't see them getting anywhere on this year, unfortunately, because it's much needed.
So it's a campaign issue, as I think we all determined when this first crashed and burned in the Senate. Does that mean that following the election, Lester, this third rail of politics will suddenly be something we can grab onto, that there will be some sort of compromise on the border? Or are you already rolling your eyes?
Well, never say never, Joe. I suppose there's going to be a lame duck session in all likelihood to kind of clear the decks of legislation people don't want to deal with next year. Is it possible something comes out of that? Maybe. It's still a heavy lift. I think Jeannie's right. This is an incredibly fraught political issue. Always has been for many years. I think going back 30 or 40 years, there hasn't been any real immigration reform, and we do desperately need it. We need to regularize the process. This seemed like this Senate bill seemed like a pretty good option for about 5 hot minutes, and then it became clear the Republicans couldn't support it. If the Senate could pass something that's tougher, and then match it up with H.R. 2 in a conference committee, we might get somewhere this year. I don't see that happening.
How about you, Jeannie? Is that in the realm of possibility, or check back post Donald Trump? I mean, Donald Trump is the reason why this was killed in the Senate, right?
Yeah, I mean, I wish that was going to be the case, but it simply isn't. And, as much as I would like to solely blame Donald Trump, and certainly we do for this particular iteration, again, this goes back election cycle after election cycle after election cycle. I mean, I never forget, right? It was George Bush who ran as a Southern governor on reforming the nation's border. And of course, that went nowhere. And then you had Barack Obama, so the list just goes on and on. Donald Trump thwarted it this time, and that seems to be the what we learn about this, is that it is seldom in the interest of people running for office to address this, and so they don't. But again, they should. And, for Democrats this election cycle, they should take a look at what Tom Suozzi did in New York 3, where this is a huge issue. He was able to beat it back by confronting it head on and saying, I care about the security of the border, and I also care about helping the people who are here and coming across the border. But it's not going to happen this year, unfortunately.
Well, as long as no one sees this passing, it's another messaging bill, and we're getting used to them. It looks like we have another coming in the House here, Lester. I wonder your thoughts on Mike Johnson's decision to bring legislation to the floor sanctioning the ICC and its leaders, the International Criminal Court, which we began our hour talking about here, seeking arrest warrants for the leaders of not only Hamas, but also Israel. The White House calls it outrageous. We heard from Anthony Blinken on it earlier today, echoing the president. Democrats, though, are not together on this. And this is going to be another opportunity for, in this case, a Republican leader to call Democrats on the carpet, try to embarrass some progressive members here so they can make commercials. Isn't this the same thing that Chuck Schumer's doing with the border bill to try to get Republicans to vote no on the border?
Maybe. I think, if I were in the House, I would vote to sanction the ICC. I think their conduct is I agree with Biden, it's outrageous, and there should be consequences. I think one of the real issues here, Joe, is the Biden administration itself has been talking out of both sides of its mouth on Gaza. They want to be both in favor of Israel, but also in favor of a permanent ceasefire in Gaza. You really can't do that. It's an unsustainable position. And so this may be a political vote, but it's the opportunity for it was created by Biden policy.
Well, there you go, Jeannie, though. If you want to smoke out progressives here and try to put them in an awkward situation, this would be how you do it, right?
Yeah, absolutely. We are going to see progressives fall off when Schumer puts the immigration bill up, and some Hispanic legislators as well. You will see them fall off on this bill, although I think most Democrats, I can't give you an exact number, but I think many Democrats will agree with the president as he spoke out very strongly against the ICC's actions on this. But absolutely, you're going to see some fallout. We've already heard a bit from Bernie Sanders and others, but granted in the Senate side. So this is something that Democrats have to contend with in this election year. The reality on the issue, though, is it is an honest debate. Donald Trump on the border, he says, don't pass it because it's not in my political interest. The progressives in this case are saying we have an honest disagreement on this issue. And I think that's an important sort of difference between these two arguably rather, sort of messaging bills, if you will.
Lester, I want to hear from you a little bit more on this idea of answering the ICC's move, which will not result in any arrests. I think we all agree, with something from Washington. If it's not this, and I think you said you'd vote yes for it, but what should the response be from the administration, from the State Department?
Well, this administration, rightly or wrongly, Joe, is committed to kind of some Wilsonian ideals about the international community, that bringing together countries at the UN through these treaty organized institutions can make the world a better place. That is a profound thought. There's a lot of truth in it, but you've got to make it work. And I think the challenge for the administration here is that the things they believe in, these multilateral international institutions, are failing. And this is yet another example of a failed effort. And I think it behooves the administration to take steps necessary to make sure this kind of thing is thwarted and doesn't happen again. That's going to mean some diplomacy. It's going to mean reaching out to European allies and friends and others to curtail this kind of activity. But if you're committed to this kind of Wilsonian ideal of international cooperation, you can't have things like this happen. That's why President Biden's so outraged, and I think he's right to be outraged.
That's Lester Munson. How about you, Jeannie Shanzano? President Biden says, quote, there is no equivalence, none, between Israel and Hamas. Should these have been rolled out together like this? What should be the response from the White House?
You know, I think his response was right on that. And I think, you know, for President Biden, and quite frankly, any U.S. president, the idea, if you are attacked, I mean, we are attacked on 9/11, and we respond with a military response. And then our president is issued this kind of, you know, ICC response, and means they can't travel out to other countries, or for the most part, at least those who abide by the ICC. That is an enormous challenge, regardless of what party you're in. And the president recognizes that. I mean, the idea that Netanyahu would be under this, the president surely sees an American president. And so he is right to say there is an equivalence, and he is right to say we have to address this coming out of this institution. And that is going to take some time, and it's going to take a lot of work with our allies, because you do see support out there for this.
There you have it from Jeannie Shanzano and Lester Munson. Great analysis from our great panel. They're going to be back with more in our second hour here on Balance of Power. As we turn our attention ahead, back to New York and the Trump trial. The defense has rested its case, and we'll have a lot more coming up only on Bloomberg.
world of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
The defense rests. Welcome to the fastest show in politics as Donald Trump's attorneys wrap their case in the criminal hush money trial in New York without the former president taking the stand. I'm Joe Matthew alongside Kaylee Lines in Washington. And Kaylee, now we wait at least a week for this to go to the jury.
Yeah, it's quite unusual to consider the timing here because, yes, the defense has rested, the prosecution has rested, and yet we won't get closing arguments until next Tuesday.
Right.
The calendar working against the proceedings here, Joe, because we're coming up on the Memorial Day weekend holiday. There were already a number of days that court was not going to be in session, and therefore we won't actually get to jury consideration of this case and whether or not Trump is ultimately going to be acquitted or convicted until at least a week from today.
Yeah, that's the spirit. So, look, it's going to take some time here. We can distill what happened today, though, as the defense rested, and it's a good opportunity for us to look at the cases made on both sides. Dave Ehrenberg, the Palm Beach County State's Attorney, is back with us today to help us walk through what we learned.
Yeah, looking forward to that conversation. Plus, we have to get a check on what's happening on Capitol Hill because there are a number of bills that are going to reach the floor of the House this week related to crypto, and at least an effort in the Senate to address border security, though it's likely dead in the water already. So we'll have much more on that with Bloomberg Government's Kate Ackley. First, though, let's get a check on the markets, as always, with Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee. Stocks are fluctuating, little change. Perhaps the key takeaway right now, not a whole lot of movement ahead of NVIDIA's earnings tomorrow. Right now, we've got the S&P unchanged on the day. Dow Industrials holding on to an 11-point gain right now. On NASDAQ in the red, down 13, drop there of just about 0.1%. 10-year 4.40% with a 2-year that's now yielding 4.82%. Spot gold is down just about 10 cents the ounce. 24.23 right now for an ounce of gold. West Texas Intermediate crude lower now by 74 cents a barrel, 79.06, down by about 0.9%. Also, keeping an eye on Fed speakers, equities wavered after Fed Governor Christopher Waller said he needs to see several more months of good inflation numbers to begin rate cuts. Keeping an eye on Apple shares, they are advancing, extending a recent advance that has nearly wiped out the iPhone maker's year-to-date decline. Apple shares today, they're up right now by about 0.6%. Again, recapping, we do have stocks, little change right now. S&P 500 index up barely, up by 0.5 point. Balance of Power continues. Back we go to Washington. And once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet up in New York, thank you so much. And New York is a place that Donald Trump may have to spend a whole lot less of time because the trial is about to wrap up. We still have 1 week to go, Joe, although he's not going to have to be in court every day for the rest of this week. Closing arguments on Tuesday as his defense, together with the prosecution, which of course was pleading the case on the behalf of District Attorney Alvin Bragg, who's charged him with 34 felony counts of falsifying business records related to this hush money payments. Both the prosecution and defense are done trying to make the arguments. They're not testifying any witnesses. They'll have their final word next Tuesday.
Yeah, it's pretty remarkable to see how quickly we ran through this. I thought he was going to start warming up to New York again. I thought staying the night at Trump Tower, it might be something reinvigorating Fifth Avenue, but I think maybe that's not going to happen. He's back to Mar-a-Lago as soon as physically possible. And next week, it's going to be something. You were there when jury selection began. Imagine the security that will come with the actual verdict being delivered. We're in for some pretty heady stuff next week. So it's a good opportunity for us to see where we stand now and look at both arguments here, both cases. Dave Ehrenberg joins us, Palm Beach County State's Attorney, with his take on this. He's been walking us through the arguments since opening statements. Dave, it's great to see you. I wonder your thoughts on the way the defense brought this to a close, largely yesterday with a man named Robert Costello, a lawyer on the stand, who misbehaved so much during his testimony, the judge had to clear the courtroom twice and threatened to strike his entire testimony from the record. Is that the best way to leave a final impression with the jury?
No. Joe and Kaylee, good to be with you.
I wonder why they called Robert Costello to the stand, because it was going pretty well for Todd Blanche, Trump's lawyer. Todd Blanche scored some impressive punches against Michael Cohen, and then they decided to call their only substantive witness, Robert Costello. Now, I think the reason why they called him is because Costello has been a darling on the far right, and if you watch far right media, they've been urging Trump's legal team to call Costello, because Costello, who tried to be Michael Cohen's lawyer, apparently knew that Cohen was lying and was going to expose him as a liar and a fraud, someone who said that Donald Trump was innocent all along. And the defense called him. I think it was because Donald Trump, who watches those programs, probably urged his legal team, call him, and they did, and it blew up in their face. What a debacle. They wanted Robert Costello. They got Abbott and Costello. It was a joke. They got a guy who was insulting the judge. Haley's too young to remember Abbott and Costello, Joe. We're the old guys.
God, so are we. What are you talking about?
You got a guy who was insulting the judge, who had to clear the courtroom. And then today, he was under cross-examination, and there were text messages between Costello and his law partner that pretty much said that Cohen's an a-hole, and that this guy Cohen, we gotta, help the boss. He needs to play ball, essentially, and that's so devastating.
Okay, so we obviously heard some testimony from Robert Costello. Who we did not hear from, though, Dave, is Donald Trump himself. Despite teasing on more than one occasion that he might indeed testify in his own defense, he very clearly did not take the stand before the defense rested today. If ultimately a lot of this is going to come down to the word of Michael Cohen, who of course the defense tried to paint as an uncredible witness considering he's perjured himself before, versus the word of Donald Trump, and we didn't hear from Donald Trump, what does his lack of testimony, if not not surprising, do to the case overall?
It was smart that Trump did not take the stand, because if he did, he would be walking into a perjury trap. If he did, he'd be confronted with really embarrassing details about his affair with Stormy Daniels and others. I mean, the E. Jean Carroll case would have been thrown in his face, really bad stuff. And so he listened to his lawyers, and he did not take the stand. He was never going to take the stand in this case. But they don't have to. The prosecution has the entire burden. And so the defense didn't even really put on a case. They're just trying to poke holes in the prosecution's case, and they made some headway in poking holes in Michael Cohen's testimony. But in the end, the prosecution built up Michael Cohen with a lot of corroborating evidence, not just testimony from other witnesses, which were important, but also Trump's own words in his tweets, in his court documents. Documents are much more powerful than any testimony, because people can lie, but documents rarely do. And I think that's why this case is headed towards a guilty verdict, because you may not want to like Michael Cohen. You may not believe that he's always telling the truth. But when the prosecution shows you corroboration, it means that, yeah, he's telling the truth now.
That's really interesting. Dave Ehrenberg says it will be a guilty verdict. That said, in that world, is this a jury that will have to chew on this for a long time? What will deliberations look like, Dave?
Wow, the only thing that's predictable about juries is that they are notoriously unpredictable. So what's going to happen behind that closed door? I bet you'll be talking about how the defense's only witness was chewed out by the judge. And although, yes, I know the jury wasn't there when Judge Merchan laid into Costello, they felt the vibe in the room. They saw how Costello was muttering under his breath and giving the judge a side eye. And that stuff is going to make it in the deliberation room, which will discredit the entire defense strategy, I think. And I think in the end, yeah, it's going to lead towards a guilty verdict. Now, could it be a hung jury? Sure. But I do not believe there's really any chance that this will be an acquittal. So there could be a compromise verdict. Perhaps they convict on some counts and not all. And perhaps they have a hung jury on some or all. But Donald Trump's not walking totally free out of this, not based on what I saw for the past few weeks.
Well, we won't know for at least a week longer, Dave, because as Joe and I have mentioned, closing arguments aren't until next Tuesday. Just how unusual is it to have a week-long break like this between when they actually rest their cases and when the jury gets to take up the case?
It is a bit unusual, but you're running up against the holiday calendar and days where the court takes off anyways. And so, you have Memorial Day. So what they didn't want was to have closing arguments and then to send the jury home for the long Memorial Day weekend, and then you start deliberating on Monday. You don't want the jury to talk about it with their families, with their friends. You want all the conversation to be done in the deliberation room, and you want it right after the closing argument. So it was the right move for the judge to postpone the closings until next week. And look, it gives commentators like me more of a chance to go on Bloomberg to discuss it.
Well, God knows you're not going to be done after this one, Dave. I've got news for you. Can I just clarify, by the way, and I'll apologize in advance to my partner, Kaylee, on this. Is there a rule against side eye? The judge, Mershon, is calling out Costello for giving him side eye. How does that work, Dave Ehrenberg?
It wasn't just side eye. It was that Costello was on the stand, and Costello comes from that right-wing ecosphere or ecosphere, whatever you want to call it, where they hate Judge Mershon. They think he's corrupt and compromised. And so he took the stand, and you can see his disgust on the stand. And when Judge Mershon was sustaining the prosecution's objections, you had Costello from the witness stand saying things like, geez, and even saying struck, like he's the judge to strike things from the record. And the judge was like, excuse me? And you had Costello giving him side eye. So it was all of those things. And then after the jury was out of the room, when the judge was dressing down Costello, the judge said, are you staring me down? Is that what you're doing? And so it just kept getting worse from there. Really bad shape. And that's why these judges wear the robes and have the big gavel, and you have to stand up when they enter the room, because they're in control of the courtroom.
Mm-hmm.
Just more evidence of how different this all might feel if we actually saw these things playing out on camera
someday
in real time. Dave Ehrenberg, it's always great to see you on camera and hear your voice. For
Thank you, Dave.
Those who are listening on Bloomberg Radio, Dave Ehrenberg, of course, is the state attorney for Palm Beach County. Never a shortage of color in these cases, Joe, but it is worth keeping in mind for the vast majority of Americans, including us, we've only read about what has happened in that room. We did not get to see or hear it for ourselves.
That's why I think we need more dramatic readings of what's happening in the court. I think there's a whole industry there as these cases unfold. But fascinating to hear from Dave. Kaylee, you mentioned earlier when we were talking about potential votes coming in the House of Representatives. We talked to Tom Emmer, the majority whip, last evening about a looming vote on a market structure bill. Looks like crypto sees the light of day even in this Congress.
Yeah, well, at least this House of Representatives. Right. The Senate may be an entirely different matter, but yes, two key bills are coming up for a vote this week. We understand one is the Financial Innovation and Technology for the 21st Century Act. This is the market structure bill, what the SEC has authority over versus the CFTC. This is the big one that the industry has been lobbying for, looking for the regulatory clarity that they say has been lacking for some time. And Tom Emmer is confident it has the votes on the House floor. But let's get a real reality check now from Capitol Hill. Kate Ackley is joining us. She is a senior reporter for Bloomberg Government. So, Kate, it's not just the Fit 21 Act. There is also CBDC legislation spearheaded by Tom Emmer that's getting ready for a vote. Is he right? Does it look like these things are going to pass? And then what happens in the Senate?
It does look like they're going to pass the House. That it's sort of about what is the vote margin, what kind of message does that send? I think that has a lot to do with what could happen in the Senate. As of now, the prospects in the Senate are pretty dim for this to actually, move in the Senate this Congress. I think a lot of the people that are working on this legislation inside Congress, outside Congress, are looking at this as, a big step, but probably part of a longer-term effort that would carry into the next Congress. So I think that's sort of the working assumption right now. If this were to come out of the House, though, with a big bipartisan vote, which it is going to be bipartisan, but big is the open question. So we have to see what the margin is.
You're tied into the lobbyist community, Kate Ackley, like very few others. I wonder if you can tell us where the money is going on this. You've got banking money, you've got crypto money, and a lot of lawmakers who don't know what they want to do.
Well, the crypto money, we've seen that in the last couple of election cycles where crypto money has really come in and, played in primaries, played in general election races. But I think this election cycle is really the one to watch for sort of where, the crypto industry, the crypto lobby, and crypto voters are kind of hitting a stride, if you will. They have a super PAC that's bipartisan. That also has like two little offshoots, a Democratic offshoot and a Republican offshoot, but it's all connected. And then you have this sort of rise of crypto voters, if you will. I mean, I talked to House Financial Services Chairman Patrick McHenry last week, and he said that that's been one of the biggest changes in sort of crypto influence, is that you have millions of people who vote based on crypto policy now and are signing up with advocacy organizations and are getting involved. So there's a lot of aspects of the influence of the crypto sphere.
Yeah, and it'll be interesting to see in what races that shows up the most. One that comes to mind is a very vulnerable incumbent Senate Democrat, Sherrod Brown of the Banking Committee, who is up against a literal crypto businessman in Bernie Moreno. So a lot of money could be mobilized there. But of course, for those vulnerable Democrats, there's other issues in addition to crypto that they have to concern themselves with, including the border, which isn't one that is working in Democrats' favor right now. And perhaps that is why we do expect, Kate, on Thursday, that bipartisan border deal that was negotiated and then very quickly killed months ago is going to come up for a vote on the Senate floor. It's not going to pass, right? It's about getting people on the record saying they tried to do something.
Right. I think what we're looking at now is the Senate in particular. These are sort of political positioning votes. It isn't likely to pass, so it is about putting people on the record, and then campaigns will start hitching up campaign ads, for the fall or even still for primaries. But yes, I think this is one of those votes where you're looking at more of a putting people on the record, a political vote, as opposed to real bipartisan, something that's likely to be enacted.
When does everyone go home for summer to campaign, Kate Ackley? We're coming up on this moment where everybody goes underwater for a while.
Well, right. I mean, everybody's going to be getting out of town for this weekend. You have the long holiday weekend, which you all have mentioned, and then next week they're out, but then they're back. And I think everybody expects a fairly busy June, whether it's going to be just, political on-the-record votes, more of those, or if there's going to be, real stuff that could move. And then, one thing that's in the House this week, this is not on the floor, but in the House Armed Services Committee this week, lawmakers are going to be taking up the National Defense Bill. That's an annual thing. It's considered a must-pass.
The
so
NDAA,
that'll be on the
absolutely.
docket. Yes.
Well, keep us posted with what you're watching here, Kate, because come 4th of July, it's going to get scarce around here. Bloomberg Government Senior Reporter live on Capitol Hill. I'm Joe Matthew alongside Kaylee Lyons in Washington. This is Bloomberg.
everyone on Wall Street. We do check markets all day long at Bloomberg. A little change right now for the U.S. stock market. The Dow, the S&P, they are both higher. We've got NASDAQ in the red. We begin there. NASDAQ down 8, down less than 0.1%. S&P 500 index up 0.5 point, unchanged on the day. Dow Industrials up 8 right now, also little change. 10-year, 4.40%. 2-year, 4.82%. Spot gold is declining today. We do have the price of gold moving lower today. Gold down to 0.3% right now. 24.20 the ounce, while West Texas Intermediate crude oil is down 0.7%. 79.21 for a barrel of WTI. Bottom line here, stocks fluctuating near highs as traders await NVIDIA's earnings tomorrow. Shell shareholders have approved the company's new energy transition plan with weaker carbon emissions targets while rejecting a resolution that asks the oil and gas giant to align itself with the goals of the Paris Climate Agreement. Shell shares trading lower today. Right now we've got Shell down by roughly 0.2%. Again, recapping, stocks unchanged on the day. S&P 500 index at 5308. The Dow also little changed on the day. Balance of power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet, tracking where the money's going on Wall Street. Thank you so much. Meantime, me, Kaylee Lines, and Joe Matthew are tracking where the money's going in terms of the presidential race. Because, Joe, in the month of April, more money went to Donald Trump and the RNC than Joe Biden and the DNC. This is a change in the pattern we have seen up until this point in this election cycle. Joe Biden pulls in $51 million. Donald Trump, $76 million, and that's them and the parties combined.
This is important because it's the first time it's happened in this campaign cycle. And I know that everyone's going to say, but Joe, cash on hand, Joe Biden still has an enormous advantage when it comes to money, and that's true. They've been out raising on a campaign level and on a party level almost 2-to-1 for the better part of this cycle. But to see this, whether it's an outlier or a turning point, is the question, and that's what we want to get into with our panel. Jeannie Shanzano is with us today, Bloomberg Politics contributor, of course, a Democratic strategist, joined by Lester Munson, Republican strategist, principal at BGR Group. Great to see you both. Lester, how do you read this? Unless you're going to tell me that we're data dependent, and I understand that you do need a couple of months to realize a trend, but the fact is donors have been warming up to Donald Trump, not the opposite, during his criminal trial.
Well, I think it's two things. One, it appears Trump has a little bit of a lead in the polls, 1 or 2 points if you average it out. That helps excite his donor base. Also, the fact that he's appears to be being persecuted, if you will, certainly by his supporters, he's perceived as being persecuted. And so they want to come to his aid. And I think he's really worked this trial in New York to his advantage, whether it's a press conference outside the courtroom or railing at the judge or, the perfidy of Michael Cohen or whatever the little mini drama is. He's turned it into a real opportunity for fundraising here. So I guess we give him some credit for creativity.
Okay, well, but there also is the consideration that funding mechanism, at least the ability to stand outside the courthouse and plead your case each and every day, is about to potentially go away. The case is wrapped. The defense and prosecution rested their cases. We just wait until closing arguments next week and then jury deliberation. And Jeannie, this may be the only trial that actually happens. All of the other ones are on hold right now, basically indefinitely. So by getting rid of a legal headache, potentially, does it open up a new fundraising headache when you lose the opportunity to potentially have the visuals to pull in more dollars?
Yeah, I mean, I can't believe we're at a point where we're talking about, gosh, isn't a presidential candidate going to miss being under indictment for 34 felony counts when that trial ends? But you're right, that's where we are. These numbers are important. I was going to be one of those people that said, oh, Joe, but Democrats have more cash on hand, which is true. But I don't go there. But what I will say is that there is also a regular expectation that this happens, putting aside the trial and everything else, because, of course, Donald Trump has just recently got into the nomination. And, of course, when you get to the nomination, it opens up the ability to collect money with the RNC so he can collect these big checks. So there's other aspects of this. If it becomes a pattern, then that's going to be a problem for the Biden team. But right now, they feel pretty good about fundraising, less so about what Lester mentioned, which is the polls. So that is a problem, but fundraising they feel okay about right now.
All right, well, Jeannie, let's say it out loud here. Joe Biden's campaign ended April with $84.5 million on hand. 84. Donald Trump's campaign had $48 million net cash on hand. But we've also talked here, Jeannie, a lot recently about whether money matters or to the extent to which money will matter in this general election campaign when the king of earned media is running against Joe Biden. How do you square these two?
Yeah, I mean, these are two people with 100% name recognition. Donald Trump is the king of earned media, so he's been able to win campaigns having less money. Just look back at 2016. That said, there's a different component here because, of course, he not only has less money on hand, but he's burning through cash because of his legal challenges. And that is a problem. They also are lagging behind on their ground game. He can, with earned media, make that up, particularly because we're talking about, 6 to 7 states. But it is a problem. So I'm one of those people, money is not determinative in these things with this kind of name recognition, but it is an asset. So you'd rather have more of it than less.
Okay, so you'd rather have more than less. It also just isn't about having it in your possession, Lester, but using it effectively. Have we seen either of these campaigns use it effectively so far in the cycle, or are they all just hoarding it for the final push later?
Yeah, Kayla, a great question. I think the real campaign pros look at the burn rate, right? What does it cost you to raise the money, and then are you using it effectively with respect to the polls? Let's give both of these candidates credit. They won the nominations of their parties. It was a little bit harder, arguably, for Trump than Biden. Biden kind of stacked the deck as the incumbent. But here they are, and they were both the nominees last time, so they must be doing something right. I think the question is going to be, does Trump need more money this go-round than he did 4 years ago or 8 years ago in order to deliver his message of putting the onus on Biden? He failed to do that last time. He was the election was about Trump in 2020. If he can make the election about Biden this year, then he's probably going to prevail. What does Biden need to make the election about Trump? Probably needs a little bit more than he's raising right now, so he's going to have to step up his game. But I think that's this question of the burn rate. Are you using the money effectively is exactly the right question.
We saw the Biden campaign make a big investment this month, Jeannie, a $15 million ad buy. Not just an ad buy, it's a $15 million spend that will also partially go to organizing on the ground, hiring up in different swing states. Could we be in a world where next month, the next time that we're looking at fundraising, or a couple of months down the road, we start seeing the fruits of that spending?
Yeah, I mean, they hope that they do. Because this is going to be so focused on these key states, they understand the importance of organizing, and because it's going to be so tight in each of these states, I think the Biden team does have a more difficult path for that reason, and also as the incumbent. So it is a good campaign. It has been run well so far, but they come with their deficits. And we see the president with the recent announcement about the debate trying to change the trajectory, because it has been the polls so far that have left them in the position of feeling like they're a bit of the underdog at this point. But I agree with Lester. If Biden can make this about Trump, he's got a better shot. But if Trump can make this about Biden, then Trump has a better shot. The one good thing for Biden is Trump likes to make everything about himself. So, what's the likelihood he wants the focus to be on Joe Biden?
Well, he may not like the focus that is on his True Social account today for at least one reason. And that is after a video was posted on his True Social platform, on his account, that essentially showed a bunch of newspaper clippings talking about what would happen in a hypothetical Trump victory in 2024. And under the headline, "What's Next for America?" it referred to the creation of a unified Reich. This video was up for about 24 hours ultimately before it was taken down, Lester. The campaign said that it was posted by a staff member while Donald Trump was in court. But does it matter who posted it if it lived out there in the world for a full day?
No, it doesn't, Kaylee. It's shameful. That stuff shouldn't happen. And I'm under the impression that Susie Wiles and Chris Lasavita, who appear to be very good campaign managers, should have better control over the message than to allow something like that to happen. That's atrocious.
Does the Biden campaign call these out one by one as they happen, Jeannie, or do you just continue to give the other campaign rope on this?
You call them out. I mean, this is a despicable pattern. I couldn't agree more with Lester on this. It shouldn't have happened, but it's not the first and only time. This goes back to Charlottesville. This goes back to the 2016 campaign. This goes back to comments that he made to General Kelly. I mean, the list of anti-Semitic tropes by Trump are long. And I hope that Republicans who have been railing against young people for protesting the war, accusing them of being anti-Semitic, are equally as offended by this video that Trump's campaign put up, whether he was responsible for that or not.
All right, Jeannie Shanzano and Lester Munson, our wonderful political panel today. Thank you so much for joining us. Jeannie, of course, is a Bloomberg Politics contributor. She's also Senior Democracy Fellow at the Center for the Study of the Presidency in Congress. And Lester Munson is the Republican strategist, as I said, but BGR Group co-head of the international practice. And certainly that video, which stayed up for a considerable period of time, as I mentioned, Joe, getting a lot of attention today.
Yeah, to think we were reading about this morning and it was still there says a lot about the operation.
Yeah, absolutely. Although we have had reported consistently by us here at Bloomberg and others that the campaign, by and large, is more organized this time around and more disciplined with the messaging, which raises the question of how something like this would have.
Well, there's a bit of a distraction in Lower Manhattan. I realized they were in court yesterday. It's not there any longer, but the conversation will continue.
Yep, and it will continue on this program. First, though, let's get a check on world and national news. Amy Morris has that in the 99.1 newsroom here in Washington. Hey, Amy.
Hi, Kaylee. The United Nations is now saying that it has suspended food distribution in the southern city of Gaza, or rather southern Gaza city of Rafah, because of the lack of security and the lack of supplies. Now, UN officials say no aid trucks entered Rafah by using that floating pier that was set up by the U.S. The UN says its humanitarian operations in Gaza are near collapse. Donald Trump's defense team rested its case today in its criminal hush money trial. Judge Juan Merchan sent the jury home for the day, telling them to return next Tuesday, a week from today, to hear those closing arguments. The judge added he would expect the jury to begin in deliberations, hopefully at some point on Wednesday. Trump is accused of falsifying business records to cover up an alleged sexual encounter with adult film actress Stormy Daniels back in 2006. North Carolina's House of Representatives is considering a new bill called the Unmasking Mobs and Criminals Bill. It bans the wearing of face masks in public that can hide a criminal's identity and would repeal the pandemic-era exemption, allowing people to wear masks for health reasons. The legislation was passed by the state's Senate last week. One man has died, 7 more are critically injured. A Singapore Airlines jet flying from London to Singapore encountered severe turbulence as it entered Thai airspace. The Civil Aviation Authority of Thailand is investigating. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Wall Street, we do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all in the green. Little change, perhaps the key takeaway right now. Stock market fluctuating near records as traders await NVIDIA's earnings tomorrow. Investors are also wading through remarks from a handful of Fed speakers. S&P right now up 5, a gain of 0.1%. Dow Industrials up 21, higher now by just under 0.1%. While the NASDAQ Composite Index is up 11, that is a gain of 0.1%. 10-year, 4.40%. The 2-year, 4.82%. Spot gold down 0.2%. 24.20 the ounce for gold, while West Texas Intermediate crude is down 0.8%. 79.20 for a barrel of WTI. Amazon Web Services has halted orders of NVIDIA's Grace Hopper chip to await a more powerful new model, and according to the Financial Times, citing confirmation from an AWS spokesperson, Amazon shares right now down 0.8%. NVIDIA, ahead of tomorrow's earnings report, up now by 0.1%. Recapping stocks higher, S&P little changed, up by 5 points. Balance of power continues. Back we go to Washington. Once again, your hosts, Kaylee Lines and Joe Matthew.
Charlie Pellet, thank you. With a look at Wall Street, we'll be back to Charlie a little bit later on this hour, as we always keep tabs on the markets for you, even as we focus on politics here on Balance of Power. From Washington, I'm Joe Matthew, alongside Kaylee Lines. And it's pretty remarkable, Kaylee. Here we are again talking about the potential for some votes in the Capitol, yet no one seems to think these bills are going to become law.
Yeah, one of them, a border bill that's going to get a vote for the Senate, very likely will not get adequate votes to even send it to the House. Then some crypto-related bills that are very likely to pass in the House that may not go anywhere in the Senate, where there is much more skepticism about the industry overall. We got the chance to speak with Congressman Tom Emmer, who's on the House Financial Services Committee, also serves, of course, as the House Majority Whip, who told us yesterday he does think the 2 crypto pieces of legislation will pass on the House floor. But we also got to talk with him about something else, because just minutes before our conversation, we got the news from the chair of the FDIC, Martin Gruenberg, that he would indeed step down once the successor was named. And this was Congressman Emmer's reaction.
He should have resigned weeks ago, perhaps years ago, based on the hundreds of pages of report that showed this toxic work environment with sexual harassment and all kinds of awful things with the employees. And yet here he goes again. Hey, I'm going to resign. I'm prepared to do that, but not until we have a successor. Well, guess what? Kaylee, we've got 6 months left, roughly 6 or 7 months left. Marty Gruenberg needs to go yesterday, so he should resign and get out of there.
Congressman Tom Emmer, the House Majority Whip.
How do you really feel?
Last night, not holding back. Joining us now for more on this conversation, I'm pleased to say, is Bharat Ramamurthy. He is formerly Deputy Director of the National Economic Council, now Senior Advisor for Economic Strategy at the American Economic Liberties Project. And he is here with us in our Washington, D.C. studio. So, Bharat, great to have you. Welcome back to Bloomberg TV and Radio. Mr. Gruenberg, much to the chagrin of, say, Congressman Emmer, has said he will step down once a successor is not just named, but confirmed. Would you take that job?
Well, I appreciate the offer, but no.
Have you gotten an offer?
No,
Have you had any discussion?
I haven't, and there's a lot of good candidates for that job, and I assume that the White House will pick one of them, but it's not something I'm interested in at the moment. I do think it's really important to take a step back. Number one, it's pretty commonplace for an outgoing chair to say that they will leave if and when somebody is confirmed for that role, so that there's a smooth transition there. And when Congress wants to act quickly, they can act very quickly and confirm one of a qualified nominee. So it should not take that long if Senate Republicans cooperate. Number two, I think it's important to remember that the FDIC is an extraordinarily important agency in all of this. I remember when I was in the White House last February during the Silicon Valley Bank situation, the FDIC was critical in making sure that issue didn't spiral out into a much larger problem with the banking system, and played a big role in containing that. So it's important that we get somebody into that role who's experienced and who has a strong hand on the till when it comes to financial regulation.
Yeah, you wonder who would want this job. If you read that report, the current state of the culture, the workplace culture alone in this agency is deeply troubled. This is going to require a fixer. Do you have a sense of what it would take to repair the problems at the FDIC?
Yeah, look, I think it is going to take some time when you have that type of issue at an agency which employs hundreds and hundreds of people, and where there's clearly some systemic issues. It's going to take somebody who comes in and makes it a real focus of theirs to turn those issues around. It involves sitting down with the employees, really listening to what the concerns are, putting in measures that would address those concerns. But it can be fixed, and I've seen it happen with other agencies that have had these types of systemic problems that have really improved over the years.
Well, certainly that effort, I'm sure, even now is underway, even if Marty Gruenberg says he's outgoing. There also is the consideration, though, as to what might not happen if he does indeed step down, or if we can't get someone else confirmed in time, which includes Basel III, capital reform for some of the biggest banks that are out there. Obviously, that is something this administration has been pushing very heavily across all of these different regulatory bodies when it comes to the prudential regulators, at least. Is that realistically going to happen now that all of this is happening, or is it time to call time on the end game of Basel III?
Well, look, I think that there's a number of complicating factors on Basel III. I think at the end of the day, there's a very strong case for higher capital standards on big financial institutions, but it takes a lot of coordination across agencies, and these types of issues, along with what's clearly been a big pushback from the industry and from some folks on the Hill, is going to complicate that timeline. Generally speaking, not a lot gets done in Washington a few months before the presidential election, so it wouldn't surprise me if the resolution of the Basel III issue happens after November. But this is another complicating factor in all of that.
We started by talking about the potential for a vote here on a crypto framework bill. Is this something that needs to happen? Because it's going nowhere, it seems, in the Senate.
I'd say on crypto, there's a pretty strong case for legislation that does a couple of things. Number one, really protecting consumers from the kinds of frauds and scams that are quite frequent in this industry based on what we have seen. And number two, making sure that whatever the use of these assets, they're not going to spill out into a broader risk to the financial system more broadly.
Are we giving enough money to the CFTC to do this right?
Well, my concern with this bill is that it falls short on both of those measures.
Really?
And that a good bill, I think, would be a step forward in terms of protecting consumers, in terms of addressing any systemic risk that crypto poses. My concern is that this bill isn't that bill, and that it would be good for Congress to go back to the drawing board and take another crack at this. Again, I'm in favor of doing that for the right piece of legislation. I'm just concerned that this isn't the right approach, and I think that those concerns are reflected in the Senate.
Well, what the industry will say is the concerning approach should be the approach taken by the regulators, specifically the chair of the SEC, Gary Gensler, who is instead, because there is no existing regulation written by Congress, is trying to apply securities law and basically just sue the way to authority. Can that status quo stay the same?
No, again, I think that there's a strong case for having some kind of legislated outcome here. When you have these types of new technological developments, it makes sense for Congress to step in and fill in some gaps that may exist in the current regulatory framework. They need to be very thoughtful about that. Look, my head goes back to pre-2008, where the financial industry came in repeatedly from 2000 onwards and said, these rules are too onerous. We need to make it easier to do subprime lending because it's easy. We've got to get access to credit for folks. And Congress listened to those industry requests. And what happened was that we set the conditions for a financial crisis that put the entire economy into a recession. We just need to be very, very careful when it comes to these types of changes to our financial system, because the risks of getting it wrong are so large.
We're spending time with Ramamurthy, who is working as well with the Groundwork Collaborative in addressing the tax code. I want to ask you about the 2017 tax cuts, which we're hearing a lot about now, an effort to be made permanent here. You're on the other side of this argument. How do you tell Americans that they're better off with higher taxes?
Well, I think it's actually quite popular with Americans to make sure that the rich and big corporations are paying more in taxes. And what the Trump tax cuts did in 2017, if you recall, number one, there was a massive and permanent cut to the corporate tax rate from 35% to 21%. And then there was a series of individual changes, like, for example, increasing the estate tax threshold, so fewer people pay that. Reducing the top tax rate for people making well over $400,000 in income each year. Those are set to expire in 2025. The CBO, the Congressional Budget Office, did a report that the cost of extending all of those expiring tax cuts is $4.6 trillion. And the majority of those benefits go to higher income households.
People have an association, though, with those tax cuts and a strong economy. That's a very difficult association.
So I would respectfully disagree with that. Do you know that the single most unpopular moment of the Donald Trump presidency wasn't when he was trying to go after healthcare? It wasn't when he was saying crazy statements about COVID. It was the week before he tried to pass the Tax Cut and Jobs Act. And that's because the public really revolted against the idea that we should be spending trillions of dollars on tax cuts that primarily go to big corporations and the wealthy. And so
what are you citing a poll or what?
Yeah, there's a survey research, go look at it, Gallup and so on. Okay. He was in the low 30s when it came to his approval rating at that point in time. And so, and that's one of the reasons why every single Democrat in Congress, from the most liberal to the most conservative, voted happily against that piece of legislation. And so now we have a chance in 2025, that's what this letter is about, to take a fresh look at all of this, because a lot of those provisions are expiring in the Trump tax bill. Mm-hmm. And so rather than thinking about which ones are we going to extend, which ones do we want to modify, we should be looking at the tax code holistically and say, we need to reverse this decades-long trend that we have towards bringing in less and less revenue. Just one final data point in all of this. Before the Bush tax cuts in the 2000s, we were bringing in, the federal government, about 20% of GDP and tax revenue each year. After the Bush tax cut and the Trump tax cut, it's closer to 16%. And that reduction in revenue by itself explains why our national debt is growing. And by the way, a lot of those benefits went to the very highest income households. So we need to reverse this trend, and 2025 is our opportunity to do that.
Well, this is going to be a big fight. We'd like to stay in touch with you on that.
Of course.
Bharat Ramamurthy with us in his post-White House life, now Senior Advisor for Economic Strategy at the American Economic Liberties Project. Bharat, thank you for your insights today. Kaylee, we're talking as well about an important day in Lower Manhattan as the defense rests in the Trump trial. We want to go to New York, where June Grasso at Bloomberg Law is standing by with her take on what we learned here today. Not a huge change as the defense wrapped its case here, June. Not a huge change with what we had seen yesterday with Robert Costello, for instance. But tell us the significance of this moment now that we've seen both sides have their say.
Well, I think the prosecution actually made some good points and did an aggressive cross of Costello. So I don't know how the jury's viewing it, but I think one thing that you have to remember is he's the last witness. The defense put on 2 witnesses, and he was really the only witness of substance. And the jury's going to go home for how many days now until Tuesday with that on their mind. So I think the defense sort of went out with a whimper. But remember, the defense only needs 1 juror in order to hang up the jury. And that's probably what they're thinking. And their whole approach has really been to attack the credibility of the state's star witness, Michael Cohen. The prosecution, on the other hand, has been trying to pump up his testimony and use documents and texts and other witnesses' testimony to back him up. Today's jury instructions, to fight about jury instructions, and those are really the most important part of a trial, even though they're not the most interesting for for people who are there, but they're critical. And especially in this case, where there's such a conundrum about what are the federal or state tax crimes associated here to make this a felony. So that's really important.
Yeah, I'm so glad you brought that up, June, because things aren't all done and dusted at court today. At 2:15 is when this meeting on jury instruction between the judge and the attorneys is set to happen. Just what exactly is involved in jury instructions? What will we be looking for?
So jury instructions, so the jury through the witnesses saw the evidence, but how do they apply the evidence? What's the law that they'll apply the evidence with? And that's something that the judge is going to give them in the instructions. It's not going to come from, what they saw at trial. It's going to come from the judge. So it's very important. And what's happening at the charge is each side is going to try to influence the judge in what the instructions are. There are standard instructions. The judge might just use standard instructions in some of these cases. He might use something that the defense proposes, something that the prosecution proposes, or a combination of each. But it's really critical. And, in appellate procedure, when there's an appeal, a lot of times it's reversed based on the jury instructions that were given. It's always a way for, the defense to attack a verdict is the judge gave the wrong jury instructions. So in this case, the jury instruction on what the election crime is connected to the falsifying the business records to make this a felony is going to be critical. And everybody knows that. The judge knows that. And so I'm sure he's going to be very careful, and it's going to be interesting to see what he says, what he decides.
Interesting entourage in court today. We've seen, a who's who of Capitol Hill. We had more members of Congress there. Eric Schmidt showed up. Ronnie Jackson was there today.
Yep.
Kaylee, the former White House doctor, now a member of Congress. Dan Muser, Dale Strong, a few other. But Joe Piscopo also made his way to the courthouse today, June. And I'm just wondering, will that have any impact on the jury to see Joe Piscopo at court?
I don't think the jury is really influenced by who's coming into the court. Unless Melania Trump came to the courtroom, I think that would be an impact, considering what the case is about and her connection to it. That would be an impact, but I don't think they're influenced by any of these people that come into the courtroom and sit there. I know that the reporters who are covering the trial are perturbed that these people are coming in and getting seats when they're a lot of times are waiting on line for hours. They get there at 5 a.m. or whatever to get seats because there are only a certain number allocated. Even the overflow room is overflowing. So I know that the reporters are not happy about it. I doubt the jurors pay any attention.
All right, June Grasso, Bloomberg Law, 6 p.m. Eastern Time on Bloomberg Radio. A fascinating day in court once again, Kaylee. We'll wait for the instructions next.
Indeed, and we'll have more on Balance of Power at 5 p.m. right here on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Tuesday, May 21st. Carol Masser along with Tim Stenivek. And the setup on this Tuesday, well, we're kind of in a little bit of a wait-and-see mode ahead of NVIDIA earnings, although we have seen stocks, certainly the S&P and the NASDAQ, kind of move up to their highs of the session.
Yeah, and investors still digesting some big earnings reports that are coming in ahead of NVIDIA, but that's certainly the one we're waiting for. Also digesting, though, Carol, Fedapalooza before tomorrow's FOMC minutes. How's this for a countdown? Okay?
Yeah.
We're 11 days away.
Tim's making fun of me
from the
with
Fed
the countdown.
blackout ahead of the June meeting. So the countdown is on to the blackout period.
Exactly. Well,
I think it's important. I know it's a thing. I'm just giving you a hard
There's
time.
so many Fed speakers coming at us, and we're not done yet, everybody. Everybody's squeezing it in. So our Mike McKee is going to make sense of that. Plus, the China invasion of Taiwan, if it were to happen, ASML, TSMC, man, so key to the semi-supply chain. They apparently have a plan. This is among our most read stories today on the Bloomberg.
And speaking of China, geopolitics from Russia and China to Iran and Saudi Arabia, governments and positions of power are changing. Geopolitics in transition.
Tim, there's a lot going on.
There is a lot going on, and it's complicated.
Yeah, speaking of complicated, Scarlett Johansson, she's shocked, she's angered, she's in disbelief, hiring lawyers to push back at OpenAI. We'll get to that story. It's really big on social.
It's huge. Everybody's reading it. Everyone's talking about it. I love the story because it's also like an example of, the future that could be. Yeah. Exactly. Also, speaking of the future, rents continue to move higher, and only 5% of New York City apartments are affordable to the average New Yorker. It's an issue. We're going to tell you why.
All right. First up, though, folks, let's get a check on that trade. Some of your top business stories. Over to Charlie Pellet. We go. Charlie.
Hi. Thank you very much. We're looking at an 8-point gain right now in the S&P 500 index, up by about 0.2%. Traders keeping a lid on stocks ahead of results out of NVIDIA tomorrow after the bell. The giant chip maker at the heart of the AI revolution that has powered the bull market. The Dow up 37, up now by 0.1%. S&P again up 0.2, just about the best level of the day. NASDAQ up 24, up 0.1%. 10-year yield 4.41% with a 2-year 4.82%. Spot gold lower by 0.3%, 24.17 the ounce. And West Texas Intermediate crude down 0.8%, 79.19 for a barrel of WTI. Apple shares are advancing today, up by about 0.7%, extending a recent advance that has nearly erased the iPhone maker's year-to-date decline. Again, Apple right now up 0.7%. Recapping, S&P up 8, up 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, everybody. Yes, TikTok, we're in a wait-and-see mode. We know also high for longer. We've heard this from a lot of Fed speakers. The latest to weigh in on all of this, Federal Reserve Governor Christopher Waller, in a speech today at the Peterson Institute for International Economics.
In the absence of significant weakening in the labor market, I need to see several more months of good inflation data before I would be comfortable supporting and easing in the stance of monetary policy.
Again, that's Federal Reserve Governor Christopher Waller. Awash in Fed speak, and talking to Fed presidents firsthand is our own Michael McKee. Mike is Bloomberg News International Economics and Policy Correspondent. He's joining us from Amelia Island in Florida, where the Atlanta Fed hosts its annual financial markets conference. Where'd everybody go, Mike?
Are you getting any time outside, Mike, or is it just, are you in a conference room the whole time? I mean, the pictures outside look nice.
I'm not getting much time outside. Everybody's in the conference room right behind me right now. They're talking about the future of the U.S. dollar overseas, which, of course, everybody has on their minds because the Fed has higher interest rates than the rest of the world. The dollar keeps getting stronger. But it's been interesting because there really isn't a whole lot of disagreement from Fed officials. Some of them, like Raphael Bostic, put a number on how many cuts we might get this year, maybe one, he says, and others don't even have a number. They're just saying, well, we think we might be able to cut rates, but we're going to watch those inflation numbers as they come in.
Well, as Carol mentioned, she's got a countdown going. We're 11 days away from the blackout period beginning for the Fed. That's ahead, of course, of the next Fed meeting. And I'm wondering what taken today and yesterday, and all of the Fed speakers that we've heard in various locations around the country, what it all means for that next policy meeting, which does come out on June 12th.
Well, it probably means we're not going to see any kind of move at all because they all want more time and more data. What'll be interesting is the summary of economic projections, what they think is going to happen in terms of inflation, growth, and unemployment. And then, of course, the infamous dot plot. They've got to put some dots on the plot, so they'll have to put some numbers to it. We won't know who exactly is whom, except that if Raphael Bostic is just going to do one cut, maybe we can figure his out. But it will be interesting to see how far they back off of what they put out in March, which was for 3 cuts. And as Loretta Mester said yesterday to us on Bloomberg, that's off the table now.
Yeah, I mean, this is what's interesting, right, Mike? In their commentary, they can kind of hem and haw a little bit or be a little bit vague, but, you know, it's like pin the tail on a donkey. At some point, you got to stick a pin in the dot plot and, like, make your projections.
Yeah, and they know it's a problem because they know they don't know what they're going to do. They're waiting for this data. Now, Chris Waller made the point today that the Fed is not overly data dependent, as some on Wall Street have argued, because the Fed is looking at the data but not doing anything yet. They haven't bounced around. It's the markets that have been overly data dependent, going up and down and pricing in and pricing out Fed moves, while the Fed has just sat there waiting for evidence that would enable it to move. So he doesn't think that they're guilty of being too data driven, but that's the situation. They're not going to move until they see the right kind of data. So even what we get out of a dot plot in June may not mean that much.
Mike, you mentioned that a lot of the folks on the Federal Reserve who we've heard from in recent days haven't had a lot of variation when it comes to their opinions about the path of interest rates or high for longer or when to move rates lower. And I'm wondering if in your years of covering the Fed and covering monetary policy, if it's pretty atypical to have this much widespread agreement.
It depends on the situation totally. We had this kind of agreement in the early 2000s when the Fed raised interest rates 17 times by 25 basis points at a time. Everybody knew what they were going to do, and they had pretty much telegraphed it. So it wasn't a surprise. And obviously, when you have a crisis like the pandemic or even the great financial crisis, when they cut rates dramatically, everybody knew that they'd all be on board for that. The real dissents came in the days, maybe back in the 1990s and earlier, when there were questions about how much and whether they should move given inflation. We haven't had significant inflation since then, so it hasn't been a huge issue.
Hey, Mike, listen, you have seen lots of market cycles and you have talked to tons of different Fed speakers over the years, and you've talked to them before crises, post-crises, you know, pandemic, GFC, great financial crisis. So I do wonder, as you, like, is there a mood, is there a tone that you are feeling at this time from all of these folks, or kind of where we are? They kind of like, listen, guys, we're almost there. Like, we got this. It's, you know, things are kind of moving along like we wanted. I don't know. How do you characterize it?
Well, it may be a little bit, Carol, as a mom, you'll understand this when you tell your daughter, I got this, but you're not really sure, but you're the authority figure, so you have to say, I got this. That's kind of the situation they're in. I haven't seen this much uncertainty about the economy among Fed officials in a very long time, if ever, because the pandemic ended all of their models and all of the prior history that they used to draw from and try to figure out where they are. And they admit it's still kind of that way. They think they know what's going to happen, but they have a great deal of humility about it because they've been wrong before coming out of this pandemic, because they get a misleading view of the economy.
I still hope my daughter isn't listening because Mike, that's kind of
You got
figured
this,
me out.
Carol.
Yeah, I got this. Hey, one last question. There are though some economic data points, or what are the economic data points to keep an eye on ahead of that June meeting?
Well, on May 31st, we're going to get the PCE inflation numbers, and those will be important because obviously that's the indicator that the Fed follows.
Right.
Interesting thing is the nerds who go into this stuff have a pretty good track record of forecasting PCE, and they think it's going to come down a little more than CPI, so that would be good news. But then we get CPI again on the day of the Fed meeting. So if there was some disaster in those numbers, they could make a last-minute change in their plans. And of course, Jobs Day, we get Jobs Day the first week of June, and that's always a fun time.
Well, don't look over your shoulder, but the nerds are coming for you, so just be careful there. All right, Michael McKee, always great to check in with you. Of course, our Michael McKee, international economics and policy correspondent there at Amelia Island in Florida.
Well, from Fed chatter to the risk of conflict to the chip industry, which gets us to our second most read story on the Bloomberg today. It's a Bloomberg exclusive. It's a what-if kind of story that in the event that China invades Taiwan, two very important companies in the semiconductor supply chain, we're talking about ASML and TSMC, Taiwan Semiconductor Manufacturing and ASML Holding, they, Carol, have ways to disable the world's most sophisticated chip-making machines.
All right, well, the importance of Taiwan to the global semi-space came up yesterday in a conversation that Bloomberg's Ed Ludlow had with the president, CEO, and co-founder of NVIDIA, Jensen Huang.
Taiwan is at the epicenter of the world's technology supply chain. Without Taiwan, it would be very difficult for Michael and I to do our jobs. It would be very difficult for us to serve Bill and his company. And so the technology industry depends very heavily on Taiwan and continues to for some time.
That Michael that Jensen Huang was referring to was Michael Dell, and Bill was Bill McDermott of ServiceNow. With more on the Bloomberg story on ASML and TSMC, reported out by a team of reporters out of Amsterdam and London, we turn to Bloomberg News U.S. semiconductor and networking reporter Ian King in our San Francisco bureau. Ian, good to have you with us. Big picture here, just before we get into the intricacies of these, talk to us about the ASML chip-making equipment that we're referring to here, what these huge machines do, and why ASML is the only one that can do this.
Yeah, we've been very focused on this particular piece of machinery for a good reason. It's basically the keys to the kingdom when it comes to making advanced semiconductors. It's a lithography machine. It is capable of burning these lines into the circuits on the surface of a chip that are absolutely microscopic. ASML basically owns that market, and everybody needs to have these machines if they want to compete in that particular area of the chip industry.
So where does TSMC come in with these machines from ASML?
Yeah, I mean, TSMC currently is really absolutely dominant in the production of advanced logic semiconductors, microprocessors for your PC, for your servers, AI accelerators from Jensen Huang, who we just heard from. Anything like that is basically made by TSMC right now and using these machines from ASML. So obviously, the two companies represent a key choke point in terms of this technology.
So, Ian, let's play it out. Forgive me, you know, kind of that war games scenario, chip version. If indeed there was a Chinese invasion of Taiwan and there were threats to, you know, these two particular companies, I mean, what would happen to the global semiconductor industry?
I mean, you know, that's obviously a very troubling position to be sort of speculating about, but there's no doubt that right now this would have a huge effect for the computing industry. It would have a massive effect for technology in general, and something that, you know, would cause a massive disruption to the world economy.
Including the Chinese economy, yes?
Yes, I mean, the projection about what China might be able to do with Taiwan, with these assets in Taiwan, I think is perhaps a little bit too speculative, because this is incredibly complicated technology. It's incredibly sensitive and requires a massive amount of support. And it's not just ASML machines, it's applied material machines, Lam research machines, you name it. Unless these companies are maintaining this equipment, have got software constantly being updated, have data flowing backwards and forwards to them, they're not going to be useful for very long, not to mention the enormous competence of TSMC's employees. And are we going to assume that they're going to just work for the People's Republic of China and say, oh, okay, I'll make chips for you now, no problem? Clearly, there are a lot of ifs and buts there, but fundamentally, you know, why are we talking about this? Why are governments talking about this? Because, as you've just indicated, this is so important to the world economy.
TSMC can get these so-called EUV machines in Taiwan, but can Chinese companies get these EUVs in China, Ian?
No, absolutely not. They've never been allowed to, and there are huge restrictions upon what ASML and indeed any other chip equipment provider can supply into China, and those restrictions are only getting tighter. So clearly there's a squeeze point there. I mean, China has never really been an advanced semiconductor producer as a nation and has only really tried to do so in recent years without making a huge amount of progress, if we're honest. But nonetheless, because of these trade restrictions, because of the increasing awareness of the importance of chips, that effort to make itself more independent and the counter efforts by the US to stop it from doing so for strategic and security reasons is increasing this tension and increasing this focus on this type of equipment.
You know, Ian, there's been an inflammatory rate, and then there's also just kind of the normal things that governments do to protect their global supply chains, kind of heightened maybe coming off the pandemic. But that is whether it's food, agriculture, whether it's technology, whether it's energy, right? Like these are things that governments normally are going to think about, and with the heightened kind of tech or chip war that seems to be, building daily, it makes sense for potentially the U.S. government to look into this, or other governments, to make sure that they've got this. This is important.
In general terms, you're absolutely right, but what's distinct to this is if you want to build a stealth jet, if you want to create encryption for your computer networks, advanced logic semiconductors are the way to do that. The ability to control them, the ability to make them, the ability to have access to them are crucially important when it comes to defense and security, and that's what has changed in recent years. In the past, it was let's make the supply chain as efficient as we possibly can, distribute it everywhere, and we all benefit. The focus has changed, particularly in Washington and arguably in Western Europe as well, towards, hey, this is something that really matters. Can we afford to let China get in the game here? And that is really what's heightened this kind of tension and this kind of consideration.
Ian, you're a chip guy, so we can't let you go without one more comment on a different story here. Because while we have you, there's a story in the Financial Times about Amazon halting orders of NVIDIA's superchip to await an updated model. What can you tell us here in the last 30 seconds?
I mean, this is a big concern for investors, but they've really not been paying attention to what NVIDIA said. What NVIDIA said is we're sold out for this year, so no matter who switches orders here and there, there's likely more than enough demand.
Don't worry, we got this. We're
the next
okay.
customer in line.
Exactly. Next, like a deli counter, chip version. All right, Ian King, thank you so much. Bloomberg News U.S. semiconductor and networking reporter. Ian King, really, we go to him on everything in the semiconductor space to just put it into context, into perspective. So appreciate that. Hey, you are listening and watching Bloomberg Business Week on this Tuesday. We're looking at a market where we're just up about 7 points on the S&P 500, Tim, and just up about 10 points on the NASDAQ 100.
Well, still to come, global semi-supply chains, certainly a concern. We just talked about that. So too are the shifts and shakeups in key governments around the world. A reshuffling happening. We're going to tackle that next. This is Bloomberg Business Week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks continue to hold on to gains. Little change, but the Dow, the S&P, NASDAQ all higher. Right now, the S&P is at 53.14, up 6, gain there of 0.1%. Dow Industrials up 32, also up 0.1%. NASDAQ higher by 12, up 0.1%. 10-year, 4.41%, with a 2-year, 4.82%. Spot gold down just about 0.2%, 24.19 the ounce. And West Texas Intermediate crude down 0.6%, 79.30 for a barrel of WTI. After earnings, Macy's shares are advancing. Macy's right now up by 1.3%. Home improvement retailer Lowe's reported this morning. Lowe's shares down now by 2.6%. Home Depot lower by 1.3%. The big focus for markets, tomorrow's after the bell results from AI bellwether NVIDIA. Complete coverage on Bloomberg Television and Radio. NVIDIA shares ahead of that report. Little changed higher by just under 0.1%. Recapping, S&P up 5, up 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week. Well, there's a lot going on. I mean, come on, the understatement of the world, or of the time, I should say, in terms of the things going on around the world. You've got Iran's supreme leader succession, Israel's war cabinet in turmoil, President Xi continuing to shake up his cabinet, concerns over the Saudi king's health. It feels as though there are so many major changes going on in some of the governments we focus the most on and really care the most about right now. And we are talking about China, Russia, Iran, and Saudi Arabia.
No question, it's a lot to keep track of, and how it all impacts the world order, the position of the U.S., the global economic order, which is why we go to Bloomberg News U.S. National Security Team Leader Nick Wadhams, who joins us this afternoon from Washington, D.C., because he's got his hand on the pulse of the White House and everything happening in D.C. when it comes to international relations. So, Nick, changes in the governments in China, Russia, Iran, Saudi Arabia. We got 2 wars that are still going on. There's an election coming up in November, of course. Give us the view from inside the White House, though. What is on the mind most of all of these things at 1600 Pennsylvania Avenue?
A couple of things. I mean, I think the big one right now is a real frustration with Israel, a sense that Prime Minister Benjamin Netanyahu's government is not really listening to the United States. There's a lot of concern about that incursion into Rafah, and while the administration feels like they have been able to shape Israel's stance to some degree, they have not been able to bring a complete halt to that. They had wanted to avoid it completely, and now it seems to be going ahead. So that's a big one. You know, the other is obviously that this is an issue that President Biden came into office thinking the Middle East was not going to take up a lot of his attention. It was not a place he wanted to expend a lot of his political capital and spend a lot of his time. Now, you know, as far as we've been told, he's dealing with this for several hours a day. He wants to be thinking about the upcoming fight against Donald Trump. He wants to be thinking about the elections, be out on the campaign trail. And this is just an issue like presidents past, but particularly acute in his case, where he feels like this is an issue that's just taking up a lot of his time that he'd rather not be spending on.
Well, Nick, there's also, you know, when you talk about specifically Israel, Middle East, Israel, though, specifically in terms of what President Biden thought it would be this year and how it's played out in actuality. But having said that, I guess my question is, there's political concerns, geopolitical concerns, national security maybe issues, the U.S. as a country, its standing in the world when it comes to Israel. And then there's President Biden facing a November election and how it plays out. So from national security, like, how do you guys, or how are they thinking about it most in the White House?
Well, you know, there are a couple of issues there. One is there are the things that President Biden wants to do, and then there's going to be how that plays out with the electorate. So, you know, he's facing a lot of pressure on the left for over accusations that he has not handled this well. He has not been able to stop Israel from a devastating campaign. Then he faces pressure on the right from Republicans, no surprise there, but also from those who really back Israel. So what you're seeing is a situation where he's essentially being pulled in two very opposite directions. And the concern there is, you know, this is not something that's going to go away anytime soon. It looks more and more like a ceasefire. There's very little chance that that's going to happen. anytime soon. You're heading into the summer break now, but protesters are almost certain to be back on out in force on college campuses in the fall and September, and that's only 2 months before the election. So I think what you're seeing is a situation where the president essentially sees no way to make this anything but a major liability. Obviously, he wants to deal with the war on its own terms and not necessarily just think about it through the political lens of the United States. But it's just something that's not going to go away, and that's causing them real headaches.
Well, and as you said, the Biden administration came into the office in January 2021, hoping to shift the U.S.'s foreign policy focus from the Middle East, though, to things like competition with China, which we know in the past week or so, the Biden administration, President Biden, has amped up tariffs against China. But I do think about kind of that relationship, U.S., China, strained to say the least. And then you've got China and Russia, the leaders there just meeting last week. So that trifecta and how that's playing out and complicating things. How is the White House thinking about that? How that evolves? How much that is kind of weighing on their national security concerns?
Well, I mean, the big question with China is how to put the squeeze on China in terms of what the U.S. sees as really unfair trade practices, but also not push them farther and farther away. I mean, these two economies are so closely intertwined. The fate of one really affects the fate of the other. The U.S. has been putting on these tariffs. There was some thought or theory that when President Biden came into office, he would ease off of the much more hawkish China policy that was laid out during the Trump administration. If anything, he's just made it even more hawkish, more sanctions, higher tariffs, really pushing the Chinese. But at the same time, he's trying to lure the Chinese back and say, listen, don't have this relationship with Iran, don't have this relationship with Russia. But right now, all he's really able to do there is offer more sticks and not so many carrots. And that's sort of the dilemma you see, and a real sense, I think, of a waning influence. They pushed so hard for President Xi Jinping not to deepen ties with Vladimir Putin. Obviously, Putin goes to China. There's talk of a deeper strategic partnership. If anything, it feels like the opposite has happened. So you're really seeing an administration grappling with the limits of its own power overseas, which is something that they hadn't really had to grapple with in years past.
Nick, how does the helicopter crash over the weekend that killed Iran's president and several others late into the night, how is that now complicating matters for the White House?
It's a great question, and that is still very much a live one within the administration, because they are trying to see just what the effects will be under the premise that, given that President Ibrahim Raisi was not the ultimate authority in Iran, that goes to the supreme leader, what effect it will have. Right now, the operating assumption is essentially that Iranian policy will be unchanged. So his death, as much of a shock as it was, will not actually change the course of policy in Iran. I think the thing they're really concerned about there, though, is how does Iran look to deter adversaries like Israel, like the United States, from exploiting a moment of vulnerability? Will they take some action to essentially tell the U.S. and Israel to stay away, or will they just sort of bunker down as they look to get through this transition period and bring in a new president in elections in 50 days' time? So they're really looking to see what sort of factions emerge. Right now, there really are no moderate voices in the Iranian political scene that have any power. So I think they're hoping to see whether that remains the case, or whether there is some emergence of a more moderate faction that might sway Iranian politics. But right now, it doesn't look like that'll happen.
Listen, Nick, like I said to Ian King, or I said to Mike McKee, they've seen a lot of cycles. Ian, it's certainly in the semiconductor space. For Mike, it's economic and, Federal Reserve moves and monetary policy moves through crises and others. And I do think about, what you have seen through your lens in terms of threats to U.S. national security or just a changing global political landscape. And it was interesting. We were kind of in our newsroom and just looking like, look what's going on in Iran. Like, obviously unexpected. You know, the Israeli war cabinet changing, President Xi continuing to change his cabinet around. We're watching Saudi Arabia, and while it would expect it to be a clean, succession, if you will, in terms of power, it just feels like there's a lot of movement to people that and countries that can impact the U.S. in a big way. And I guess I wonder, like, who's the new axis of powers that the U.S. has to really keep on their radar right now?
Well, to me, the big issue is what you're seeing in terms of the fracturing of the global economy. So obviously, the leaders you mentioned and the countries you mentioned, Russia, Iran, China, I mean, those are major adversaries, and what you're now seeing is a situation where the U.S. has essentially walled them off from its economy, from the global economy in many ways, particularly Russia and Iran, but increasingly China as well. And then confronting the fact that having done that, the U.S. loses leverage over them to get them to do what it wants. Russia and Iran are now so heavily sanctioned, and what you've seen is essentially those three countries deciding, okay, well, we're not going to work with you. We're going to go it our own. And so you're seeing essentially an alternate global economy developing between these countries that have found common cause in their opposition to the United States. And the result of that is that they're able to withstand the pressure imposed by U.S. sanctions and tariffs and things like that, because they can do business among themselves. Obviously, the U.S. and the EU are extremely powerful economic engines, but at least they're able to hang on. And so the U.S., I think the Biden administration is looking for new levers, given that there really is no appetite for a moderating approach to China or those other countries.
Well, listen, so appreciate that. We were hoping to kind of make some sense of all of these headlines that have been coming out over the last couple of weeks, and you did it for us. Thank you so much, Nick. Bloomberg News U.S. National Security Team Leader Nick Wadhams joining us there. Coming up next, geopolitics complicated, so too is AI. We're going to get into that. That's straight ahead.
Yeah, for Scarlett Johansson, there are lines and there are lawyers. Let's get a check of the latest world and national news. We got Amy Morris in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The defense in the Donald Trump criminal hush money case rested. Trump did not testify. He said he would, but he didn't. Judge Juan Merchan says attorneys for both sides will give their closing arguments a week from today. Deliberations could begin as soon as Wednesday. Former New York City Mayor Rudy Giuliani has pleaded not guilty to 9 felony charges stemming from his role in an effort to overturn Trump's 2020 election loss in Arizona. A total of 50 people now, including Donald Trump, now face charges related to election interference in 4 different states. North Carolina's House of Representatives is considering a new bill called the Unmasking Mobs and Criminals Bill. It bans the wearing of face masks in public that can hide a criminal's identity and would repeal the pandemic-era exemption that allows people to wear masks for health reasons. State Senator Sidney Batch says people who have illnesses are concerned.
You know, there are some bad actors that will come into a protest and they will try and disguise their face. But that doesn't mean that you throw the baby out with the bathwater. I think that we can do hard things, and that's what we're elected to do.
The legislation was passed by the state Senate last week. A new bill is being introduced in the House to keep AM radio in vehicles. The AM Radio for Every Vehicle Act would require vehicle manufacturers to include AM broadcast radio as standard equipment in all new vehicles. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.